Come on, you know it, can you feel it? We got some things to talk about. Remarking, it's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Thursday to you both.
Hello.
Look at you. You're like a Marvel comic come to life.
Yeah.
Is it Marvel or is
yeah,
it?
it's all Marvel. Marvel. Yeah. You got Captain America, Thor.
You got Captain America, like right
Aquaman.
there. Yeah,
Aquaman. Yeah. There's Iron Man.
Iron Man was always my favorite.
The Hulk is over there somewhere.
Iron Man was my favorite because he was never on the cartoons that much. You would always see all the other ones. It was rare that you would see Iron Man. Iron Man was my favorite.
I like the movies with Robert Downey Jr.
Yeah,
movies
yeah,
too.
Yeah.
Yeah, but Iron
Good.
I like the Spider-Man movies and the Iron Man movies.
Iron Man movies.
Did you see they're shooting the new Spider-Man? They were shooting in Edinburgh in Scotland. And so like Tom Holland was like doing stunts in the middle of the street and everyone like had their phones out. It was kind of crazy.
Wow.
He was just like doing flips off the back of a truck and he was like swinging.
Oh, like Sadnoff when he gets out of the studio. yeah, doing flips.
So we're having company over today and that's what you're wearing? We haven't cleaned the office at all. I thought we would clean, like when company comes over, but this is what you're wearing.
Some lines in the carpet.
Yeah, like there were lines in the carpet in the studio.
My shirt just ripped.
Oh,
Ooh, something for the ladies. Nips out for the boys. Alyssa and Tori have some tasty swag you can wear.
Oh my God, I can't. What the hell just happened? I don't know what I caught it on.
Is that a Kirkland signature? What? You weren't out, redoing the barbed wire on your back 40 last night? Out mending fences?
I was not.
Desperado.
Wow.
Why don't you come to your senses?
You've been out riding fences
for so long
now.
Sorry.
Nailed it. So what'd you get up to last night, girl?
Yeah, what'd you get up to, girl?
I went out to dinner.
Ooh, where'd you go? What was the restaurant again? Now you can say because you already
took a
went.
date out without me? Oh.
Little Italian neighborhood place.
Which one? Monteverde?
No, my neighborhood. Codavalope.
Cofalope?
Codavalope.
Codavalope?
Codavalope is an Italian joint?
Yeah.
How do you spell Velope?
I think it's VOLP.
Oh, Volpe. I saw you said Alope. Sorry.
Volpe.
Volpe, I believe, is...
Coda de Volpe.
Are you having a stroke?
It's a really nice outdoor. It's a really nice restaurant with outdoor seating.
It's Wolf, I think.
What'd you have?
Good.
VOLPE?
VOLPE, I think.
Yeah.
What did you have?
I just said an assortment of Italian.
Oh, Fox. It's a Fox.
It's a Fox.
Oh, that's cool.
Fox.
It's just a neighborhood joint. It's really nice. Have a little chicken and
I'm always just a little off. You know that, right?
a little chicken, a little meat.
Oh, chicken?
What kind of chicken?
Studio with the bone?
No. They make like a spicy chicken.
A Diablo?
Chicken Diablo on the bone.
Ooh.
Very nice. Sounds good.
Yeah, it is good.
Yeah.
It does sound good. I would eat that, obviously.
A couple of meatballs. It's good.
2 tree meatballs.
2 tree meatballs.
Do you have any tiramisu?
Gotcha. No tiramisu.
No tiramisu?
It
Oh.
was very nice. And then,
Do you have any bruschetta? Bruschetta?
no. A nice little Peroni on draft, which was, it was hot out. It was nice. Good to see.
Any arancinis?
Oh, my God. Peroni on draft. You had one.
They had like 6, but
I
that's
saw you had...
You're a
You may
White
have
Claw
ordered
girl.
2, but you won't finish it.
And, any what?
Any White Claws? No, I said arancinis.
Oh, they do have really good arancini, but I didn't get it.
Ah, okay.
No, because I had it last time I was there, so I tried something different.
Okay, that sounds good.
Yeah, it's good. It's good.
And then what kind of food are you going out tonight?
I had a barbecuing.
I'm sorry, wait, back it up. You're barbecuing?
I have a big barbecue in my house. Yes.
I'm sorry, I didn't get an invite.
Studios today?
I didn't get an invite. You're having
Oh,
a
it's a
barbecue?
family barbecue.
I'm your family. I've been here 15 years.
We spend more time with him than
Right? I could
That's
do
for
your
sure.
taxes. I'm your
we could do
family.
it,
I
yeah.
could write your biography.
Okay, all right.
I could write your biography.
Okay. You can come over. You can come over.
I don't want that. I'm sick of you this week. I have to come in every day. I'll be getting up at Odark 30 tomorrow to be at the show. But come say hi. I will be recording some stuff at the event, so come say hi to me. So
I got some pork chops, some chicken, some ribs.
Oh,
what?
so if the viewers who are coming on Friday want to be forever ingrained in Tasty Live commercials, they can come talk to you.
Yes. They will have to sign a release form.
Hold on. You're going to put yourself out there to talk to people?
I have to because it's my new job. Your girl got promoted.
Oh, nice.
Hold on. You sure?
Well, the other person left, really.
No, excuse you. I am now a social media strategist for the Tasty family of companies. So put some respect on my name.
That means you're the only one that had a camera.
So now I do social for all the brands now, and so I'm doing stuff for Tasty Trade. Yeah, I have to actually talk to people, and it's a paid campaign for Tasty Trade, specifically for the platform.
It just means you're the only one with a camera. Don't get
What do you mean sold? Do you want to come to the marketing meeting? Do you want to see the emails?
The last place I want to go in my entire life is to a marketing meeting. You have to shoot me or tie me down, I'm not going to a marketing meeting.
But no, I will be there supporting you guys, and I'm excited to see the show because I haven't seen this show live.
Ooh, it's going to change your life.
Yeah,
life changing.
yeah.
Yep.
Show's sold out.
I heard it's oversubscribed. Yes.
But if you put your name on the list, you might get in. We'll see.
Yeah.
Come on, we can always put a photo.
We always
here
squeeze
somewhere.
everybody in. We try to.
Never going to leave anybody.
It's a big
outside.
place. Have you been to this place?
I have not. Mm-mm.
Fire Marshal Schmeier Marshall.
Fire Marshal Bill's a friend of mine. Don't
Yeah.
worry about it.
Yeah, it's a cool venue. It's beautiful.
No, I'm very
Old, right? It's an old place.
It used to be called.
Well, when it used to have a name, then it's old.
Do you want me to
Yeah.
look it up?
Yeah, it was something else before, and I can't remember what it was. And then somebody bought it out, and then took it over.
It was the Czech meeting hall built in 1892.
1892. Grandpa Vito's
Yeah,
birthday.
Dusek.
Yeah.
Yeah, that was the bar restaurant, and
Yes.
yeah, it got a Michelin star once. It got like best new restaurant in Chicago, and then I think it's out of business now.
I don't know. I don't keep
Yeah,
up
but it's
with
next
that.
door to
What
that.
do you have? All the Michelin star restaurants stuff in memory or something?
He's a Michelin app.
No, I went there. I went there for dinner one night. It was really good,
Yeah.
and then it didn't survive. Maybe because of the neighborhood.
We
I
are
don't know.
bougie, man.
Yeah.
Really bougie.
It's unbelievable. I never thought I'd see the day.
I was sitting outside last night on the
That little
street.
chunky kid who used to eat 3 hot dogs from the Wiener Circle would be.
I was sitting outside.
Michelin
I was
star.
sitting outside last night on outside, and very bougie where I was, and just watching traffic, saying hi to the common people.
I'm sure you were.
There's actually
Did you say hi or did you just give them the wave? Like,
There's a really good upscale Vietnamese restaurant. So if you have time to go there, it's called Hai Su. I think it's right there on 18th
God
Street.
bless you.
I've been.
I've heard about it.
It's great. I went with my friend Tessa because she's a foodie.
I've heard about
and
it.
She knows all the stuff.
Yeah.
We had a great time.
I heard it
when
was
we
a great
went.
meal. It's been around for a couple of years now. I've
Yeah.
never made it down there.
Yeah.
But no, we're gonna go to Chinatown.
Do you know where
Yeah.
in Chinatown? You don't know where to go in Chinatown.
Come on, I'm practically a Chinatown expert.
You don't ever come to Chinatown.
I know,
You
but
go
I-
all the way up north.
The
but you don't-
restaurants never change.
yeah, but we've been going to
No,
Chinatown
you would be
40
surprised.
years.
Post-pandemic, there's been a lot of innovation and reinvigoration. That's
We're not
what I
going to
meant
one of
say.
those places. We're going to one of the places in the alley.
But I have some recommendations. I go to Chinatown
What's your favorite
every
place?
week. MCCB is my favorite
Oh, yeah,
place.
but that's fancy.
It's not fancy. Look at me. I'm not at a fancy place. I order
want
takeout
to.
from there. I order takeout. It's my favorite takeout. But when my parents come, we'll go.
I thought that
But it's
that place looks fancy to me.
no, they have a Michelin. No, it's affordable. It's very well done. Very, very good Chinese food.
Yeah.
No
You're
matter.
going to make them
I looked
change
at the
his
menu.
But
plan.
it's not.
It's gonna
It's
fall
not
on your-
fancy.
I looked at the menu. It looked fancy.
It's popular, but no, it's
Oof.
my spicy
I've
garlic
never-
spicy garlic chicken. $18. It's not fancy.
No, I've never been there, but I looked at it and it looks great.
Yeah, and it's across from my favorite boba tea spot.
I also was thinking about that dumpling place.
There's a billion dumpling
I think
places
it's
in
called
Chinatown.
XYZ, that one.
Oh, okay.
Got the 2 thumbs up from Mike Butler.
Oh, that's a good
Yeah,
one.
there's a good Chinese seafood place down there too. They do really good sushi.
And not a big.
Okay, well, good luck with your.
Funniest person to ask for advice in Chinatown is P. Klink. Because he's.
He's there. He doesn't live too far from there.
I know, but he's like.
Really?
Yeah.
You know, I was in the elevator with Clink after because we had like a meeting, and he was talking to Frank, and he's going to a concert. And I was like, "You're going to a concert?" He's like, "Goo Goo Dolls." He's like, "I'm excited," and I'm like, "He's like, I figure I got till I'm about 70 before I stop going to concerts."
I've seen the Goo Goo Dolls, Park West.
Yeah.
Yeah, he was going there.
Yeah.
But
They're
I was
good.
I was like, don't get too crazy in the mosh pit. He's a big guy. Yeah.
Oh, tall. Too.
Yeah.
Yeah. Clink.
Oh, he's big.
Yeah, like that's optimal for a concert. Like me at a concert, it's hard for me to see.
He's not standing.
Well, it's sometimes you gotta stand.
standing.
Everyone stands at concerts. What concert have you been to that everyone sits down?
Most of them.
Good question. Most of the ones he goes to because
I don't want-
Because it's like Kenny G.
yeah, like I think the last concert he saw was what, Engelbert Humperdinck? That's one he went to. Everybody sat for that one. I remember.
Engelbert Humperdinck. No, I don't like to go to concerts where everybody stands the whole time.
That's every single concert, though. Like if the artist is good, everyone's gonna be on their feet.
Not if you have a seat.
But people still stand. Do you not get the concept that people just stand? Like
Not
if,
gonna get it.
No, he's not.
so you think at
Every concert
Beyonce,
is
you think
not-
at Beyonce where
Every
everyone has
concert
a
is not a
seat?
Beyonce or Taylor Swift concert.
Oh my God, the world would be a better place.
Every concert is not Beyonce or Taylor Swift.
No, but what
Last
if you
one I saw
went
was-
to-
The last concert I saw was Jack White.
Yeah, but that was like some hedge fund guy's backyard. That doesn't count.
Right. He doesn't count.
Jack White was at Salt Shed.
Oh, it was at Salt Shed.
Yeah, they had,
People stand at Salt. That's
they had
only
like
standing.
3,000 people that stand, and then they have maybe they have like 500 seats or something.
Oh,
Yeah, and the seats part people didn't stand.
interesting. Like Ravinia is the only place I can think of where people aren't standing because it's like a park. You know what I mean?
Yeah,
Yeah.
let me tell you, Jack White was great.
Okay. Name one of his songs.
I love it. You'd think he would prepare because I
Right?
do that to him every time.
Right?
He says
Nation
something
Army.
silly.
Okay. I'll allow it. Bat, how about you? What'd you get up to last night?
Last night,
First day of school.
first day of school today.
Wow.
Yeah, so last
How many alarms did you have to set?
I'm off at school.
No, but I did lay out his clothes for him. No, I'm just kidding.
Now, how many alarms did you have to set for the Golden Prince this morning?
That's the wife's problem. I leave early in the morning.
Sure, yeah, that's true.
5:30 in the morning.
That's
so
true.
I
Should
was-
have dropped him off at school at 5:30. Let him be the first kid there.
He has a senior that drives him, so he's got senior parking and everything.
Oh, his friend from last that was a junior, right?
That's right.
That got into an accident.
That's right.
Yeah.
We got
Now
hit from
he's-
behind, so it wasn't.
Sure,
his
sure.
fault.
I know.
Yeah.
But that's nice.
Yes, it's very nice. But he had hockey until almost 9 o'clock last night. A
Wow.
little bit of a fire drill last.
I don't consider that late. For him, it's not late.
Well, 9 o'clock, then you gotta come home. I'm hungry. I gotta take a shower, look at my hair. I come here a long time to work with you. I gotta do my hair. You know how it is. It becomes a long day. It becomes a
Well, Vinny, I hope you have a very good
Oh, it's a
first day of
cakewalk
school.
today and Friday. It's
Oh,
just
I know.
Go to classes, get books, that kind of thing,
I loved the first day of school. It was.
Nobody loves the first.
I love school. I love
I
the
said
first
nobody
day of school.
loved the first day of school.
Like here's the thing. Like, getting like those fresh notebooks, the fresh bag for your pens, all my markers and highlighters. It's like crack for me. Hey, did you watch it all, or were you able to see any clips of the most impressive interview I've ever seen with Taylor Swift last night?
I did not.
Massive at one point on the stream. 1.5 million people were tuned in. I don't know how many views the podcast has. The most candid interview with her I've ever seen in my whole Swiftie life. It was over 2 hours long. I'm going to watch it again. No, I'm being
makes it so
sincere here.
candid?
I'm being sincere here. Jason Kelsey did the most impressive job ever of interviewing her. He asked really insightful questions. He let her speak. You could tell she felt that it was a safe space. Because, if you go on like some other show, of course, some journalist is going to be like, oh, what do you think about, and like you'll get like uncomfortable.
I heard you slept with the whole football team.
Right, yeah, something like that. But you could tell she just felt so safe, so comfortable. And it was, so people were like, Jason Kelsey is the new Barbara Walters. Give this man a Pulitzer.
I'd like if I would interview you.
Wasn't Travis Kelsey there?
Travis he was just making like hard eyes at her the whole time.
God.
But they're so supportive of each other.
They're
and
the
like,
greatest couple.
that's what I want. Like, I want a man who is literally obsessed with me or nothing.
Right?
Obsessed with me or nothing. But even if you're not like a Taylor fan, you should watch it.
You better set your sights just a little.
No, I was so just emotional just
God.
watching it, just seeing how happy she is and how much respect that they have for each other. It's great. I am on cloud nine. Like Swifties, like I have adrenal fatigue today because my dopamine is just like sky high. But you can watch it on YouTube or listen to it on Spotify. It was great. It was great. We got to see the cover of the album. She showed all the tracks that are gonna be on it. But it was funny. But she opened it up. She's like, "Look," she's like, "I know this is a sports podcast, and one thing sports fans want is more of me." So she's she's funny. She's really funny. Anyway, I will end of rant though now. But today is a special day because it's open house day. So gird your loins. We are opening the doors of the Tasty offices and studios today. So we hope that you will come on by, and we hope that you've registered, first of all. And then tomorrow, Tom and Bat live on stage at Thalia Hall at work by 11 doing some live trading. Are you jazzed?
Oh, yeah.
So jazzed. I
So
can't
jazzed.
wait for Tom to make fun of me for 2.5 hours. It's going to be amazing.
Doors open at 8. Show starts at 9. Get there early.
Oh, yeah.
Oh yeah.
We'll be there early.
Yeah. I'm very
We're
excited.
looking forward to it. A little Thalia Hall.
Yeah. Yeah, there you go. Hey, we got a great show for you today. It is, what day is it? It's Thursday.
Thursday
It's a
the 14th.
thrilling Thursday here at Tasty Live at the top of the 8 o'clock hour. Trades from the research team. The research team is going to present their trade ideas to Tom and Bat. That's at 8 o'clock. And then at 8:40, we got Dylan in the house for Hear Me Out. What are you talking about with Dylan today? Do you know?
So we did something a little different today with Dylan.
Okay, break it down.
We usually have our producer to the stars put together the question. We've changed the format.
Yes.
Not again.
So we changed the format to where we ask Dylan questions and let him just riff the answers.
Sure.
But we review the questions ahead of time just to make sure they're on point.
Right.
Well, today we decided, you know what? We're not going to review the questions ahead of time. So
That seems reckless.
Responsible.
Seems
we let
careless.
our producer and our production team write the questions. And
So you're both going to be surprised.
Yes, we have no idea what we're going to do.
Okay, all right. That's gonna be great. If you
Yes.
want to watch a car crash, that's at 8:40 this morning.
We literally have no idea like what direction they're going or anything.
Okay.
So I can't tell you.
Well, that is going to be at 8:40. All jokes aside, then 9 o'clock. Our market measure, market pullbacks and option loss patterns. Huh?
Mm-hmm.
What does that mean?
Market pullbacks and option loss patterns.
Yeah.
Just basically, we're talking about when hasn't been a sell-off in so long, people forgot what happens. But if there's any kind of a sell-off in the market, what happens to, to what happens to your option positions when the market sells off?
Sure. Like what happened in April?
Yeah, April's kind of an outlier.
Sure, I know.
It's more of like a normal sell-off.
Oh, okay. And then live from the trade desk, big boy Scotty S. Counting down the top trending tickers over at Tasty Trade. That's going to be at around 9:30. So definitely want to tune in for that. But hey, in the meantime and in between time, do you guys want your daily dose? Yeah! Hit me with my theme music. Let's go.
Our leading story. Breaking news.
Breaking news.
Across the wire. Leading story. Top story. Just in.
In today's headlines,
Breaking news.
All right, everybody. Today's a thrilling Thursday. It's August the 14th. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Ready for the news.
There is a rumor in the Sun, but it can't be confirmed or whatever, that perhaps Taylor would set up a residency at the at the Sphere in Vegas. Again, it's not confirmed. It would literally change the economic fortune of Vegas, right? Like, Vegas is like it's been struggling.
I think I read an article just recently, like a day or two ago, like hotels. Obviously not in Chicago for the Air and Water Show, but
sure,
hotels around the country are down by like 60% or so.
Sure, yeah.
There's no foreign travelers anymore.
Right.
Foreign travelers have to.
Right.
Nobody's coming down from Canada. Nobody's coming over from Europe.
Yeah.
Sure. And Vegas needs the revenue
coming over from Japan or China from Vegas.
Right, but look, for Taylor Swift, I would go to Vegas in August. I would go to the surface of the sun for that woman.
I agree with you on one thing. If Taylor Swift had a residency in the Sphere, it would change the economics of Vegas.
It would change the economics of the world.
I don't imagine.
Like, I'm gonna just randomly,
yes.
I'm gonna pre-book some hotel rooms.
She would do it? Is that what you're going to say?
I don't imagine she would do it.
Oh my God, 100%.
Really?
100%.
It's an interesting option because she gets to be in one place. She gets to set like her schedule, her base. Like, again, it's not confirmed.
She already had generational wealth, but it would be generational wealth for her. Easy gig. She doesn't.
It couldn't meet demand though.
Venue in the world.
Right. Right.
I don't know.
It'd be the biggest pull in the world.
How many people does that hold?
I will look it up.
20,000?
Maybe.
I don't know if it's that big.
What? No, not interested in new AI mode. 17,600 with additional standing capacity of 20,000. So, but if you think about, like, she sold out Wembley 8 times, and that's like 94,000 people each. Like, you know what I'm saying? Like, it's just, the demand is massive. But I'm just putting it out there. I'm going to just book some hotel rooms for some random weekends in Vegas that are cancelable, and then that way your girl will scoopy before they jack up the hotel rates.
Boy, if you took such pride in your questions that you're going to ask us on Friday, we'd be in great shape.
Yeah, I don't speculate too much on that.
I'm just saying, but if you could book a hotel room and then cancel it,
why don't you book like 1,000 hotels?
Right, and get your money back, flip them. Yeah.
I would say the Oakland A's will get to Vegas before Taylor Swift.
Yeah, I don't know. It's just interesting. Hey, well, someone who is on the road.
Bears are going to be there this year.
First, bat any earnings for tomorrow?
Hey, Matt.
Hey, Matt.
Hey, Matt.
Yeah.
Hey, Matt.
Hey, Matt. Amen.
Amen. Hey, Matt.
Yeah.
Okay.
What is Matt trading for? And I have no idea.
Ooh, give me a guess.
This would be a while. I haven't traded AMAT in years. I'm going to say, I don't know why I'm going to say this number, 132.
You'd be low, 190, just under 190.
All right. Hey, getting to my first headline of the day, someone who is hitting the road, as Jerome Powell, JPZ, headed to Jackson Hole next week. Could his speech push back on hopes for a September rate cut? The Fed Reserve Chair is likely to push back on growing investor expectations for a September interest rate cut, as the rate-setting committee is still divided over their next move. I believe Jackson Hole takes place, I think, August 22nd, so a week from tomorrow. What are you looking at in bonds, or what are bonds looking at in you?
Well, they're pushing 116 right now.
Oh, that's great.
At 116, he could cut rates.
Okay.
So
115.28. They almost flew to 116, as you said. You are correct. Up another 12.
Yeah, I sold some out this morning. It was a very good trade. We bought them in the 114 handle, sold them near 116. Good trade. And also covered some bond options this morning. Good trade.
Nice.
I think that here he could easily cut rates at 116. At 114, I don't think so, but 116, sure.
All right, we will see what happens. Hey, small caps rally as the Mag 7 stocks roll over in market rotation. The Russell 2000 yesterday rallied while the Mag 7 fell. Investors rotated into small stocks, shifting attention away from the mega cap stocks that have led the market in recent years. The Russell gained around 2% yesterday. Was strong. Why are you laughing?
I like this picture of this guy looking at the screen like, wow, the rut's up, Tony.
What's up?
I don't even think he's looked at the Russell that day.
I don't think so either.
Just a stock photo that I found.
I know. We're
what are you guys doing, IWM, Rut?
Screw IWM. DIA has a dividend, so that's your public service.
Diamonds are forever.
Yeah, I know we don't trade a lot of diamonds.
Rut's down small today.
Okay.
What's that?
Ruts down small today.
What are you doing in the indices relative? So SPY to NASDAQ, anything?
Nothing because they're so IV's so low. We're short SPY and NASDAQ.
Yeah,
Yeah.
you're holding some directional.
We're holding
bias.
directional trades, but no short premium.
Okay.
IV rank of 10.
What are you gonna do for the show tomorrow? Like, it's
do with a boom
slim pickings out there.
It's slim pickings, but we always find stuff to do.
Okay, well, good luck.
It's Scott Sheridan's money. We don't really care.
Okay, that's true. That's true. You right.
Do we wing them and how?
Hey, oil prices. Oil prices edged higher, regaining ground after a sell-off in the previous session. With the upcoming meeting between.
What paper are you reading?
Well, this is from Reuters last night. No.
Oil hasn't had an uptick since it was trading.
Take it up with Reuters.
I mean, it's up 29 cents, which
28 cents.
okay, it is a 0.5% move to the upside.
That's gaining ground. Can't you read?
Yeah.
I didn't say how much ground. I said
Right,
it's gaining ground.
At the end of July, it was $70. It's $62, and at $62.22, and $1,000 a point, it's down about $7,500.
Oh my God, you're picking pennies. It's gaining ground.
Gaining ground. Hey, but is there any market volatility? I think I already know the answer to this, but I'm gonna ask it anyway. Is there any market volatility around this summit or talks that you're
No.
Nothing? Okay.
I don't know, but I think Trump's talking at 1 o'clock today, so that could be a buy.
Oh, okay. I didn't know that.
We're
Trump
trading
never shuts up. He's always
0-day
talking.
options.
He's always talking.
Are you doing anything in natural gas?
Yes.
Okay, how about that? What are you doing?
Been killed.
Okay, good.
Nat gas not gaining ground today, down 4 cents.
Or more sense.
I love that for
Or
you.
more cents. Okay, yes, yeah. Down at almost a full point, which would be $10,000.
What is it now? Nat gas, $2.89.
Right, $10,000. 3 to 2 would be $10,000.
Yes.
Yeah.
Oh wow,
Yeah.
those are big contracts.
Yeah.
Hey, Bitcoin touched a record high yesterday as the crypto rally rages amid bullish fundamental changes. Bitcoin rose over 1% to just above 121,655 after hitting 123,500 on Wednesday.
What is a fundamental change? I'm curious.
Amid fundamental changes, like I think regulatory changes fundamentally, that changed fundamentally. No, I think it's just the regulatory environment has changed. I know you're laughing, but it's not true.
No.
Not true.
It's not true. But Bitcoin back to all-time highs.
Bitcoin making new highs too. Trade up to 125,000.
Woo!
200 on the futures. Now trading 121, so it shows down 1,900, just under.
So when you guys had Bitcoins, how many did you have? 5, 3, 5, and you sold them for what, 7,000 a piece?
Around that.
Yeah.
How many did you have though? Was it 5, 20?
$5,000 more than
How many did you have? Like how many actual coins did you have?
Oh, actual coins?
5, I believe, a little over 5.
They're 5 or 7.
Okay, so 5 or 7, 5 to 7. Oh wow.
We bought them together, you mean?
Yes.
Yeah, like 5 or 7.
Yeah.
When you had to call Gino to unlock your wallet.
I think it was more than. I think it was either 6 or 7.
Yeah.
Okay.
You're right.
And then that was
I
like
think we ended up with like 5.5 after we paid that extortionist.
and that was like 2015, 2016.
No, I think it was before that. I don't.
Oh, okay. But we were in the new office. I remember that much.
Yeah.
So
We were at Sagamon.
yeah, that's what I meant in the old office now, but it
Yeah.
was new. Okay, whatever.
Elusive Gino, that office. The lowest we paid was $275. And the highest we paid was $500.
Oh wow. Okay.
Well, we started buying it at like 500 and change.
We started buying. See, here's the thing.
Here's the thing.
I think we bought the first coin at 500 and we were like laughing.
Yeah.
We bought the second one like 400. Then we paid 300. Then we paid 275. We're like, oh my God,
I can't believe you took me down in this.
I go, these things are going to zero. I mean, we really thought they were going to zero.
Right. Yeah.
And then
And this was back when people were using them to buy Papa John's pizza. You
Right.
know, like nobody.
so we figured
nobody
they're going
knew.
to zero. This is a waste of like, $3,500, $5,000.
Right.
And then we lost our password.
Right to your wallet. Yeah.
And then the best thing in the entire
Which was the
world-
best thing because you guys would have gotten out of it.
Losing the password was
Oh, we would have sold it at $1,000 for sure.
Right. That's what
that was
yeah.
inconsequential.
Yeah.
Tom's computer broke. Got
Yeah.
the blue screen of death, and he stuck it in some closet somewhere. And then we completely forgot about it because out of sight, out of mind.
Right.
Everything else. Then when it traded around $10,000, I said, don't we have those Bitcoins?
You're like, oh yeah.
Yeah. Look at Daddy.
Hey, well, also on that trend, Ether is doing big numbers. What's driving Ether's catch-up trade? It's also nearing a record high after Bitcoin's streak of peaks. Both cryptocurrencies have been riding a wave of risk-on sentiment, but ETH is backed by Wall Street titans. What are you doing in ETH?
We started selling some yesterday.
Okay.
We'll sell a little bit more. I mean, everybody's now 10,000 to give it.
Who are you impersonating? Who talks like that? Okay.
That's what his mind sounds like.
Who talks like that?
I want to start selling some.
Okay. All right. Well,
4,700 and change record also.
Yep.
what is Coinbase doing? How about that? That's important.
Not much. Down a couple.
Coinbase 225, maybe down $2. Even the S&Ps just sold off. The number just came out at 730. They were unchanged, maybe wrapped around down $1, up $1. They're down 23 right now. Nasdaq down 88. Russell, the biggest mover to the downside, down $27. It's a 1.25% move. The Dow down 137. Volatility only up a nickel. I would think it would be up a lot more. Where we've been with volatility and where the market has been. So maybe this is going to be short-lived on this downside. We'll see. Watch volatility. Bonds down 6 to 115.10. Sadnov, they're on their lows. Scoopy. Bonds, scoopy market. Scoopy everything. Scoopy.
Oh, I'm not scoopy in the market. That's for sure.
All right.
I'm sorry, what are you doing? Are you calling plays on the defensive sideline?
Yes,
Why
right
are
now
you
he's
covering
running
your
his
mouth?
mouth. Yeah.
It's the 345, 7th Highland Swinger, tight right. What are you doing?
Ready, break.
I'm offering puts in the bonds.
Okay.
I missed.
Offering puts in the bonds would be a bullish trade.
Yeah.
Yeah.
You know, you've been doing this 40 years. I'm telling the people out there, you say offering puts, people think, oh, I must be, maybe he's getting long or getting short. I don't know what he's doing by offering puts, what that means.
Offering puts, I bought a few bonds.
Hey.
Did buy bonds.
Because I sold them out this morning
14.
at 30, buying them back at 14.
Did some 115.30. You did, correct.
Nice.
So
You didn't get filled on your puts. You did get filled.
I did not get filled on my puts. So when I didn't get filled on the puts, I bought the futures.
There you go.
Understood.
That's how it works.
Hey, here's something interesting. Weekly mortgage refi demand shoots 23% higher, and riskier loans are making a comeback. That's interesting. The refinance share of mortgage activity increased to 46.5% of total applications from 41.5% the previous week. Applications for a mortgage to purchase a home did rise 1% for the week and were 17% higher for the same week 1 year ago.
I love the first line of that. What's the first line?
What?
What'd you say the first line?
Who's on first?
First line.
Weekly mortgage
refinancing
refi demand shoots 23% higher with riskier loans making a comeback. No?
Yeah, like they say, riskier loans are making a comeback.
Yeah.
Look how they frame that. Riskier loans are making a comeback.
I'm feeling frisky and risky.
Yeah. Riskier loans are making a comeback. Like it's a good thing.
Yeah. No, they didn't say it's not good or bad. I don't
say good or bad.
I don't think that this headline implies that it's good or bad.
What's a riskier mortgage loan? I'm just
I don't really know.
All right. Well, can somebody tell me what that is?
I just like that line.
Been doing this for
like a jumbo or no.
Jumbo's just over whatever it is.
No, I'm just kidding. No, probably
75,000. I mean, everything's basically a jumbo loan. If the median price, I think, is 400,000.
I was just joking because
I know.
I just like to say jumbo.
I'm trying to quantify what's a riskier loan. Like, what is that on a mortgage?
Oh man. Oh, what is that? What did you just get filled in?
Puts.
Got filled on his puts. With.
Oh, nice.
Here, putty.
Whoop, whoop.
Here, putty.
Hey, did you trade Cisco for earnings?
Yes, very small.
Well, Cisco reported a narrow earnings beat, and they issued an inline forecast for the year. Cisco brought in revenue $14.67 billion versus $14.62 expected.
Stock's down $1.50.
Okay.
All we did was sell naked calls, so I think we're going to be just fine.
Revenue increased 7.6% year over year. You don't care.
I could care less.
Okay. I'm telling the people who cared very deeply.
All we did was sell 75 calls, the 75 calls. Mm-hmm. And we will buy back on the opening for a nickel, and we'll be very happy.
I guess July's wholesale inflation was much hotter than expected. I know you don't super care.
Yeah.
No, I do care because we're short.
Okay.
S&P's down 28, and this is the big short day today. August.
for expiration. You mean, from
S&P's
one
down
day to the
27,
next.
NASDAQ down 100. Oh, Russell giving it all back from yesterday, down 35.
See, I'm so happy. So Jessica, the editor here, she trades a lot, and she has a rut position that was like moving against her, and I feel bad. And I was like, girl, I hope the Russell goes down for you. I hope it's enough for her.
Jessica cracked me up yesterday afternoon. She's getting in the elevator. I go, there's a company meeting, and she goes, I'm going to listen on my headphones. I'm like,
Well, she has to commute. She commutes home,
I'm like,
and so
oh, sure you are.
no, she listens.
Yeah, no, I listen.
She listens. Not everyone could physically be here, but she has to commute. So, do you know what the nightmare of that was? So there was a big company meeting yesterday, and so there's two ways to pay to park in the garage here. You have a transponder, like in your car, that you just
There's a
the gate
magic
just
line.
goes up, right? So I use the majority though of people just use it's the parking.com app. And so we get like a discount because we're employees. But something glitched in the app.
Oh my God, the line was crazy.
The line was crazy to get out because no one could get out. Everyone had a valid ticket to get out because everything's on your phone now. And so I had to wait for the person next to me to push the button that calls the lady in India, literally. And she has to open the gate manually. And then I had to push it. And then Bridget was in the next lane. And then she pushed it. And then I was waiting like 20 minutes.
And I was behind all you losers.
I was listening to a very spicy audiobook, and I was like, let me turn this off.
I was behind like three of you guys, and I'm sitting there going, oh my God.
It's not our fault. It's not like it's.
I figured that out.
I mean, they should have just opened the gates and just let everybody
I
out.
don't think they can.
I don't
Because
know.
if they could, they should have.
Yeah. Anyway, it was a cluster. You know what?
Yeah, I couldn't get out. I was trapped like a rat.
New IPO yesterday. BLSH crypto exchange bullish is now valued at $13.2 billion after a blowout NYSE debut.
It is the biggest joke I've ever seen.
They priced their can I get my story out first? They priced their IPO at $37, previously lifted range from 32 to 33, and then it just went crazy, and it went to 92.60.
I saw it over 100 at one point.
Sure.
And this is
High is 118.
right. And if you could just make up a
BLSH.
scam, I call it the bullshit exchange.
Okay.
You can make up a scam exchange that probably isn't worth $1 billion, let alone 13.2. I mean, I think if you could short this, we can't short the stock yet.
It's hard to borrow.
It's hard to borrow. Well, you can't short.
Well, how come no one is seeing through this so-called scam?
It's because we're in the middle of the IPOs are all bubbles right now.
Okay.
Every single one is. But
Oh,
this-
play the bubble video. Play the bubble video from yesteryear.
Oh yeah, Beth.
Anthony.
Ah!
You in trouble?
I love the bubble video.
Play the bubble video.
in
Make sure we
trouble?
can hear it in studio too.
yeah.
Please.
Oh, it's
Come on.
Steve and Sarah.
Please.
Yeah.
Please.
Great. We
Yeah.
gotta play the bubble video.
Gotta play the bubble
Right
video,
on.
Beth.
But anyway, what
Beth,
are
if you
you?
can't find it, get John to do it, please.
Beth, you gotta play the
John
bubble
can
video.
do it. He's
It's one of
amazing.
my favorites.
I think that tape got damaged when in the move.
Bull crap. Bull crap. Yeah.
Scott Sheridan recorded over it.
One of his home videos.
Yeah, we don't have it anymore. So
You ever made a home video, Sazno?
nope, I'm gonna keep it moving. Apple is reportedly planning an AI comeback that could include a tabletop robot. Shut up and take my money. Apple could also be getting into home security cameras, smart displays, and more. Apple has a big event next month, little mini binary event for their iPhone 17. But Apple wants a bigger place in your home. According to a new report, they're not just happy with the iPhone, Watch, iPad, MacBook. They want AI, and it could include a tabletop robot coming in 2027. Is this enough to turn Apple around?
I would.
Or has it been turned around? Is Apple back?
First of all, I wouldn't think so. I mean.
Is Apple cheap relative or is Apple
No, not
overbought?
anymore.
Okay, it's over. Okay, that's what I was asking.
They went to the White House. They paid Trump off, and now they're okay.
Yeah, okay.
The most approachable president in all the history? That guy?
No, the easiest president to bribe in all of history.
Hey, what's Apple doing? Can we talk about Apple, please? The stock?
232 and
Thank you.
change,
Yay.
down about $1, but even the S&Ps are still down 32, so you would expect the market.
You're telling me you
Well,
wouldn't
till the
want
28 cents.
you wouldn't want this little Apple robot on your
No.
desk? It could be your best friend.
I don't want it.
Okay, well,
I don't even understand the purpose of this.
I don't know. Look at his little face.
No, but what is it for? You're going to ask it a question?
Yeah, I mean, better that robot than me. You ask asinine questions too.
Why can't you ask your phone the question?
You could.
Yeah.
You
What do I
could.
need a robot for? Taking up space.
But I don't know. Maybe you
Final
could do
Fantasy.
other things.
Why
but
do I need to give Apple $2,000?
So say this robot could also, while you're gone, could patrol around your house and be like a security camera.
Sure, say
And
it could, but it probably can't.
I saw some
just
robots that look really lifelike, and you know what the next step is.
The humanoid robot games are actually happening live right now in Beijing, China. I was watching the stream this morning. So they have like
this stuff
robot
is moving
boxing,
too fast.
like robot events. I'm here for it. Hey, Google is pledging $9 billion to expand AI and cloud infrastructure in Oklahoma. Oklahoma, Oklahoma.
Can't do that with the
Okay.
show tunes. You gotta
What?
get-
I'm a musical theater kid.
Yeah, you gotta
You
get
ever
to
saw
90.
Oklahoma? Oklahoma, when the
Only
wind
steers and
comes
queers.
rolling down the plain.
Oh, sorry.
Alphabet's Google is going to spend $9 billion. You're canceled in Oklahoma over the next 2 years to expand cloud and AI infrastructure. What are you doing? I've never been to Oklahoma. What are you doing in?
Oh, I've been to Oklahoma a bunch of times.
Really?
I don't think I've been to, maybe once.
I've been to Tulsa. I've been to.
Yeah, I think I've been to Tulsa.
Where else have I been? Oklahoma.
Name another city in
I was
Oklahoma.
like, where?
Oklahoma City.
Do you know what though? I do want to go to Oklahoma because it is the home of the pioneer woman who I love, Ree Drummond. Like her family owns like one of the biggest, one of the largest ranching families in the country. But she has like these cute little markets and shops in Oklahoma, and I want to go.
There you go.
Tom, you love the pioneer woman.
If they could make an apple pie for him, he would love them for sure.
Yeah. Hey, this is interesting. Navy and Air Force projects worth over $800 million that were very close to completion are being axed. Instead, the contracts, so these projects took 12 years and $800 million in combined money to develop, and they're almost done, and they're being axed so the government can rewrite the contracts and give them to Palantir and Salesforce. I'm not making any of this up. So we spent 12 years and $800. You want to talk about waste, fraud, and abuse? Why not just finish this? Because you spent $800 million and 12 years to do it, and it was almost done, like this close. And then now you're going to get rid of all of that, redraw the contracts, and give it to Palantir and CRM?
Yeah, but without knowing any of the details, it's too hard to say.
So you're pro
Talk about everything
Palantir
else
now.
without any details.
Yeah, I know.
What difference does it make now? You're going to do details and facts? I
No,
mean,
well,
not
I mean, I have
you
the.
throw out opinions and
I-
throw out
Pro Palantir,
stuff.
I'm just saying it's too hard to sit here and say the unraveling of two Pentagon projects. I don't know what that means.
Sure. Well, I was trying to explain to you. I mean, I have all the details. I mean, you can read them, and it's, yeah. What are you doing in
What if the
Palantir?
Republicans unravel two Pentagon projects? Then you'd have an opinion?
What are you doing in Palantir? All-time highs.
Or a little short.
Okay.
Down $2, son, buck and a half.
Oh,
I'm
Scoopy,
exaggerating a little bit
Scoopy.
for you because
We're a little short.
You need a good day.
Hey, here's something that's interesting. Tech startups are reportedly hiring more software engineers and other positions related to research and development in the U.S. rather than overseas due to a new tax deduction. As part of the One Big Beautiful Bill, companies can take deductions for U.S. spending on R&D in the same year as the expense, while those for foreign spending on R&D are spread out over 15 years. I didn't know any of this,
That's
obviously.
for R&D, not
Right.
for development.
Yeah, okay.
Yep.
Well, then that's great.
Yeah, I don't know how many companies do R&D anymore. They mostly do software development. That's how they classify everything.
Sure, right.
Yeah,
All right,
sure.
but it counts. Can we use that money? Can we do
No, we don't do the classic R&D. We do,
Ooh, we do more R&B.
You are in delicious.
we're a dev.
We do
firm.
R&B. Hey, Amazon is launching same-day delivery of meat, eggs, and produce in more than 1,000 cities. The company says they are launching in 1,000 cities with
Who would
plans
buy
to
meat
expand
through
to
Amazon?
2,300 locations. Amazon owns Whole Foods.
No, yeah.
So you can order from Whole Foods.
Doesn't say ordering from Whole Foods. It says Amazon.
I know, but that's
yeah.
So there's a distinction, but that's the difference. So now you can just use straight Amazon. You don't have to just use the Amazon Fresh. You can just use Amazon and buy
I know.
fresh
Who
produce.
would buy meat on a website
a busy person that doesn't have time to go groceries. Like who orders Instacart? Like you're ordering meat on a website for like
A lot, Tom. A lot.
Beth orders meat on a website. I order a different kind of meat on a website.
Meat is, package, so it's not like what you're thinking, like with a styrofoam bottom kind of thing. It's
Although to be fair, the way that my Amazon guy is dropping off my packages, those eggs are going to be broken.
I can't stand when they leave it at the garage. Like they should bring it to the door.
You can make a
My
note.
garage is kind of in front of my house, and my door is a little.
You know, you can make a note in your profile. I can show you. I'll help you.
Thank you. I appreciate it.
But you really can, and they can, or you could get the Amazon garage where they have the code, and then they would just leave it in your garage.
But the sauna they can leave by the garage and don't bring it.
Did you get your sauna yet?
No, but it's in production. It's ready to go.
Oh man.
I know you're so.
What are you guys doing in Amazon?
I swear to God, I'm not jealous.
I swear to God, you're jealous.
What are you guys doing in Amazon?
Not jealous.
What is happening?
Amazon.
Yes.
Nothing.
Amazon trading 225.5. That's actually.
I'm not doing it on Amazon, but I got to tell you, I'm really sick of the Jeff Bezos, Lauren Sanchez stories.
But he doesn't run
Now you're
Amazon.
sick of it?
He doesn't run Amazon.
But I'm really sick of it now,
He wants to cast her in the James Bond movie.
which is disgusting.
I mean, why is it disgusting? Like, if you.
It's like because you're the richest person in the world.
I mean, you own this network and you put yourself in all the ads. You made us put you on the front of the magazine.
And you actually go so far as to cut me out of the ad.
Yeah, well, you made us put you on the front of the magazine.
I cut you out of Bloomberg.
And you cut me out of the articles when I'm sitting
if
right
Jeff
there.
Bezos wanted to put himself
Yeah.
as Superman, I'd be all for it.
Okay.
I just don't like the fact
That's his love. That's his wife. That's his
ride or die.
Right,
I
like,
mean,
that's
his soulmate.
I don't know.
I give
Hey.
him 14 months.
I'm skipping a couple stories here.
How about this? I'll sell 14 months.
You think they'll last longer?
No,
You think they'll last less?
less. Like it.
Buy 14 months.
They're not going to get. I say they're not.
Buy 14 months is all I said. Buy them.
$100 says they're not together in 14 months.
$100, 14 months, they don't file for divorce.
Oh, file for
No,
divorce.
you can't say like they're not together. I don't see them every weekend to quantify
Why are you
that.
so obsessed with Jeff
I'm
Bezos?
not. I'm just saying.
No cash bet, but 14 months. We'll reschedule this.
All right, someone write this down. Hey, skipping a couple of stories here. This is great.
Britt, put that in my calendar, please.
Because that divorce is going to take longer than 14 months.
I get it. but
No,
fine.
this is great. I love this because this is literally the Eras tour, but for middle-aged men. So this Oasis is on tour, and there's a pop-up store coming to Chicago. So Oasis is playing at Soldier Field on Thursday, August 28th.
Yeah, our own Josh has been waiting in line for 3
The Oasis Live 25 fan store will open on August 26th. It'll be at 1421 North Milwaukee Avenue. I'm so excited. I say, whatever fandom you are, if it's something that you love, I support everything. I don't like it when people are like, oh, that sucks, or I don't like whatever, man, just keep it to yourself. I'm vibing with people. Like, if you like Oasis, then like, dudes are so happy for this.
Josh
and I
is a
love that
fanboy.
for them. I love that for the
No,
dudes.
I mean,
I know.
Would you go see Oasis if you
like
got tickets?
Oasis.
I like Oasis, but I'm like Tony. I like them. I'd go see them, but I wouldn't wait in line.
yeah.
Today is gonna be the day that they're gonna throw it back to you.
When was the last time they came out with a song? Too?
Like
I don't. That doesn't
20
really mean
years
anything because
ago.
I've seen bands that haven't come out with songs
Sure.
in 20 years.
20
so.
years ago.
I don't know, but you could go to this pop-up and get some cool merch, though, so...
I'm not going to walk around like anybody who walks around with an Oasis T-shirt on.
Loser.
You guys, what?
Josh, get in here. Let me see what you're wearing underneath that sweater you got on.
Hey,
This summer.
finally today, the NBA has approved the sale of the Boston Celtics to PE mogul Bill Chisholm for $6.1 billion. The league said the transaction is expected to close shortly. When it does, Chisholm will take ownership of at least 51% of the team, with full control coming by 2028. That could bring the total value to $7.3 billion.
Seems cheap.
Yeah, I think it's, but you don't get like the building though. Like you don't get the, I don't know.
No, it's not. Does not include the building. Whatever.
Right, yeah.
Listen, you know these guys when they got like $6 billion or $7 billion they're spending this, and they got $50 billion. Who cares?
Sure, yeah. But the NBA approved the deal, so that's all I was reporting. I was not, who cares or not. Hey, finally today from my viral video of the day, it is the summer, and that means it is the most magical time to go to your local state fair. I always love state fairs, county fairs growing up. What? You never went to the state? So growing up in Texas.
We have a state.
We didn't have a state.
Growing up in Texas, I went to the Texas State Fair, and then you move here. I would go to the Wisconsin State Fair because it's closer.
Yeah, we didn't go.
It's a different state.
But I lived in Wisconsin.
I know, but we heard you.
Technicality.
But we didn't have. There wasn't such thing as.
Where am I going to go down to Springfield?
You're older than the state fair. There's state fairs in every state. You just didn't go
I never
to
heard of a
You're
state
not going to Albany.
You're looking at Des Moines, Iowa here.
That's what I'm telling you about, the Iowa State Fair. So I love when they have the contest at the state fair. They'll have like the mullet contest or the husband calling contest or the butter sculpture contest. Sweet. So, but in Iowa, they had for
I used to
men.
do that in Brooklyn all the time.
In Iowa, this is great. It went viral. For men, they had the best legs contest.
Sadnov, we got to get you in this.
Roll
You're
this
on social
footage.
media. I can't believe you haven't jumped on this.
Look at this epic farmer tan.
That is a redneck.
No, he's a farmer. It's a
I know, but
farmer
I'm sure
tan.
you got a redneck too.
Well, I look at the judges writing it down so seriously. This guy has nice legs, dude. This is just so funny. They're so proud. Look at those quads popping. I like the slow reveal. This guy's just twerking. Congratulations.
Sadnov, I put you in a pair of heels out there with those twigs that you got. Oh my God, that little thing. Oh my God.
Oh my God.
Are you going to get the tearaway pants?
Oh, sure.
I went to the state fair once in Nebraska.
Okay.
We were 16.
That's all about you again.
You should love State Fair. They have like
We were
deep
16.
fried
We
Oreos.
trained,
What place did you come in?
we trained one of those like
Pigs,
Black Angus.
hog, what?
Black Angus.
Black Angus.
Hey,
Ow.
can we go? Because you're going to yell at me. You're like, ooh, Vanetta went over.
No, we're not going
Like,
to yell at
look-
you this time. What place did you come in? You didn't place.
We didn't place.
Hey, Bat, what's coming up next?
Bubble video.
Bubble video.
Bubble video, yeah.
Oh, the bubble video's next. Well, take a minute to watch this. Don't go to the bathroom. Don't get any cup of coffee. Stay tuned. Watch this bubble
We did
video
this
from
in-house.
yesteryear. We'll be back in 90 seconds. It's Tasty Live.
10 years old, the bubble video.
Well, it would have been a crime to pay money to do this.
That's true. Jason
Check out this bubble, we blew it on the double. We get into trouble like Fred and Barney Rubble.
Bubbles was the name of Michael Jackson's monkey. I only know this fact cause I am a bubble junkie.
Hey you bubble junkie, wait, this bubble smells funky.
Sorry, I let one rip. Let's escape on a bubble trip.
When the market hits the top, this bubble's gonna pop. Now shake that bubble butt and do the bubble hop. Blow it, pop it, float it, then hit it. Suck it, then hook it. Lick it, whip it, sip it, click it. Blow it, pop it, float it, then hit it. Suck it, then hook it. Lick it, whip it, sip it, click it.
Drop it like it's hot on the bubble pop master. Been all around the world just to ask her how it got so big and what she's all about. With my hands on a boat, she will never doubt. The A-Rod player got game for days. He's working so hard on a bubblicious way, so I'll leave you with this. It's a bit of a twist. Ain't got no bubbles bigger than this.
Welcome to the bubble trance.
Getting high on finance.
Please don't pop this bad romance.
Golden bombs don't stand a chance.
Bubble popping, karate chopping, we're hip hopping, there's no stopping.
Don't you stop. Chop, chop, chop like a butcher shop.
Milky bubbles are the best. Fingers in, let's do taste test.
Brown and bubbly on my tongue. Tastes like dung.
Must be dung. I wanna pop it, just let me touch it. I wanna pop it, just let me touch it. I wanna pop it, just let me touch it. I wanna pop it, I wanna 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 touch it.
let me touch it.
So I started trading in the equities market when I was 18. Real basic ETFs, mutual funds. I didn't discover options and really tastylive until about 2012. It made sense to me from a risk perspective. And so I started trading and never really have looked back. The people you see that's who they are. They're trying to be as open and clear as they can with the trades that they're putting on. Teaching a methodology, like teaching the logic behind things. It is tried, true, and tested. They back it up with research. They share that research. It's not just trust us and do this, which is a very dangerous thing in the financial world. But learning about that in the tasty universe, it starts to prove itself out, right? When you follow the methodology, you'll see those profits and you'll understand why a position did what it did. Sometimes the market wins and sometimes you have a 90% winner and you don't know, why don't I do this every day, right? This is easy. But you kind of have to reset that and just go, okay, close the trade and move on to the next one, which is really what Tasty's about.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Tomas, we are back, my friend, but you know what that means. Time for a little bit of confirm and send. Before we do, let's go to a quick look at the market. After the number came out, even the S&P sold off about 25 handles. They're down 26 right now. They trade as low as 53, about 10 handles lower. They trade up to just under 6,500, 64.91 last night. NASDAQ down 115. Russell's your bigger leader to the downside on a percentage basis, 1/3%, down 31. Dow down 166 and change. Volatility up by 29 cents, 1882. Still at the low end of its range. We'll watch volatility, see how the rest of the market reacts here. Bonds sounding off. They're down one tick. Right where you bought them, 115.14 right now. Down two ticks, got up to 31, down to 9. Relatively tight range after the number 2. Bitcoin probably the biggest mover overnight. Down from 125 down to 119.5. Trading down almost $4,000.
Yeah, that's a pretty big move in there. I also saw Coinbase drop like $10.
Yeah, Coinbase did drop about $10, trading to 318, just about down $9, $9.10 as you just said.
Yeah, that's kind of weird. That's a weird move in Bitcoin, like at 8 o'clock in the morning.
Yeah, I don't think it's number related or anything else like that. It's just pure supply and demand, if you ask me. Oil up 44 cents, first uptick in quite some time in oil. Gold down $8.90. Silver down 35 cents. That's a bigger move. Sadnov, we'll get to confirm and send because we got trades from the research team, and the diamonds have a dividend. Let's call it around 50 cents. So watch your.
You're running awfully late, sir.
Yeah, ready to go.
Emails that came into us overnight. Confirm and send. I hope you all enjoyed the bubble video because we've got a lot of feedback already. People say, I never saw this video before. Yeah, we did it over 10 years ago. Probably 12 years ago. It's great.
But the more important thing is after we made that video, it took 6 months plus before the market actually sold off in the bubble. So we may still have time to this.
It was a bubble then.
We may have time for this market to go down.
I was looking at a trade. I noticed the delta shown on the Tasty Trade platform is quite different from other platforms. Why would there be different values? Isn't the model the same for everyone?
Let me get to this question. I'm so sorry.
I was looking at a trade and noticed the delta on Tasty.
I mean, quite different. What? 2 deltas? I mean, 3 deltas? I mean, everybody comes to the same conclusion on different brokerage firms and platforms. Everybody uses a little bit different calculation. So they're an approximate, but I mean, come on.
And not everybody uses the exact same model. I think Thinkorswim still uses the model we built in 1999, 2000. I don't know. I assume they still use the same one. I mean, Tasty's, we built it in 2017, brand new model, and I think it's the newest one in the whole industry. And we actually have a team here that builds option analytics and models. So I don't care what any other platform says. I would roll with what Tasty says. It's the best analytical platform in the world.
Yeah.
I don't care what other platforms say.
Sure.
They're all going to be close to the same, but ours is probably the best. Let's go to the next slide. I do naked strangles with a $40,000 account. I recently started trading futures options with 2/3 of my usual buying power to cover the additional leverage. However, I'm still not very confident if I'm not going to go over my usual position size. Is there a good statistic to compare leverage across various futures products?
Kind of hard to say here because you haven't told me what your usual is, buying power. Now, I'm assuming when you say you're taking 2/3 of my usual buying power, you're just looking at if something takes, $3,000, you're only using $1,000. You're not cutting anything back if you're using the $1,000 unless you take that $3,000 number and make it to like 300 or 400 in buying power. Because it's less, that's just the span margining in those futures options.
So is there a good statistic to compare leverage across various futures products? The beautiful thing about span margining is that they already take implied volatility to account for the span number. That's the difference between a listed product like XYZ stock at 100 and XYZ stock at 200. Volatility is not as a big a component. It's just the price. However, in the futures world, volatility is one of the components of span, so it's already built in. So you don't need another statistic to compare leverage. What you want to do, though, is reduce the amount of capital that you're using by about 1/3 compared to listed equities, just because they basically do futures options account for essentially 1 day of risk.
Right.
They don't count for all the durational risk. That's the difference. Let's go to the next slide. I've been experimenting with corn at ZC. I have the 383.95 inverted strangle. Both the put and the call are in the money now, meaning that I will take the max loss most likely. Corn was down 14 cents yesterday, and 2 days ago, and blew past my strikes. How does this settle out? Can I ignore it and at expiration owe the difference, or does something have to happen on settlement? Do I need to close the position before expiration or run the risk of dealing with physical delivery?
Well, there is no more physical delivery, so you don't have to worry about
No physical delivery.
But the brokerage firm will close you at the best available price at that time. So I would probably close it sooner rather than later.
Well, hold on. So if you're in a corn position,
and by the way, corn took another dive today, down to 370, down another 3.5 cents.
Okay, if you're in a corn position and you're between the strikes, like you're straddling, like let's say corn, you have 380, 395 when you wrote.
Well, you have nothing to do then on the option side.
There's nothing to do. They'll offset.
Right.
If you're between the markets and you're inverted,
if you want to play that game, there's pennies left in the trade, I would probably close it and not have to worry about.
All I'm saying is if you're inverted and the underlying is between your strikes.
Yeah.
Okay, you don't have to do anything. They'll offset and it'll disappear. But if you're straddled, one side is in the money, one side is out of the money, and then you have to do something and close the position out. But again, if you roll these positions at 21 DTE, you never worry about this stuff. Like this morning, I have a position on in the euro and the yen, and today is 22 days to expiration. So because Tony and I are going to be on the road tomorrow, we're going to be doing our show tomorrow. I just rolled the positions today. I don't ever want to deal with it.
Yeah.
Tomorrow's 21 days. Fine, move it on. That's the beauty of the 21 DTE roll forward. Just don't deal with it anymore. In this case here, there's no physical delivery, and you can ignore it if you're between the strikes. But if you're not between the strikes, you're going to end up with either the brokerage firm closing it down, or you're going to have to close it down yourself.
Yeah.
You don't want to let the brokerage firm ever do that for you. They'll just shut you down. They care, but their job is to protect the firm, not to worry about where you get filled.
Yeah.
Let's go next slide. I came across a strategy called a flyagonal. Heard of that?
Flyagonal.
A flyagonal. It's like a butterfly with a diagonal.
I had that once, but you were able to get rid of it with a shot and the tuchus.
Flyagonal. Yeah, that's you get bit by a tsetse fly or whatever it is. That means to buy a call broken wing butterfly above the price of the underlying, and then also do a calendarized put diagonal below. The risk profile of the trade at expiration shows a pretty good range of profitability above and below the price of the underlying, with most potential profit being on the side of the broken wing butterfly. It was suggested to enter the trade somewhere between 12 and 14 days to expiration, typically leave it on for 4 to 6 days, and then exit. What do you think about the flyagonal?
I don't hate it. I've never. First of all, it's a 5-legged spread, right? So you can't do it as one trade.
That's the one thing. There's two things that.
But a diagonal's not going to move that much, and a broken wing butterfly is not going to move that much. If you like this strategy, it works.
You have to do it as 2 separate trades.
Right.
Broken wing butterfly, 3 legs, and then the diagonal 2 legs.
Right.
That's the one drawback. The other drawback is that you can't really adjust this position at all.
I'm assuming it's a bullish diagonal on the bottom, and I'm assuming that it's basically a neutral to omnidirectional, slightly bearish to the upside.
Yep.
So you've got that big window in between the two. I don't hate the trade. It's probably a lot like 2 calendar spreads.
Yeah.
You can make a little bit of money. You can lose a little bit of money.
It's a very high probability trade, like probably 85 to 95% probability profit.
No risk manager is going to come after you if you have these trades on in size.
Yeah, so it's probably, let's call it a 90% probability profit, and you make a little, you lose a little.
Yeah.
It's a grind, man. But you got to do is 2 separate trades, and you can't really adjust the trade. Let's go to the next slide. But sure, we like it. Fine with it. Flyagonal. I recently read the top 10 biggest stocks in the S&P 500 account for 40% of the total market cap of the index. By comparison, it was 23% during the tech bubble in 2000. How dangerous do you think this is?
I don't know. And it was probably 0% in 1927 when the market. This is all good to know. I don't know if it makes you any money. If we were to fall out of bed and the high was in from yesterday, and everybody says, "Look at this statistic. Look at this. We were so heavy. It could have been 39%. It could have been 35%. It could have been 30%." I don't think it means anything.
I think looking back 10 years from now, if we sell off, they're going to go, "Oh my God,
it was so obvious."
It was so obvious,
right? Even if it takes 2 years from today, you know what I mean?
They're going to say it was so obvious. Yeah. I think if you're trading actively like we do, it's not information that you can use. I think it's good to know because we talk about the concentration of risk, and this is truly a concentration of risk. But the market's very different today, and it is a tech market as opposed to, it wasn't a tech market in 2000. It's a tech market today. So this is just a fun statistic that somebody threw out there. I wouldn't read too much into it, but I think a couple of years from now, they might come back and go, "Oh, you see, when it gets to 40%, when 10 stocks make up 40%, get the hell out."
Yeah.
And you would have missed the entire move for the last 2 years.
Mm-hmm. Exactly.
Let's go to the next slide.
Exactly.
Last one. Is a synthetic long a high or low implied volatility trade? Or since you are both long and short, usually at the money, does it IV not really matter?
A synthetic long.
Buy, call, sell, put.
doesn't matter. It's just all delta if that's what you're doing.
That's exactly right. Yeah. The answer to this
I'm sorry to interrupt you. Even a crab trade that Nick likes to do for delta, it's a delta trade. I mean, that has a little bit more a theta component to it, which is cool and nice, but it's delta. You gotta get delta right, direction right.
This trade is 100% does not matter what the implied volatility is. Like Tony said, this is a pure delta trade. Buy, call, sell, put, or buy, put, sell, call, depending on which side of the market you want to be on, is pure delta. Doesn't matter what volatility is. Makes no difference at all. This is not a short premium play.
Let's take a quick 90-second break and come back. We got trades from the research team next. Even the S&P is down 25. Hold them steady. We'll be back in 90 seconds. Ruh-roh.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
Dear Kaylee, hats off to you for being such a culinary genius. I don't think it has ever dawned on our kitchen staff to serve gazpacho hot. Sincerely, Bob.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't want to fact check you with my vagina, but I will.
From the smart mouths at tastylive.
Got the need for speed? No problem! At tastytrade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. tastytrade, make your move.
If you missed the live show, here's our cherry on top weekly recap.
I went to the pool at the.
You went to the pool at the Soho House?
Yeah.
And you didn't go to my pool?
Yeah.
Do you think he wore his Crocs?
100%.
100%.
You can't.
100%.
You wear your jorts? You wear your booty jorts with like your ass hangs out just a little bit in the back? I'll gross myself out.
I just threw up in the back of my mouth a little bit.
Daisy Dukes in like a crop top with Crocs. Meow.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to tastytrade. So spread the word and earn rewards. Terms and conditions apply.
Tomas, we are back, my friend. You know what that?
Ready.
Control yourself over there. I know you're clapping for this, man. My man Jaws, what's up, brother?
Like it when Tom gets in the.
Oh yeah. He's very animated today. Yeah. It's good. Yeah, he's into it. No, you're not a chicken. Okay, this is a chicken. We're sharks. We're up here. Okay, we're up here.
This requires.
You're doing a chicken.
Too much effort.
You're doing a chicken. This is a chicken, or a rooster, or something. If I'm trying to
This is a shark.
This is a shark, right? We're up high.
The fins at the
I
top.
can't teach him everything in life. I only have so many days.
I like Baby Shark better.
Okay, Baby Shark, Jaws.
Yeah.
Well, when he's hanging out with his other shark friends, he's Jaws. When he's with us,
Because it's the name he gave me, so you can't take that back.
I like Baby Shark too, but I wanted you to evolve.
Okay.
What do you got for us?
You like the name, you don't like the song. You're glad the song is not there.
Yeah,
It's a little weaker.
song was not.
I'm not. I don't hate the song.
You don't hate
Baby
the song
Shark,
either.
do, Baby Shark. What do you got for us, Jaws?
Well, last week you complained that I didn't do an airline stock after they screwed me over. So this week I'm going to do it. Better late than never.
Okay.
Delta Airlines. I mean, the airline stocks are relatively high IVR right now because they've actually been going up a lot over the past week. So, But they're down today, I think, about $1. So I have the 52.5, 65 strangle in September.
Let's see what you got. September.
Yeah, this is slightly bearish Delta, but it's also down $1.50 right now. So
Yeah, it is. It is
Yeah,
down
yeah.
$1.
So-
Pre-market's down $1. What do you have? The 52.
52.5 and 65.
Baby Shark. Okay.
Shark, do.
So the platform says 196 credit. We'll see what price we can get when it opens.
Yeah, I think it's going to open a little lower than that.
Yeah.
All right, we'll give it a shot.
Give it a shot.
Oh, a
Like
shot we gave it.
Fire it away. Why not?
Firing away. Good job out of you. Who is our next researcher? Yeah. Fresh and clean. I like Sharp Dressed Man for you too, though. That would be the only one that's kind of going neck and neck, I'll be honest with you. And we got my man Gad, who is a Sharp Dressed Man. How are you, brother?
I'm good, thank you.
I like
looking
Sharp
good.
Dressed Man way better.
Me too, yeah.
Yeah, him too.
You too?
Yeah, even the audience.
Well, there you have it. James, I mean, the man
Look at
we
the
represent.
The kid, he's got the tie, he's got the black. He's black.
I think we got to go back to Sharp Dressed Man. See,
Got
I
black shoes.
evolve. Like I admit my mistakes.
He's got black on. He's black on black.
I admit my mistakes. I don't
Everything
take
is
the
broad.
blame for other people's mistakes.
Tie clips. Okay, a tie clamp, whatever you call those.
Tie clip.
Tie
You got it.
clips,
Tie
yeah,
clamp. What are
these
you,
tie
like,
clips.
sadomasochist
Yeah.
or something
I don't
like
know
that?
what it is. I don't have one.
What do you want it to be electrified?
I'm
Right.
saying I don't have.
Yeah, he's got the fade going.
I need to get a.
Tie crib.
I don't even have a tie.
So
It's best you get a clip before you
a
get
body crib.
You get let's get a tie before you get a clip.
I have a question for you. So I want a dog, to own a dog.
You want to own a dog?
Yeah.
A dog.
So I meant to tell you this. I have a three-legged.
He's got a dog for you. Okay.
I got two of them for you. One of them last night was a pain. I have a three-legged cane corso for you, 7-month-old female. She's beautiful. I can get you pictures of it.
A three-legged?
Three-legged cane corso, free.
Cane corso.
Cane corso, whatever. Cane is Italian.
Why would I want a three-legged dog?
Because you have some humanitarian hope inside your heart. She's a beautiful dog. She's doing great. My vet has it. He mentioned it to me. I go, this is fate. I got a guy who wants me basically housebroken for you, which is something
Basically housebroken a three-legged dog?
Well, she's getting, it's a front leg, so she's learning how to get around. So he thinks that maybe she's not making it out there sometimes because she's not used to it yet, but she's going to adapt.
What happened to the leg?
It got bit off. They said the story is the father bit it off, but he thinks they were fighting the dog or something like that. Sweet as can be, does not have a mean bone in her body. Three-legged cane corso for you. All of a sudden, we're fluid in Italian.
I can't do a three-legged dog. I don't want to be the one.
What was your question? I'm so sorry.
You know how many times people are going to say what happened to her leg?
Yeah, it's a good conversational piece for you. Who else is going to approach you looking like that? Go ahead. What do you got? What do you got for us?
Yeah.
You want to own a dog?
Yeah, but I don't
You don't want to rent it or have it on layaway or anything like that? You want to own it?
Yeah, I want to own it.
Okay, go ahead.
But I don't want.
You want a three-legged cane corso?
I'm not sure, but I don't know. But it's I don't say no to
Okay.
it. So
Oh, that's right. That's right. That's good.
yeah,
That's good.
But I don't know which way or how to start.
How to start it?
Yeah.
I'll help
Start
you.
finding a dog?
Yeah.
Go to a rescue. So I don't do pedigree dogs.
Then you end up with dogs like Tony.
He does a pedigree dog.
Okay.
You know, there are so many dogs available. And I'm the one who's not a dog lover. He's a dog lover. But he'll go to a puppy mill and get a dog. I will
don't
go
go to
to
puppy
a
mills.
rescue and find a dog that needs a
Okay.
a puppy, get a grown-up one, whatever you want. But Paws is a good one. Orphans of the Storm is another one.
Okay.
Those things. But you get, and free dog is about $300.
Okay.
Not free. They neuter it and then they give it shots and everything else like that.
Then it
That's what I would do.
$25,000 a year to have a dog.
Every year?
They are
Every year.
expensive.
Every year?
And I would I don't give recommendations out in here. I show you the trades that I do that you can do your own thing. But this I will recommend to you. You're too young for a dog and you got too much freedom in your life. Living in the city. Do not get a dog. Okay?
Exactly.
And if you're gonna get a dog, it's a forever thing. I make fun of getting rid of mine.
Here's what you do, just to test it out. Just borrow a dog for a
Yes, you
weekend.
can borrow my dogs. The biggest pains in the ass you've ever had in your entire life. Worse than children. And I have 5 of them. Yeah, you can offer to take care of it for free. Actually, I'll pay you. How much you want a week? Take 2 dogs.
How much do you offer?
How much what?
Do you offer?
I'm going to pay you.
Okay.
I'm not going to offer anything.
Said he, how much are you offering?
Yeah, give me a number.
No, give me a number.
Give me a number. Give me a number, but be careful. I'm going to say done. Okay, give me a number.
A day, a month.
What spread are you selling here before we run out of time?
A week, because you're not going to last a month.
5K a month.
What trade you got for us?
So I got a point here. So vertical spread.
PLTR, sound enough.
Yeah.
You're selling a put spread to a stock that's at all-time highs?
Yeah.
Off with your head. I'm not even going to let you take care of my dogs putting on this. No. This is, he's bearish, sounds enough. He's not selling a put spread here.
What is it?
It should be calls, I think, because you got bearish up here. Are you selling calls? You're selling puts, or you're buying a put spread.
You're buying a put spread.
PLTR. Yeah, he's doing it for a debit, so he's buying a put spread. We just can't get that.
Okay,
back.
you're buying a put spread, which is fine, except the stock's down about $2-3 this morning, isn't it? $2.
Yeah, stock's down $2. As I explained to you when Nick was on the show, it's up $30 in the last 7 days. It's down $2 today.
Yeah.
You didn't get the high.
Yeah.
Oh boy.
Oh, thank you for your advice. Really helpful.
God, he's not going to do
What do you
this
think
trade
about
'cause
this
he's a
trade,
Johnny.
What?
What do you think about this trade?
I don't mind it. I just wish the stock was up.
He wanted you to do it yesterday. You're supposed to change this show to yesterday.
You're supposed to do it yesterday.
Because you knew the stock was going to be lower today.
But we don't know what's going to happen tomorrow.
Dad, do not come with logic to make your
I know.
story
I don't usually buy put spreads when the stock's down $2, but it could be down $5 today. Who knows?
Yeah.
He'll take it under advisement. Thank you, Kat.
Thank you.
Appreciate it. Appreciate it. Let's talk when you're done.
Yep.
Who is our next researcher? That's right.
Hey.
My man, Dada. What's up, brother, man?
Hey, doing well, doing well.
Everything good?
Everything's.
Did we? No, we didn't change your music. Your music's good.
No, it's the same one.
Yeah. Okay.
Everything is perfect, he said.
Company man right there. Company man right there. What do you? Don't laugh. What do you got for us?
I am a company man. I even ask questions during the Ask Me Anythings.
Nice.
That's how on
Anonymously.
You are on point, Dada.
I'm on point.
Yes.
Point.
USO.
USO.
Don't be a Johnny. Go ahead. What do you got?
Does it trade at all?
Yeah, it does.
yeah, it does. Are you going to fight him? Is that what you're saying? Like, yeah, it does. Like that kind of thing. Markets can be a little wide, near 10 cents ish wide, but yeah, sure. There's
Open interest is pretty good.
Open interest.
Yeah, open interest.
Yeah.
The stock's up $1 this morning.
Just a little bit, yeah. That wasn't supposed to happen.
Yeah.
But okay, so IV rank is quite low.
Yep.
And this stock's down. So this is a call diagonal spread here, also called a poor man's covered call.
Okay.
So with this one, I'm going out 127 days. I'm doing this in December. It costs about $9 to do that, to buy that at the 69, and then I'm selling the September, 36 days away, for about 265.
Which call are you selling in September?
73. So buying the 69s in Dece, selling the 73s in September. So
Saz, what do you think? Stock's up, off with his head?
Yeah, there's about $3.5.
You should have done this. You should have told Saz about this yesterday. I don't know what's wrong with you, Dada.
We just moved moved it to yesterday.
Should have done this yesterday. You and Gad should have done these trades yesterday.
Off with both your heads. This next researcher will get it right. Who is our next researcher? That's right, you little black cat. What's up, Julia? I have a lot of faith
That's
in
well
you.
placed.
I have a lot of faith in you. You're gonna do the right thing.
I was calling her Julia
someone has
Gulia
faith in
because
you,
I
right?
thought it was from Wedding Singers, but it's not. It's from Wedding Crashers, but it's from Wedding
Crashers.
Singer.
Does it matter?
Only for me because I like to be right about everything.
I didn't
So
get
you
to
were
choose
wrong
my
about
nickname
something?
when I came here.
You know, she's never seen Wedding Crashers or Wedding Singer.
I just had an email from somebody last night who said you're never wrong about anything.
Well, that person's right.
Julia, what do you got for us?
Let's see if I regret it. UNH actually, kind of slim pickings out there, but this one has an Ivy rank of 31, so over 30. Pretty liquid. Was looking at the spreads, so I decided to go neutral in here. This position, or this, I should say, this trade is a little rich for my blood, but seems appropriate for your blood. I went a little wide on this just to have a high pop, so I went the 243.10 short strikes and then $10 wide on each side. Collects 210 in credit for about $800 in buying power. It's a little weak on the credit for the buying power, but that's again because we're around the expected range here for the short strike. So I wanted to just, with this one, I don't know, I got trust issues, wanted to stay relatively high pop. I think it's around 71% for this trade.
I just entered it.
Wow, see that?
I actually like trading UNH. It's one of our better stocks of the year. We didn't do very good in there yesterday, but it's been pretty good to us.
I'm not selling past the close on that one.
No, don't. Sure. I think this is okay.
Good job out of you, Julia. Like I said,
You got to live.
I knew you would right this ship. I knew it. You and the Sharks, the Hill, the other two in the middle. Not so sure about them. But we're going to take a quick 90-second break. We're right on time, Sadna, for the opening bell. We'll be back in 90 seconds. Tasty Live.
Peace, guys.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home. Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Tomas, we are back, my friend. You know what that means? Time for a little bit more Tasty Live. That's right, with the opening bell imminent in just about a minute. Even the S&P.
Imminent.
Even the S&P is holding steady, down 22, basically unchanged to the downside. NASDAQ down 92. Russell, that's down 1.25%. That's been your big player to the upside last couple of days on a percentage basis, leading us higher. Maybe the Russell's going to lead us lower. Not usually the leading thing, but it happens. Dow down 166. Diamonds, DIA, have a dividend. Let's just call it around 50 cents. I didn't do the math yet. It's probably a little bit lower than that.
Yeah, but nobody has a position in diamonds. They shut those things down from trading.
One of the most widely traded products in Europe, from what I've been told.
Not the diamonds, the Dow. There's a difference.
So what do they trade?
They make up their own product.
Oh, seriously?
Yes.
Oh, I did not know that.
They don't trade the Dow.
So
they don't trade our DIA in Europe. That they trade the Dow. So
Okay, I learned something today. I did not know
So they
that.
all have their own.
How are they able to create something? Because we created stuff that you weren't able to.
Because it's all CFD business.
Ah,
So
gotcha.
it's
So
all-
you basically can create whatever you want.
Yeah, you can create whatever you want. So it's all spread betting. So all the spread betting.
Ooh, Cisco, look at you taking profits. 2 cents on those calls. Man, oh man.
Cisco Kid was a friend of mine.
Yes, he was. Yes, he was.
Unfortunately, though, JD
is not going to be as fortunate.
What?
JD down $1.
No, down
down 33 cents. I mean, come on, down 1%. That should be good. What do you mean? What'd you do in JD?
Nothing.
Oh, UNH, you got filled on the Julia trade.
Julia. JD down 45 cents. We sold the the 30 puts for 60 cents, and they're currently trading 55.
So what do you do? Just close it and move on, be something else?
I don't know. I'm probably going to leave it.
Mm-hmm.
Because it's just a crappy little short position.
So what do we do? What do we do? What do you do?
What
do you do? What do we hear? What do we say? What do you hear? What do you say? What do you do?
Delta Airlines, yeah. Let's see. JD, is it open? Yeah, it's open. Yeah, there's nothing.
Mm-hmm.
These are SEPs. Yeah, it's a much ado about nothing.
Mm-hmm. Mm-hmm.
So I'm going to sit tight. Let's take a look and see where we are here on our P&L today.
Your P&L's good, Sosnoff. We're down a little bit. That should work out nicely for you.
Stop. P&L.
Your P&L is good.
Apple.
Not bad.
No, not bad. Apple's up. That's not good. ENPH is down. That's not good.
Volatility upticking a little bit here. 1878 up 26 cents.
Q's and SPY. Yeah, we're in pretty good shape.
Look at you. Pretty good shape at your age, for crying out loud. The amount of working out you do, you would figure that your good shape would not be so good.
Look at you, Pikachu.
Uh-huh. Uh-huh.
Lucid 229.
Is that an uptick or a downtick? Or is that just not a nothing tick?
Oh, we're almost back.
Lucid, we're good stock traders go to die, Sosnoff.
We're almost back to even on our earnings trade.
Almost back to even.
Let's take
Lucid expected move for the month of September is 32 cents, Sosnoff. Go big or go home. Let's take a look at what's moving in this market. You want to?
Sure.
What's taking us lower, Sosnoff, on the high option volume list? You're looking at, I don't know, COHR. I never heard of it. Coherent, down $24. That's a 21% move. I don't even know what it is. MSTR down 11. App Lovin' down just about $10. Coin and Bitcoin themselves going a little bit lower, down $7. Home Depot down $5. What a John Deere. We had another one that was down big too. I know that's hurting the Dow. Yeah, down $37.
What? How expensive is that stock?
$475 stock, about a 7% move. I'm going to assume that it's just the outside.
BMNR. We did a call ratio spread in there yesterday. Took almost $1 out of it. Okay.
BMNR. You are good. Yeah. That was the BAT suggestion, was it not?
No. It was not. But finally, at least Ether's down today.
You are unbelievable. Meta down $6. Tesla down $4. Sosnoff, market's a little bit weaker here on some of the. Yesterday, market was pretty weak with the usual suspects, even though we were higher. Microsoft was lower. Microsoft, let's see, Mr. MSTR. I always do the wrong one. Go ahead. Yes, talk about
I'm just looking at a bunch of different things, and
MicroStrategy's down 11.
Yeah, Coinbase is down a little bit this morning. Not crazy.
Yes, I mentioned that. Even the S&P is holding steady, down 23.
Yeah. What do you think of this opening here?
Stronger than I would expect with some of the names that I just read, much like yesterday.
Yeah, bonds are a little weak, down 11. Where do you buy them?
Under 115.
Under 115?
Yeah.
Yeah, I think I'm going to
half handle back down near its lows.
I think I'm going to jump in a little bit before that.
I know you're long. You're bullish.
I just want to sell some puts in there.
I would rather do that than buy the future. I agree with you.
Yeah, I'm going to let's see, which ones do I already have on? ZBs. I'm going to sell the.
You're going to sell?
I'm going to sell the 113 puts.
113.
SEP 113 puts.
Volatility only up 18 cents. Even the S&P is up 19, down 19. Sorry.
These are. I mean, we'll see.
You got an unchanged market here at market high, Sadnov. I mean, it looks like much to do about the same.
The NASDAQ looks a little stronger than I thought it would be. The NASDAQ looks a little stronger.
And I think the Russell being the weakest of the group is probably, for the bears, the worst thing that you could have. Like, you would want the NASDAQ to be the weakest of the group to have a little capitulation to the downside, or at least move itself to the downside. Yeah.
I hear you. What time is it? It's 8:36. Let's see if there's anything else on the screen. What's Amazon up $5 for?
I don't know.
Because I was talking about Bezos and Lauren Sanchez.
That's right. I guess they have more fans than you.
I guess they did. Somebody's liking. Somebody's buying 14 months
and liking it.
Somebody's buying the 14-month calls. Netflix up $16. Somebody's buying those. Costco $5.
Do the bonds start rolling tomorrow? Is that the?
I don't know. Take a look later.
Okay.
After the show, I have to.
Because the front month is still the U contract. I was just wondering.
Should be the U. It's usually the U up until about a month before. Maybe probably till tomorrow.
Right, until tomorrow. So, I mean, if you're trading the U and the U options, you're going to have to roll.
No, we're not trading the U options already.
No, I know. I'm sorry. You are correct. You are trading Z options when you're doing your trades, but
exactly.
When you're buying, because you say I bought some futures and I sold some puts. You're selling
the futures
puts.
I bought are SEP. The puts I sold they're SEP puts, but they match up to these bonds.
Correct. The U, the Z on the platform, right? So, but what I wanted to say before the middle of my sentence got in the beginning of yours. It makes no difference which bond you're trading right now. When you're trading the future, they're going to move in step with each other. One happens to be lower, the back month happens to be lower. There's no binary or there's no opportunity to trading the back month future right now that's 114.26 versus the one that's 115.07. Correct?
That's correct.
Like you're not getting those 10 ticks or 9 or 10 ticks if you were to trade one versus the other.
That's correct. We just we got filled on our SEP puts in JD. Let's see. 48 cents. I think we sold them in high 50s or low 60s, somewhere around there.
Mm-hmm.
But stock's unchanged. Made 10 cents.
Beautiful. Are you ready to take a quick 90-second break?
Better than a sharp stick in the eye, as you would say.
Of course.
Yeah, sure, I'm ready.
I mean, your Cisco trade was the real winner, right?
Yeah, but it's small.
Let's take a quick 90-second break and come back. We got more Tasty Live Sadnov. What comes up next?
Mr. Radigan, you're lucky.
I miss him when you talk to him on Wednesday because he's yours all day on Wednesday. You don't let me talk to him. I finally get a chance to talk to him today. I can't wait. Hear me out! Dylan Radigan next to this Tasty Live.
Bring him in off the beach at Montauk? How'd you get him?
I think he's in the Bronx.
world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Your crypto needs a wallet, and crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
I'm like the Tupac of economists, going out on top. And will I ever really be gone? Say bye to Ben Bernanke. Cry your eyes out past the hanky. Gone from the Fed, but still looks swanky. Bye-bye, Chairman Ben Bernanke. Ben Bernanke, hardly knew ya. Ben Bernanke, glad we're through ya. Sayonara, Mr. Yankee. Closing bell tolls for Ben Bernanke. Now, say hello to Janet Yellen. New blood, maybe start some selling? All around the world like a market Magellan. Hello, Janet Yellen. Janet Yellen, Professor Shady. Janet Yellen, new chair lady. Welcome in the new Miss Yellen. Different from the old, there's no telling. And I'm out, like Tupac, in a peaceful transition.
Coming up on Bad Money with Jim Blamer. Blamer's hot stock tip of the day.
Trade ideas? Trade ideas? You're coming to me for trade ideas? I'll give you a trade idea. Trade me for tastytrade.com. Those guys are great. I love those guys.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Tomas, we are back, my friend. And you know what that means? Enough out of you. I've been tired of listening to you anyway. I got my man Dylan Radican here. Dylan, how are you?
What's up?
There you go. See, Sosnoff? Finally, some talent on this show.
I feel like my camera's got a weird position. I feel like my
No,
head
it's
is
good.
off.
It's good. You look good.
Oh, you're good. You look amazing.
Yeah.
I feel
You look hot.
You look amazing. I feel like there's like a dimensional asymmetry here. But
You
anyway,
are podcast ready, Radigan.
Yes, you are.
Listen, I got a big appearance coming up. One of the top 10 podcasts in the world. I don't want to give it away, but it's going to be big. We're going to be talking all things reservations.com, Tasty Live, sneakers.
I love it.
The host was my intern when she was 22. I was her first.
Don't say it, Dylan.
Colleague.
I've seen her.
Well played. You
were not her first at 22. That's for sure.
I didn't.
You guys are bad.
I didn't. It's him.
It is him.
Just saying. I'm just saying.
It is him. I give you that, Dylan.
Yeah. A lot of people say a lot of things. Why are we here today anyway?
Why are we here today?
Yes. He's asking. He's righting the ship. Go ahead.
Listen, I mean,
subtle hints have never been Sosnov's strong point. Okay, just so you know.
A lot of these podcasts are okay. I mean, somebody wrote me yesterday and said, Truth or Skepticism is the best podcast in America. And I'm like, I know.
Yeah.
Put on a network one day. Day and night.
All right, Mr. Radigan, this is the new Hear Me Out. And you, Tony.
I got my picture on there. I got art now. I got an art card. I'm feeling very important.
Yeah, you're moving up. You're moving up in Tasty Land.
I moved out of the men's room in the old building, which is good for
building's gone. The new owners own that picture of you now. And it's going to be turned into a synagogue, so it's going to be a little bit disturbing.
Do I get a royalty on that picture? I don't know. Was I in that deal? I think I got.
I don't think you get any royalty on that one. Sorry.
I got anything for that.
Anyway, Dylan has not seen these questions. I have not seen these questions. And Tony has not seen these questions. These are from our producing. This is from our production team and our producer for this segment. And so we're going to see exactly where we're going. These come from customer emails, from questions we have from viewers. All right, let's see it, Beth. What do we got? We got 4 questions today. Or 4 topics. Recently, Trump signaled that he wants to allow for new investment choices in 401k accounts. It would include alternative assets like crypto, private equity, and real estate. I'm all for this. Why am I wrong?
This is for me first?
Yes, sir.
Yep.
You're not wrong. The only reason you could be wrong, however, is whether it's crypto, private equity, and real estate, all 3 of those have terrible liquidity and much higher fee structures, and the whole thing that you're kind of getting. The problem with the 401k is it's basically where mindless idiocy goes to be exploited. It's sort of the biggest slug of unmanaged money in the world that just gets harvested for fees by all these different Wall Street organizations. And at least in the stock market, the spreads are narrow, the transparency is high, the liquidity is high, et cetera, et cetera, et cetera. I would say, I wouldn't say why you're wrong, but I would say reason for pause is certainly with private equity and real estate, you have a much higher fee structure, a much lower liquidity level. And with crypto, you just have the absurdity of the entire infrastructure, which is this sort of mindless volatility of an uncollateralized concept. But that's a personal issue. I don't know that it's I don't know that it's necessarily wrong. I think that in general, the 401k is a bit of a scam insofar as it sort of it seduces people into the belief that if they just take advantage of this one little tax event, this tax deferral or whatever it is, I guess it's a deferral.
I agree with you, Dylan, but it's a step in the right direction. Is what I would answer.
You would say what's it that diversified, that broadening the assets, Tony?
Yeah, I just opening it all up. I mean, I don't know how they're going to price real estate. That would be the hardest thing for me. The private equity I can see. I mean, if everybody's investing at a multiple of $5 billion for that XYZ company or ABC, whatever company you want to,
you just create a 401k slug adjacent to Blackstone. You're saying, or adjacent to whoever.
I don't think those who are in 401ks that don't understand the market are not going to be interested in private equity anyway. So
I don't even know how they're going to do private equity for small accounts because it's not really broken into.
You have to be an accredited investor, right?
No, not in this case because they're talking about private equity as being democratized.
You have to be an accredited investor. What? Typically, you have to be accredited investor.
Yeah, you do now, but they're talking about in a democratized world or something like that. But Listen, the bottom line to this thing, from my perspective, is that you're not wrong in this case because it's your money. You should be able to do whatever the hell you want with it. And understanding that, like Dylan said, there's less liquidity and there's a little less transparency and there's higher fees. The other side to it is you can participate in investments that are not part of a drop-down menu. And for me, that's well worth it. And we've been advocating for this for 25 years. Yeah. So it's been 25 years this happening should have happened 25 years ago. Should have happened 2001. And it's taken until 2025. So let's go next question, Beth. Dylan, we've seen a slew of IPOs recently. Is it a bullish sign that there's liquidity and demand for an underlying, or is it a sign of froth? I think they're asking, these IPOs have had these giant pops and they've been trading way over the IPO price. Do you consider that a dangerous red flag? What do you think of it?
Yeah, I think of it, I don't know, dangerous, but it's for sure a red flag. I was actually down at the New York Stock Exchange yesterday by coincidence, and had the bullish banners up on the building, and obviously everybody saw what happened with that stock yesterday, which is also a crypto IPO. It's about as good as it's going to get. But my first job at Bloomberg was as the IPO reporter in the 90s, and it was the same sort of. I mean, that was probably the ultimate in IPO froth, for sure. It is evidence of froth, but also I think it's so rare. We go for years sometimes where you can't get a new issue out. It's a mess. I don't mind having a period of time when they're hard to price and they come in at $10 and they go out at $20, and it's exciting. I think to use a Tom Sosnoff word, I think it creates engagement when people see sort of these exciting spikes in these new companies, and they think that it reminds people why Wall Street exists in the first place. Wall Street doesn't just exist as a place to buy and sell things. It exists as a place for new companies to raise money. And I think that that's an important part of the operation. So I don't mind it.
No question about that, Dylan. And I think that it's good to see IPOs back. I think it's bad to see IPOs back as a pure speculative bet. Companies like Bullish that came out yesterday are, in my opinion, grossly overpriced and complete scams. But there are plenty of real companies, and I just think the pricing is ridiculous because there's such demand for speculative bets right now. So I do think that it is a real red flag. It's a very bubbly, as we've been talking about. But, it's good to see IPOs back in the market. It's good to see people bringing their companies public. I don't want to discourage that at all. You might say the valuations are absurd. Yeah, that's what I'm saying. I'll give you that. That's what I'm saying. But the IPO, just having an IPO more than last year. Let's go to. I just said to you, I'm very happy that there's demand for IPOs. Right. I was going to Dylan's point of view here, where he's saying that he thinks it's bubbly like or whatever for because there's so many. I mean, yeah, there's more in 2025 than there was in 2024. There was more in 2024 than there was in 2023. And if we take away 2025, we would also have said in 2024 that the market evaluation seems to be ridiculous, that there's so many IPOs. So it wasn't bubblicious in 2024. No, I'm only talking about what's happening right now, which is these stocks are coming out at $32 and opening at $100. Yeah, that's like, that's ridiculous. Are they really pricing them that bad? And the answer is, well, you got to remember the insiders can't sell. Yes, because they have to hold it 6 months. So at least. So it's really there's an incentive, and then you also get more press coverage. I mean, that's it. That's it right there. The reason you do it is for the marketing. Yeah, value. Of course. And now everybody talks about you. I mean, that was, what was his name? Frank Quattrone. Remember Frank Quattrone? He was at Deutsche Bank. He was like the sort of guru of all those tech. I mean, that was the whole thing, man. You set it up, price it, bring it out at $8, get it off at $80. You're on the front of every newspaper, and the insiders are now own most of the paper anyway. They didn't sell in the deal. Yeah. There you go. And then a bunch of, anyway, you get it. Yeah. Go ahead. Let's go next one, Beth. NVIDIA and AMD are reportedly going to pay 15% export license fee to sell AI chips to China. An export license is essentially a disincentive to sell a product which is counterintuitive in a market economy. So why do this? Why not just outright ban the sale of AI chips to China, which is probably something most people would agree makes sense? AI is arguably coveted as the 21st century equivalent to nuclear technology, and we certainly weren't selling that.
NVIDIA and AMD.
Are you in favor? There's a lot of back and forth debate about the 15% export license fee to sell AI chips to China. So NVIDIA and AMD both said, okay, we'll take the hit because I'd rather pay a few $1 billion in fees if I could sell a few $100 billion.
No, I get it. I understand. We talked. I understand this. I guess I'm going to go fundamentalist on this one. I'm sorry to say it, but either AI is a matter of national security and there is no price at which it should be exported to anybody, like nuclear technology or any sort of industrial secret or military secret, or this is just a shakedown. And right now it looks like a shakedown, which I don't like.
Well, I would definitely say that this is not the same as nuclear technology.
Okay, so or was it undervalued? Let's try to talk math for a moment.
Well, maybe it is. Let's say it is undervalued. I'll meet you there. I'm not going to dispute that. Let's say it's undervalued, but why does the value go back to the U.S. government?
Well, doesn't that benefit the people?
What are you, a socialist? If
No,
Obama
I'm just. Well, listen, we all have a big deficit here. We all have a big deficit here. Doesn't
okay,
it?
Listen, I'm AMD. I'm NVIDIA. I got to pay 15% for you to.
But you're not AMD. You're not NVIDIA.
You know, but
you're one of the people.
Somebody.
Well, I mean, you might not be a citizen anymore, but you're one of the people.
Okay, AOC. Okay, you want me to?
No,
okay,
I'm playing devil's. I'm playing devil's advocate. I don't have any skin in the game. I don't know enough about it to have
I'm
a
happy
good
to
vote
accept the mispricing, but I wanted, shouldn't the value be captured by the AMD and NVIDIA investors?
Of course, this is if
Where
you're an
is the US
investor.
government?
Good point.
If you're an investor in AMD and NVIDIA, this is nothing more than blackmail. This is not nuclear technology. This is anybody can build this anywhere in the world. This is strictly blackmail, and it is counterintuitive to, or it is disingenuous to anything close to kind of normalized or free trade. It's not because it.
So should we be buying AMD and NVIDIA?
It allows the government to pick and choose. Here's the scary part. We talked about this yesterday, Dylan. It allows the government to decide and to pick and choose what companies are going to be successful and what companies are not. And that is very scary. That is not the role of the U.S. government, not to decide what companies can have success and what companies can fail or should fail. And that's a very dangerous situation. That's my
Tony?
2 cents.
Yes, sir.
Do you not agree with us?
Yeah, you make a great point. Again, I don't know, and I'm not versed enough. I don't know enough about the subject to have a really hard.
You talk about lots of subjects you don't know anything about.
And I'm
like trading.
I've never heard you be in favor of higher taxes.
No, I'm not. No,
you just were.
No,
You just
I'm not.
were.
But I don't know what the other side of this is. Like, what did they ask for not to have the export fee to it? Is it
That's a tax? That would be that export fee is a tax to tax. Higher tax.
I get that correlation. I get it.
All right, Beth, what do we got as the last question coming up here? At a Bloomberg, your old stomping grounds article yesterday reported that the annual income needed to afford monthly payments on a median priced home in the U.S. was $126,670. In 2024, in 2024, up 60% from $79,330 in 2021. Median household income for 2023, the most recent data available, was $80K. Simply put, housing is not affordable. We hear politicians talk all the time about the need for affordable housing, but how can we actually make that happen?
How can we make that happen? So The reason we're in this situation is because the politicians and banks have collaborated for decades to provide cheap financing for real estate. Because it's beneficial to the politicians and the banks to have a never-ending cash monthly flow payments, and to have people in-house. That has basically facilitated a total mispricing of all of the real estate in America, which I really understand more having been living in Italy and in Europe, where there's not, you can't get a mortgage 5%, 10%, even 20%. Like there's no the leverage available for a home buyer in Europe does not exist the way that it exists in the United States. You know, your leverage is 50%, your down payment's 50%.
You prefer that?
I prefer. I don't know. Prefer, not prefer. What I'm saying is, if you're saying that keeps the prices down, there's no $25 million apartments in Milan, right? Because it is.
Now, are you AOC? Just because you called me AOC, I mean, now are you AOC? I mean, you pick and choose when you're going to be AOC. Is that what you tell me?
Listen, that's.
I mean, because it hurt when you said that to me, and I didn't have any way to fight you back. I'm glad you gave me a chance here.
All I'm saying is, no. I would say an AOC wants the giveaways. They want the leverage. They want the bank subsidies. A real man doesn't need a leverage. He doesn't need a mortgage. He does the work. He saves his money. He buys a house. You see what I'm saying?
That is the most ridiculous.
I think you're flip flopping here, and I'm embarrassed. No, anyway, I'm embarrassed right now to call you my friend.
Let's answer the poor person's, this fine individual's question from Mike.
Okay.
I think the only thing that could potentially work, like forget how we got into the situation and who's an AOC, although we know it's Tony. If you were to create, it's all in the mortgage laws, and if you created a mortgage law that said that single homeowners, first-time homeowners get a better rate and a certain rate, and anybody who owns a second or a third or fifth or 10th or 100th piece of real estate has a higher rate. What you need to do is you basically need to disincentivize larger pools of capital or wealthy individuals from acquiring lots of houses. Would be the easiest, the low-hanging fruit.
Okay, the reason that the U.S. has, the reason that housing is, you made a valid argument about housing being unaffordable in the U.S. because there is
banks and politicians.
There's tons of liquidity in the U.S. because they basically used a model that the crypto firms are using right now, which is as long as real estate never goes down, then there's no risk to loaning at the smallest, with the smallest possible
2%, 5%, anything.
There's no risk to loaning at 5, 10, 15, or 20% down, because as long as the underlying asset continues to go higher, you're not taking any risk as a lender. And then if you want your business to grow, that's why U.S. banks dominate in kind of the world scene, because they have the ability to make so many loans and they're able to generate fees from those loans. It's a model that works as long as real estate prices continue to go higher. So that I don't think that that's a bad thing at all. And I think the fact that people, as long as it's a reasonable amount of down payment.
If you're a young person or you want to buy a house, if you don't already own like anybody who already owns real estate's on the ride. But if you're not, the point of this question was,
I understand, but I don't think it's a reasonable answer to say, oh my God, the way they do it in Germany or in Russia is great. You need you got to take a suitcase full of cash to buy a place, and that's why no place ever come up for sale. It's a ridiculous. Those systems.
I didn't say Germany or Russia. I said Italy.
Whatever. All those countries it's so antiquated. It's so outdated. Their whole system of
the paperwork is unbelievable.
Come on, gentlemen, we're free market cap.
I'm defending it.
Right, let the market bear.
The real estate situation throughout Europe and other places around the world is absolutely ridiculous.
But I would say the American lust for leverage and liquidity has also created a massive mispricing.
No, it hasn't created mispricing. What it's done is it's created a completely different kind of economy that dominates the rest of the world. It's not a bad thing.
Yeah, and it prevents anybody's children from and the children have to sleep on the street.
No.
Listen, gentlemen, you come up with the answer to this question, you win a Nobel Peace Prize. I mean,
what I think, there's a couple of ways to approach. There's a couple of ways to approach this, and there you can make capital available. You can make capital available for building. Federal capital available for building things in areas where people don't necessarily want to live. So in other words, you can reinvent.
Doesn't work. We're going to stick them out in the desert or up.
No, you can reinvent
where there's no water. Is that what we're going to put them?
You can rebuild and reinvent different parts of inner cities. You can make capital available, okay, in less desirable areas to encourage building. To encourage, you can build lower cost housing. That's one of the things you can do. You can basically, through different programs, you can fund or discount, how much it costs to borrow money so that you can build things and you can
incentivize people to develop in less desirable areas.
Of course. And there's certain parts of different inner cities where you can do that. There's certain parts in different places in the country where you can do that. That doesn't require that much infrastructure change. And one of the ways that you bring down prices is you create more houses. You create more places to live. And so by incentivizing different communities, different states, different cities, different areas to build houses, okay, you effectively bring down overall costs.
There should be Kumbaya music playing in the background.
But that's the only way you can.
It sounds wonderful. How do you do it? Raise taxes?
It's the only way you can effectively do it. It's not that hard to do because what your question here is.
Obviously, it's hard to do because it's never been able to be done.
Because nobody cares.
Well, I don't.
Because nobody cares. There's a big difference.
No, because
they raise taxes on AMD and NVIDIA.
That's why.
What's that,
You
Tony?
guys, you can't always poo-poo everything, or you can
I'm not poo-pooing everything. I'm just saying it's.
Or you can help to come up with a better solution.
Yeah, I'd love to come up with a better solution. Totally agree with you.
Are you part of the problem or are you part of the solution?
Both you guys are part of the problem because,
Only Sazov is not part of the problem. So I got. How about this?
I bring solutions.
How about this? Let's do it this way. Because my friend tried to rent a car this week. It was $470 in taxes going to the city just to try to rent a car for the week. So it's not. They're already taxing us to the hill. How about we make the corporations who are taxing us like this put the money back into and fund what you're talking about?
Oh my God. This is what we've been saying for a long time. Change the corporate tax structure so companies like Apple don't pay 5% taxes.
I'm all for it. I think every American's for it too.
Okay, you change it so companies
so now it's our politicians that have to
companies-
change it, right?
So aerospace.
So maybe the 15% tax, to get back to the last question, we don't sell any chips to China. We don't tax them at all then. So you can do it that way.
So aerospace and defense companies don't have post office box addresses in Dubai and don't have post office box addresses in Ireland, so that they don't.
Now you're talking to me, baby.
We've been saying this.
Scarface.
We've been saying this forever. Okay, but it's too. You're mixing apples and oranges, but we've been saying it forever. Mr. Radigan, thank you so much for your time. As
leverage
always.
is the problem. You can't be giving people money left and right and expect things to be cheap. You either got to take away the candy jar. Anyway, nice to see you.
Dylan, I'm going to go back to the only thing I know to talk about, which is trading, my friend. I'm going to do that. The only thing I could say, I'm a expert in the room, if there is one. Because I'm in your company, Sosnoff. Thank you so much, Mr. Radigan, for your time. We're going to take a quick 90-second break and come back. We got more Tasty Live with a market measure next.
All right.
Ciao for now.
Ciao for now.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Well, he's more public in his mentality.
I'm a believer. I believe that the world is good.
And I know that the world is not good. That questioning yourself and questioning yourself in dialogue with someone you respect is both pleasant and sometimes extremely insightful and useful sometimes.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Tom, when you talk about the good guys, who are they?
They are us. We are the good guys.
When you say they take out the weekend, what does that mean to you?
That means when you're a premium seller and they take out the weekend, that means that all the decay over those 2 days, Saturday and Sunday when the markets are closed, come out of the market Monday morning.
When I say bell to bell, what does that mean to you?
Bell to bell is like, in horse racing they would call it wire to wire, and in trading they call it bell to bell. So the opening bell to the closing bell.
If you're saying something's thin, what does that mean to you?
That means it's not very liquid. That means that the marketplace is relatively illiquid. That's what thin means.
If you can't buy an uptick, what's happening?
If you can't buy an uptick, that means the market is going down and there's no bounce.
How does Daddy do it?
Daddy does it good.
All right, yeah, I'll talk to you. There she is. Good, you found the place. Good, you're not stupid. I dated 3 stupid girls in my life. I loved every one of them. So maybe you're the next one. Having a good day? I'm having an awful day. But then it got really good again. Oh, good. So I'm feeling all right. Hey, where'd you go to college?
I went to
University of Penn State Community College. You didn't know they had one of those, did you? Yep, the Fighting Rams.
Oh.
I'm one of the Rams now. Do you have any sexual fantasies?
Excuse me?
I do. My parents are watching. They're sitting on a rainbow. I'm a half man, half giraffe, and I'm dressed like Brett Favre. What does that mean?
I don't know.
Yeah, talking about it gets me pretty hot, though. Uh-oh, there it is. His pants just got tighter. I'm a vampire. Can you believe that? Does that make me more mysterious and attractive? What? Uh-oh, watch yourself. We don't want to get hit by a car. My brother did that once. He can't talk now.
Oh, my God, I'm not serious.
Yeah, pretty serious. Are we getting serious? I think so. How many kids do I want? 5? 11? First meal. Here we go.
That was rude.
This is on you. So much time is flying by.
Yeah.
You're very funny.
Oh, thank you.
Does anybody ever tell you that?
Yeah.
Well, you're not that funny, so don't worry about it.
That's interesting.
Not a big fan of Sam's anymore. But now you know everything about me. I feel like I'm opening up so much. God, I'm scared. This thing's moving so fast.
Yeah.
Oh, wow. I haven't cried like this in a long time. Are these tears? Uh-oh, here we are. Front door. Big first kiss moment.
Oh.
This is just moving a little too quick for me. You're a great kid.
Regulation time may have expired, but the conversation is just getting started. This is Overtime, the post-market scrimmage for market junkies. Join Chris Vecchio, Ilya Spivak, and me, Dylan Radigan, as we analyze the X's and O's for everything from earnings to politics to macro events and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime Monday through Thursday only on Tasty Live.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with Tasty Live to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's Market Measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Tomas, we are back, my friend. You know what that means? Time for a little bit more Tasty Live with the market measure. Even the S&P is down 10. Volatility up 6. NASDAQ down 34. Russell down 35, which is the biggest mover to the downside by almost tenfold, right? I mean, market's down nothing, and they're down 1.5%. And the Dow down 109, which is a quarter percentage point, very low. What do you think here, Saz? Bonds down 11. Are we done for the day?
No, I think it's going to get. I think they keep trying to rally them, and I don't. They're due for a sell-off. I don't know. They're due for a sell-off.
Probably be a little healthy for the overall market. I agree with you. Amazon up 4. Reddit has to be up every day, up 7.
Reddit has it must be in their charter.
I mean, look at this move from 150 to 250. I'm just rounding up another $7. Crazy.
It's my biggest loser today. Plus, they're pumping premium in there like there's no tomorrow.
All right. Market measure.
Yeah, they're pumping juice in there.
Oof.
RBLX is up on the day. Reddit's up on the day.
Whana.
Killing Tom. You're killing Tom.
They're trying to hurt you.
Trying to hurt me.
They're trying to put a hurting on you.
Short. I mean, I need short. Need a little help here, but some of these stocks are just unbelievable. Yeah, that's it.
Okie dokie.
All right,
I'm ready.
Let's see, what do we got? So tomorrow, the Bat and I are going to be doing our show in Talia Hall. If you haven't signed up yet, please do. It is waitlist only, but still, if you want to come, put your name on the wait list. We will try to get you in there. I'm sure there'll be some cancellations later tonight, or this afternoon or tonight, but it's all filled up. Next show after this one is in New York City on September 19th. September 19th, New York City. We are going to be at the Webster Hall, which is the old Ritz from years ago. But Webster Hall, I think it's in the Village, like around 9th or something. Broadway and 9th. I think that's it. But that's September 19th. And can't wait to get back to New York City. It's been a while. But Chicago tomorrow. And if you're coming out here, weather's beautiful. What's the weather supposed to be like tomorrow?
Just like today, South. Going to be nice. Now, if you are traveling around there, we do have the Air and Water Show. So,
well, it's not till Saturday.
What's that?
Air and Water Show is not till Saturday.
Right, but I think they do the practices tomorrow, don't they? So
just leave early because there's a lot of traffic in Chicago.
68 to 89. It's absolutely beautiful and sunny.
Perfect. A lot of traffic in Chicago always, especially downtown area where you have to get through to get to this venue.
Yep.
It's just on the south side. It's on about 18th Street. So that's about 18 blocks south of where we currently are. You cannot walk there. Don't walk there.
Yeah.
But just take an Uber, a cab, or whatever, or drive, whatever. It's fine. We'll be there. Just give yourself a little extra time because Chicago has very, very tough traffic. Other than that, can't wait to see everybody tomorrow. The Bat and I are preparing everything today, and we're going to look forward to wooing you.
Wow.
Woo.
Been a long time since you've wooed me, Saznoff. Last time you did it about 15 years ago when I came on this show.
As a special guest, we're going to have Ronnie Woo.
Ronnie Woo. I think he got sick. I think he was in the hospital not too long ago.
Really? He's still alive?
I believe he's still alive. I think his health is poor.
Okay.
He's the Cub guy who Let's Play 2.
Yeah, if you don't know, no, he's not Let's Play 2. He's Ronnie Woo. He's Ronnie. He's Woo.
Right. Didn't he always...
No, Let's Play 2 was...
Santo? Ron Santo?
No, Let's Play 2 was Ernie Banks.
Banks, sorry. Thank you.
No. But, all right, let's do it. So we'll see everybody tomorrow. Can't wait. For those of you that are coming up to the office today for our open house, it's going to be great to have you. Looking forward to it. And here we go.
Let's do it.
Market pullbacks and option loss patterns. Market pullbacks and option loss patterns. This is a new study that we put together. We've tweaked it a little for what happened in April this year. But it's just an interesting study to look kind of what happens in really low volatility if there's a market pullback and that kind of thing. Let's take a look what we got. So April's market pullback represented one of the quickest movements in recent decades. We looked at how this type of volatility affects option positions over time. You remember in April, we dropped a couple hundred S&P points in a very, well, I take that back. We dropped 1,000 S&P points in a very short period of time, from like April 4th to 9th or something like that. I can't remember the exact dates, but it was a huge sell-off where we went from 5,900, 6,000 to 4,900. I think we bottomed out at sometime around there. It doesn't matter. 1,000, 1,200 points, something like that. Doesn't matter among friends. But let's take a look. It was quick.
Yes.
Option selling strategies consistently deliver strong success rates, but when the losses occur, their magnitude can be even larger. This is what happens in SPY 1 standard deviation strangles. And as you can see here, we go back to looking at, January of 2020, which was the pandemic, or April of 25, which is where we circled it on here. You can see the losses can take away a lot of the profits. Now, now we go to 2020 and 2025. I mean, this is really strange to have two of these moves in the same, 5-year span. But just to give you some context around how often this stuff happens, because I think it's important. So you can see the dollars on the left hand in the left-hand column, and we got down to that kind of that $8,000 loser on a one lot in 20, and then down to about 7,000 in 25. Okay, those are ugly moves. Those are like once a decade moves.
Right.
Let's go next slide. So, to measure the potential losses during market corrections, we use a loss to credit ratio. This metric divides the actual loss by the initial premium collected. So, for example, a $1,000 loss on a position that initially collected $5 in premium would give us a loss to credit ratio of 2. Let's go next slide. So we examined 45-day SPY strangles over 2 decades, tracking the loss to credit ratio for every losing position. All the positions were held through expiration without management. Okay, that's not how we trade, but it's important, just to show this. Let's go next slide. So while this year's market movement produced notable strangle losses, both the frequency and magnitude remained below the 2020 levels. That's fair. We showed you that before. So there's the loss to credit ratio. And, in this case, we got up to some pretty decent numbers, 15-ish, nowhere near what we got to in 2020. That move was a 30% move in the market. This move was, 15 or whatever it was. Let's go to the next slide. So the long-term data shows a medium loss to credit ratio of just 1.2, meaning nearly half of all losing trades experienced losses smaller than the original premium collected. A surprise outcome and better than expected. So the medium loss to credit ratio is 1.2. High was 27. And I think that was 2020 or 2008.
I'll take your word for it.
Let's go to the next slide. The current SPY 45-day to expiration 1 standard deviation strangle collects $6, a little over $6. The VIX is 17. Based on the long-term data, only 16% of 1 standard deviation strangles lose money without management. So only 8% or half of all positions lost more than $622. Losses exceeding 3 times the credit, or $1,800, occur in less than 4% of the cases. So it's extremely rare. 4% of the cases, just so we're clear, it's about 10 times a year. It's 250 trading days, 4% of the cases is 10. So next we compared the losses that occurred in 08, 18, 20, 22, and 25. Those are the big years. Meltdown, 2008, 2018, the huge sell-off in December. And then 2020, the pandemic, 2022, the kind of the bear market, and 2025, the April sell-off, right? All these. Let's go next slide, Beth. So although 2008 experienced the largest market pullback, the largest strangle loss ratio was 2020. 2025 had the second largest strangle loss ratio in the past 2 decades. However, the average loss ratio is much lower and the market didn't fall that much. So 2008, not as bad as you would think. That was the largest market pullback. But when we start to look at the loss to credit ratio here, 2020 was the worst and 2025 was the second worst. That's about as bad as it gets.
It's about as bad as it gets. We haven't experienced much worse.
Yeah, that's about as bad as it gets. And the pullback, by the way, in 2020 was 34%. That's pretty big. But in 2025, it was only 19%. That's why this is such a crazy. It's just the speed of that move. 2008 was 48%. Wow. Let's go next slide. 2 factors consistently influence larger strangle losses. One, the speed of market movement proves more impactful than the magnitude. So the quick price changes leave limited time for position adjustments, explaining why the pandemic and why the tariff situation generated notable losses. Low initial volatility environments create the most challenging scenarios for premium sellers. Positions established during calm markets, low implied volatility, followed by sudden IV increases, consistently produce the largest losses as seen both in 2020 and 2025. Let's go to the last slide, Beth.
And takeaways.
So market correction magnitude does not reliably predict option selling performance. The correlation between the market decline and strangles results is weaker than expected. The correlation between market decline size, like the market going down 45% or something like that, or 30%, and the strangles itself is weaker than expected because the real risk in strangles comes in the speed of that move. Traders need to be extra cautious when implied volatility is low, as the market offers limited premium while creating exposure to volatility expansion events. We've always said this. Volatility is cheap, you have the most risk. And lastly, the fact that 2025 had a high single loss ratio but a low medium loss ratio suggests that with proper position sizing, even bad years can be manageable.
Good job out of you, Sadnov. Good job out of the whole team there. A nice little piece to talk about expected downturns in your P&L and what you need to do to keep your size in check here. Even the S&P's down 10. NASDAQ just turned green a moment ago. It's down 5 right now. Russell down 36, Dow down 160, volatility basically unchanged, up 3 cents, Sadnov.
There you go. There she goes.
We're going to take a quick 90-second break and come back. We got more Tasty Live after this with, oh, joy, your friend and mine, Mr. Scott Sheridan. That's right. Tasty Trade World Headquarters right after this.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at Tasty Live.
If you missed the live show, here's our cherry on top yearly recap.
So, we're doing the show on Friday, and the bat, he's doing the show in the morning, then he's going away afterwards, right?
Yeah.
He's all packing up the car, he's doing his stuff.
RV.
Packing up the
Packed
RV.
up the RV for a 6 to 8 day trip. We're supposed to be there about
4
48
days.
hours.
I bet him $20, and I said, you'll be in a hotel by either the first night or second night.
And then I vociferously stood up for you.
Of course you did. You should have, because that was the smart move.
I appreciate you. You're
yeah.
Saturday morning, I look at my phone, and it says Venmo, $20.
I almost had to pay him $40 because there was a little stipulation. If we didn't sleep there one night at all, I'd have to double the bet. I almost had to send him $40.
What happened?
See what happened?
Here, what happened was
We're driving up there. It's absolutely beautiful. It's like sunny as can be.
You were tweeting pictures.
Oh, yeah, it was beautiful. Beautiful.
Instagram, you're like, oh, you're in the woods.
Absolutely beautiful. Absolutely beautiful.
Amazing.
It was gorgeous. We were gonna make a slight right-hand turn. We got about 10 miles to go, and up ahead there's like this dark cloud, and it's raining. It started getting muddy, and dogs are getting all muddy. Wife's having a little problem. Bugs are everywhere from the rain, and I realized at that moment that my wife was not a camping gal.
That's a surprise.
So at 6 o'clock in the morning, I pulled everything out, filled everything up, shoved everything underneath, and I was home. We actually left because we did the show at 10 o'clock in the morning. I said we left at 10:30. I was home at 10 o'clock in the morning the next day. Look at him.
You were just
jumped in my pool, looked back at my house, and I said, why would I ever leave? Why?
He was going to go fishing, catch.
He's hurt on this one.
Muskies. Some bass.
Very quiet.
I left Friday at 10:30. I was back Saturday at 10.
AM?
Yeah.
You didn't make it 24 hours?
No.
Who broke down?
They all did. They all did. I rented a boat for Saturday, but the boat was broken. It rained for 5 hours. You know, when we got there, it was...
Now the RV on rvtrader.com.
No.
Yeah.
Whoa, wait a minute. How do you get to Florida now?
I don't care anymore.
Oh my God. First of all, I'm sitting in the captain's seat. I've never been invited to come sit in the new captain's seat. But what I'm concerned with is the size of these screens. And then he's still doing this.
No, let's take a look.
They did not hold that rally at all.
Phil, you got a partial.
973.75.
I'm looking at this like I have to move my head to get through the top, the top symbols. I thought he had like a little computer and he was getting down.
He hasn't learned that he could like swivel his head. He has to see the screen. He has to go like this to me. And then, you know what? Money goes to money. You did it. Good job out of you. Yeah.
I just drove with him twice. Now I'm really concerned that I was just in the car with him for 2.5 hours. Okay, I need help understanding. This is the largest monitor that I've ever seen. Like, I have to move back in order to see everything. And somehow when you're on air, you're like looking at this, you need some help.
Nope, I got everything fine. The problem is I just have a lot to do. You see, because in your job,
here we go.
Really, all you have to do.
Get the full scoop by checking out the archives at tastylive.com.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, $4,000. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live. That's right, with, oh, Joy, your friend and mine. That sound could only mean one thing. It is Mr. Scott Sheridan from the Tasty Trade World Headquarters of the Tasty Trade Studios. Mr. Scott Sheridan, take it.
So I listened.
Perfect timing.
We woke him up.
He burped.
Ew. I listened to a podcast this morning talking about New York Times did a survey of the top 100 movies of all time.
Top 100 movies of all time.
Don't even start. Okay.
Oh, please don't say like Citizen Kane.
No, not at all. Not at all.
Any movies? I hate those lists that I've never heard of.
No. It's not that either. So they did it. They went out to viewers, like 200,000 readers. They went out to like listeners, readers, 200,000, I think, plus. Plus they had industry people.
Okay.
So, and then they had some guy from the New York Times talking about it. I didn't know, like, the top 10. I think I knew 2 of the movies. Maybe, like...
What are they? Give it to me.
I don't even remember. We could look it up. But it was just crazy. So, you liked it. Hidden Gems, I didn't like the movie. The one with Adam Sandler?
Yeah.
It was 58th.
What's that?
It was 58th.
I heard it wasn't very good. But.
David Lynch was number 2 at. I didn't see it. And then the number 1 movie was the Korean movie that won in 2019. I didn't see it. It won the best. It was a Korean movie.
Best 100 movies of the 21st century.
That
the New
Korean
York
movie
Times.
was horrific.
Number 1 movie.
Okay. According to
200,000 plus. I know the liberal press.
I don't have.
Go ahead.
I don't
Go
have.
ahead. The liberal.
I wasn't going to go there because I hate.
If you went to Fox and you looked up the Fox top 100,
I can't get it. I can't get the list on my screen.
It was.
You can't get
I
the
only
list.
go by the Bat music.
Beth, can you see if you can get the top 10?
I couldn't watch. It was horrible.
Spirited Away made the top 10. That's an excellent.
Which one?
Spirited Away. It's an animated film. It's excellent. I believe that made the top 10.
Now, you like to pose as being an artsy.
Remember
guy
the movie
from time
that
to time, and I'm
once
not gonna-
won an Academy Award? That was like about movie took place like in.
It's horrible.
Something of the sun. Whatever. It was one of the worst movies ever.
There were. I think the Coen brothers had 4 or 5.
Coen brothers of this. What movies?
Parasite? Is that
Parasite? That's number 1.
Yes, I'm dissing that. Not James, don't out me, man. You like this crap, okay? I'm just looking to be enjoyed. Okay?
Wait. Can we then pull up? Let's see if Fox News did their top 100.
I hear these movies because I don't know if I've ever seen any of them.
No, that's what I'm saying. Like there were movies on there. I'm like, I don't even know what this is. I got to get out more. But the comment that they made, categorically, infinitely better at the theater. Any movie, which I get, but it's just so much easier to watch it at home when you can stream.
Infinitely better at the theater. I agree with that.
Right.
And the worst place to watch a movie is on an airplane.
The worst.
100%.
Especially if you're sitting next to you.
Right, because you keep interrupting.
Yeah.
While you're watching the movie. Does it to you too?
Yeah.
It's unbelievable.
What are you talking about?
I put my headphones on. I'm watching my movie, and all of a sudden I get.
Yeah, it's like a child.
You are. You're like a.
Here, look at this. Go ahead.
Child, and not even a well-behaved child.
Mulholland Drive. I didn't see it. David Lynch.
Never
saw it. You did or didn't?
Never saw it.
Okay, No Country for Old Men was actually.
Country for Men was great.
Great. That's a Coen Brothers, I think.
All right. What else? I saw that. I like
4 is There Will Be Blood. No idea. 5 Interstellar. 6 Dark Knight. 7 Mad Max Fury Road. 8 Spirited Away. Very good. 9 Eternal Sunshine for the Spotless Mind. And then 10 Social Network. That Social Network was okay.
I don't remember
I
the
didn't
Sunshine
care about
one. I think it was
Interstellar that
horrific.
much.
I didn't see it. I didn't see Interstellar.
I wouldn't write those. What? Okay, those are not my.
But they had like the big difference. They said the listeners, readers, had Lord of the Rings in there and something.
Wasn't one of my favorites, but I get the allure of it. Yeah.
So like what? I mean, they had a couple comedies.
What comedies?
Superbad was number 100. Totally worth it.
I liked it.
It's great.
What else?
Beth, I'm getting put.
I mean, it's a popularity contest. That's all this.
No, but they didn't pick.
And
No,
how you're
no.
perceived.
No, they did not pick like the big blockbusters. That was the
No,
comment.
I know. That's why Parasite got up there. I mean,
Now I got to watch it. If you said it was,
what is that?
That's the number
Korean
1.
movie.
That's the Korean movie. If you said it's absolutely horrible, now I got to watch it.
I'd love to hear what you have to say.
So, but Mulholland Drive. Now I got to watch that because what the guy said
It's
was
been a long time since
you're gonna love it or hate it. But
It's a really old movie.
I don't
Is
think
it?
I liked it.
Is it from
I don't
like
think
the
it's
80s?
I don't remember.
You never saw it.
I know. I never saw it.
James says James in production, who is a film guy and
Film guy.
producer,
He's a director.
Yeah, I mean he's in the
What's
business.
his,
and
what do you
good-
say?
He says we need serious help with that movie conversations,
Well, he is actually correct.
which is okay. I mean, listen, this is what's great about being normal. You can have a conversation and disagree with somebody and move the
Run it by Cole. I want to hear what he says.
My son, he's
Is he a snob?
he is a snob.
I can see that.
And he also doesn't like the movies that we like.
Because they're pedestrian.
he's like
They're-
James.
Right, they're pedestrian.
He just doesn't like the same movies that we like. They're all our favorite old movies.
Yeah, but forget old ones, but new ones. Do you agree on any new
Like
ones?
I love
I
watching
get.
a Sundance movie at home because I can click it off. Like there are so many that are so horrible, but
movie he
then
told
you
me to
get that
see-
gem that's
Oh, yeah, 'cause
really
this
so
to be horrible.
good.
What is it?
No, the last movie he told me to see was the Led Zeppelin movie, and I saw it. I liked it.
Was it real footage?
Yeah.
I don't know. I didn't see it.
Oh, it's good. The documentary.
Is it a documentary?
Whatever. The
Okay,
making
but
of
forget
Led
that. Not a documentary. What's another movie that studio.
I haven't watched any other movies in a long time.
Except for on the airplane.
No, because he bothers you.
Oh,
You
is this
can't
guy?
get-
Whoa. This guy's got a flight coming up together. Little of this. Ugh. You know what you should do?
I don't bother him.
Yeah, but what you should do, like the 6 and I, we share. We put on share your earbuds, and you can watch the same. You guys should do that.
Oh, we are not sharing.
So you share, and then you have earbuds, and then you can watch the same movie. And then
I only have earphones. He'd be so close to me. We could kiss.
God, you don't like this idea?
No.
Oh, come
The flight
on.
attendant will come over and say, "Sir, would you like your chicken shawarma now?" He can't hear it because he's deaf to start with.
Okay, I don't know if James is going to have an opposite discussion about this, but the chicken shawarma on American Airlines is not edible. Okay, there, I said it.
First of all, Tom says you always go with pasta.
I know, but they didn't have any.
Always go pasta.
Always go
They didn't
pasta.
have any.
And that is actually a long enough flight. What time's that flight? Because I'm taking that one.
A long enough flight?
Well, to have food. Because normally, if you go to New York,
4 hours, isn't
right,
it?
They give you a basket of stuff to choose from. I mean, this is a real flight. I'm taking
basket of stuff.
They give you like popcorn or nuts, or they just walk around.
You fly?
I don't know, but I do have a plan this
You're
time.
telling me that you've never seen them come out with a basket and hand you?
Not when they serve food.
Not when it's lunch, but going to New York's not long enough.
Yeah, they do. They come
Yeah,
up with
it
a basket.
depends.
You are correct. He's
Thank
just
you.
being a cantankerous old man like he usually is.
Thank you.
No, but I do have a plan this time because my first time in the bougie lounge that he is.
Oh yeah, I do need details about that. My daughter's really hurt us. She's like, you got to ask Tom how he got it because I know it didn't come from flying. So see, she wants to know who you grifted to get this. And don't give me they reached out and asked me if I wanted a trial period of this.
No, he's got a 6-month trial period. That's
There is
exactly
no
what he
such
has.
thing as the trial period would see if they want to give it to you. You can't buy it. So what's
We didn't buy
Her daughter, how many miles does she fly?
Doesn't matter. She wants it.
She's not getting it.
And she gonna get it.
Taking me.
She'll pay for it, but she
Her-
gonna get it.
It's taking me.
Daddy, I want that squirrel.
It's taken me 25 years of business
I don't
travel
blame
to
you.
get that. And she's not
It has
getting it.
nothing. Okay, your business travel isn't enough. You don't fly enough.
I do fly.
And you didn't get it on looks.
You do not fly enough.
I don't fly. I fly more than any other person in this firm.
It
Probably.
has nothing to do with it. What I'm saying is, I know people that have it, that can get it, but they're sometimes on, sometimes off, and they fly 5 times more than you do.
Yeah.
Maybe 10 times.
He got lucky. It was random. They probably
Yeah,
picked
It's
people.
really hard to get, but they also I'm a special client. Like
You are.
You
special.
are.
You are. We agree
That,
with
that we all agree on here. Even
I'm
James in
nice.
production will agree on that.
I'm nice. I
yeah.
pay retail
Pay retail for
You
what?
do not.
tickets.
Oh,
I never complain.
all right. So what do you think about? So Delta's starting, but the
I
other
never
airlines-
turn in. You can't fly Delta here in Chicago.
Just listen. You can fly Delta. Okay, I did just fly Delta, but whatever. I know you can't, but I just did. Anyway, they're starting to use AI to help customers get a better deal.
Yeah.
Okay. The concern from people who question, whether that should be done,
Sure.
is that they're going to go after people like you
Yeah.
that can afford to pay a lot more for tickets. So when you go in to buy a ticket,
Love
you're
it.
gonna
Love
you're
it.
gonna go,
Housing too.
Oh,
Do that too.
we're just going to bump that up by 50%.
Sure.
You're good with that?
Of course. As long as I get my concierge.
They can have whatever they want.
I want that free sushi
Yeah.
so bad.
The food is good. It's great. But I mean, how much can you eat? And you can eat on a plane, all the other stuff. I don't know that. But they're gummy bears.
Right.
Extremely fresh.
They are fresh.
I did not load my pockets last time. I will be loading my pockets as a guest of yours.
Could you bring?
I will be loading my
Could you bring me
pockets.
some?
I have bad news.
sure.
I have bad news.
What?
We're flying United.
No, we're flying American. I looked. To Mexico, maybe we're doing United. Oh, we're taking those tickets that they had credit for.
No, to Mexico. We're flying. Only United.
But our next flight
Wait
is
a minute.
American Airlines. Then. We are an American. I saw American there, and I already knew I was
Sure
getting
about
these
that?
gummy bears.
Am I sure?
Yeah.
I'm sure. I'm sure.
Oof.
Oof.
I think you're right. I am too. I don't have it in my American.
And you're still not playing golf with us?
And I don't have a United.
Man, that mound ball must be spectacular, man. I mean,
It's Mexico.
they all do it. You know what I mean? But that mound ball must be spectacular.
Easy.
Unbelievable. Unbelievable.
You can cuddle with Tom. I heard you got one room with a queen bed.
We got 2 queen beds.
2 queen beds.
We got 2 twins, but I had him change it to 1 twin.
And you push them together?
I had him change it to 1 twin. I got it.
The thought of
You got double queens.
The thought of you 2 snuggling, oof. Oof.
Gonna be good.
Yeah.
Oof. All right.
Oh, well.
All right. Should we get to some business?
Yeah, we're flying United.
Yeah, we are flying. I agree with that because I just looked at mine. I don't know.
Which means I have to.
That's bad. I don't like it. I don't know.
It's you gotta fly. Who you gotta fly?
American, but is United? Hopefully, it's not C. It's far.
You're so public.
What do you mean?
I'm just saying you're public.
I'm just making a statement. It's far. Although they're building a new terminal, like next to that, or so. Like
Yeah, but you get because you're flying international. You get to go to the lounge. Then
you know what's funny? I don't even think
United
about
has the different kind.
You know
of
what's funny? I don't even think about it being.
Now I know. I mean, I was
I don't
young,
even think
you know
about
what
it
I
being
mean?
international.
I was on the
just-
Biatch program, but
I just
know.
think we're going to Mexico. I don't think of it being international. It is. That's true.
Right.
Of course it's international.
I don't think about it. It's like going to Canada.
That
Like, I
means
don't
you
think
get
it's
the-
like
you get the
international.
upgraded
right?
cheese.
Yeah, it's true. It's nice.
Polaris.
Yeah,
and the
international.
and the guacamole.
I don't know about the guacamole.
Yeah, they make fresh guacamole.
I don't know, but the cheese at the United.
Oof.
Oh my God. It's amazing. Amazing. I gotta admit though, the eggs were really good. Yeah, honestly, scrambled eggs usually like, in a trough that you've like prison food.
That's because it's the upstairs.
Crap we get served.
Downstairs, they have the crappy food.
Because they use powder.
This was good. I think they
use
had a little cream cheese too. Something
use-
very creamy or cottage cheese.
For
They
the,
did something
for the
good.
ordinary people, it's powdered eggs, and then for
No, they got a
That's nice.
station where you can get
Nice.
omelets too, fresh if you don't want to go there.
I know, but this
my man Sazi takes care of his girls. I'm not gonna lie, he takes care of his girls. His gumadas, nothing but like fresh omelets for them. You're good, Saz. You're good. I feel honored.
More importantly, what movie are you guys gonna watch together? I really like this idea.
0, because he bothers you. I've been through this with you before. I mean, you can't. I'll just put the headphones on. Like he'll be like, "What could you be watching that we haven't taken off yet?" I just try.
And you make it.
Right. 1 minute. I'm listening to my emails that are being read to me. That's what I'm doing.
I worked the whole way.
Oh, for sure.
Oh my God, you sleep and I'm taking the pictures. And I will take the pictures again if you deny it, okay? I mean,
I worked the whole way.
Oh, for sure.
back in the day when we were flying, on our own dime there, I mean, we were on Love Airlines there, and I would stick the free peanuts on your head and take a picture of you.
I worked the whole way. He's fast asleep. I work.
All right. Let's do some business.
Even the S&P is up 250. He blames you. NASDAQ up 44. He's also going to blame you.
I pre-ordered the chicken
That's what's
parm.
That was
I pre-ordered the chicken parm for you.
Thank you, Tom. Way to take care of me.
that was a good sell-off today.
Did you buy the dip?
Yeah, that was a good sell-off.
Great sell-off.
All right. Top 20 symbols going through the system. First 40 minutes today. No broad-based indices or futures. Time for you, number 20. HIMS at a 21. For everybody else, Amazon at a 2. Tesla at a 4. NVIDIA at an 18. AMD at an 18. UNH at a 32. Cisco at a 19. PLTR at an 11. Apple at a 16. IBIT at a 31. CRWV at a 13, MSTR at a 14, Meta at a 2, Microsoft at a 4, Hood at a 19, GLD at a 16, ETHA at a 92, Reddit at a 23, SoFi at a 10, Coin at a 17, and HIMS at a 21.
What do you have to say about that, Sadloff? What was number 20?
Number 20 HIMS.
Oh, that was good.
I thought I had him today. He had his head down. I thought I had him.
I'm listening all the time. You see, I have this. I can multitask.
No. You have extremely large ears. And for that reason, you absorb a lot of what Scott is saying. See, I have
the ability to. Oh, you have tiny ears, all right. It's like almost like they were like. I mean, you're a little. It's. I don't want to say it.
Well, I mean, wants to be flapping around. How do you hold your liquor by the ears? I'm not, I mean, you could be held a lot easier. Oh, boy. We're in trouble now.
You're in trouble.
Oh, you're in big trouble. There's people listening.
They're always listening. You can't change.
Walls have ears.
The walls do have ears.
They always have ears. They always have ears.
It's one of those, like.
You can't change, man. That's what people love about you. Not changing.
It's true. But it is a little awkward sometimes. Like if you do say something you don't think they're listening, they heard it, you're going,
Yeah. Well, you know what? When you try to, do something out of the ordinary, you fail sometimes.
It's true.
Yeah, once our family stopped listening, then we were fine.
Once they stopped?
Yeah.
Did they ever start?
I mean, just occasionally. It's like, hey, I heard what you said about, I remember my son once said, he goes, my friends told me what you said about me. I'm like, I didn't say anything about you. They gave me the recording.
That was self-inflicted. That was on you.
Yeah, that's good.
That was not me. That was on you.
I'm like, hey, I tried.
Oh, my God.
They stopped listening like 15 years ago. She was like,
easy.
She was like,
She still takes my text messages. She's good.
Case?
Yeah.
No, she'll take your text message, but she don't want to listen to the show. She don't want to hear anything about her.
I got a kind of a soft wave yesterday.
Got a what?
Like she acknowledged my presence. I said I went like this. I waved. She went like.
She threw me out of her office.
That's not bad. Getting thrown.
Literally threw me out.
Yeah, I get that.
Like, I'm your father. She goes,
I don't care. Get out.
Out.
Smart. Smart.
Sadnov, buy the dip here today. Did you do that? I know you bought some bonds. They're sitting basically unchanged from where you bought them. 150.
They're a little lower actually. A couple ticks, like 1 or 2 ticks. But I mean, I haven't
Basically
done anything.
when you bought them.
I haven't done anything right today. I would say, I was planning for the big down day,
and it happened. They were down
20.
I thought something was wrong with the
They were
Tasty Trade
down.
platform for a moment. I thought there's something still is. Russell's down. Dow is down.
I want to complain.
I think we're going to create.
Who do I complain to about at Tasty that every day the screens are green?
I was going to say we're coming out with a new feature. No more red. Everything's just green.
Okay, but you should be able to eliminate the columns that you don't want to see.
I totally agree. Totally agree. That actually makes sense.
I mean, I don't like this whole, I don't like what's going on.
Sadnov, Lucid, I know it's a $2 stock. I know you're small.
Oh, yeah, that's a question. I have a serious question about Lucid. I'm glad you brought it up.
What?
If you didn't, because this is important for the 6, if you didn't have a Lucid, would you buy one right now?
Would I?
The car, not the stock we're talking about.
Cut the car.
Physical.
Well, because they're at risk. They look like they could be going out of business.
Yeah, they're doing a 10 for 1.
A one for 10
reverse stock
right.
split.
Was it $2?
It's $2.29 coming on the 18th. My question to you was, do you think that affects the stock today? I would say it's already out. It's already news.
It's already out.
No. But I don't care about the stock. I'm not trading the stock.
I understand. Worried about bankruptcy?
Correct, because I don't know what the rules are. Like when I think they have to have enough stuff for 10 years if they go bankrupt. Yeah, worried about bankruptcy.
I mean, you really worried about that? You're really worried about that?
No, I'm not buying the car. The 6 is. She's like, I don't think I'm going to buy it. She's like, I'm worried.
She's worried about bankruptcy?
Yeah.
So how's that going to change her life?
Well, she can't get
because the car's not going to run.
Repair.
There's nothing to repair. It's electric. There's nothing to do. What is
my God, he is. See, this is where I'm going to say something again that I don't want to say and get in trouble. It's because he baits me. It's not my fault he's doing it. He's either sabotaging me
there's
or he
nothing
wants
to do. You don't have to bring your car in. There's nothing
Oh, my God. If I could slap
You've never had service with your Tesla? You never had service?
I never had service with a Tesla or a Lucid. Never once.
Yes, you did. They had to come out and change your tire.
Thank you.
You're welcome.
Your tire, yes. You could have your tire.
Okay.
Oh, my God. People have problems with their glass.
Yeah, the window. Tommy had a problem with the window, and they had to come out. It wouldn't close, and it was like whatever. Yeah, there's just stuff.
Okay, so you're worried about that nobody else could change a tire? I'm just
Tony, why do I do this?
I don't know.
I opened the door
every
and
morning
I walked
at 5 o'clock when I walked
if the spoons go up 25 handles, you're going to lose another Lucid. Does it explain that to her? Okay. Say, listen, spoons it up 25 days. I already lost your Lucid.
See, that is so hurtful because it's true.
It is true.
Okay?
I appreciate that.
Explain to her the economics of your world.
That's the most hurtful thing you've ever.
But it's actually the most correct.
Yeah, it's.
I'll send her that clip.
Send her that clip.
That'll make her feel better. She'll go, okay, fine. Now I don't feel so badly.
Yeah.
Wow.
I'm telling you right now, it's not going to change.
All right.
Wow.
And then it'll probably be worth more because then the value will go up because there won't be any.
It's like the DeLoreans. You just had to hang on for like 30 years, but they're making a comeback.
They are not making.
They're not making a comeback.
Okay, they are not. The 7 that are on the road are trying to be repaired. That's the comeback.
The big comeback, which is I do like, the Broncos. taking the old.
That's 2 years.
No.
3 years
Not the new Broncos.
El Caminos?
No.
El Camino's the stupid.
No. The Broncos from like the 70s and 80s.
Oh, the retro, the way they look now. Oh, you mean the
real ones, not.
You know what? You bougie SOBs. First of all, you took $150,000 vehicles with Lucids, which is obnoxious. And now you're talking about $150,000 50-year-old cars.
I said they're nice. I didn't say I'm buying one. I said they're nice.
Lucid's the exact same price as Tesla. They're the same exact price.
Yeah.
Same exact price.
Yeah. It is.
Same exact price.
It is the same price. The problem is
80 some odd thousand for the base model. These were supposed to be the people's car.
The Lucid.
Now the used ones have become
Lucid
the
that I
people's car
have
because you could pick those up for 30, 40 grand.
Because
the
of the battery.
Lucid, I have the same price as the Tesla, exact same price.
The problem is the 6 is waiting for.
You're talking about housing a moment ago, buying $80,000.
I'm telling you about a car.
You know what? You got some peregulons.
He's right.
He's right about what?
Price is the same. The problem.
Irrelevant. It's out of the realm of most people.
What does that have to do with anything?
Oh God, we're not talking about most people. We're talking about you two, Jamokes.
Yeah.
Got it. I know we were talking about the elite. I got
You're
it.
sheltered.
My car's
sheltered dog buyer.
Hey, leave me alone on my island, all right? I got a good thing going over here. Leave me alone.
My car's 7 years old.
What's that?
My car's 7 years old.
Your Tesla.
I don't have a Tesla. I would never.
Your wife has a Tesla.
Hers is like 5 years old. But that's as soon as they come out with whatever I said the new Lucid is, the crossover SUV.
Yeah.
They're trying to upsell her to like the fancy one, and she's like, I'm not doing that. So she is the one that's coming in. Mine's 7 years old. Now, I happen to be waiting for one that's not supposed to be coming until next year, but that might not even happen.
Bougie. You know what? You're worse than him.
Oh, that
Seriously.
hurts. Okay, that hurts.
2 loaves of bread under your arm. Cry. We're not doing the upgrade. You know what? I'm going to take a quick 90-second break. I'm going to upgrade all of you.
I don't even get my oil changed.
In your Tesla? Or in
No, I don't get oil
There's
changed.
no oil in Tesla. You'd never get your oil changed in your Range Rover?
Never, ever.
That's
Ever.
on brand.
Ever.
So on brand is right.
I just traded in.
You are so obnoxious.
I gotta tell you, this might have
housing for all.
This might have.
I just did that to.
This might have been your best segment ever. Like you're just letting it fly today.
Ever.
I just traded.
Inside every long-haired hippie freak is a Republican trying to get out.
Steve Jobs used to do that because in California, I don't think you need a license plate for like the first 30 or 60 days. So he would just get a Porsche every 30 or 60 days, and he would just go swap them out and just say, "I don't ever want a license plate."
When I grew up,
Why do you want a
a
license plate?
As a matter of fact,
I don't know. In California, it's like the first 30. I don't know what it is, but there's something in Houston.
Why don't you want a license plate?
I don't know, because I didn't ask him, but I'm assuming he didn't want people knowing, like.
Because you have to put one in the front, and that ruins the look of the car.
Okay, in Illinois you do.
You do in
Illinois you do, but you don't have to in California. That's what I'm saying. Well, in Illinois you do not.
You do. You have a front plate.
Let me finish my statement before the beginning of your sentence gets in the middle of mine. Don't be like him. When you get temporary plates, you only put it in the back.
Correct.
So your friend who's waiting and always turns it in, he doesn't have to put anything in the front that ruins the aesthetic of the car.
Steve Jobs in California.
Steve Jobs in California ruins the aesthetic of his car. I figured you two were personal friends. That's why I said you're a friend. We're going to take a quick 90-second break. I'm going to upgrade this show to Liz and Jenny next. Peace. You're lucky.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Wolf! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Nikki Batt, University of Kansas. Number 20 because that's how many underlyings are in my portfolio.
Rick Welch, Illinois Institute of Technology. Number 23 because I'm trading 23 hours a day.
Dr. Data, Louisiana State University. Number, square root of 1/365, because that's the square root of time for one day, which is multiplied times the stock price, multiplied times the implied volatility, to get you the projected stock price for one day.
I like the looks of that lineup.
Well, being mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. You know, that's what I do.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Everybody, and welcome to the Liz, Jenny, and Glenn show. Glenn, thank you for joining us. You look very handsome in your red sweater.
Oh, it's about
shirt.
time. Thank you. Yeah, I had to change into my red. This is still, it's not as bright red as your guys.
Do you have the shirt on underneath that shirt?
No,
Okay, so you did.
I changed.
Yeah, we saw him
running to the bathroom, and I didn't know. If you
You were in like a bluish shirt.
Yeah.
We caught you out of the corner of our eye. We saw you run into the bathroom carrying a red shirt. Did someone give that to you?
Like a matador.
No, I thought that was our thing with the castanets.
Oh, that's right. Yeah. Bringing it all together.
That's a good callback. I don't know if you've been in the show business before, but that's what's called a callback.
Oh.
Big time.
Yeah.
But yeah, I haven't bought a new red shirt, but this was the one I could find from my sweater pile. It was, off to the side here in the summer season, but had to dig it up for you guys. How are we doing?
Yeah, I appreciate it.
Nice to see you guys.
We forgot to bring one for you, and I forgot to buy one for Glenn.
We'll get you one. I go to the store a lot this weekend, so my son's leaving for college on Monday, so I'm
wow.
shopping for clothes. Glenn's getting a red shirt.
All right.
Oh, I would like to formally request something from you while I've got you live on air so you can let me know. Do you mind doing the full hour next week?
Oh, I already asked him.
Oh.
Taken care of. Taken
Yes,
care of.
happily.
Thank you.
Because you're taking your son to school?
Well, I will have already taken him to school,
Okay.
but I'm taking that day off to drink by the pool with all the other mothers that drop their kids off at school.
That's fantastic.
So that's what
wow.
I'm
It's going to be recovery day. Her recovery day because it's tough. It's tough dropping your kid off at school. For your family, you were far. You were far from your family.
Absolutely. So from North Carolina, came all the way up here.
Yeah. How was it when your mom and dad like dropped you off and left you? How was it?
It was good for me. I think they were.
My son's gonna be the same way. He's gonna be like,
Yeah, it made them empty nesters. So yeah, I'm sure it was weird. Is this your youngest? Oh, okay, awesome. So exciting for everyone.
Yeah.
he's like a big giant puppy though. So like,
Oh yeah, keep the phone line open. There will be questions about everything.
yes.
Yeah, he'll probably call you every day in the beginning.
Oh yeah, he will.
Yeah.
Laundry questions, those are big.
Make sure he knows how to do laundry.
He knows how to do laundry. I mean,
yeah.
You think until it's a new washer dryer, then all bets are off.
So
Different
I will say,
machines.
I mean, this is my opinion, and these are mom goggles. He's pretty cute. I will tell you that. So I think he's going to get some girl to do laundry for him.
That would be
That's his
you.
plan.
You let me know if that happens. I want to shake his hand. That's it.
I would never have done laundry for anybody. Never. I don't even do my husband's laundry or my kids.
Look at you. I don't care. I'm not doing your laundry.
I don't do laundry. I did laundry for my kids until they were tall enough to reach the buttons.
Okay, this is so. I mean, he's gonna be so mad if he's watching this. But the other thing that he said, this is why I worry about him. Okay,
Okay.
so he wrote his thank you notes out for his graduation party. And he's like, I'm gonna get somebody to do my laundry, and then he's like, I really have to marry somebody who will lick all my envelopes too, because I was like, you can wet a sponge or a paper towel or something. He's like, wow, you're real smart. I was like, yes.
That's
pretty
really
'cause
funny.
That was me at Christmas, and you were yelling at me.
Oh, I did. You were the same
That's so
way.
funny. Well, yeah, maybe if he's doing a fraternity or something, maybe he'll end up doing a lot of people's laundry.
Oh, I know. That's what I said.
Well,
he's joining a frat.
He's in Kentucky, so he might find like a real sweet Southern girl who will do his laundry. You were at Northwestern. You're not finding a woman there that's going to do laundry.
Midwestern girls don't do laundry.
Those Northwestern girls, they're not doing laundry.
I never cracked the code. Maybe I was doing something
I'll let
wrong.
you know. I'll let you know how his plan
Please.
goes.
Man, that would be all time. Well, fantastic. That's so exciting.
Maybe that's kind of like, so you know how people are different in different parts of the country, different parts of the world.
I had it on again. I'll take them off for you. I know you hate
You
them.
can keep your sunglasses on if you'd like. Maybe that's like, I know there are some guys in the office who are on those dating sites and they check the box, Brazilian girls only. There are some men in this.
There's one that's done it.
No, there are. Well, look at Garrett. He's married to a woman from Brazil.
He didn't check a box.
How do we know? How did he meet her?
You don't know, yeah.
But we've got.
We need to clarify this. I'm going to look directly into the camera.
It's not
We're
Garrett.
going to look directly into the camera. Garrett did not check that box, as God is my witness.
I'm just saying, I know some other people in
His
this
wife
office.
is watching. She's absolutely delightful.
There are people here at this network who have been on dating sites who check the box Brazilian women only.
I believe he sits in your seat occasionally.
So I don't know. What do you think of that?
It's a choice.
Now, what if Glenn was dating a Brazilian girl?
He might have that box checked.
I didn't. I actually never on any apps.
No.
Never downloaded any apps.
You know
yeah.
what? Meet him at the bar, playing pool,
Yeah.
right? Good old
Somewhere.
fashioned. Yeah.
Yeah.
You have a girlfriend?
I mean,
I do. Yeah.
Okay.
She's Latina, but Mexican.
did you check that box?
I did not.
Latino.
I was at the bar. Just I had a sign. Yeah. No box, but it was my shirt. Yeah, a little graphic tee.
I would like to compliment you on your absolute ability to just agree with everything that we do in here. I really like that about you.
It comes from a perpetual state of fear. Yeah.
No. Well, and I've got you the full hour next week. So
Awesome.
buckle up.
Can't wait.
Oh my gosh.
Make you sit over there, or
No, he sits there.
Check the box.
There's Garrett. See?
Garrett, big fan. That's too
Oh, and
funny.
his wife is. I love his wife.
I love his wife. She's the best.
Johanna, she's great.
So funny.
She's great, but I doubt she's watching.
I don't know. Maybe she is. Hi.
Anyway, let's talk about the FX world.
Let's get into it.
What's been going on?
It's an exciting day here on Thursday.
Oh, was this your Super Bowl? What numbers did you have today?
Not Super Bowl, but more exciting. PPI, yeah, more exciting than we would have expected. So we had the CPI print
Wednesday.
on Tuesday, I believe, and that was cool as you'd like, slightly below expectations. So all that did for markets was price in a September rate cut fully. Looking at that CME FedWatch tool, it was 99.9% that traders were expecting. Yep, cutting in September. And so that was the narrative Tuesday, Wednesday.
I haven't looked at the tool in a while. What price are they cutting in? 25 or 50?
25.
25? Got it.
Yeah.
Well, so, okay. And so is that reflected in the bond prices?
Yeah, so we saw definitely the reaction off of that, bonds ticking higher, yields coming down. But now we got PPI, which is the producer side of inflation, and that came in much hotter than expected. So that was month over month expected to be plus 0.2%, so relatively muted, came in almost a full percentage higher, 0.9%, and that caused a big reaction. Now CME FedWatch tool pricing in a 10% likelihood in September we stay where we are. So earlier this week.
It's pretty cool. I don't look at it that often, but it's pretty cool to look at.
No, it is, because it's updated very frequently. And gives you a pretty real-time estimation of what at least futures traders are thinking in terms of by these Fed meetings. And so we saw some dollar weakness on Tuesday as a result of that CPI number, and then early this morning saw a big surge back into the U.S. dollar. Not as much momentum as you would have thought, big snap reaction, and then kind of phased out. But you can see when you're looking across pairs, you can see something like U.S. dollar, Japanese yen trending a lot higher. That one continuing.
Are you in the platform?
Let's go. Yeah, I was going to say, let's go into the platform.
I'd like to play along.
Okay.
Let's go on the platform, and I will. And that's what I was wondering.
Can we see the platform first?
Yeah,
John, I'm sorry to do that to you.
Before the slides?
Yeah, thank you.
So when these numbers are coming out, what are you watching? Like, you know how when these numbers are coming out, we're watching the SPOOs. When these numbers are coming out, what are FX people watching?
Yeah, so I might be a little bit psycho here, but I have kind of a 6 chart layout of all the major U.S. dollar pairs.
And do you need 6 monitors for that?
No, I have them all just...
can you show us how to do that?
Yeah, and it's in the slides as well. So I'll show you that. But that just gives me a gauge. You can also just check from the watch list. If you're looking right before the number, you can see all those prices moving, and you don't even have to look much farther than a euro dollar for kind of a best guess.
It's kind of like the SPOOs for us. You can look at
exactly. Yeah, so that's the most liquid, the most traded market.
The euro dollar USD.
Yep, and so. Then I would take it to a
like a shorter term.
An hourly.
So let me go 1 hour.
Oh, here you're still on bonds. So if you go back to the TastyFX tab.
Yeah, I did. Okay, hang on. TastyFX.
Yeah.
But then now to go and trade, it'll be that top navigation.
Okay.
Yeah.
So here, did I set this?
Yeah, so it's on daily. So if you click on daily and take it down to the hourly, 1 hour. Yeah, here you can see that we had a big move. The
CPI day?
Yeah, the CPI day. So that's Tuesday.
Yep. It's Tuesday.
And that rally lasted, all the way up until yesterday morning, kind of consolidated on Wednesday around that 117 price level. And then the 5th bar to the right shows you where that PPI number was.
Oh, there you go.
Big skid, but now kind of chopping, not too much of a reaction. I think it was only like 0.3%. But then if you go back to the watch list.
So can you hold on 1 second? So that big bar right there, the one we were just pointing at, is what came out this morning. And so I just want to do, because my brain works in SPOOs. So when the PPI came out, the SPOOs went down just like this did.
Correct.
Is it very heavily correlated?
You generally see an inverse correlation between stocks and the U.S. dollar. In this instance, stock market wants rate cuts, right? And the U.S. dollar, if rates are higher, in theory, that boosts dollar demand because that commands a higher yield for it. So But yeah, tale of $2 pairs here because we saw the same reaction. So here you could see, if you're just looking at euro dollar, you could see, the result of this number this morning was dollar strength. But here, pretty stalled out over the past few hours. If you go back to the watch list, and then we go to...
Okay, watch list, got it.
And then we go to USD JPY, Japanese yen.
Japanese yen.
Go to that trade tab. Populate that. That's already on the 1 hour. You can see pretty different story here.
Yeah,
we
that's
have
a tale of two cities.
a lot more momentum. So we have the same move directionally, but here continuing through the U.S. session, getting a lot more dollar demand in this against this Japanese yen. And this one, historically, over the past year, we've seen a higher correlation with U.S. rates just because of the historic rate differential. A lot more participants here playing kind of the interest rate game.
Would you say a lot more participants playing USD JPY? Like when you see, since you're part of the FX team here, and you see the activity, what is trading the most during these announcements?
Yeah, so we definitely see the most in euro dollar and USD JPY.
Okay.
I think dollar yen would be even more traded, but this margin requirement is 5% as opposed to euro dollar is only 2%. So people looking for maximum leverage definitely gravitate for
euro dollars.
Exactly. But yeah, here.
Can we look at our positions real quick?
Sure. We only have
3 or 2.
We have.
Well, that means one's gone. We had 3.
Did we?
Yeah.
Are you sure?
Well, yeah, because you went into you put something on.
See what our
Because
network
all we
is.
have is we didn't have any recent. We don't have a U.S. dollar, so maybe we only have the shekel. and this is just the euro, Great British pound.
we had.
We put that on a while ago.
I think we had 3 positions. Can we look?
Yeah, go over to the history tab.
Okay.
And then it has the date filter of 24 hours. If you click that and go to
3 days.
Go to 7 days because I think it was last time I was on the show. You put something on.
Oh, maybe we did.
And then scroll down.
Oh, on the toggle bar on the side. Yeah, there you go.
Oh yeah. Okay.
So still working to make this a little bigger for you guys, but you're gonna look for actually
Here,
what you
Great British pound U.S. dollar.
Yeah. So you close that for a profit.
Nice.
There you go.
Nice work. And I think we set that very minimally $35 win or $100
That was our
loss or
win
something.
one.
Yeah.
Risk, take it off and risk 2.
Yeah.
Yeah.
Exactly.
Right. Okay, good. So
Awesome.
Great British pound
Didn't have yesterday.
U.S. dollar. So that was USD GBP.
Yeah.
And if I go to the trade page here and take a look at the move that got us out.
Yeah, maybe click out of the TastyFX tab and back into it.
Oh yeah.
Move that got us out.
Okay, GPB USD and the trade page. The move that got us out.
So here we're looking at 1 hour.
It was the 13th.
Oh, this is 1 hour. So
it was the 13th. So it was Wednesday the 13th. It was the CPI day, or it was after the CPI day, right? There's the move.
A move up.
So yeah, scroll out. Just scroll out with your mouse, and then you can see maybe So if you put this on last Thursday, you can see a little more to the left. Around where
here.
You got in. Yeah. So a nice hit to your profit target and didn't require you to
even
manage your position.
We didn't even know.
We didn't even know. I didn't know we had it. I forgot we even put it on.
Fantastic.
Okay, cool. That's good. And I like the idea of we were risking 100. Our stop loss was at 100 versus making only 35 because it was risk 3 to make 1. And if we would have had that stop loss tighter, we would have probably gotten stopped out here.
Perhaps, yeah.
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 No, I do kind of like what you brought up last week, where it's you have to have your stop loss. You have to be willing.
You have to be.
Because otherwise, you're gonna get stopped.
You're gonna get stopped.
Options. You get stopped out every single time because at some point, all trades go against you. In the words of Kenny Rogers, every trade's a winner and every trade's a loser, depending on the cycle.
Very wise words.
Yes.
So if you were simulating this performance, it would require you to pick directionally a lot more winners, right? Because those losers would be of a greater magnitude. But
but you don't get stopped out as often.
Right. Yeah. So I think with your kind of time horizon profit targets, you are with a tighter stop loss more susceptible to be in kind of a 1 day range. Whereas if you were, kind of shooting for the moon more, you could probably get a little more symmetrical because when you're checking back in on it, it would require looking at just volatility and how much these pairs move in a day, a profit target or stop loss of like 200, 300 pips. You wouldn't get that just from a day-to-day fluctuation, right? So,
And this is one of those things where you go in, and I was talking to my son about this today. So, like, if you go into a position page and all you see are losers, your winners fill if you have those orders in. So most of the time you're going to go in here and just see losers because the winners are gone.
And I mean, so we trade that way in our account. We put GTCs in for every premium selling thing at our profit target. So only to close for profit, not we never put stop losses in. So a lot of times when you open it up, and our viewers will say the same thing. They're like, their account looks terrible. Their account looks terrible because our winners are gone.
Right. So this morning Logan calls. He's in North Carolina having fun on the beach, but he looked at his account, called me, and said,
"What the heck?"
He's like, my account's doing great, but all I have are losers in there. And I said, yeah, because I knew you were on the beach, and I went in yesterday and closed all your winners, and you're left with just your losers. That's just how the game. Just how this goes.
She's like, just focus on your net lit, kid.
Yeah. He's like, but I want to get rid of these losers. I'm like, some of those you'll never get rid of because a lot of those are things that if it's like, what's going to happen? You buy a stock at $5, it's $1. You're not selling it. It's going to be there forever. But this is similar when we open.
God is my witness. If you buy something for $5 and it goes down to $1, there is never more pain than if that thing goes back to $5. I would rather, and you've already sold it for $1. You just
hold on to it. You just hold on to it. So here is similar. We go in here and our positions look like losing positions, but our winners closed.
Exactly. Well done.
Yeah. Well, should we go to your slides? Because we don't want to give you.
Sure.
We got a lot of
slides. That's right. You're not here the whole hour.
No, he's not here the whole hour.
Next week.
Next week.
Here today on this little Forex Focus segment, looking at entering FX positions and what to look for, because you guys now very well versed, I'd say, in spot FX markets.
I don't know if I might remove the very and the well.
But still, I think a lot of questions you guys have is just kind of more evaluating. What do I look for? When I haven't been looking at this in a week, how do I step in and how do I formulate a possible trade idea? So first, we actually kind of walked through this already. But you'll just look at evaluating the market landscape like we talked about today, where have we been in terms of the economic calendar? We had a soft CPI.
You keep an eye on the economic calendar. Like this is your wheelhouse, is the economic calendar, and that's when can really move is the Forex markets.
Yeah, and so here looking at majority U.S. dollar pairs, when we think of spot FX trading, you'll look typically towards those high impact U.S. events, but you also have one of the nice things about spot FX is you are trading this against other currencies, other regions, and so something like
there's always something to do.
There's something like an Australian interest rate decision can happen. That was Tuesday night, overnight. They cut rates, and so it's definitely worth keeping an eye on all of those events as well.
And what happened with the Aussie dollar, U.S. dollar when
on the initial meeting? It depreciated a little, so Australian dollar, U.S. dollar went down, but then it bounced back off of that U.S. CPI reading. So in theory, maybe a central bank meeting is weighted more important than just an inflation reading, but in this case, an already priced-in move from the Reserve Bank of Australia against softer CPI inflation data, one prevailed. And then for you guys that are managing a wider portfolio of stocks, options, futures even, you could even look at just a dollar index.
Is it the DXY that you just gave us this chart
Yeah,
for?
just to give you this is,
So
a
that's not
weighted
tradable,
basket.
is it?
No, there are ETFs like UUP that you could
that's
look at.
UUP. Okay,
Yeah.
but that's just to see the chart. That's why you gave us the DXY. Okay.
Right. And so this is something you could pull up, without even getting into your TastyFX platform, just to see, even though this is a weighted basket, just see what the movements looked like, where we are from kind of a more macro lens, and see if this piques your interest into getting into FX markets. So then going to the next slide, we have...
here you go. This is what you're looking at.
So this is what I'm looking at. We have 6 of the most
And these are your
popular.
favorites? These are this is...
Yeah, so this gives you a pretty well-rounded view of the dollar's performance, because you have euro dollar, British pound, Japanese yen, Swiss franc, Canadian dollar, Australian dollar. So you have Australian dollar, Canadian dollar, which are more commodity currencies historically. You have some risk sentiment gauges with your traditional safe haven currencies of Swiss franc and Japanese yen. And then you have your most traded pair, Euro USD. And so here, what you're looking for is, maybe you were looking at the dollar index already. You have more of a bias either way, long US dollar, dollar bullish, dollar bearish. But here you can look at what individual market looks interesting, especially from a tape action perspective, what charts look interesting, because that's the nice part about getting this granular, is you have different opportunities, like we talked about, a stalling euro dollar market versus a very trending dollar yen market. And here you can definitely see that looking at these hourly charts.
So this is what I want. I want to click on a button, see six of these, take a quick glance, and taking a quick glance at this, like, okay, maybe I'm going to sell the USD Canadian dollar, and then maybe I'm going to buy the Aussie dollar US dollar. Maybe I'm going to throw in a couple of those just from quickly looking at these charts.
Yeah, because we don't know how to analyze it, but looking at the charts, I'm like, maybe it's going to come back.
Yeah, let's just sell us some USD CAD.
Exactly. So that's a good comparison of just visual, which markets are interesting versus, layering on that kind of macro perspective. And then in the next slide, we got an additional analysis that you can perform. This is very popular. So you guys looking at option strategies primarily, you're looking at volatility environments, right?
Yeah.
You're looking high vol, you can sell premium, and that's an easy thing to just check. Here in FX markets, where everything is directional, something you can look at when you're choosing between, we have 85 FX markets, hard to discern when 20 of them are all US dollar, which one to look for. You can add a bunch of these technical indicators, which are really helpful for FX traders to get a lens on where the momentum is. So it might be easy, like today, where we were looking at that euro dollar market, to see that it's kind of stalled. But something like adding some of these technical indicators like this relative strength index can tell you.
Is that the bar on the bottom?
Yep.
That's the relative strength.
Yeah, so that can tell you.
Channel?
Exactly. So it has the channel that is more typically in
Jenny
the,
just visually assessed it, saying,
Exactly.
I'm going to sell the USD
Doesn't even need
CAD.
Yeah, but you can see when it goes outside of these channels, that using this indicator would indicate that something is either overbought or oversold by just averaging, comparing the average gains over a period and their average losses, if there's some momentum there. And so that can help you pick directionally,
Very cool.
Okay,
I like it,
this
Glenn.
one's flying.
So how do we get that set up where we have like all 6 charts on our...
Yeah, and then just lastly here, to end these slides, a final trading checklist which is a ton, but important to think through, which is just setting your entry criteria, sizing your position, determining your time horizon, because as we know, that can dictate a lot of what your profit targets could be, what's ridiculous versus what could actually happen. And then checking the calendar again to see if you got in on Tuesday, you're like, okay, September rate cuts completely priced in. We're good for a bearish dollar position. but then didn't see that this PPI number's coming out, that adds some event risk.
Yeah, so the numbers really add event risk onto it.
Yeah.
What I'm realizing is we always say the news is baked in, and we don't really look at a lot
Not
of
with the
numbers,
FX markets.
but not with the FX markets.
Yeah.
Check your calendar. I like bullet point number 5.
And then plan your exits. So that's what I got for you in terms of how to think about FX markets generally, how to identify potential opportunities and potential markets that you're looking into.
So I'm going to give you some homework for next week while
Okay.
I'm gone. Number one, you're going to be sitting here. I want you to load that thing with lots of positions.
Oh, yeah. Good idea.
Okay?
And maybe if we don't have time today, because it's already 10:30, we didn't set up the 6.
Yeah, we can set that up.
We could do that next week.
Perfect.
Because I don't want to keep you too long. I know you've.
That's all right. This is the best half hour of my day.
Oh, yeah. Good job.
Thanks, Glenn. Now you can go take off your hot red sweater.
All right.
Put back on your blue shirt.
Good.
Well, thank you for joining us. We really appreciate it. We are
appreciate you
learning
guys.
little bits each day. We're learning a lot, but I only absorb little bits each time. So
That's why we'll go over this.
Yeah.
We'll go over it a few times. But I'll have the full hour next week. We'll be.
So when I get back, I would like all 6 charts on there, and I'm going to need
more positions.
And more positions.
Spoo's down 15.
But if you come back and there are no positions, maybe that means
Yeah, they've all been hit.
Hey, I like it.
I like it.
Come back,
I like
no
it. 'Cause these can be hit at any time during the day.
Or at night.
Yeah,
Right,
so
day or night, anytime.
So these are trading 24/5. So
Great.
from Friday night to Sunday night, only time that.
Yeah, that's pretty good.
Yeah.
All
Perfect.
right, Glenn, thank you very, very
Thank
much.
you guys.
Glenn.
Good
Are you
see
going to
guys.
come and meet a lot of the viewers between 12 and 1 today?
I hope so.
Yep.
Yeah.
And then I'll be at the Tasty Live event tomorrow.
Oh, you're going to be there tomorrow?
Talia Hall.
Have you
We'll be
been
on
to a
air.
live event yet?
I have, yes.
Which one?
I went to the Chicago one last year and the Miami one last year.
Oh, nice.
Very
Very
cool.
nice.
All right. Well, thank you
All right,
very much
thanks,
for
Glenn.
joining us.
Thank
We
you
appreciate
guys.
it. Thanks for filling in for me next week, too.
Of course.
Okay, so that was a great segment.
It was awesome.
And can't
Love
wait to set up my 6 chart
It's good
watch
you have
list.
homework.
Yeah. No, we'll be busy next week. We'll be busy. Now, Spoo's down 16. We have.
So when the PPI came out this morning, the SPOOs dropped down to like down 30.
Yeah, and so it's not so bad with Spoo's down 16.
No, and then we rallied up to almost down, 2, 3?
Let's go on the platform. I did pull up this, DXY that Glenn was talking about, but I still have this on the hourly.
It's not, but it's
you
not
can kinda-
tradable. You can just see where things are.
No, but he meant if you hear of someone trading the dollar, they're trading UUP. Now, if I go to UUP, if you're trading the dollar, you're trading those pairs. But if you wanted something,
just the dollar,
just this UUP is this, U.S. dollar index. And this is also an hourly chart.
And you can use options on this too. You can change it to hourly. But did you see, this is how my mind works. You see the Invesco Dollar Bullish Fund. Did you see the new IPO called Bullish?
Yes, I did. Let's take a look at it after
So if you wanted to get long the dollar, you could just do an options position. Do you want to take a look at an options position here?
So UUP here.
$27.
The problem with UUP, from my experience, is there's nothing in these options.
There's no premium.
There's nothing in these options.
Oh, you don't want 10 cents on the 27 put?
No, I don't. So if I've ever traded UUP before, I just buy.
Why wouldn't we go out farther in time? Go farther out in time and buy that.
So if we want a bullish.
Go to January and buy a call. Or even October, go 60 days out. Because there is something in January. Go October.
15, you're giving up. The markets are a little wide.
Yeah, that's great.
Yeah, sure. We'll put it on.
75 cents.
75 cents for the 27. So just so people realize what we're giving up, it's trading 27.42. And if we pay 75 cents, our break even is 27.75. So in order to make money on this, we need it. Here's our break even.
And that's why I went farther out in time with it, because I don't want to keep rolling this. It's too wide to keep rolling. That's the only reason. It was go farther out in time.
But to Liz's point of selling premium, I'm not selling a put for 15 cents.
No,
it's not worth it. We'll buy.
No, thank you.
We'll buy this call for 75. And then we have,
And look at how little risk that is. You can go out there and buy the stock, for 50% of it or whatever, and then you're going to control it. Now, it's got to go up, but if it gaps up to this long call farther on time, we get 64 days, long dollar.
Now, what I will say is I've traded UUP many times, and it never moves much.
Oh, I don't think it's going to. But you look here.
I mean,
30. It looks like it's bigger. It's 30 to 27. That's not a real big move.
Yeah, you're right. Some of the charts you go from here to here, and you're moving $100.
Yeah.
Here you go, you're moving from 27 to 30.
Yeah.
It doesn't move much.
It doesn't translate.
It doesn't move much.
It doesn't translate into big money, no whammies.
No. Okay, so do you know the symbol of the new?
Just type in bullish. I think it's BLSH. Yeah, there you go.
Yeah, heard all about this. Yesterday went from, well, I don't know what the IPO price was supposed to be.
But you can see the high. What's the high?
It went to 118. Now it's 75.
Wow.
Yeah. Yeah, went all the way to 118 yesterday. Now it's only 75. They don't have options yet, I don't think. No,
they don't.
But as soon as they do, I'm selling puts.
Here's what I think was crazy. Like the double leveraged, how they had the double leveraged on like Tesla.
Yeah.
All those big ones. They filed for double leveraged on this before it went IPO.
Really?
Yeah. I mean, talk about things that have gotten out of control.
Is this why? This is when Tom and Tony wanted to play the bubble video?
Yes.
And I don't know if you had the luxury of still being home and getting to watch the bubble video.
I left 2.5 hours before I needed to get here.
Well, that bubble video, it was nice to see some old familiar faces, but it was painful to watch.
Was it?
Oh, kind of.
Were you in it?
No, but it was crazy. It was crazy.
I didn't see it.
It's but it was cute to see some. I said Garrett looks so young in there. Alex, Steve.
They're all in there. Yeah.
Yeah.
Do you know what my favorite commercials are though? My favorite commercials still to this day are the data trader commercials. I think they're
those are
hilarious.
so funny.
And I don't think anybody else thinks they're as hilarious because we know that those are pretty accurate.
Yeah, the guy who won't take his jacket off.
Yes.
Who has to win at everything.
Yes. Who eats the Monopoly piece just to win.
Those are funny.
Yeah.
Those are really funny. I'm anxious for these options to come. Speaking of options and something new-ish, CRWV.
Oh, good. You got filled a new UP. Can you push that out just because so I can?
Oh, sure. So CRWV had a big move down yesterday. And we looked at some puts in there yesterday, and it's having another big move down today.
We didn't sell the puts.
No. So let's look at selling them today.
Sounds like a plan.
Let me push this out to the follow page. Okay, so CRWV, yesterday's down move, boom. Today, boom. I jumped in yesterday, and
you scared?
No, but I'm losing today.
Yeah.
I sold the 95 puts yesterday, and maybe they're down $300 today, something like that, with us down another 13. I just went to September, I think.
So let's take a look. Go to the 80 put, just for fun.
Yeah, now mine are up here. When I sold them, they were down here.
Yeah.
You see what I'm saying?
No, I can't see your mouse.
Hold on.
You're not in Zoom.
Okay, well...
So it's the magic show that you saw at my house.
Okay, well, yesterday I think I sold the 95 puts. I'm going to highlight those.
There we go. I see the highlighted.
At the time, they were down near the expected move.
Yeah.
Right? Now they're right there. Today, the 85 puts for $5. Big money, no whammies. They've increased the margin a little bit on CRWB.
Would you at all, since there's down move, and there is still a lot of premium here, ever want to do 85-82 ratio spread?
I know you like these.
I do.
But with 36 days to go, and if you're going to plan on sitting on this for 36 days, yeah, sure, do the ratio spread. But if you think you're going to take it off on a pop, and
you can take it off on a pop. You'll make the same as if you sold the put. It goes down 1 for 1 with it.
You just don't get as much.
You need the pop.
You just don't get as much. So I'm getting like $3.69 instead of
$5. That's the one thing that you will.
So if I want to take it off on a pop, I want the $5.
Correct. But you do get it. You will make money on a pop.
Or I guess this is no different than selling the 80 put for $3.70.
Yeah. And there is no, to be honest with you, this is no gaming of the system. Wherever your break even is, it really is almost the same. Within a couple pennies, clearly. You're getting $3.75 for the 80, but that's exactly how you should see a ratio spread.
So if I sold the 80 for $5, my break even, or the 85 for $5, my break even's 80. What I would do would be move this up here. My break even's 80, and I'm getting the 524.
Yeah, there you go.
It works out.
Now, and to be honest with you, with this, that's kind of I would rather just, upon assessment of all these, I'd rather sell the 80 for $3.70.
80 for $3.70,
which is the ratio spread, the break even of my ratio spread. No, just the 80 put for $3.70.
Yeah, And a lot of people like ratio spreads. I do them for protection. I do them close up. I do them where I'm not collecting much. But here I'd rather just sell a put.
So the only reason my eye goes to this is because they were all trading around the same level. And when they're trading around the same level, you can get a ratio spread for pretty good. So I was like $5, $4, you can do a ratio spread, you're going to get wrapped around. That's the only reason I thought about a ratio spread. I'm totally fine with the single option.
So I'm curious, if we're getting 368 here and using 1300, if I just sell this, what is it using? 1197. It's just $100 difference.
Yeah.
Not much difference.
You know, I mean, sometimes I think the simplest, so sometimes I think we have such high level options in our brain that you can think of so many different things. Sometimes the simplest is always the best. And I don't think if when I put that on, I'm bullish. I do not want it to come down into mine.
I don't want it to come down.
But I was just saying it's down. So sometimes if I see a down, I'll do the ratio spread.
And I'm more apt to do a ratio spread
in the 2 day, 8 day?
Like here's the 8 day. Yeah, here's the 8 day. Maybe I would do 195 in the 8 day, get your break even down to.
That's not bad.
And then you're getting 324. And if it keeps coming down, I will throw ratio spreads on like this.
I have no problem with this. I like this
weekly.
A lot. Mm-hmm.
The problem with this is it's using $1,800.
Wait, can you scroll a little bit farther down? Oh, it's $5 wides. Never mind. I was thinking you could buy something and make it a broken wing butterfly.
I could buy the 80.
It goes to $5 wides.
But I could still buy the 80.
There you go. Now you're cooking with gas. We're using $832 for it. We're making $162 if it goes up. If it goes down again, we're going to make more.
If it can go down to that 95 level by the end of the next week, great.
Do it.
If it goes up, we keep $1.64.
I like it.
I just like the ratio spreads shorter term.
I do too. No, like I said, I was just looking when they were all the same price. I don't mind on the down. If I'm just trying, if it's at the bottom of its range, I'm not doing a ratio spread.
So this is what this looks like. Here's where CRWB is trading after 2 big down moves. And this trade is kind of banking that it continues to go down, maybe another $10.
We're making $167 anywhere to the upside.
If it goes up.
Yeah.
Fine. If it goes down.
We're only using $800 to do it instead of in the 1,000.
Right. Not bad. I'm going to try to send this. The mid-market, and we're filled.
Oh, look at you.
So now this is our core weave position. We're back in core weave.
We are. And it's defined risk. It's not a naked option.
Right. It's not bad. So that was one of the big down moves today after yesterday. Now for me, if having that 95 put, in my mind, I was like, it's still out of the money. It's still out. I sold it for maybe $5 yesterday. It's $9 today, but it's still out of the money.
Yeah.
I'm not.
You wouldn't touch that with a 10-foot pole.
Would I add on a call?
It was down 20.
And how low did they get?
I saw them down 28, but it was really early.
Let's take a look. I'm just going to go to SPX. I did not do an SPX trade today.
We can't because we're in the car. It's illegal to trade and drive.
That's why. I knew there was a reason we didn't do anything. Oh, what trade? Well, I'm on a 1 day trade. This blip down is nothing. Did you see that?
Can you read to me what it says?
Here, I'm gonna.
No, because the SPX was open. When I saw SPOOs down, it was 7:30. So this isn't going to be down that much.
Yeah, right. It was like
by 8:30 they had bounced back up.
64.53 was the open.
It's right here.
Yeah, the low was 64.41. Nothing.
So try ES. And then when does that open? Like when does it say? Will you see my 7:30 print?
No.
That looks like nothing too.
No.
That's a big fat nothing.
Big nothing burger. Okay, so now I don't think there's anything to do there. Yesterday, I wanted to look because we talk about back to all-time highs. Yesterday, we're at all-time highs. I do kind of like throwing in those upside broken wing butterflies in SPX when we're at all-time highs.
I do too. I do want to read something to you, though. I'm just in, hold on, I got to find it.
Yeah, we can pop into Twitter. Do you have Twitter
There's
up?
lots of tweets coming in, but this was just from Scott Sommer, and he said, be careful in core weave.
Oh.
Be aware that the quotes on this product reflect current very high HTB fees. Hard to borrow.
Oh. Hard to borrow fees.
Okay, so thank you very much. And that was yesterday, because you were talking about core weave yesterday. It was 23 hours ago, but I just saw Scott Sommer bring it up.
And let me show you this. And maybe this is, when you talk about different costs in products. Oh, we can stay in Twitter. Yeah, we're still on Twitter. Go ahead, stay in Twitter. Let's get through.
So I want to go to Blue Wackadoo. We're not going to meet Blue Wackadoo. He's not coming today. He's coming tomorrow.
Oh, no.
Happy Thursday. No major trades today. Just heading to see Tom and Tony in Chicago. So bummed to miss Liz and Jenny at the open house, but I had booked my event before I knew. Also excited to possibly meet Jack Tucker.
Oh, tomorrow.
Jackie and Uber Graph 32. I don't know who that is. And more.
Nice.
Yeah, that's fantastic.
Well, everyone's going to have a great time tomorrow.
It is really cool.
We'll be busy holding down the fort.
And then,
who's on in the morning? Do you know? Tomorrow?
I don't know.
Because we're on at 10. Who's on it? I don't even know.
I don't know.
They should broadcast that live.
They should.
But I know.
Cool.
I know.
Then why would you?
Yeah,
then
I know.
anyway.
I know.
Okay, but and Magdalena, what about PCS? Poor covered call. Poor PCS.
What about a PCS in LMT? So
put credit spread.
Put credit spread in Lockheed Martin. Excellent work. Excellent detective work.
October 17th is the expiration, and let's pop in the platform.
Okay. Here's Lockheed Martin. Had a big drop down on earnings, fighting its way back. Put credit spread, sure. September.
So they wanted in October 17th.
Oh, October?
October 17th. That's what she said.
I'm just going to go out to September monthlies because it's still 36 days.
I agree.
So I'll go to September monthlies, and I could always move it to October if we need to. So here's $1.50 on a $5 wide.
Yeah, sure.
Basic.
So they want to put credit spread in LMT, October 17th. It's Lockheed Martin, how many stars do they have? 2.
The markets are wide. I'm in the regular monthly. Do you see? Let me take a look at this. I'm in the regular monthly, which should be busy. Open interest, there's some, but the markets are wide. But I've traded it before.
You have traded it before.
So we'll try.
I don't trade this that often, but Magdalena, what the heck? We don't mind.
Yeah, what the heck? $1.50 on a $5 wide. Filled. I'll put in GTC for 50%. LMT, where did it go? Here we go. Close for 50%.
And then, perfect. So you got it in. So then let's pop into the platform. Scott Sommer talks about what he kind of goes in a little bit more into depth. Can we go to Twitter real quick? And then we're going to pop into CoreWeave. Okay, so if I buy the CoreWeave 105 call and sell the 105 put in September, so if you're buying a call and selling a put combo, I collect about $450 with the stock at the 405 handle. It seems like I'm collecting the hard to borrow fee when doing this trade. Is there additional beyond the product itself risk I'm missing? So if you're collecting 405.
Wait, is he at the, what strike was he? 105 call?
105, he's on the combo, the 105 call and put. No, we read it. Now let's pop in the platform and take a look at this. So the combo is stock. So when you're going to do that, you're not going to.
He's saying he's collecting this like 372 because we're trading 105. So we're trading 105 and you're collecting 372. He feels like, I think the risk when it's hard to borrow is you might get assigned on your puts.
And you'd be long it? Yeah, because they can't sell it.
Right? Because then the other person would be selling and you'd be buying.
That is true.
I don't know. Is that so? I know when some things were hard to borrow, we could like throw in butterflies for free almost. Do you remember that?
And in the words of Tony Batista, I love this line, you can't afford free because a lot of times you'd get exercised on a lot of that.
I want to say it was Groupon where we were throwing in butterflies and getting paid to throw them in.
Yes, and giving them to us for a credit. And then we all came in with Groupon stock.
And we all got assigned on our puts.
All of us.
Yes. That's what happened. Like we were like, oh, look at this, we're getting credit, and then
I don't like it was something. I remember that all of us were like, oh, butterflies for credit.
Or GoPro or
yeah.
I don't remember exactly. So I think that was the risk. Then you're. I don't know. But I see what you're saying because it's trading 105. You're getting that 370 credit.
Can you do me a favor?
Yeah.
Go to something else. Like,
well, I was
go to like AMAT, anything.
Wait, I wanted to ask you for here in Etsy because similar situation. So
just put a combo in anywhere because you're going to be getting a credit in some direction or the other because it just depends on where you are.
So like if you buy the call and sell the put, it should be the difference between like 65 and 67.71. It should be 271, and here it's 304. Not much difference. But my question to you. So I had sold calls against my Etsy stock.
Okay.
And you see Etsy like shot up, right? So I had the 50 calls. I basically had a covered call. So I had stock and the short 50 call.
Okay.
Now, to get out of this, and was saying there's no extrinsic value.
There's 14 cents extrinsic value.
Yeah, so then it should have traded for $49.86, but it wasn't trading for $49.86. I couldn't get filled. I get
it, but you look at how wide those markets are. So you can usually get out of it near expiration, but not. There's still like.
But you could usually get out of. But I think because I had to get out of it closer to 49 yesterday. I had to get out of it closer to 49, and I think part of that is some costs that are baked into this. Because when there's no extrinsic value left, you should be able to get out for close to that. But I just think part of it is the cost baked into it, like the carrying cost baked into those calls.
Because there's still 36 days left.
Yeah.
So the cost is higher. That's why I think the cost goes down. A lot of times when we're trying to get out of them, they're like the 1 day or the 0 day or the whatever.
Mm. But I was like, okay, well, this would be worth $50 at expiration, but it was worth 49, even though it said there was almost no extrinsic value. But I think that was the like carrying cost baked into it.
Yeah. So Scott Sommer, I appreciate the heads up. Keep an eye on that. We'll keep an eye on it too. We're in with puts in CoreWeave, but we'll see if we get assigned.
I mean, they're out of the money.
They are.
I don't remember. I wish I could remember when we were all putting on those butterflies for a credit.
I mean, Groupon sounds right, but that would have been years. That would have been 15 years
ago.
Yeah, it would have been 15 years
That
ago.
makes sense.
Okay, do you want to pop into Twitter and make sure you're pushing everything out that we got filled on? I don't know.
I don't think we did anything other than the.
Oh yeah.
Oh yeah, yeah.
Lots of stuff. You're zinging them all morning.
CoreWeave, we did that downside Brooklyn butterfly, and then Lockheed Martin, we sold that put spread.
Perfect.
All right.
CoreWeave, Lockheed Martin.
All right, back to Twitter.
Back into Twitter. And I will go top down too, but I want to make sure we get to this. So Brad comes in. SPX put credit spread this morning, waiting to close until 10 cents value. Woo! I'd close it before then.
Yeah.
But good luck. Yeah, I mean, the put spread. So where's, if you still have the platform, we don't have to go into it, but where's SPX right now? Because his trade, he's got the 25.30, 64.25, 65.30.
Oh, it's 58, 64.58.
Oh yeah, he's good. Put credit spread.
Wait, 65.
He's got the 65.25, 65.30. That's why he's waiting till it gets to 64.25.
Yeah.
I'm just dropping the handle. 30.25. So he's
and we're
shape.
64.58.
How much is that worth?
The 25.30.
25.30.
35 cents.
He's waiting till it's 10 cents.
Well.
And then Ajit comes in with the highest IVR, IVP, and IV this morning.
Anything new on here that hasn't typically been on here? I guess A&F, Abercrombie, they might have earnings.
Yeah, they might.
Otherwise, the list is similar to yesterday.
And then Ajit comes in with another one. He says CRM is juicy for an iron condor. So let's take a look at CRM. And then Bob on Fire, there are no earnings trades. Oh, today, AMAT. That's it. I just saw that. No,
AMAT.
AMAT is today. So then let's pop in. Let's look at CRM.
And then CRM, Iron Condor. Salesforce. Okay, Salesforce, Iron Condor, they have earnings in like 2 weeks. So, yeah.
So then I don't want Iron Condor.
No, we'll wait on Salesforce.
Do you want to take a look at AMAT?
I do. AMAT 189. It doesn't look like
the rest,
right? So you see that I wouldn't mind an Iron Condor here.
Let's take a look.
Let's see how far we could get. Earnings expected to move $10. If we go, I'm going to go just beyond the expected move. Just beyond the expected move. And we're getting 91 cents.
On a 250 wide, that's not bad.
That's not bad.
Oh, I can look too. I'm not going to.
I think
things. I just want to see how much a put is. I just want to see how expensive it is.
Oh, did you sell the negative? Yeah, because it's almost $200. Do you want 91 cents on a $2 wide?
Sure. We just made 36 cents on or $36 on our foreign or FX pair.
Oh, our FX pair.
Foreign exchange pair.
I'm glad you realized that was gone.
Well, I knew there were 3. I couldn't have told you what it was to save my life, but I knew we had 3.
So this working LMT is to close it for a winner. Our bearish trades with the market down, we have our long UVXY.
I don't think
that's not up much. I was going to say VIX has it broken out of the 14 handle. 1505. A little bit of a jump.
Yeah, but we saw the blips. You looked at SPX, you looked at ES. This is nothing.
It's nothing.
These are only down 11 right now.
It's nothing. I know. You know, some of my stocks that are down big today, my AEO.
Did we get out of IBIT? I want to take a look where the IBIT is too.
No, we're not out of IBIT.
So
66.95 and our short put is the 67.
Okay, that's fine. Because yesterday, we put it on 3 days ago, but yesterday it was almost going through our call spread.
Yesterday, IBIT was as high as 69.
Yeah. And we have the 70, we had the 70 something. So I just looked at it. I actually took mine off. But we're in the 8 day, aren't we?
We're in the 8 day.
I was in the 3 day and I took mine off.
We're in the 8 day. The 3 day makes sense. The 8 day, it wasn't up enough. Like you can see, we're down $47 today. So net down 24. So it was only up like $24 yesterday.
Agreed.
I'll put in a 50% GTC. Do you remember when we had Dan the crypto man on
Monday?
I do. And he talked about the rise in Bitcoin and how
he did.
It usually comes back down, like because it was some roll, and how you typically would come back down after that roll.
And it went up. This morning it was 122, and now it's what, 119? Crypto or Bitcoin? Bitcoin's 118.63.
Yeah, here I put up BTC Q5. I guess
that's a big move. Let me see where it is. I just want to.
Yeah, it's a big. It's had a big move.
Yeah, so it's down 3% today, which I mean isn't that big of a move when you think about it because it was just there the other day.
But it was up like yesterday up to almost 124.
Yeah, and this morning it was 122.
Oh yeah, this morning it was as high as 125.
Yeah.
So what?
I think it goes with the SPOOs. This morning when I woke up, SPOOs were unchanged and Bitcoin was all-time high. I mean, I'm kidding, but it looked like everything was right with the world. And then that the PPI came out and SPOOs dropped and this dropped.
So,
but the SPOOs have rallied. They're only down 9
So
right
this
now.
could be, similar to the foreign exchange pairs, because here you have, BTC USD. Like,
yeah,
it moves
versus
with
USD.
that. Yeah. So to take risk off in some of these, what I did yesterday, like, let's take Ethereum, for instance. So here's Ethereum. It had quite a rally. Some people might say, like, wow, it had quite a rally.
So that's not down nearly as much. Well, it's down.
No, but not bad at all. I mean, the high in Ethereum was 48, and now it's down to 46.50. So not bad. But if people say, I have long Ethereum, but I want to take some risk off, but I want to keep a long position, what
and I will tell you, as an options trader, it is so hard because if I would want to be long Ethereum, I would have been ratcheting up Ether.
Yeah. So for like in Logan's account, I closed his Ethereum because he said, I want to like hold on to some of these profits. I closed his Ethereum and then just went to the Ether, which I like that we have these products.
Yeah, I do too because there's something you can do against them. Now, what I wouldn't do is keep it there. You can keep Ethereum and sell Ether calls against it because you can figure the notional, but there's no capital preservation there.
So you can have no extrinsic value, wrap a call spread around the money in Ether.
Yeah.
Like here, I'm giving up 283, I'm getting 283. Or I'm giving up 235, I'm getting 250. So you can have no give up and use a call spread. And you think like, okay, if I had an Ethereum coin and in the last month it made, or the last, went from, let's say made $1,000 or whatever, but I want to still make some money if it keeps going up, but I want to take the risk off. You can put on these debit spreads, and that's what I did for him. Took off his Ethereum coin and put on these Ether spreads where he's only risking $200 to make $300. You're risking $214 to make to make 280.
And I just priced it only because, and this is good because you're actually taking risk off and going a smaller nugget. You'll make only what we make here, 285, which is great. It's 286 considering. Or you can do a zebra for $800, and it's 1-for-1 profit potential all the way out for 36 days.
Right.
Then you're kind of capping you're capping your loss too if Ethereum drops down. So if you put one of these on, I don't know if ETH is 1-for-1.
Honestly, I have both. So I have ETH
and
Ethereum. And now, it's tricky because you can't look at the day because, again, like when does Ethereum reset?
When does it start? When does it end? Like no one knows.
When does Ethereum reset?
Yeah.
But it definitely was close enough where it seemed to be. Where yesterday my ETH was actually making more per one lot compared to each Ethereum coin.
Yeah, I could see that.
Mm-hmm. So I think it's close enough.
Yeah.
But here's a way to say, okay, I made $1,000 on the run from 3,500 to 4,500. Take that off and risk
but it's also
200 to make 300 for the next 36 days. And if it falls back down, I'll buy my coin back.
So, and it's also, that's why I do kind of like having the options instead of just the coins, because if I did ride it up like that, which I did.
Yeah.
So I can take a zebra, and then if it drops down, I lose a couple $100.
And then you go back and you buy your coins back. That's kind of, so I cut down my Ethereum position, and I've got some ETH, and I just went, for me personally, like I did this for Logan because he has this small account.
Yeah.
But for me, I just went to Jan. This is what I did. Went to Jan and bought some calls in Jan, and let's say I think I paid $1,000 for them, thinking if we fall down, these are going to have these are $10 now, but if we fall down, they're going to be worth $7. I'm not going to lose that much on them.
No, because then if it falls to the 29, they become the at the monies. There's so much intrinsic value with so much time in there, and you're still capped because an Ethereum coin was what 4,600. Here you can only lose 1,000.
And so my plan was, okay, if it falls back down here, I'm going to actually sell these out and then buy back my Ethereum coins.
It's not a bad plan. At least we have these products now to be able to do something. And what I
Right.
love about them, you've got, now the 94 rank, you could sell premium. I mean, maybe you could sell puts in these. That's fine. But you've got 48.8 million shares of traded, which means it's a liquid market.
Yeah.
You're looking at an in-the-money January 2026 option that it was just $10 at 10.15.
And it's only $3 in extrinsic value. And my plan was for every one of these, I'm going to get back that extrinsic value between now and Jan. So at first, I did go out and sell 50 cents. So if I could get 50 cents every week or so and try to cut down that $3 extrinsic value.
I like the using the puts. It does hold up a lot of capital.
You could do a spread.
Yeah, I do like that you're using the puts. I'd rather defend it with the side that I want instead of putting a call on here.
But after this, so I did that once, but then it had such a run up, I thought, I'm going to wait. I'm going to wait on selling these puts.
Didn't Dan the Crypto Man say Ethereum to 8,000?
Well, if it happens before Jan, and if it, as it goes up, even though my calls are in Jan, I can move them out in time.
Yeah, you can.
But I do like that we have these products, and we can just, instead of just sitting and holding and saying, I'm just going to hold this. If it falls back down, I didn't do anything.
Yeah, there's nothing you can do. I mean, that's what's great about when we finally get these. Because up until this point, I think crypto was a dead asset. We're done.
Whoa.
The boys are waiting to get in. They're knocking down the doors.
I had no idea it was 11 o'clock. No idea.
They're knocking down the doors waiting to get in. You didn't push something out. Hold on, there's one thing.
Oh, let me see. Hey, Matt.
Yeah, ship it.
Okay. All right, Liz, good to see you.
Good to see you too.
I can't wait. All our viewers are going to be rolling in.
I know. Well, they've got an hour. They're waiting at the gates. All right, everybody, have a wonderful afternoon. And remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. We'll see you tomorrow.
Right.
Craig in New York City, what's up?
I just want to say, I've been with you since the very early days of Thinkorswim, and traded all kinds of markets here and there. And I got to say, I could be off so much worse if it wasn't for what you guys have sort of drilled into me over years and years and years. And so I just want to thank you, because you could have easily just taken the money and run when you sold Thinkorswim, and you didn't, and you started this. And you basically have just given me this full education in this thing that was completely foreign to me many, many years ago. And so even though I've lost money in the last few days, you've saved me a lot at the end of things. It's like losses could have been catastrophic, and they're not. So I appreciate you.
I
hear you.
I appreciate you guys. Thanks so
Thank
much.
you, man. And I appreciate
Thanks.
you holding on the line to say that to us. So thank you.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
So I started trading in the equities market when I was 18. Real basic ETFs, mutual funds. I didn't discover options and really tastylive until about 2012. It made sense to me from a risk perspective. And so I started trading and never really have looked back. The people you see that's who they are. They're trying to be as open and clear as they can with the trades that they're putting on. Teaching a methodology, like teaching the logic behind things. It is tried, true, and tested. They back it up with research. They share that research. It's not just trust us and do this, which is a very dangerous thing in the financial world. But learning about that in a Tasty universe, it starts to prove itself out, right? When you follow the methodology, you'll see those profits and you'll understand why a position did what it did. Sometimes the market wins and sometimes you have a 90% winner and you don't know, why don't I do this every day, right? This is easy. But you kind of have to reset that and just go, okay, close the trade and move on to the next one, which is really what Tasty's about.
Good morning, everyone, and welcome back to the show. This is Option Trading Concepts Live. My name is Nick Batista. Got my man, Mikey Butler, and of course, Miss Katie McGarrell in the house with us today. And if you want to come join us, hop over to YouTube, type in Tasty Live, come to our channel, give us a like, and please subscribe to our videos because it helps us immensely. But more importantly, just come chat with us live because we'll be taking questions throughout the show. Whatever you got questions on from strategies, concepts, trade ideas, trade management, whatever. Just come hang with us for the next hour of the day. My favorite hour of the day, I get to spend it with the team, the OGs, Mike and Katie. Good morning, Katie.
Hey, how you guys?
Chilling.
Chilling?
Yeah.
You recovered from Seattle?
Yeah.
Not totally.
Not totally?
Yes.
We were very tame.
We were very tame.
Yeah.
Yes.
But great time.
Yeah.
Haven't seen you really since then. Not too much, just a little bit in passing.
Yeah.
But it was a good time. Good show.
It was good.
Great weather.
Oh, yeah.
Great food.
Yeah. We got Dallas coming up, October.
Yes, Dallas in the middle of October.
Yes.
Another Sunday night show, so don't be mad at us for whatever football games you miss.
Yeah, shoot. I didn't even think about that.
We'll have
a side stream with the game on.
That's what I was going to say. Like, we'll do like the classic thing that you see people do at weddings now where they've got like, they pipe in the stream.
Yeah.
Yeah.
We're going to have to do that.
Yeah.
I don't even know what game that is.
Gotta find out. Yeah.
Well, I mean, it's Sunday. It's going to be a Sunday night game. So
Yeah.
Right.
it'll be a prime time game.
True.
Imagine if it was the Cowboys. That'd be kind of
That would be interesting.
That would
Then
be really
we'd probably
questionable for us.
We'd have nobody at our show. So
Yeah.
I'm hoping it's not a Cowboys Sunday night game.
that's true.
You should look that up. Just
Look it up right now.
We will find out. But yeah, Dallas in October, San Diego in early November.
Yeah.
San Diego.
It'd be a great time.
Then we're done.
Come hang. Yeah, and we've got Chicago tomorrow.
Yes.
Are you guys holding down the fort here?
We are.
Nice.
Yes.
I'm available
Ooh.
for an extra fee.
Okay.
I gotta get like my phone out and like people do like the tip thing now.
Yeah, you get like the
QR code.
Scan this QR code.
Yeah, exactly. I should be around. I think
Ooh.
yeah, I don't
That would
think I'm
be
gonna
fun.
make it down to Pilsen. So
Okay.
but please, I hope everybody has a great time.
Yeah, we've been pumping the taco joints around there.
Oh yeah.
5 Rapanitos.
Yeah.
Five Revenitos.
Milagro, El Milagro. If you've ever had El
my gosh.
Milagro chips, the original store is in Chicago,
Delicious.
on the street. So,
Cream of the crop.
yeah. The
Hai
game.
Su, even not even Mexican down there. Vietnamese, Hai Su.
Everything.
Great spot.
It's a nice little pocket of restaurants.
Yeah.
So be prepared to walk around and eat somewhere if you're going.
Yeah.
Yeah, for sure.
The game that night is Bills Falcons, so we're in the clear.
So we just won't have the Grace brothers tuning in. is
Correct.
What you're saying.
Yeah. Yep. That is right. And then Bears Commanders that Monday night.
Oh.
Ooh. Hopefully we don't miss that.
Actually, wait. It's a doubleheader.
Oh.
It's Bills Falcons, Bears Commanders. So it's a
Bills.
Bears game.
On Monday
Doubleheader.
or on Sunday?
On
Monday. On Monday.
Sorry, it's Lions Chiefs Sunday night.
Oh.
That's pretty strong.
Damn.
Yeah. And
We're
then Monday we
screwed.
get a doubleheader.
We're absolutely screwed.
Well,
We'll be fine.
I hope that people come. That's
Yes,
all I have to say.
yes,
Job
yes.
security, guys. Come on,
Yes.
help us
We
out.
will make sure it's streaming somewhere.
Yeah.
Still come and hang out with
Yeah.
us.
We'll put it on the laptop.
Yes.
But yes, that's going to be a great show.
Yeah.
Yes.
And then one more in November, San Diego.
Yeah.
Mm-hmm.
I told this to a couple of other people that were like, "Oh, how'd the show go?" And I said, Nick caught me off guard because in his presentation, he goes through a couple of trade examples, and I thought I knew what his timing was, and then all of a sudden there was clapping, and literally my eyes got as wide as dinner plates.
Yeah.
And
we were
was
backstage still.
hauling my tuchus through backstage, just clawing people out of the way, running in my little
sorry.
heels to get up there.
I went a little quick at the end.
That's
sorry.
okay. I should have been right by the stage being more prepared. But honestly, it was good because it didn't allow me to get into my own head.
Uh-huh.
I didn't get
Yeah.
the nervousness because I just
all
had
of
no
a sudden-
time.
Yeah, all of a sudden you're just on stage.
Yeah, literally. I was like, how did I get here?
Love
Weird.
it.
But yeah, Seattle was great.
Yes.
Loved it.
Yeah. Musang went out to dinner with the team.
Yeah.
Strong Filipino offering in
Yeah.
Seattle.
Yeah, that was
Strong meal.
really good.
Yeah, I still I've been thinking about what my favorite dish was. And it's tough to kind of say. I know you really liked the
I like
ahi pork belly.
Yeah. The ahi tuna with the little bits of pork belly
Yeah,
on top. That was
melt
really
in your
good.
mouth.
Yeah, it was
Yeah.
really good.
Elite.
Yeah.
The mushrooms were really good.
Mushrooms were
The
really
mushrooms were really good. Your pickled papaya.
Uh-huh.
It's really good.
That was a nice side
Yep.
dish.
Loved
Yep.
it.
Just
Loved it.
pure glory all around.
Yeah. But anywho, what else is going on? How have you been? I don't want to give away my trade idea, but I'm curious to kind of see what Thomas thinks of mine today.
Ooh.
But did you guys
Thomas
have him on
Cornman.
Tuesday?
We did. What did we talk about yesterday? Or Tuesday. What was that? 2 days ago.
What is time? It's a flat circle.
This is me.
Yeah.
We talked about corn.
Oh, good.
Yeah, we did.
That's great.
Yeah, all the grains just getting smoked
Wait, where?
For now.
for now.
For now.
But yeah, they're bottoming out. It feels like, hopefully. Because yeah, it was that big red bar on the WASD report.
Yes.
So.
And we have unemployment tomorrow or early jobs numbers.
It's
Some
all
type of number.
they're all fake now. You know.
Fake fiddle faddle.
Yeah.
Yeah, we had PPI this morning.
Came in
Came in
hot.
Big hot heat. And then yeah, tomorrow retail sales. Yeah.
Nice.
Pretty much it.
What have you covered? Who did I follow into Eli Lilly? Have you covered it?
Probably me.
Covered it this morning.
All right, I'm gonna do the same. I'm up $130.
Yeah, it's great.
Nice.
Someone at the Seattle show was like, "What do we do with this position?" I was like, "You just wait." And then 3 straight days, 50-point rally.
Ding, yeah.
Ding, ding, ding.
There you go.
Yeah,
All right, I'm
you-
gonna cover mine right now. I'm gonna try to lock it in.
675 Eli's at right now. Up $15 today. Big move.
Too shabby.
Yeah, that was just a small little post-earnings collapse calendar, and we got the reversal. Just a slight reversal. That's all you needed.
Love to see it.
Yeah, love to see it. Also, I believe that on Monday, as we kind of teased at the Seattle show, Active Trader was rolled out to the desktop platform.
Yes.
It has been live on the web platform, but you can just see it in your trade tab. It is still kind of in beta mode. They're going to be iterating, adding multiple ladders, multiple charts support at certain points. But if you have any early comments, feedback at tastytrade.com is your spot to go. But it should be on both web and desktop, mobile, release date to be determined.
Sweet.
Very nice. And you can get that. So if you're on the platform, you go to the trade page, you click on the active button in the drop down, the active V2.
Yep.
So
Love it.
Very nice.
V2.
Quick little market update, just to give everybody a heads up on what's happening here.
Do it.
E-mini S&P 500 futures down 18. They were down about a 30-ish at the lows. We got as low as 64.53, so about 25, 30 handles lower from here. NASDAQ down 69. It was much weaker this morning. The Dow down 239, and then the Russell giving up basically all of yesterday's move, down 47 and change. You've got oil catching a little bit of a bid, /CL up $1 here, 62.92. Volatility futures at 1880, up 28 ticks. You have the VIX itself still in the 15 handle. It did get into a 14 handle yesterday. Bonds down 27 ticks, so reversing all of yesterday's move as well. Gold down $25. It's been pretty weak over the last week or so. Silver down 58 cents. And then Bitcoin, which was having a massive rally overnight session, it got up to, let's see what the spot was. 123 is now down $4,400, 5,200 on the futures. A little over 4%. So big move in Bitcoin as well. Risk off there. A little bit of a chop fest today, no doubt.
A little bit.
Yes. And just to show the active trader, it's on this drop down here. So when you go to the trade page, you can drop down. We usually sit on the table mode. You can go into the curve mode as well, but active.
V2.
V2, and you can do all your buys and sells.
Love it.
One-click trading.
One-click trading supports futures and equities.
Yes.
Potentially, I think crypto is being scoped out, and they are,
Is equities live right now?
Equities is live.
Oh, it is.
Yes.
Okay.
Don't kill the messenger there, just in case I'm wrong. But
Yes.
equities should be live, and they're also exploring obviously crypto support, and I think they're even looking into seeing what like an options ladder would look like. But that is more of a in the brain thing still, and not anywhere on paper.
Let's try this one-click trading. So you enable, do like a buy market. I'm just buying shares here.
Nice.
And then you can sling them, just sell them. Boom. Boom.
What's SMR?
It's one of the nuclear nuclear stocks.
Just say that. Nuclear.
Yeah. But it's cool functionality. I mean, this is for people that trade stock or futures. Obviously, futures is traditionally what this sort of thing is used for. But if you're a stock trader, it's a really easy, quick way to scalp in and out of stock shares. And you could do that in any quantity that you want. You can choose your own quantity. You could do the presets. I was just doing one share per. So each time I clicked to buy was just like buying one share, buying another share. And you could see on the left side, it's all getting triggered there. And then just your sells are selling one share. And then when you flatten, so if we buy more here, and then you flatten, it'll sell all of them. So it's really, really fast and fun.
Yeah.
And easy.
If you're day trading, this is a nice little feature for sure.
I lost 15 cents doing that.
Well,
I'm gonna have to
You can go get
expense
Tom
that.
for it.
Yeah, I'm gonna have to expense that.
I'm gonna have to expense it. Just go steal a stamp from Tory or something, and that'll make you square.
Yes. Well, stamps I bought a booklet of stamps because I had to send a letter. A booklet of stamps is like $20.
Yeah. Try sending wedding invitations.
Ah.
Oh, that's where they get ya.
Oh.
now you got to start just sending more letters.
No, it's just I used one of them. It basically cost me $20 to send that letter.
Yeah.
The rest of the stamps are going to sit in my drawer for the next
I think you should take up
4
letter
years.
taking.
Just send letters to your family members and how much you appreciate them.
Oh, that's so nice. Maybe I will.
sweet.
That's called a positive karma event.
Yeah, everybody loves getting actual mail in the mail.
Yeah.
But when it's just all credit card offers and BS,
Yeah. Okay.
waste of paper. But a nice heartfelt letter.
Yeah.
I still have a Christmas card that Jason Chow sent me, in the mail with his little $2 bills that he would give everybody.
Oh, yeah.
Cherished forever.
Yeah.
Yeah, my fridge is littered with
Cards.
those kind of cards.
Yeah, it's nice.
I got all the peeps on my fridge. Soon, actually, you're on there right now.
Oh yeah.
Yeah, you're on.
Better be.
You're on my fridge.
Got to remember.
But Tracy, the Home Alone.
Yeah.
That's
oh,
still
Tracy's great with her Christmas cards and stuff.
Yeah.
Awesome. Love
Very
it.
nice.
What else is going on, gents?
Well, it's Thursday, which means one thing and one thing only.
Chicken?
PGA Tour. No, I'm just kidding.
I was going to say Chicken Thursday, but it's actually pizza today.
Well, soon we're going to be saying Thursday Night Football.
Oh,
Yeah.
God. I was,
It's an exciting time.
I was thinking about that last night.
I really love, I was saying this to Mikey earlier, I just need his ability to find the silver linings of life.
Yeah.
Because, he just oozes. He's not toxically positive.
Yeah.
But he's
I'm a
just the
serial
right
optimist.
amount.
Yeah.
Serial optimist.
Yeah.
Yeah.
I'm more like water off a duck's,
Yeah.
Whatever.
Yeah. I'm kind of
kind of
just
thing.
like the glass is just
Yeah.
neither half full nor empty. There's just half a glass of water.
Yeah, we're just. Yeah.
But yes, Thursday means one thing and one thing only. Trade ideas.
Yeah.
Yes.
If you want to join us on the YouTube channel, we're streaming live there. Just pop over to the Tasty Live YouTube chat, throw in your trade ideas, questions along the right-hand side chat. I see the regulars in there.
The peeps.
Appreciate you.
Team.
Come and
Team.
join us. Yes.
Gang, gang.
Gang indeed. Gang indeed.
Yeah, have you been talking to Thomas?
No. He's gone.
I know. We miss him.
All the interns except for Anna are gone.
Yeah.
And Anna's on her last couple days too.
Mm-hmm. Sad.
Yeah.
Sad times. All right. Let's dive in.
Cool.
I've got a call diagonal spread for you. Surprise, surprise, people. I'm going to put in the YouTube chat a link to the earnings preview for AMAT right now. So, AMAT, another tech stonk. However, it's kind of sitting in the middle of the range from where it's been. I think we can see some positivity there over time. And right now, the August premium is not that high, but that also means the October premium is not that high either. So if you look at the implied move for October, you're looking at 20 points in either direction. The August one-day premium is half of that amount. So I went out and I bought the 190 call in October, giving myself plenty of time for this thing to reverse if it sells off, but if it rallies, it'll be A-okay. And I sold the 200 strike right at the expected move in the one day for $1.60-ish. Total package is $974 here.
You're the total package.
Thank you.
Amen.
Appreciate it.
Both of you are.
Thanks, Kate.
Full kit and caboodle.
Thanks.
As nobody says.
Thank you, Katie.
You do have your phrases that are you.
My old head phrases.
Yeah,
My unk
auntie.
phrases?
Your auntie.
Yeah.
Your auntie phrases.
Auntie Katie. But yeah, bought the 190, sold the 200, long October, short the weekly. This risk graph is the Theo risk graph on the Analyze tab. I pushed the expiration to tomorrow, and I crushed the implied volatility in October by 5 percentage points. So I brought it down from 38.5 to 33.5, which is in line with what I would expect. I would say you should expect at least 5% to come out of the back months here. So yeah, if we get a rally, $550 winner, something like that, if we go to 200. But if not, if it's a smaller inside move, we'll still be able to take this off for a profit. And again, if it sells off, I'll be able to roll the one day into September. Maybe I'll keep the diagonal. Maybe I'll go to a calendar. We'll see what happens tomorrow. But yeah, just getting in, playing for the upside over the next 64 days. So we'll see.
Lovely.
Mm-hmm. That's that on that.
All right. I'm going to sit that one out, but
Fair.
it's not because I don't love you.
Thank you.
Very nice.
What do you got?
Spicy. Big risk.
Burrito.
I'm sorry, the 450 call should be in September. I will fix that for the slides.
I think I have them open. So
Oh, you could do it. You could do it live for us. But anyway, Coinbase. It's been smacked after earnings. Had a rally up to what? 440-ish. We're down at 320-ish. So we've got about a 25% haircut in the last month or two. It's obviously had a nice rally from the lows in April, around 180-ish. So we're kind of in the middle of that range. Crypto has been going nuts. I think it's an interesting time to get a little bit of long delta here, just with this sell-off that we have in the crypto space. I think if you have a reversal of this, you probably see Coinbase materially higher from here. So I'm doing some long delta in Coinbase. A big problem with anything trading related is that you don't know when it's going to happen, right? So
Sure.
I'm doing a crab trade to kind of play into some of the short volatility in the short term. IV rank of 18 isn't necessarily high, but in the market that we're dealing with here, it's certainly on the higher end of what I've been finding. Markets are pretty liquid here too, so that's a plus as well. But this sort of setup gives us a lot of time for this to chop around and kind of wait for that sort of move. So I'm going out to October. I'm buying the 350 call. I'm selling 2 of the September 400 calls against it. So that's a 50-point wide long spread, synthetic long spread. And then buying the 450. So it's 50 by 50. The net debit on this is $1,400, which is a lot to put up, but my long option has 64 days until expiration. So your relative P&L in the short term is probably more like a couple $100, assuming that this isn't a huge move to the downside. And so I'm comfortable putting a little bit of more capital out for this. I also close out a put spread that we did, I think, a week or 2 ago during Fast Market or one of those shows where I freed up about $600 or $700 in buying power. So I kind of use that to justify using a little bit more here on this big wide crab trade. In terms of profit target, I would love to get $500. Probably a couple hundred would be an exit point. It's always hard to hold for that 500 or, those are kind of big numbers. So a couple $100, but really playing for a little bit of a bounce, maybe a chop over the next week or 2 weeks and then some sort of bounce. That would be chef's kiss for this position. So playing the upside in Coinbase. And this risk profile as well goes to the day before the September expiration, just to give you an idea of what this sort of risk profile looks like.
All right.
Yeah.
I see.
I got in a similar position. I'm just going to go with the straight up calendar.
Okay.
At 350. Long October, short September.
Sure.
For $7.99.
There you go.
So similar idea. Half the buying power for those of you that wanted to trade it smaller but directionally similar.
Yeah.
I like it.
Very nice.
All right. Okay, well, kind of as alluded to, I am going to the AGS. So I believe you've already had Thomas to talk about this on the show on Tuesday. So he might tell me I'm a ding-dong, but...
No, we were getting long. So we're
okay, great.
Yeah.
All right, well, before we get into the actual setup itself, the AGS historically just have basically no correlation to any type of equity position. If you wanted to try to figure that out or utilize Tasty Trade's platform features to figure that out, the corresponding ETF for corn is
corn.
CORN. Yeah, so when you have that overview tab on your platform and you've got your quote details, the 90-day rolling correlation is actually at a negative 0.1 right now, so that's basically zero. So this is also kind of a diversification play from my perspective. And rather than going to the corn futures options, which I've also traded as we all have, I decided to do something a little bit more static based on this price extreme. As both of you mentioned, basically the yield estimates for corn are coming in at record levels, which obviously drives the price of corn down below $4. So I'm doing a little bit of a contrarian or reversion play, if you will, to see if corn will actually rebound a little bit over the length of this contract, before the U5 contract expires. So this is not one that I would consider probably an opportunity for scalping or day trading. I'm planning to hold this for a little bit. And luckily, the micro corn futures are 1/10 the size of the major contract, so that's 500 bushels instead of 5,000 bushels. I believe the minimum tick is around 250. So very small trade, $160 in buying power, which is why I ended up doing 2 of these, just because my risk tolerance is a little bit beyond that. But if you are, net new to trading static futures, certainly one contract just to dip your toes in could work for you. But I got long at 372. Like I said, I got long 2 of the U5, which is the September contract. Obviously, static positions, 50-50 shot. Therefore, it's like unlimited profitability and loss, like technically speaking. But
Yeah.
I would be happy with like $75 to $100 on this thing, considering that I do have 2 contracts, and just hope for a little pop in corn over, the duration of this trade.
Sweet.
Teeny tiny diversification, engagement, ag play.
I think both of us, as well as Mr. Westwater, are all in your boat at much worse prices. I think you actually bottom ticked it today, or just about. Corn futures basically unchanged here. They're up 25 or a quarter of a tick right now. But you basically caught the bottom here. I mean, the low was 369.50 on corn futures, so you're a point or two above that. So good job out of you.
Thank you.
Ms. Katie.
Thank you so much. There is also a mini corn future as well. So you can do the MZC, the XC, as well as just the straight up ZC.
XC will be
a fifth of the size.
So it'll be 1,000 bushels.
Correct. Yeah, so if your risk tolerance...
Not as much liquidity, 150 contracts.
I mean, same thing for the MZC, though. There's only like 200 contracts right now, but I figured it was small enough where I'm less concerned about it. And 2 ticks wide from the bid and the ask.
Yeah.
So again, $5, like...
Yeah.
I felt pretty comfortable with that, but absolutely take a look at the volume and the liquidity before you're dabbling. But if you did want to scale up before the major contract, there is the mini, which again is 1/5 of the size as opposed to 1/10 of the size.
Yeah, and with these futures, the straight up long or short futures, the liquidity on all these, regardless of volume, is pretty good, and that's because it all gets rolled up. Like from a market making perspective, these get put in with the corn futures, and they're very small, and so the relative volume, it doesn't matter from the scale of things. But on the option side, the micros and the minis, and some of the corn minis don't have options, I don't think.
No, they don't.
But the micro options are not as liquid.
Yeah.
They do get wrapped up into the whole thing, but it's a little bit. It's almost too small for it to be liquid.
Yeah.
And so these things, it gets all batched together on the market making side. And so even if you see something like the micro corn, it's still going to have a 1 or 2 tick wide bid ask spread, even though there's 200 contracts trading, just because of the market making.
Actually, I think ZC is the only one that has options.
Ah.
Yeah, so makes it easy.
Yeah.
Less of a decision you have to make.
There you go. But if you're looking at like MES, these options are pretty junky.
Totally.
Like some of them look nice, a lot of them are junky.
Yeah.
So
that's me.
Cool. I like it.
Simply love to see it.
You got it. Yeah, it's the best.
So yeah, we are long. I'm in the 400, 420 corn diagonal spread.
Oh, okay.
So I bought October, sold September. Both of those they fall under and settle to the Z contract. So it's not a calendarized contract. It's a calendar spread within the same contract. So it's like a standard equity calendar, or diagonal, I should say. So yeah, that one's flat. I got in at $400. It's trading at 387.50. But I am with you, playing for an upside move, closing my eyes, strapping into the roller coaster, and saying, "Woo, woo." Yeah, this is my biggest futures exposure though. I'm long wheat as well. Same setup. I'm long micro natty gas. I'm long micro crude, and I've got a free butterfly in gold futures on the upside.
Micro natty gas. Look at you little crazy man.
I wish I hadn't.
Yeah.
I stayed away for so long because it just bit me.
Oh yeah.
2 years ago, it was just every day.
What's the micro natty gas?
MNG.
I mean, that's not unattractive.
I mean, it's
But-
got to go up at some point, right?
Maybe I'd do it. I have a put spread in natty gas futures, so
Do you?
why not lose some more money?
Double doink?
And double doink this, yeah.
What's the buying power? $500 for 1 micro natural gas.
Still a pretty decent contract.
Yeah.
But yeah.
I might have to buy it.
I did.
Are we doing a
Please.
KOD right now?
No,
Probably.
This is the rocket ship. When we're all involved, it's the rocket ship.
This is a double down for me. So
Yeah.
I'm not in anything with micro. I don't have any energy right now. So, all right. I just got filled at 284. Publishing
nice.
to follow feed now.
Cool.
Swag.
So I'm seeing some news on Amazon adding perishable foods to same-day delivery.
Ooh.
Taking on Instacart. It's up $6. I've got a remaining call from a call diagonal, the 2:30 call.
Ooh.
In September.
Ooh.
So we press. I'm pressing on.
No,
this.
you take that money and run, dude. You just got. See, this is where things become a problem. This is
Like I'm watching a tennis match.
So you hit a double overnight.
Yeah.
Yeah, $300 to 800.
I'm trying to steal second to third. Oh, you're talking about? I thought you were talking about baseball. Like
That's what I thought too.
Yeah.
No.
Never mind. But yeah, what you could do if you wanted to be more conservative is you could sell.
Oh, you close it. You start something new. You go October SEP. You do a new call diagonal spread. You know, you go. You take your $800. Thank the heavens. You go to 135.
Yeah.
Then you go to September.
Nice little steak dinner for
And
you.
you go to
Boom, boom.
245, you take $300 off the table. You got upside. You can continue with this position, but you don't have, $800 in decaying naked premium. Or not.
Or not.
That's trading.
Yeah.
Well, my assumption is so we're seeing a red day today.
Uh-huh.
If we see a green day tomorrow, if you see Amazon up like 2-3 points, it'll be nice.
So you want three. Yeah. So you want more.
I want more.
Okay.
You know how many emails
Pulling the stingy card.
over 10 years? How many emails do you think I've talked to people that are like, how do I make even more on this trade? And I'll say, if you're asking that question, probably time to take some off because you probably made a lot and it's probably a good trade. And sometimes you can only make so much. And
We'll check in at 8:33 tomorrow morning.
Yes.
And assess the situation.
Yes.
Yeah, you can grill me live on air when we're doing the morning show.
No.
Are you guys doing party shirts? Crab?
If I remember.
He's
I
been
usually
really
forget.
bad. Like I'll show up in a party shirt, he's wearing like
Yeah.
something not
Gray
party.
sweatshirt.
Yeah.
Sorry, guys.
You don't have to apologize to me. It's your wardrobe.
I know. Sorry.
I don't really have many party shirts myself. I don't party all that much anymore.
Looks like a party shirt.
Just a dress.
Yeah.
Party
But-
dress.
Party dress.
Yeah. Could be that.
But yes, I'm gonna hold on. But I do agree with your sentiment. I think it is smart to close this and go long October, short September. It's the same debit cost as what it's trading for now.
Do as I say, not as I do.
Yeah. It's all right. Do you, boo? It's all right.
I would love to have this just a clean recovery.
Ah.
But yeah, look at that chart. I mean, earnings sell off from 235 to 210, and it's right back.
Yes. Was there ever a doubt?
No. Guess not.
Very nice.
But yeah, nice recovery there. If you follow the trade, there's no wrong answer if you close it or hold it.
Yes.
Except there is a wrong answer in holding it, which I'm doing.
At least he admits his faults, ladies and gentlemen.
Yeah.
All right, what do we have in the chat?
Yes.
Let's pop it over to the chat. How about a butterfly or strangle in hymns?
I'm already in the hymns train with one of you.
Yeah.
Where I'm up small.
You have the 40. Did you do the 40 put?
40 put, 60 call, 65 call twice.
Okay, and you did it at what?
I did it at 258.
258. Okay, so you can
$36 hairs.
you could go if you wanted to. You want to get spicy. You could buy back your 50.
I don't have a 50.
40.
Oh.
Buy back the 40 put.
Okay.
And then you could buy the 70 call. And you'll do that for like $2.29.
Get into a cheapy butterfly.
Yeah, cheapy butterfly, free up some capital. You could do something else with it, whatever. That's what I did a couple days ago on the 12th. But so I now can put on a new position if I so choose. What was the position they wanted to do? Butterfly?
A butterfly or strangle. I'm going to do a crab trade.
Ooh.
I like this price right here. I'm going 45 in October, 55.65 in September for 365. $3 and change crab cost for a 10-point wide spread.
Okay.
I love it. I love it.
Voice.
I think I'm going to do. I don't like that. This.
All right.
Why is
Sell
the
this
buying
out,
power?
Buy this.
Sell it out, buy that, flip that, reverse that.
Yeah.
I do the 40-50 strangle. Leave my butterfly on.
How much? So you just need to do, if you buy the 70, you need to just do it for less than the credit you picked up for the original trade. Am I right?
Yeah, you buy back the 40,
Yep.
put 2.
So buy the 40 and the 70 is one transaction.
Yes, and then if it's less than
Yeah.
the credit.
It's 30 cents cheaper than my initial credit.
Yeah, so then you have the 30 cents in the bank, and then you got a lotto ticket on the upside.
I will dabble with your little tweaks.
Should I just get into I might just do the same thing that we did before and just try it again. Remember when I did the this lower? Remember with the XOP trade where I did all those butterflies and ratios and all the where you had the
You're
mountain.
very good at making the Mount Everest.
Yeah.
Or the
Just
Mount Rainier.
I like to trade it. I'm not so married.
Well, that's the beauty of the broken butterflies is if you get the opposite move, you free up the risk, fly it off, and then you can throw out another one on the other side. You get the other move, you free it up, and now all of a sudden you've got 10 butterflies, 1,500 flags on the curve view, and it just looks like a mountain.
It's a low probability of hitting all of them, but
But you can leg into a high probability range for sure.
Oh yeah, and you can close them for value at some point closer to expiration, and I've done that a couple times even today on some of them. I'll show you some of those. So I just did I did another one. So I sold this 38 put. I did the 50-55 call ratio spread. So we're going to leg into another one. This will be fun.
All right.
But I hit a couple today. So on some of my trades today, like the Shopify butterfly, I was long the 30-35 call spread and the 40-45 call spread. Shopify is down like $6 or $7 today. And this spread, which was fully in the money, it actually blew past my free butterfly. So I kind of missed out into earnings. But now into this move, I was able to get $200 out of it. It expires at the end of the day tomorrow. Took the money and ran on that. I had another one too. What was it, yesterday maybe? CCJ. So CCJ was another one where I lagged into the 75, 80, 85 free butterfly. I closed that one out for $192. So it's nice to have these little shots because you take the risk off. I've been using that risk in other trades, which hopefully have been good trades. And, now you got a little cherry on top today.
Go.
Yeah. I've been doing those in gold futures, and I'm 7 for 7 from last year.
Yeah.
Because it's just if there's a downside move today in gold, you do a put brokering butterfly where you're collecting around $250. If there's any sizable rally to the upside, you can buy in the risk by turning it into a free symmetrical butterfly.
Yeah.
You lock in 60 cents. Every single one of these, I've locked in between 60 cents and $100, a little bit more sometimes. But then once the risk is gone, if you get the move towards your spread, like Nick's saying, you can then sell out of the spread.
Yeah.
So out of all these, I made $200 last year, $100, 60 cents, $160, $50, $160, $250. So it's been a great trade because you're starting off with a high probability trade, and then you have the ability to remove all your risk.
Yeah. And you're using all that capital elsewhere.
Yeah.
So it's not only just whatever you're making on the trade, it's also that capital is getting put to work somewhere else.
Yeah.
Mm-hmm.
Very nice.
All right. I've made mine into the cheapy butterfly too.
Yeah, why not?
Yeah, why not?
You get a little something. It's not like you're a HIMS trader.
Yeah.
You know, you got a nice little vol crush and, you know.
Just a little cheapy.
Now, in a week or two, if the stock squeezes up to 50
Yeah.
and that whole position goes to $1, you'll be like, oh, God, I got a free $1 out of this.
Go.
Looking for trades in ETH A and IBIT, but buying power is really high.
Mm-hmm. Got to buy the wings.
Yeah. So I have a core position in IBIT, so I'm just completely naked in there. But it's a core position that I'm holding through the whole year. So it's a little different than if I was playing for just like a monthly trade. But if I wasn't, yeah, you buy the wings for 20 cents, something like that, and you free up the risk. It's perfect.
I might go a little inverted on this move into ETH.
I was telling Ryan I covered my ETH position, and now we're at 4-year highs.
Shoulda,
Okay,
woulda,
though.
coulda.
That's okay, though. Wait for a little pullback.
Yes. Do wide put spread in ETH A.
Yeah. Take a little looky.
Close at the money. 32.22,
So I was going to say, like, something like
30-ish delta. I just rolled up to 33 puts, so that's where I'm at.
Rancher, trying to decide if I'm re-entering my DraftKings long bullish position by either buying 100 shares or rolling the 44 strike out, or re-entering the 44 strike.
We in September?
I believe so.
Just hold if I'm in
Or
September
If you're
or
in August, yeah. If you're in August of the 44,
you
roll
roll.
to September and you pick up the premium.
Yep.
It's significantly less buying power to have the short put. If you want the 100 shares of upside, that's fine. But yeah, the short put, you're going to have a lot more buying power efficiency. And if you want to be more bullish, if you got the 44, like in August, you could buy back August, sell the 45, 46, or 47 put in the money, and that's a covered call position. So you can synthetically add more delta and add more premium to your position by rolling into an in-the-money option if you want to be bullish.
Yeah.
But yeah, lots of flexibility there. What about a call diagonal spread in CoreWeave?
Didn't that have earnings this week? Did I make
It
that
did.
up?
It's down bad.
Down bad.
It's
Crying at the
down
gym?
Bad. Yeah. Down bad. It's down at 103 near the lows of
Oh,
the
yeah.
last couple months here.
50 to 103 in 2 seconds flat.
Yeah. So October, September, 120, 135.
120, 135.
Sure.
Diagonal.
I mean, yeah, it's dirt cheap. It's out of the money, pretty significantly out of the money, but if you want, that's how you can synthetically, get that gamma if you're looking for gamma. Otherwise, a more traditional setup would be buying at the money and selling the expected move, like a 105, 125 for $8. But yeah, if you want to play the out of the money premium, you could totally do that.
I'm going to go to the 130. That's what I'll do. See if I can get filled at 420-ish. I just don't have a bone to pick here. I'd rather, use $100, $200 less risk.
H. Montero, pumping the Jets.
Good luck.
I have not heard good things from that camp at all.
No.
Do you have a connection?
Yes.
Just joking.
Twitter.
His ear is to the street. He's got insiders.
Yeah.
I watch
the
so
tin
much
can and the string, like you're saying. Yeah.
I watch an aggressive amount of content.
Yeah. It's great when I get texts about like random third string.
Like I'm addicted to drafting Ty Johnson, the third string running back on the Buffalo Bills.
Yes. Those are the things that
But my rationale is sound.
Yeah.
I would say.
Right.
Yeah. Well, we go back and forth,
Yeah.
Yeah.
But yeah, love Justin, but the fact that they're going to use a 4 running back committee with Braylon
Including
Allen
Justin
and
in that?
Breece Hall. No, 5 running back then. I don't know what they're going to do. We'll see. They're gonna have to win games on defense.
Yeah,
That's basically it.
We'll be eating our, when the Jets are better than the Bears.
I've not been hearing good things about Caleb Williams and the Bears.
I know, but it's whatever.
Yeah.
Ben Johnson,
Please save us.
Please, God. Save my winter. It's so cold here and miserable. Please give me something good. We'll see.
Yep, we'll see.
Oh, we'll be okay. We'll survive.
It's all about just having fun with your friends.
Yes.
They get paid millions of dollars. They're going to be just fine, no matter what.
Yep. Didn't know Active Trader worked with stocks. Nice.
Yeah?
Indeed.
Yes.
Active V2.
Active V2.
Are we going to get rid of Active V1?
I think they will sunset it at some point. I
Yeah.
just don't know.
They
Obviously,
didn't want
because
it.
this is still in beta, they're,
Yeah.
examining usage and engagement and all the things that go into good product best practices.
Aklo, September 19th, short strangle, 95.60.
Ooh, I have a leftover.
Aklo.
I think I have a leftover put here. This is another
Nuclear reactor.
I do. I have a leftover put. That was part of a crab trade. Basically a scratch. I'm up like 30 cents. What do they want to do? Upside
60
or downside?
Neutral, 60.95 strangle.
All right.
It's a lot of buying power.
Yeah.
So I think you just buy the wings. You could do the 60.95. You could buy the 45. 125.
Or the one.
Cut the buying power a
110.
little bit.
Yeah, you buy the 110.
Sure.
$3.
Yeah. It reduces the buying power by 2/3 and doesn't eat that much into the premium.
Yeah.
But if you have the capital and you want to go undefined risk, I think it's fine.
I'm gonna scratch this little.
Little scratch?
Yeah. $28. It's lunch money.
Depends on where you go to lunch.
I know it's 2025 lunch money. $28.
Oh, yeah.
2020. That was a feast.
Yeah. Not anymore.
Not anymore.
No. That gets you like one sweet green salad and maybe like a side of their little fries.
Yeah.
Or something like that.
Yes. Sad.
I ordered, speaking of, I ordered some jewelry and the cost before tax was like $150 because I got like 3 things. Illinois nickel and dimed me for every state tax, Cook County tax, Chicago tax. And I was just like, guys, what are we doing here?
Yes. If you ask Tom, they're doing a great job. JB and Brandon. Some of the best. Some of the best we got.
Interesting. Yeah.
Fantastic.
Yeah, it was like $18 in just taxes. I'm like, this is going to one place. It's not going to the state and the county and the city and all the things.
No. Might as well light it on fire and use it for warmth.
Yeah.
Like that.
Just like that.
At least you get a little.
At least you get something from it.
Yeah.
A little warmth.
Little warmth.
Is micro natty gas liquid? Yeah.
It is.
2 pennies wide. There's not a lot of activity there, but it's
What is it?
enough.
MNG.
MNG. There's not a lot of volume, but the bid-ask spread is narrow.
Yeah.
So I'm not worried about it.
Yeah.
And I feel like we've talked about this on the show. We've talked about it on the road. Like I commend CME for, also what the small exchange was doing at the time, but like trying to make futures products that are more approachable to retail traders.
100%.
Like you can't be in a $25,000 account and be able to shoulder a natural gas contract, like just on the buying power and the volatility alone. So I anticipate that we will see more adoption here and that volume in these micro and mini products will continue to grow and it'll be even more efficient. But even to your point now, like the slippage, if you've been trading for any amount of time at all, like you're probably willing to like take the position rather than the penny type of deal.
Yes. And like we talked about, it all gets rolled up into the market making of all of it. So the futures specifically being long or short them, you're pretty much good.
Yeah.
As long as the normal contract is liquid. And natty gas future is very liquid. And so the micro is very, very liquid. When you get into the option space for these products, that's where you see some of the added slippage.
Yeah. But the only other thing I would caveat to your point is we see a lot of liquidity during traditional trading market hours.
Yes.
And absolutely during the 23 hours the futures are available, you can see markets widen out. So if you are on like a third shift or a second shift, or if you're planning to kind of be like an overnight trader, like you may have to be a little bit more mindful of that than if you're just like opening and managing and closing during classic US trading hours.
Indeed.
Just a little food for thought.
Andrew, slowly getting out of UNH. Sold 2 puts at 240 to lower basis.
Nice.
Down 4,500 right now. Considering taking profits on the shorts. Yeah, I mean, if you're 50% on the shorts that you sold at 240, I think you can keep bopping in and out of there. I think it's still going to have some chop, but they announced a dividend, which the market liked. But yeah, we still need this thing to get back to 350, 400, etc. But at least it seems to be maybe bottoming out.
Oh, you had a nice little bounce here,
Yeah.
so if if you've been waiting for a time to exit a portion of whatever, you're 20 or 30 points higher in a week.
Yeah.
Yeah, Rancher, we talked about DraftKings.
Yes.
If you want the 100 shares, you could do that. But if you want the 44 put, that's fine too. You could do a blend and go up. Sell the 45, 46, 47, one of those, and you'll get a covered call position.
Yeah. Yeah, if you buy back the 44 and sell the 47, it's the same as buying shares and selling the 47 call.
Sure.
For $1.
Can you show us how you fly off a gold broken butterfly? So yeah, if you go to the follow page, I already have one that I did for this cycle. You click on my little name there, and then you have to type in GCV5, and you'll see it. So yeah, the first one. So I entered that trade.
Yeah.
For what, 260?
Yep.
Yeah, that was the futures were at 3409.
Okay.
Which is 50 points higher, 55 points higher from where we're trading now.
Yeah. So it sold off. I was seeing an open P&L of like $150 or $100 or whatever. So I moved. I sold the 3520. I sold the 3540, and I bought the 3520. So I went from a 20-point wide debit, 40-point wide credit to a 20-point wide debit, 20-point wide credit. That's how you create the free butterfly. You create symmetry around the strikes. So I sold it for 260, bought it back for 160. So I now have a symmetrical butterfly with a net credit of $100.
Yeah.
So any move to the upside into my spread, I can now sell out of my remaining symmetrical butterfly that has no risk for whatever value is associated with it. Right now it's worth $50. But if we get a move higher to 34.80, it's going to be trading for $100, $200.
And that's risk on the table. You give up that 50 cents of value to give yourself that shot at X amount of potential value.
Correct. Good trade, Mikey.
Thank you. With your September put spread in LLY, are you tempted to buy this bounce and sell an upside call spread with a similar
I probably should do that. Are they asking me?
Yeah.
I probably should do that. I didn't even think about that. Okay, so I have this short put spread. I did it at 266. If I do I want to go to around a 1 standard deviation because I want to lean a little bit directionally long. I mean, just given the move in the stock here. So I'm going to try and go to around the 1 standard deviation, the 740, 750. I want to get, $1.50, 60-ish. We'll see if we can get filled here. But yes, this is a nice move. I actually closed out. I think I closed out of the one in my Johnny Trader account for much smaller loss. But this is a gift. We're getting a little bit of a rally over the last week or so. Come on, get me filled. The markets are not great. There we go. So I sold that at 130. So I've now got 700, 690, 740, 750. So I got a 40-point window to hit. And ideally, you get the move higher to 700 over the next 2 weeks or so. And I can close this for a lesser loss than what I have now, which is about $350. My net credit on the position is $3.96. So it's basically like an iron fly type risk profile. If I could cut this down to $100 or $150 loser, I'd probably close it and get out of here.
Sure.
Yeah.
Fair enough.
Steve looking to trade currency options like the euro. My goal is to stay defined risk like an iron condor, but concern the product's too big. Thoughts?
Oh,
it's not too big.
Oh, you can trade.
Yeah, 6E. I'm looking at the 50-day. The minimum spread, like the 115, 1145, is
$600.
Yeah, $500 max loss, $130 max profit. So yeah, you just have to stay like min range.
Yeah. It's got high vol. Might put something on here. I closed out one this morning in the 22-day. I think I might roll this out to the 50.
So yeah, if you're risking $500, that falls in line with like a 10K account.
Yeah.
On the higher end of percentage of risk. If you have like 20K, 25K, that's totally fine in terms of risk. If you're trying to get even smaller, I would just use the tastyfx products and trade the actual currency and just do really small exposure. That's what I was doing. I had like 9 positions on it once, and I was only using like $300-400. And I no longer have any positions, but I've made like $300 with those positions. So there's many ways to cut the apple, as I say. No.
I was going to say, who says that? But I'm here for it.
Thank you.
You're welcome.
But yeah, there's plenty of ways to get small.
Yeah.
For sure.
Yeah. And you're right. I need to do a little chitty chat with Glenn and Frank because I have been pretty hands off here. Even though I do use the futures, the currency futures so often, I have not touched any of these spreads that are on the tastyfx offering via Tasty Trade.
Yeah.
You could do some crazy ones.
But they haven't put the description column in yet, so I'm gonna have to go talk to my buddy Glenn because you don't even know what they are. You look at them, you don't.
Yeah, you're like, what's ZAR? Nobody knows. I'm sure they're working on it.
Yeah.
You sound like your dad. Yeah.
Okay, rapid fire. Does it matter if you trade weeklies or monthlies?
Or what?
Yeah. For what is the answer? If it's weeklies, it's got to be a liquid product where the bid-ask spreads are narrow.
Yeah. Yes.
Otherwise, we're sticking to monthlies for liquidity.
Totes.
ETH A, 23.35 strangle, close the calls and roll up the puts, or keep the strangle and fight it. I've been
35.
I've been just like moving the whole thing in IBIT because I don't want upside risk. So it's up to you. There's enough premium there, and it's a small enough product where you can do a lot of things.
I would roll up the puts and, manage.
That's it.
Cool.
That's that on that?
We got the open house. We got Peeps.
Yeah, you can hear the
Peeps
chitter
waiting for the
chatter out there.
A-team.
Yeah.
They've been waiting for us.
I know, but I got to jump right into 2 meetings, so you'll have to do all the schmoozing and shaking hands and kissing babies for me. But as they said, that wraps up this edition of Options Trading Concepts Live. If you want to see anything in future episodes, just tweet at us. I'm at Trader Katie. Mike is at Trader Mikey B. Nick at Trader Nicky Bat. Don't forget to sign up at tastylive.com/events for our last 2 events of the year. Dallas and San Diego coming in October and November. Good luck, good trading. Let's go eat some pizza.
Peace.
Pizza.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Dear Cheapo Airlines, thank you so much for sending my luggage on a magical side quest instead of my planned destination. I am glad that I had the sustenance of the single pretzel I was served on board while I was waiting for my bag to arrive. Looking forward to your reply, because surely the response can't be as delayed as long as my flight was. Warm regards, Bettina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
Every day I do God's work here.
From the smart mouths at tastylive.
If you missed the live show, here's our cherry on top weekly recap.
Oh my God, I forgot to tell you something. Hold on one second. My last day, early in the morning, I'm washing my hands in this place, you know, like this communal shower, bathroom area. And the guy in the stall is listening to the show.
You're in the shower in a campsite in Missouri.
There's showers and there's stalls to do number 2 in.
I got it. And you're telling me that somebody.
And a guy starts laughing. He's laughing, so I stop washing my hands and I'm grabbing like towels to clean. And I'm listening to, and I hear your voice.
Why didn't you go knock on the door and say,
he's taking a shit, all right?
I know. Oh, why didn't you knock on the door and say, hey, Tony Batista here?
I mean, what do I do? Hey.
Right, autograph session happening right now.
Tasty Trade has crypto, and you can trade with 0 commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
We are back. It is still Thursday, August 14th, 2025. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Jamal Chandler. Jamal, the Nasdaq's about to turn green.
You think so? I mean, it's quite possible. You're right. It's really close. As you can see, I got a little different background here today in a little studio. It's open house time, Chris. We got a lot of the Tasty Live viewers in the house right now. It's pretty awesome. But you and I are here to talk about some futures, so let's do it.
I'm having an open house too. It's because my neighbor's tree fell into mine. Again, there's no significant damage.
Was it a storm?
Yeah, big storm came through yesterday, like literally flattened a few things in the area. I heard this crack. Maybe my wife's not listening. Maybe it's not the tree that I've been being hounded for getting taken down from. None of that matters. What matters is there's like a 4-foot wide piece of land that the tree could fall into and not damage anything. And it landed right there.
Yeah.
So rather be lucky than good, but a sign
she made that
from the universe.
She made
that we got to get this
women have that
down.
power, you know. She made that happen for sure.
She does. And it was a stark reminder of who's the boss, as tomorrow's our 10-year anniversary. So very exciting things
Happy
happening around
man.
here. Thank you. But hey, you know, shopping for an anniversary gift, things are a little expensive around here, Jamal. Prices keep going up. And that's something that we learned around today's data release. Inflation's fine, huh? We're going to cut rates. Everything's going to be okay. Maybe, maybe not. Some things that might bother you. If you like warm inflation data, Jamal, this report's for you. Oh, wait, I'm getting a note from our producers that people hate higher prices. So maybe this is going to piss everyone off.
Maybe.
Okay. Foods up 1.4%. Energy up 0.9%. Trade adding 2 points there. Change in final demand at 3.3%. Now, whether or not this gets passed along to the consumer is another story. But from a certain perspective, Jamal, if it's not getting passed along to the consumer, it means the corporation, the company, is going to absorb the cost, and it comes out of their margins. So if you're a stock trader and you are looking at these PPI numbers and you're looking at, say, the Russell in a day like today, it kind of all makes sense. If they don't want to pass this along to the consumer, if the Fed's going to be able to cut because inflation stays contained, then it's going to come out of the margin somewhere. So it's a tough bit of action. The Russell lags. The NASDAQ is trying to poke its head back above water. Volatility really hasn't gone much of anywhere. But this was not the report that the market was looking for.
I mean, after 3 years, inflation is still an issue. We've been talking about it for a long time, and it doesn't seem to be going away. And how can you expect the Fed to be able to cut in an environment like this when inflation is still an issue, especially if at some point or another, tariffs are going to affect all of it. So, yeah, I don't know how it's crazy. I still think that the CPI was one of the more confusing reports the other day. At least you have this now to kind of compound and show inflation is still a thing and it still exists. So how in the heck do we have this situation where the CME FedWatch tool was showing such a high percentage chance of a cut when you still have all this going on? Unless there's something we don't know.
Unless there's something that we don't know, What's interesting is with CPI and PPI, you're going to hear Ilya talk about this later, you can basically impute what the Fed's preferred gauge of inflation will look like with a high degree of certitude. With the inputs that we've seen from CPI and PPI, you might be able to mark off a 0.5% month-over-month increase in PCE. And a 0.5% month-over-month increase in PCE is an annualized inflation run rate of 6.167%, according to my calculator here. That's above the Fed's target. And I don't think the Fed is going to look at data like that and say, we're really in a hurry to cut rates right now. The bond market's certainly feeling that today. A little bit of a reversal here in equities. Is it a big deal, though? Because the NASDAQ only off by 0.01% now, Jamal. Clearly, it's the game of the Russell today, off 1.86%. That's the big problem.
Yeah, Russell, you were right. I mean, the NASDAQ went positive for a second while we were talking about the inflation report. But yeah, when you look at the Russell, it is definitely taking it on the chin. I felt so good about it yesterday. I still had that long call spread. I was like patting myself on the back like, yeah, man, we held it through the tough times. And now we're in the positive and going back the other way now. So clearly it took it on the chin the most on this report.
It does. Has it really broken down, though? I mean, it's sitting right near 2290, 2300, putting some of the toothpaste back in the tube, we could say, from the past few sessions when it was really this breadth widening out. Today, not so much, obviously, given the Russell performance, but the volatility here, 13.6 IVR, that's well within where we were yesterday, the day before, right around the same levels, and the market was still able to begin to pull itself higher. So I'm not sure that this is the end of the run for the Russell, but Jamal, it's so difficult being someone who tries to view the world through macro in any semblance of the worst fashion right now, because we noted this on air last week. Zero Hedge had an interesting tweet. The only logical position to take is to swing from one extreme to the other in your view, given how fast things move in the market. And so whereas 2 days ago and yesterday, it looked like there was legitimate regime change perhaps going on in stocks, small cap and value leading the mega cap tech. That is obviously not here, as the NASDAQ is now back positive and the Russell is off still by 1.82%.
Yeah, I wouldn't have expected such a sharp reversal after two such strong days of gains. I mean, I would have probably expected a little bit more of what we're seeing from the NASDAQ and the S&P, right? Kind of like wavering back and forth. So, but like you said, I mean, the Russell's still intact. NASDAQ is and the S&P are honestly really still intact. I mean, again, this is but a small pullback on its way to seemingly higher prices in both of those. We're getting dojis in both of them. 2 days of dojis in NASDAQ, 1 day of doji in S&P. So we can kind of tend to we have a feeling for what that kind of tends to mean at times. We'll see if it pretends to higher prices, but I still think it's very possible. Again, I still don't have any exposure. I'm waiting to see which way it's going to choose, and then making my decision after. Only exposure I have as far as these majors right now is the Russell.
I got to say, if I'm looking at this NASDAQ chart, I'm feeling pretty good about what just happened here with the price action today. We had that July range carved out, 22,800 or so, up to about 23,850. We broke higher through there earlier this week. And while we've been meandering a little bit now, that's a pullback into the former high that we've bounced from. And we're starting to carve our way up as the session goes on. We've seen in previous episodes, Jamal, when inflation comes down the pipeline, the NASDAQ follows broader risk sentiment, but it usually stays afloat because at the end of the day, looking at these inputs here, how much of this is going to bleed into what's happening for the tech companies? Services problematic, goods problematic, but for tech stocks? Well, yesterday on the show, we were looking at what a upside position may look like in the S&P 500 because, Jamal, this is a chart that is looking like it wants to run to the upside over the next few weeks. The channel it's been in going back to May, we have that move higher here earlier this week. We've sustained it. I'm in. I'm looking for a move up to 6,700 here by the end of September.
Nice. It's probably, again, I want to revisit that trade we talked about the other day with the NASDAQ. I mean, I still think that that's a possible trade to be eyeing up sort of the end of October, that call spread. That's still something that I do find very interesting. I haven't pulled the trigger or anything, but it's still kind of fascinating to me when you look at, the bullishness in the market doesn't seem to be pulling back much. All pullbacks are kind of been met with buys. This is a very strong market right now, and for that reason, it does make me want to put on this NASDAQ call spread. Again, lower pop on that. This is one of those where I'm looking for sort of this explosive move to the upside going forward. Like, sure, it's going to be met with pullbacks, but the pullbacks are getting bought, and so that's why it's interesting to me.
The pullbacks do keep getting bought, and I think, Nick called it out this morning. He's like, are they going to buy the dip? And of course, a few minutes later, the dip was bought. Mm-hmm. This is a market of resilience right now. The headlines, obviously, around the data aren't great, but Jamal, are rising producer prices going to feed into real losses or nominal gains at the top line level? It's good for top line nominal growth. So what does that mean for stocks? Well, we've gone up a lot this week. We had that big move on Tuesday. The fact that we're surviving this speaks to me, at least, that this is a market that is resilient. There's still a need to be a little bit more defensive, I would say. I just added this longer position in, but it's all very risk defined. It's nothing like risking 3 to make 1 right now at the highs. Mm-hmm. It's more like, if we're going to keep this going, let's keep reaching a little bit. So if it does fail, it's a smaller loss. And if it succeeds, we'll put some of those tokens back into the machine and pump out another trade. The price action, though, is, of course, the most informative thing. And the fact that the S&P and the NASDAQ are rebasing themselves above their swing highs from July, that is an encouraging enough signal for bulls, I think, to continue to hold on here, regardless of what's going on in Russell world at this juncture.
I think that's it. I think if you're playing for more upside, you gotta be fairly smart about it. Risk defined, I think, is nice. It's one of the reasons why I have been eyeing up that NASDAQ call spread that clearly I should have put on this morning. I wasn't really thinking about it, but I've kind of just, again, I'm trying to pace myself. Along with something risk defined, you could also, these are times for the calendar call spreads, like I always end up saying, because they're low premium. They don't, they clearly don't cost you a whole lot, and you can still participate in any upside move that's coming. So I think those are the best ways to do it right now.
We even see it this morning here in the NASDAQ, that high on August 11th, fall into it, start to bounce again. You mentioned calendar call spreads. Thinking about the month of August here and the historical bump in volatility that we usually see halfway through the month effectively has not arrived. Mm-hmm. Keeping that in mind, and really once we get past this week, we go into, we're fully in fiscal policy recess. We're waiting then for Jackson Hole. What are you looking forward to the rest of the month to move the needle? Is it really just NVIDIA earnings or bust?
Yeah. I think so. Again, we just went through the inflation reports, right? So, like you said, a lot of those components are found in the PCE, and that's one where we're not going to really have to pay too much attention to. It's probably just going to confirm what we already know. So, NVIDIA earnings are definitely one of the major things that we're going to be looking forward to. I really, don't know much else on the calendar that I think we're fearful of, or worried, or positively looking forward to. So it's got to be that. There's really not much else.
We can forget the narrative. Narrative hasn't mattered. There's a few things that I've kicked around as ideas that I think in hindsight were good strings to pull on. For example, when the One Big Beautiful Bill was passed, the data clearly shows bottom 80% of Americans are getting a tax hike, top 20% are getting a tax cut. What do the top 20% of income earners do with their excess dollars? Do they buy more blue jeans? They may buy a nicer car, but there's still excess money. And they put it into real estate. They put it into financial assets. And so you're going to have now more money going potentially into financial assets. And there was also the idea that the market is acting like innocent until proven guilty. Right? Nothing really is bothering the market until the big bad wolf comes to the door. And I know that the other side of me ultimately won over my own perspective, which was the volatility typically goes up. The seasonality isn't fantastic. Positioning is too saturated on one end. And alas, we continue to go up and up and up. So maybe I was early on those views. But on the other hand, you can only pick the high once, Jamal. And you kind of got to just, if you're going to be a trend trader, you got to stick to it, because getting off of the trend as someone who is a self-stylized trend trader hurt me more than anything else, drifting from my particular methodology and overthinking it. So I'm trying not to overthink this right now. Line continues to go up. Prove me wrong otherwise.
I can't. I mean, again, most of these dips that we've seen are getting bought, particularly when you're talking about the Dow, on the S&P and the Nasdaq. Again, Russell has been a little bit of a different story, but the S&P and the Nasdaq, you can never forget who they're powered by, right? It's the Microsofts, it's the Nvidias of the world, it's the Apples, which Apple has had a resurgence more recently, and so I think as a result of that, they've been strong. So there's no reason for you to sort of doubt the market. And again, I'm kicking myself now for not getting that call spread that I was been eyeing up for the last couple of days because, again, the dips just keep getting bought.
Well, if we want to look at this on a sector performance basis, here's the encouraging sign. Never mind. It's basically all red. In fact, it's all red.
I was about to say, because I just tweeted something that I saw earlier, and I feel like it's changed, though. But yeah, it was like just the XLC and XLV, so the communication and the healthcare were the only two sectors that were slightly positive. Is that changed now?
Yeah, no, they're all red now.
Weird.
It's all red. It's a sea of red. So the Nasdaq's pushing up here, but who's keeping this up? It's individual names. You have an Amazon that's performing well today. Netflix is up 2.8% or so. Outside of that, what's the next big green thing I see on my screen? Eli Lilly. Google's up nearly 1%. So some of the individual tech stocks are holding for now. But broadly speaking, it's just bad, bad, bad. The most interesting part, though, is that we talk about regime change from a few days ago, and, we're going to be getting reflation. Maybe it's going to be worse than that. If they're going to really cut in September, which I'm now thinking that they really won't. If the data continues along this path, whatever we hear from the White House, the Fed will not give us a cut in September. If we get data that, just like this week, won't be happening. So along those lines, home builders, they're in really hard. Retail, XRT, that was a big outperformer this week. That's in hard today, 1.59%. I'm a little confused by the energy move, considering how strong energy has been today, but I'm going to ignore that for now. XTL, telecom, that was another big performer this week. That's off 2.93% here. So the winners of the week have quickly gone back to being the nobodies.
Yeah, I mean, that's another interesting thing that I think is reversal. Even from yesterday, there was a plenty of different names, consumer staples related type names that were moving in a positive direction and have completely taken, the other side of it now. So it's been a strange week, Quiz. I don't know how much we can really gather from a week like this, but the only thing you can gather is, again, dips are getting bought. We're often seeing that's the case, particularly in the Nasdaq and the S&P. And I think as a result of that, you can feel safe doing sort of risk-defined, small premium type plays. Again, there's really not much vol to sell right now, so I just don't know if you want to sell the downside per se. I've kind of stayed away from that. There's certain names, individual. Again, I trade a lot of individual names, and there's a certain lot of individual names that look interesting as far as from a sell put standpoint to get long. But I'm just kind of staying away from that because, again, I am nervous about a little bit of a pullback and a fall. But I'm certainly not willing to sell upside either. So for now, it's just been a lot of in cash. Honestly, I'm only have 30% in the market right now.
Can you give me an opinion here on this? I'm looking at the VIX term structure right here. I'm going to put up on the screen from SIBO. I want to go this here. From SIBO, we're looking at basically a 6-point spread between the front month and the back month as listed here, 15.27 up to 21.44. That seems exactly the kind of environment where dips would be bought in. Mm-hmm. We have low volume. Volatility is staying low. It's staying in a fairly aggressive contango. Shouldn't this be our guidepost?
In a way, it should, yeah. Especially when you look at the front 2 months. I mean, that is as big of a difference as I've seen in a while between the front 2 months, well over like $2.70. And this has been a longer cycle as far as VIX goes for August. I think this has been a 5-week cycle. It did not expire along with the options expiration during. A lot of times VIX expires during that week of options expiration, right? And yes. That is not the case this time around. We're not getting VIX expiration until next week, I believe, right? Yeah. And next week, Wednesday, when VIX will expire, typically we will see it expire the Wednesday of options expiration, which can tend to lead to a little bit more of a volatile week. So that's the other reason why I think things are fairly calm, and I think you don't really have much in the way of getting long.
So there were some interesting questions that came across before we hop off and look at something else. But we had some interesting questions come across through Christian Momat when he was doing a futures session earlier. And I figured we could take the time here to answer them briefly, right? I would encourage people to go check the futures options trading webinar that him and his team conduct. I believe it was conducted today by Quentin and Anthony. So go check that out if you want to learn more information. But are the EOM expirations equivalent to the monthly expirations in equity futures? No, the end of month are different. Those are basically for portfolio hedging purposes, and they're specifically tied to the last business day of the month. The monthly futures typically expire on a set schedule. So the major quarterly ones are the third Friday of the month. Another question that had come in here, if you're holding an ESU5 future, does that get converted to an ESZ5 future on September 19th, or does the future get sold on September 19th? No, there's no automatic conversion. You would have to roll on September 19th. ESU5 goes to cash settlement, and then it evaporates, no longer exists. Do you offer mini futures that are only tradable during regular market hours? No. CME futures, E-mini futures are 24/6. Sunday, 6 p.m. until Monday at 5 p.m., an hour break for batch order processing. And then we do it all again for the next 23 hours until Friday at 5 p.m. Eastern. Do futures lose value over time? No, they don't. These are basically prearranged agreements to buy or sell the product, or let's say NQ, at this time and this day in the future. And this price in the future. And so there's not going to bleed out if you're simply trading NQ. If you're trading NQ options, then you have a different story and you'll have your typical time decay. And then lastly, so reversing a futures position is like canceling it, right? Does it have any fees? Yeah, reversing closes the position and standard trading fees would apply. Is that reasonable, Jamal?
Nicely done, Chris.
Quick order. Saw those coming from the email. Beth forwarded them. Bring them on air. Why not? Get them answered. Do you have anything else? Yeah, exactly. And we should do a lot of, these futures and futures options are new to a lot of traders. You and I are comfortable with them, but it's I love these products coming from the FX world, where that's basically a 24/7 market outside of Saturday being off. I digress. Talk to me about the stocks before we go into bonds. Is there anything else that we're missing here? Volume's low, volatility is low, there's positive technical drift. ES and NASDAQ are basically off the lows back to positive territory. When do we care?
I mean, the NASDAQ, basically, and I said this the other day, they look like they're on the launch pad for higher prices. The only thing that derails that is some negative news. Probably, I don't know if it's even related to tariffs anymore. It doesn't seem to be bothering the market as much as it used to be. So outside of any, sort of event happening that we just can't predict right now, things look good for higher prices.
Things look good for higher prices. Famous last words for both you and I. Although being bullish has been easier than anything else. Let's see about bonds, though, because being bullish in bonds has not been easy. What looked like a good day yesterday is back to being a poor day today. We're basically near where we were after CPI, although closed slightly lower on Tuesday's session. We do bounce off of that 1 month moving average here. And again, this 114.5 region, for whatever reason, the price seems to be right around here. This is an area that has marked off resistance and now support for several weeks now. If that's informative of anything, there's still no bond volatility, Jamal. We get this huge move lower off of PPI. Nah, doesn't care. 3 IVR. The MOVE index, which is the measure of bond market volatility based on listed options, going out all the way up to ZB. There are no UB options. That's still persisting right around the lowest levels it's seen since January 22. How do you reconcile those two things, that we get a big move in bonds today and bond vol is absolutely dead? IVR and notes 0.8.
I mean, I don't. I'm a little surprised, honestly. I mean, you would expect there to be a little bit more vol pumped into here. And it's just really not. But I guess the fact that we haven't, there's no new range, right? Like, we're still kind of within the same range, like you said, 114. We got rejected about a week ago at 116. I thought we were off to the races, honestly, given with all the talk of rate cuts possibly coming and happening, and it's all for naught. I mean, we essentially have just played, ping pong basically the last 2 days, and we're sitting right back at 114s again. And so this is a no trade for me right now, only because I've always, for the last 2 years, obviously I've been looking to play bonds for higher. I've done that sometimes with success, sometimes not. This is not a level where I want to do it. If I'm going to do it, it's going to be lower, and it's going to be at a time where there's, I think, a little bit more fear, and I can be contrarian. And I'm certainly not trying to sell it. So clearly, I'm not trying to pick a direction. I don't know if you still have the Iron Condor. If you're already still in that, there doesn't seem to be any reason to close. But I just don't know if I would add one right now at 3. I mean, it doesn't seem to make sense. So no trade.
No, and it's working, right? It's still 43 days to expiration. The question always, would I put it back on today? Listen, the volatility being the prime consideration here, if we wanted to just wrap ourselves right around the 1 standard deviation move, and let's flip that.
Yeah.
1 standard deviation move. It's not bad. It's not the best thing in the world, but it's still in the neighborhood of under 3 to 1. And the buying power that you're putting up for the potential max profit, even if you go in half, they're basically equal. So get to 50% probable, your max profit, you've already put down what you've made in your buying power that it cost you. I can't say that I hate it, continuing to do it. Would I do it at the exact strikes I have it already on? No, because things have changed.
Mm-hmm.
But why would I not consider it? I think maybe just the short call spread is what's worth doing here. I mean, can the Fed really do anything? Right now, if they don't do anything, isn't that good for the long end of the curve? Yes, that would be my view. So a Fed that actually does deliver a cut in September, notes are going to be back under 110. Bonds will be back under 112. And if they don't, they're probably pinned. So I don't see a ton of upside from here, just in the short-term path.
Yeah, there's just not a trade that I love in here right now. You know what I mean? And again, I've talked about being patient. I think it will give us more opportunities, no doubt about that, in the months to come. It's just right now, I mean, there's just not much going on in here, not only not vol-wise, but even directionally. I mean, again, like I said, the last 2 days we played ping pong. I'm just surprised from considering a week ago how much movement we had and how much sort of momentum bonds had, and all of that has really changed just in a short amount of time. So I think there's going to be another trade in here again. I think we'll get in. This is probably the least interesting bonds have been in a while, I feel like, as we've been on the show, for sure. This is definitely the least interesting, and that probably won't last for long. So give us some time. We'll get a good trade out of it again soon.
I seem to do better when bonds aren't interesting, Jamal. So
when they are not?
When they're not interesting.
Yeah.
I just, it seems to work out better for me. When they're too interesting. Okay, so the SR3 contract today, this is what I was wanting to bring up earlier. It's not quite the Fed Fund Futures contract, which is what the CME's FedWatch tool is based on. But yesterday at the close, the CME FedWatch tool had a 94.3% chance of a 25 basis point rate cut and a 5.7% chance of a 50 basis point rate cut. Now, that seems a little aggressive. That's 100%, needless to say, for 25, because you can't get to 50 without going to 25 first. Today, we've killed the 50% odds. Those are now 0. The 25 odds have dropped down to 92.8%, being at 100, right? So if you want to think about this cumulatively, the odds of a September cut were 105.7%. Now they're 92.8. It's not exactly how I would describe it, but it's rudimentary enough to have it in the mind's eye. It's a big pullback is the point. That's 13%. Fed funds futures contracts every 0.25 interval here in the SR3, that's effectively a rate cut. So half of a rate cut, it basically has started to come off the board because of the PPI data. That's a meaningful shift. It's one of the reasons why I think if the Fed doesn't cut, then you don't get your reflation, you don't get your higher yields. And let's be clear how far that can run if the Fed is going to be a little bit more cautious. But the SR3s here, this is the big news of the day, that the market was wholly convinced after CPI we were going full bore into another cut. And now that hasn't happened. And now we have another round of data coming up before the next Fed meeting. If jobs are really strong again, Jamal, for whatever rhyme or reason, the number is really good this time around. But let's say the number is really good this time around, and then you get another hot inflation report. Why on earth would the Fed think they need to cut? Doesn't make any sense.
Yeah, I don't really know why that is so high right now. I really don't understand it. It's one of the more stranger things to me in the market. And again, unless it's something that we're just not aware of right now, I really don't understand. I don't see how we get a cut because, again, I mean, that's been the soup so far, right? Inflation still exists, but jobs reports are doing well. So it's just a perfect scenario for the Fed not to have to do anything. And I don't really see that changing in the next couple of months. Something's going to have to drastically change. And again, maybe somebody knows something I don't. I don't know. But again, you don't see that high of a percentage chance of a cut from the Fed Watch tool unless something's going to happen.
No, and right now the market is convinced Fed has to cut. The votes just may be there because Bowman has said this. She wants to be Fed chair. We've heard this from Warsh, Waller, Kashkari. Mary Daly has hinted that a cut's possible. Yesterday we had a slew of Fed speakers who said they weren't considering it. Raphael Bostic, the Atlanta Fed president, whose inflation dashboard we shared on the screen yesterday, everything is still flashing red. But if the votes are there, sprinkle in a little Stephen Murin.
So what's our best
President
trade?
Trump advisor?
What's our best rate cut trade?
Long end yield is going to keep going up. we have high inflation, right? If we have high inflation and we're cutting into that, well, better men have done worse things, right?
Yeah, sure.
I guess that's kind of the catch-all to get out of any excuse for anything there, I guess. Let's go over to gold and silver, which are dinged.
Things. I'm going to use that one at home, Chris. Honey, better men have done worse things, okay?
I would recommend against that. Trust me from experience. 33.83. We're a little bit lower than the midpoint, and we are falling perhaps towards another attempt near 33 here in the GCZ5 contract. We've seen the lows carved out basically after that mid-May flash forward onwards. We'll call it up to 33.25. Given that band, the loss of momentum, you have a 5 EMA now, a 1 week moving average, which has a negative slope. Same thing for your 1 month and also for your 50-day. That has not been something we've seen occur in quite some time, actually going back to December when all three of them were pointed to the downside in unison. That really takes some of the bullish steam out of the sales. Not that there had been any for the past 4 months, and I've certainly kvetched enough about how you and others have played this better than I have traded it. But I'm a directionally neutral person in this now, Jamal. So this is fine. I would point out, though, the caution here. If you are a technician, adding on to that whole, is this a slope of hope or a slope of dope? Slope of hope, why is that right? He was a tastylive guy once, wasn't he? We have this bearish outside engulfing bar. We put in a new high relative to yesterday. We could be closing below yesterday's low. I would not want to be long here. And the vol contraction, as has often been the case for the past several years, vol contractions contemporaneously decline with prices. It's gold, it's silver, and it's just here. So move out of the way, reestablish ourselves on long if you want to be directional close to 3,300.
Yeah, I think that's accurate. I mean, I feel like it could turn around, but it won't be strong. It'll probably turn around for 40, 50 points and then bounce back again. I mean, it's been staying right in this same general range for the most part. We got a lot of range-bound trades, it seems like, a lot of range-bound assets these days, it would seem. And I think because, things have been so skewed at times, right? We'd had a big moves in April and then sort of this bounce back in May. And ever since then, a lot of these assets that we were looking at, have kind of found their range and they've been within it. The nice part about that is, again, I think you could scalp this if you want to. I'm choosing not to, but I think you could scalp this if you want to for like 50 points or so. And then just be having tight stops. I'm sure a lot of the scalpers are already aware of that. This is exactly when you just look at the action, this is exactly the type of thing. I'm not really interested in doing that. I know you're not either, but I'm sure there's some people out there who have an appetite for that. And I think this is what you can do in there right now. But as far as, again, looking at the big moves that we saw earlier this year, the gold is just not giving you that right now.
It's not giving it to us right now, and that's fine. As I think about all the losses incurred by staying long. There's a ping pong game going on here, though.
Mm-hmm.
You get a little north of 3,500, you're pulling back. You get a little bit below 33.25, you're bouncing back. We had this big, thanks to the tariffs, We have that big tariff candlestick action with the Switzerland news last week. We have this bearish engulfing bar here, probably trading into support again. Our central banks around the world, to me, what has been the biggest driver of why gold's gone up? Central banks. China, 2 years ago, just to give a point of reference, if we think about global reserves in the entire currency space, okay, worldwide, the United States has roughly, by some measures, 60 to 70% of its reserves in gold. You look around the Western world, that's common. In Canada, in the UK, in Germany, the levels are a little bit higher, a little bit lower, but there's a high degree there. Prior to the Russian invasion of Ukraine, China's reserves in gold terms was only about 4%. So part of China's evolution, in my view, of becoming not just the world's second largest economy, but becoming a pillar within that economy on footing with the United States, something that they are obviously striving to achieve. And let's be real, they're probably already there. They need to start opening up their currency. They need to open up their current account, capital account fully to avoid any sort of trilemma. We're going way too in the macro weeds here. But the point is, Jamal, that they would also, if they're going to be a modern central bank, they would start thinking about things like quantitative easing and bringing in more hard assets onto their balance sheet so it's less fiat oriented. And therefore, the currency is perceived to be a stable store of value. That's not changing, not in this world anytime soon. So I think you get these dips 100, 200 points lower in gold, you're going to have lots of willing buyers. That has been tested over the past 2 years. It's held up as a thesis so far. I still think you got to buy dips in gold, no matter what. But it looks like the path of least resistance is to the downside, at least for the next week or so.
Yeah, I think you're right. I think again, we've seen the times where gold has sort of faded off into the faded down or whatever, but it hasn't been really strong fades, right? And we've seen some level of support at times. And so again, I think you can scalp this if you choose to. Personally, I'm not doing it, but I think it's a move that you can certainly make money on. And so, this is probably maybe wait for if there's a day 2 of this type of move, and then it's probably a little bit more of an interesting trade. That's probably your best bet.
Silver prices here smacked around $38. What a week. We start the week off with this evening star candlestick cluster. Looks like it's game over just when we thought it was over. That voice inside says we're back. Morning candlestick cluster. And then there's the Sazanoff voice that says none of those candlesticks matter at all, Chris. Stop talking about them. So we have a little bit of an outside bar today. We haven't quite closed below yesterday's low. We're holding up against the 1 month, and we're not below 37.73. So just being consistent here, that was the high that we had back in June. That has been a pivot point here in recent weeks. I don't know, Jamal, if they're going to pump up inflation more and we're going to continue down the tariff path and the Fed is going to give us these cuts, if it's not September, Trump's going to have 2 more board of governors seats by May. The cuts are coming. Why wouldn't silver and gold still do well here? For the life of me, Bitcoin down 4% today.
Yeah,
fine. People are going to be very happy about that longer term. Have a chance to buy them at those levels. So I remain constructive, but the negative IVR here, 3.6 below, 3.6% below where it's been over the past year. Again, vol in the tank, usually not good for the metals. As vols come in since the middle of July, what has silver done? Hasn't been able to rally. It's been flat.
Yeah, I mean, you mentioned dollar, and of course, obviously that's what's affecting both of these, silver and gold. But because the dollar hasn't really been able to gain much steam, I think the gold and silver you've been able to buy dips at times. You can almost count on the fact that the dollar might reverse course tomorrow until it really starts to gain steam again, like we saw at the beginning of July. But it's a hard trade right now, right? Gold and silver. It's hard staying long those and looking at them every day when they just keep flip-flopping. That's why I think right now the scalpers have the advantage for those who like to do that. For those who like it long term, just keep adjusting, keep going further out until you possibly get the big bull market that we saw in silver and gold for most of the past year again. And when that happens, you'll be ready to pounce. But till then, you just got to trade it the way it's been trading. And again, it's been more of a back and forth situation as opposed to just largely bullish.
Got anything interesting going on in copper here? It's a 5.7 IVR. The markets have been thin ever since the tariff nonsense started. I just think I think it's a really difficult trade for anyone. I haven't touched it.
Yeah, I don't necessarily know how you can. It's really gotten rocked ever since that big move, and it just hasn't been able to recover. I'm sure at some point it will, but it's still just dealing with the remnants of that. I mean, I don't think anybody wants to trade it right now as a result of that move more recently.
I'm just trying to think of how I'm looking at the volumes around some of these big figures, like the 475 strike, not a lot of open interest. 5, barely anything. Copper was actually a better market to trade for than silver for a long time. Better liquidity, better execution. Remiss to say that it's not that in this post-tariff nonsense since July 8th, Jamal. So if I'm looking at this first off, 5.7 IVR, doesn't even make the watch list. The fact that it's copper with all that interference and how the market's still recuperating, I think we should just ignore it. And I think probably ignore it for the next few weeks. There's other vehicles to play. If I really want to trade copper, I probably can do it through a proxy like FCX and not find the frustration.
Yeah, the option markets are just really rough in there right now. And again, it's just been slammed ever since that one big move. Nobody wants to touch it, seemingly.
Oil prices here find a low that was established after Israel and Iran decided that they were done bombing each other again. We see oil prices following something else in the market today, Jamal. Delegation of Russian senior advisors to Putin landed in Anchorage. And I couldn't help but notice when that occurred and some of the news that's been coming out, will there be a peace treaty signed when Trump and Putin meet in Anchorage? And those odds on Polymarket have fallen by about 8% today. While they were rising over the past few sessions from in the teens up into the 40s or high 30s rather, oil prices were coming off. And that kind of makes sense if you're placing a bet traditionally, like, oh, this is going to be a key binary event. There's going to be a handshake, some sort of agreement. The spice must flow. Europe's got to get their cheap energy before the winter. Russia needs to rehabilitate their economy and put the meat grinder to rest for a little while. So oil supplies are no longer going to be so restricted globally. They were going down all week as those odds for a Putin-Trump handshake agreement were rising. Today they reversed, right? Whether or not this is what's going on is another story, but I just need to suggest that there is a link between the two. So in terms of oil, that does mean that we do have a potential event that could move these markets on the horizon. Looking at the volatility measures here, everything seems pretty compressed still. Jamal, I think this may be a little underpriced, dare I say, although you can see a sizable gap this weekend that you don't really see in other weekends. Next week, we're looking at a 37-cent gap between the Friday and Monday sessions. This weekend, we're looking at something in the neighborhood of $1.20, $1.19. That's what this market's pricing in right now. So I actually think that if we're going to be range around people who've been saying trade around 63, 64, 62.95, 25.5 IVR, this is the iron condor zone still. Why wouldn't we short one here?
Why wouldn't we? Because that's what's been working. I will say I did think about buying oil the other day when it was 61 and change, but I didn't for whatever reason. But that was the lowest we've seen in like 2 months, basically. We haven't seen it down there in quite some time. You imagine it's going to bounce back probably to the 64, 65 range. And again, that's been the area, that's the range. So why wouldn't we do an iron condor with some kind of vol in there, 25 IVR? That's worth doing, man.
62% pop, 53, 54, 71, 72, risking 3 to make 1.
Honestly, I think the only question is whether you do it in the SEP contract or the October contract, right? That's the real question. And again, SEP is fairly close to 21 day, but that might be a little bit better. I know neither one of us necessarily love like 30 something days as far as but it's probably the best bet, I would say.
you're getting the similar risk to reward no matter really where you do it.
Yeah.
I think that's if you're at 34 days, risking 740 to make 260. The other one was risking 750 to make 250.
But at least it'll come in faster, I feel like, for the SEP than it would for
yes.
you know?
Oh, yes. And that's true. If we stay pinned here, this is going to come in faster. For me, have still the 56, 58, and then the 73, 75 that I've been playing with for the past few months and just moving forward. I always like to run through the checklist of, would I do this again? And like with the NASDAQ and S&P today, given the price action, do I feel comfortable holding on to that new long position established yesterday? Yeah, actually, I would do it again today because look at those beautiful, those wicks. We bounced right back of the former highs. Strength, good. Price action, strong. It was uncomfortable this morning, looking like a fool. Now I feel less foolish. So yeah, I would put it on again. Same thing for crude here. The strike distance, 1.2 points, make it work for you. But these trades, they work. And they work because oil does not like to stray that far unless it's in a period outside of geopolitical risk.
Yeah, it's true.
Cited the studies, right? If you're looking at oil markets, if you're betting on where price will be at any point less than a year from now, the single best predictor that I've seen this in the CFA Financial Institute journals, the single best predictor is just the current price today. So short iron condors in oil, like unless there's a war going on, it's one of the better trades that you can have in your pocket as yeoman's work, foundational to have some skin in the game.
Very true. Over the last, basically since the end of June, I mean, you can look at the chart and you can see it. Basically since the end of June, if you're selling upside starting around 69 to 70, and you're selling downside starting around 59, 58, that has worked for you, even with the big move.
Even with the big move. And stretches, you have these periods where you get a brief fallout, but it's like a week long, some grinding. There's midpoints that are being found for long stretches of time. You can see this over the years where the oil market tends to move slow and cluster. And then when it trends, you have the heads up that it's beginning to trend. But it's trending for a reason. There's a supply concern. OPEC plus, the US, a hurricane. But when those things aren't going on, it's just ping pong. Mm-hmm. And this goes on we've seen this for years and years and years. So I really like this. It's the exact opposite of how I feel about natural gas, which is still in the timeout box. 38.9 IVR though. I did see a question on Twitter. Someone chided me. Do you think it's time to jump in? And they specifically pointed at this because you do have something of a bottoming signal there. Earlier this week, I outlined a technical filter, Jamal. I want to see some turn on the lower term timeframes. We'll even go down to 1 hour to be generous here. The slope of this 50-day moving average right now, after the breakthrough, those pre-November 2024 election lows, it's remained negative. So this just seems like elevator down, steps higher, elevator down, steps higher, right? I don't like that price action at all. So I'm going to wait. I'm still waiting. It's still not the end of August, so I still have no desire to get back into this. But if I was trying to call a low here, I'm going out to 42 days, 2.5, 2.4 maybe. That's 70% profit, risking a little bit more, almost 4 to 1. I'm just not too hot on these still, but I see the volatility. It just doesn't feel like it's the time to catch a falling knife in natural gas.
I don't really want to do a trade, but if I were to do one, I like the 242. I like the Iron Condor. I like the 240, 230, and I like the 350, 360 Iron Condor. I think that's a decent one to do. I would say, there's obviously a chance that it bounces back, and it bounces back up into that 340 zone, again, where the big breakdown happened a few weeks back. So that's probably your biggest concern. But it's a 42-day trade. And it's within that window that we like to sell. It's something interesting.
That really tempts me.
It tempts me too. I know it's very low buying power too. It's 64% pop. I mean, it's not terrible.
No, it's still there.
I agree. I'm not going to touch it either, but it's there. It's just staring at you.
Dollar call to comeback, Jamal. Dollar's back up on the board today. The yen was holding out. It was really trying there. Oh, you were testing us. But you're right now, aren't you? Bounces off that 50-day. Big wick. That's as clean can be. Back below the 1 month. We go over to the euro, off by 0.5%. Staying in the downtrend for now. Even our lovely Canadian dollar. This was one of the trades we were looking at last week where the IVRs were still up in the 50s and the 60s. So we had put on the short call spread. Notably, when we did see, and that's still in at the 73.5, 74 with 50 DTE, when we had seen this bounce back in all the other currencies versus the dollar, the Canadian dollar couldn't quite crack through the former lows, and it was running into these moving averages. So this is a really ugly day for the if you're the US dollar, you're having a good day, but everyone else, pretty meaningful reversals. The volatility is still fairly high. Ilya may be onto something, man. This is not a dollar that's giving up its series of higher highs and higher lows yet. If there's a place for it to bounce, this would be it. And sure enough, it's bouncing here. Now's the time.
I know. I wish. I mean, CME create a dollar future, man. I mean, I would be long this right now for sure. I would be long this. And I looked at getting short. Again, for some reason, I just like doing directional, right? And I looked at the idea. I was interested again in getting short delta, some of the currencies that we were short before, the yen, the euro. I didn't do it. I wanted to see if there was a little bit more downside in the dollar before I did, but alas, dollar decided to bounce back today, and I don't blame it. Again, it's been fairly oversold, like you showed. It's still one of the most hated trades on Wall Street. And I think until that changes, this is definitely one of the more interesting trades we got going on right now.
We were talking about the Bank of America Fund Manager Survey, the one that just came out for the month of August. Jamal, I think this is a better show than tell situation. Can you talk for 30 more seconds while I find this chart?
Yes, absolutely. I mean, I'm still interested in getting long the dollar again. You just don't see trades that are sort of just such a one-way trade for so long, and it has been most of the year. The dollar has been one of the more hated things, and again, we've talked about how many people have shorted. So it worked for a while when we had the short put spread. Long put spreads, short delta, long put spreads, and euro and yen, and I'm still looking to put those on again, maybe at better levels though.
So a few weeks ago, when we started flagging the crowded positioning in the market, the Z-score for the euro being at its highest level since 2005. Z-score for the yen just coming off of its highest levels over north of 2. Extremely stretched, crowded situations. One other contemporaneous piece of data we pointed to was, hey, July 2025 B of A Fund Manager Survey showed the dollar is the most hated trade. Now, let's just contextualize this, Jamal. If you started saying the dollar was done falling, started selling call spreads in the euro, started selling call spreads in the yen, or buying put spreads in the yen, right? Some variation of that since the start of July, that has worked. We were done falling because the trade is crowded, which brings us to where we are today. That same survey that informed us that this was a crowded trade, maybe, that we should get off of, being short dollar and start looking long, it is still the most hated trade in the world. So it's a crowded boat. Everyone who doesn't like the dollar, their opinions are known. We hear ya. Time to get off the ride. I will only be looking long the dollar for the next few weeks. We're going into a seasonal window when the dollar tends to do well anyhow. But this resiliency here, the reality that the Fed probably can't cut the way that they want to, while every other economy on the planet is going to slow down, there's a rate differential play that could be coming back into focus. So yen getting crushed, very important. That's a big, big drop. As for me, I still like short yen. I still think the 66, the 65 puts look cheap. And that's what I'm trading around, Jamal.
Nice. Yeah, I mean, that's the trade, dude. And I just think that it's just kind of overdone. So I'm looking to get long it again, too, at some point in time.
Hi-yo dollar, not hi-ho silver, as Frank Walsh was kind enough to correct me on the other day, Jamal.
What did he say? I
said hi-ho silver, and apparently that's not the tagline from the show that was on 80 years before I was born or something.
That's great.
So much for trying to be culturally sensitive.
Yeah, right.
Tomorrow on the calendar, retail sales, Michigan sentiment, both important. Retail sales are nominal, Jamal, which means they are not adjusted for inflation. So if you get a weak retail sales number, given the fact that inflation was high, you know what that tells us? That in real terms, volumes are down. It's more slowdown. And that's something we already know. The first half of the year produced a declining consumption for US consumers for the first time since the pandemic. And then before the pandemic, the first time before then was 2010. And 2010 was famous for being a year when everyone freaked out. We were going back into the depths of the financial crisis. So not a great vibe. Hopefully retail sales is good. Otherwise, we go into the weekend with a new theme to talk about: recession fears. Okay. Otherwise, listen, I'll be celebrating my 10-year anniversary tomorrow. So it's not on the calendar. It's on my calendar, not the economic calendar, but it deserves a mention. In any event, Jamal, we're done here. We'll be back later on. You're on for engineering the trade in about 45. But before we get there, we have Dr. Jim Schultz with From Theory to Practice. Mr. Chandler, good luck.
You can get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? tastytrade. Make your move.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Jim Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast, man. Welcome to the Thursday edition of what it is that we are trying to do. You made it. I'm so glad that you're here. And so many of you guys are in Chicago at the studio for the open house, which is awesome. That's amazing. I am flying in tonight. I will be at the event tomorrow. So I hope I get a chance to see a lot of you guys in person, face to face, and live. But enjoy your time at the studio. Make sure you give Tom a hard time, give Tony a hard time, give everybody in the production, crew a hard time, like James and John and Matt and Paul and Laura. Like, they don't work hard enough. You guys got to put them to work. And so I appreciate you guys for doing that for me. So, man, how about this PPI this morning? Like, how about this number this morning? Like, man, it's unbelievable. It's incredible. So I was watching the market. Before we get into the market, let's just talk about this. So I'm watching the market, 8:30. I'm like, I'm so curious what's going to happen. I had no idea what the PPI number was, but it dropped like a stone. Right when the number dropped, right when the print was released. I'm like, wow, that's really interesting. I wonder if it was hot. Maybe it was super cold. It was probably not in line with consensus. But, man, this market, you just cannot keep it down. PPIs, CPIs, hot, cold, it does not matter. So, John, bring us into the market here. Take a look at this, guys. Man, EME S&Ps down 2 on the day. Down 2 on the day. NASDAQ green on the day. Got the risk-free instrument up 12 on the day. Those would be the NASDAQ futures. Extraordinarily high risk product. Got the boomers down 120. You've got the Russell 2000 futures getting smacked around a little bit, actually. down 39. So the Russell can't get out of its own way, but man, the rest of the market just taking it in stride, baby. The rest of the market, it's like, man, higher interest rates, lower interest rates, it does not matter. We are just going to go rippity rip to the all-time highs. Got bonds up, or I'm sorry, bonds down a little bit. Bonds down 25 ticks. Got notes down a little bit. Got oil rallying a little bit over $1. Got UB40 getting hurt today. Got gold getting beaten up a little bit. Man, somebody pour one out for the shifties. Like, I mean, the Swifties had their day in the sun last night with that podcast that I heard about. But the shifties, all of Peter Schiff's groupies, not necessarily enjoying the same level of clout and prestige. Got gold down 24 today. And of course, that means the Hunt brothers, they're going to be struggling too, with silver down 57 cents. And so volatility, not really doing much of anything. You have volatility futures are about unchanged, up slightly. But then you have spot volatility. The old VIX is, it's up a little bit. I mean, it's nothing, man. It's nothing. VIX up 38 cents, up to 1487. Man, it's brutal out there, man. It's slim pickings out there for us high volatility premium sellers. But nevertheless, I digress. And so, man, I really can't believe it. I'm shocked. I'm shocked that they just gobbled it up, man. Just gobbled up the tiny little drop today. Now, are they really going to squash them on the close? Like, are they going to send them right back to the lows? I mean, at this point, I would be personally shocked. Like, at this point, it doesn't seem like anything can get in the way of this market. It is just it is a nonstop train to paradise with every day essentially being higher and higher. Because I know today is an unch day, ES, NQ, whatever, but it certainly feels like an up day. Like, obviously today feels like an up day. And so it feels like the market's invincible, can do no wrong, which of course we know are famous last words. So, all right, let's go in though. So a couple of things are happening in the portfolio that I want to talk about. And then I'm going to get to you guys, man. I'm going to get to you guys in the chat and see where you guys are at. Oh, quick little preview. I'm not going to mention too much about this because I haven't ironed out all the details yet. But I think in September, so on the other side of Labor Day, it'll probably be the Tuesday after Labor Day, we're going to start doing something a little bit different on the show. We're actually going to start weaving in, more of a teachable moment, more of like a teaching exercise for maybe the first, 5, 7, 23 minutes of the show. And then we'll get into, talking about the market and, some B minus humor and all those kinds of things. But I'm like, man, maybe we could have something a little bit more tightly packaged in the beginning of the show, like at least for the month of September, or maybe a couple of weeks in September. Let's see how it goes. Because I know so many people are finding us and you're brand new. Like, you're brand new to the network. You're brand new to selling premium. Like, there's so many people coming into the options world. And it's like, man, let's extend them an olive branch. Not too dissimilar from, being long stock and kind of extending an olive branch to all the, the passive investor bros out there. Like, we tried to do that. Let's try to maybe extend an olive branch and get all the, soon to be premium sellers on our team. So I don't know, just something I've been kicking around that we might do in September. And so that's obviously going to shrink the expected move on the number of questions I get to per show. Like right now, it's like 0.6 to 0.9. Man, it's going to shrivel up to maybe 0.2 to 0.30 on the number of questions I will be getting to on the program in September. But we might give it a shot. So anyway, what's going on in the portfolio? Well, we've seen better days. Just generally, it's not that bad, actually. We've got a couple of trades that are working out pretty well. Like, Cisco is working out okay. IWM is actually working out okay. Amazon actually ended up working out well. And there's another one in here, I think. Not Kava, obviously. Kava. Oh, I was looking at my notes, by the way. Kava. So hold on. Because I wrote this down. The other day. So Kava, not my fault. Like, straight up, not my fault. I wrote it down. There it is, right there. It says Kava is Joe's trade. So Joe, thank you so much for the Kava trade. I appreciate you throwing me under the bus for this Kava position. Now, you may not have told me which way to play it, and you may not have told me what strategy to select, but you, my friend, are the reason that we are in the Kava situation that we are in. And so Kava down to $69, very, very surprising, just given the incredibleness of the product that they sell there. But the market did not seem to agree with me in that regard. And so our Kava butterfly, let's start right here. This guy is going to go out the pasture, and it is going to be gone. It is just going to fade away into the sunset, right off into the distance, and we will not see it again. It'll be gone come Monday, and that will be that. But that's the way it works, man. Like, again, I say this, I think, every single show. So just to keep the Cal Ripken streak alive here, you've got to know what you've signed up for. Like when you put on an expected move butterfly, it's a directional play. If you get the direction wrong, it's not going to work. There's nothing you can do to rectify that. There's nothing you can do to remedy the situation. Like it's over. Like it's over, Johnny. It's done. And so when you do an expected move butterfly to one side of the market, which is typically how we do them, then that is indeed what you are signing up for. And again, remember, if you're tailing me on trades, even trades I take from other people like Joe, not a good idea. It's just not a good idea. And oh, by the way, I did tell you all this morning, if I was going to play PPI, I would play it to the upside. And what was the initial move? 100 points lower. What was the initial move in the NASDAQ? 130 points lower. Like, how could it not be anything else? Or how could it be anything else? It had to be that. Let's go with that. And so the NASDAQ moved lower. Not surprised. Not surprised at all. And so, all right, let's go ahead and let's see here. But Joe, I know you're a good sport. I appreciate you, man. I appreciate you very much. So Kava is over and done with. Let's go to gold. So our gold trade didn't work. This was my trade. This wasn't Joe's trade. This wasn't Scramble Everything's trade. This wasn't Sam L's trade or Ash's trade. This was my trade, unfortunately. And so, we've only got one day to go. Now, because I'm going to be traveling tonight, and then tomorrow morning I will be at the event. I'm not part of the event. I'm just going to be there with you all so we can all kind of heckle Tom and Tony together, from the same side of the fence, which should be fun. I think that let's go ahead. Looks like if we take this off today, we can save $1 off of the max loss. I don't normally do this. This is not something that I would usually consider. Normally, I would give it the full time. Normally, I would say, hey, we've got all the way to Friday expiration. Let's take it all the way to Friday expiration and just kind of see what happens. For this situation, though, given the fact that I'm traveling tonight and we'll be extremely busy in the morning, like right before this, expires, let's take it off now and save the $1 because tomorrow morning, I'm going to be at the event. And then probably, try to talk to as many of you guys as I can, like before the event, after the event, whatever. And then I've got to scurry over to the studio to do my show. Like I'm going to do my show live from the studio tomorrow before I fly back to Tampa tomorrow evening. And so it's going to be a really, really busy morning, afternoon for me. So I don't think I'm going to have an opportunity to trade too much, other than the fact that, of course, we're all going to be in the audience together doing what? The opposite of whatever Tom does. Like, this is going to be amazing. Like, normally the event's on like a Saturday, like a Sunday, and you have to like remember, like, what did Tom say? So I can do the opposite. Like, he said it on Saturday, but now it's Monday. I kind of forgot. Like, I've been off my Blueberry game. Like, the memory's not really clicking. Like, I'm not exactly sure what he said, but now he's going to say it in real time, and we can all fade him together. Right? We can all fade him together. And then if him and I happen to join forces on the trade, then man, you can basically put that trade up as collateral for any loans you want to take out from the bank because it is a surefire thing if you do the opposite. So for gold, let's go ahead and let's close this guy down. And let's highlight all the legs. Let's see if we can get out for. Look at the NASDAQ down 10 points. I mean, if you're bearish, I don't know what more you could ask for. I mean, it's almost down. It's almost, what is that, 5 basis points? I don't know what more you could ask for. I mean, that's pretty much about the ceiling these days. All right, so gold $1.20. I'll see if I can get filled. I don't think I'm going to get filled. We may have to do a little bit of discovery. NASDAQ down 16? Say it ain't so. Man, it's crashing before our very eyes. I'm just going to try $1. I might get improved on this. Wow, no takers at $1. Look at this. Man, all the gold market makers, they're taking it from me. Let me try 90 cents. I mean, somebody's got to give it to me, right? All right, so we got filled at 90 cents. Still, we saved about $1 off of max loss. Now, of course, gold's going to rip higher, today, tomorrow. I think tomorrow there's some more numbers coming out, right? You've got like consumer sentiments tomorrow, I think. Some inflation expectation number that comes out of the University of Michigan. I think it's just some intern at Michigan that just drums up these numbers, which, I mean, it'd be no better or worse than if some professionals drummed up these numbers. And so it's all made up anyway. And so I think that stuff's coming out tomorrow, though. And so maybe it'll send gold higher, but we'll have to wait and see. And so, all right, let's see. So we did gold. We did Kava. I do want to talk about Amazon because look at this, guys. I mean, again, it's so funny, man. It's just so funny. Look at all the trades that keep working for us. Like all the trades that keep working for us, like the winners we're able to book, and you can see them all on the file page. You can see all of my trades on the file page. They're all there. I push everything out. Like nothing is hidden from you guys. Like it's all there. It's all, wide out there. It's all wide out in the open. It's all wide open out there for you to see. And so, if you notice a lot of the success that we've had this year, not surprisingly, has been short premium. Like, not surprisingly, it's been short puts. Not surprisingly, it's been short strangles. Not surprisingly, it's been maybe even some Iron Condors from my Iron Condor bros that might be watching the show. Y'all know it's not my favorite strategy, but we still mix it in from time to time just to shock the muscle. If nothing else, like you can't do lateral raises every day. I mean, I guess you probably could, but you got to mix it up sometimes. Like get a cable in there, get some hammer machines in there, like get a little something going to keep the delts kind of on their toes. But for Amazon here, a short put, not surprised that it worked. And so let's go ahead and let's close this guy down. We're actually over 50% of max profit, which is super nice. And we'll release some buying power, which is also very, very nice. And so, all right, so Amazon winner, that's really, really solid. And then other than that, let me see here. Was there some? Oh, Cisco, that was the other one. So Cisco had earnings this morning, I think, or maybe it was last night after the bell. I can't remember. But Cisco, whatever they said, I mean, I assume they're still doing the same stuff they were doing in 2000, like 2001. I mean, Cisco was a hot name in 2000, 2001. Cisco was like the second or third stock I bought, like in my whole career. Like the first stock that I ever bought was Eli Lilly. I bought like 8 shares of Eli Lilly for like $30 a share. I had $250 to my name, and I'm like, this is it. Like my path to financial freedom, it starts here. And I remember, so quick little tangent. So I remember when I bought Eli Lilly. I mean, this is 2000, right? So the internet was not like, maybe it was 1999. It was either 99 or 2000. The internet was like obviously nothing like it is now. Like, it was kind of like you used it sometimes for like the various things or whatever, but you weren't able to get like real-time stock quotes like in your hand or anything like that. So I remember like being at the gym and like working out and like looking up on the screen, like watching CNBC or whatever, and watching the ticker on the bottom and just waiting for Eli Lilly to come across the ticker. And it wasn't like the S&P 500. It wasn't like the NASDAQ where they show that ticker every, 45 seconds. Like I got it like every 18 minutes. And I was like, man, it just went up 4 cents. I'm like, it's really happening. Like I am on the road to riches. This is unbelievable. And then the next time it would pass by 19 minutes later, it's down 25 cents. I'm like, what am I doing? I'm like, I have no idea what I'm doing. Like, what am I doing? I'm just throwing money out. I'm just throwing money out the window. Like, this is crazy. Then it'll be up 8 cents. I'm like, this is it. It all starts here. But that was Eli Lilly. That was my first trade ever. But Cisco was like one of my second or third trades ever. And so this may be, this is a bit nostalgic for me to have a winning trade in Cisco. I think that trade was a losing trade though, back in the day. But let's close out of this strangle. And we can move on to other things and greener pastures here on the program. So let's see if I do $1.06. I got no takers at $1.06. $1.07? Let's do something maybe. $1.07. I think we'll find somebody, right? All right, so we got Phil at $1.07. All right, that's fine. Doesn't matter. All right, so Cisco. So there you go. And then other than that, the only other thing I wanted to do today, obviously Best Buy getting hit. You got Hims getting hit a little bit. Who gave me Hims? I wrote that one down too. That's Joel James. Joel James gave me Hims. And so Joel, so right now we're still doing good though, right? Because what you should say to me, or what I would say to you, is going to be the same thing. If you sell premium and the option is still out of the money, you're in a really good spot. Like you want to play this thing out to the end game. You want to fast forward all the way to the expiration date in terms of what road are you on? Like where is this position headed? So right now, even though Hims is down today, we're still a couple points out of the money. So Joel, as of right now, thank you, my friend. But I reserve the right to change my opinion on that completely in the coming days and weeks and months. And so that's Hims. But I do want to look at Starbucks. Oh, quick little Chipotle check. Take a look at Chipotle, guys. So Chipotle down 80 cents today. That's not surprising. No extrinsic value in the option, but we still have it. So once again, it's almost like Dr. Jim might know a little something. Not a whole lot, but just a little something, right? The risk of assignment when you're 40 days out, even with no extrinsic value, is still pretty low. Now, again, with no extrinsic value, it is, significantly higher than it would be if you had extrinsic value. But when you still have a lot of days left, it's just a lower probability that you do take assignment. Now, we are getting to the point where I'm no longer going to be able to say that. I mean, once you get inside of 30 days, if there's still no extrinsic value left, you could make the case that, all right, the probability that you do take assignment, it is increasing, potentially at an increasing rate. So maybe it's a bit of a convex relationship there. But the NASDAQ down 40? Man, what's going on out there, guys? This is not good. This is not good at all. Where's iPod Touch? Is he in the house today? iPod Touch, this could be it, man. Like this could be it. NASDAQ down 40. Again, I don't know what more you guys want. But there you go. So all right, let's see. If I go to let's delete this. So there's my Chipotle check. Let's go to Starbucks really quick though. So this is an investment style covered call. This is a trade we've had out all the way since December. And now that Starbucks is down today, of course, down $1, but it is above my purchase price on the stock. So right now I have a little bit of green on the original purchase price of the stock. But if you've been following the show for a while, you know that I've been selling premium against this thing the whole way. We haven't always had premium on. We've had a lot of days like this one where we just have the long shares. But we've had, half a dozen times where we've sold premium successfully, where we've been able to buy the premium back and, shave 80 cents off of our basis, shave, 65 cents off of our basis, shave $1.10 off of our basis. And so we've been doing that all along the way. And so I don't know what our basis is on this position. I'm not going to figure it out right now just to save a little bit of time. But I do want to go in, like now's the time. Let's get some more premium working against these long shares. So let's see here. Let's go in here. Let's go to Starbucks. If I go to the trade page for Starbucks, and I'm thinking we just go to September, 36 days to go. And, I don't really want to, so I don't want to sell the 95 strike, because the premium looks great. So that's like, you're going to get about $2.15 on the mid price. That's a 40 delta option, 42 delta option. So generally speaking, with an investment style covered call, which is what this is. And what I mean by an investment style covered call, by the way, is actually what a lot of you are already doing that are familiar with the stock world. You've been investing for a long time. You're interested in options. You're not sure where to start. A natural starting point is start selling calls against shares that you intend on owning for a really long time anyway. And so all that does, well, I guess it maybe does more than this, but it allows you to potentially make money in another way outside of stock price appreciation and dividend payments, which is really, really nice. Now, of course, for every gimme, there's a gotcha. The gotcha is you're capping your upside. The gotcha is, if the short call goes in the money, it can be a little sticky to manage, which we've done, with Starbucks for the last, 6 or 7 or 8 months now. And so go back and watch, all the shows with Starbucks. In fact, I know I do this a lot, but there are so many new people that find us every day. Let me go to the activity page just quickly. Activity page, Starbucks. Let's go back to the beginning of the year, or actually I'll go December. So if you're new to the show, I would screenshot that. I'm only going to spend 2 seconds on this. Screenshot that. Every day you see that I made a trade in Starbucks, you can watch that show, because that will show you what I did in Starbucks that day, because I only do my trading live on the show. And so if you're brand new and you kind of want to see the different things we've had to do with Starbucks along the way, this would be a really, really good starting point. So, but if I go to the trade page here, with an investment style covered call, the way I like to view it, at least, I'm not necessarily going to even pretend that I'm the arbiter of truth when it comes to this. I like to leave myself a lot of runway for the stock to continue to appreciate. Because again, the objective here is not to necessarily like maximize or optimize my premium collected and get the perfect strike with the perfect delta and things like that. It's a bit more loose and flowing than that. Like it's a bit more kind of like relaxed and informal than that. Like, hey, I just want to sell a call that's, out of the money, that might allow me to bring in some additional premium against my shares, and the likelihood of it going in the money is on the lower side. And so generally speaking, 30 delta is probably the cap. I'm usually probably between 15 and 25 as the delta that I'm going to choose most of the time, because I really want the shares to do the heavy lifting here. Like I don't want the premium to do the heavy lifting, which again, if you're a premium seller, this is a very different approach. But we have to meet the investing bros where they're at. We've got to meet the investing bro sets where they're at, right? They're used to investing. They're used to owning shares. That's an amazing foundation. That's an amazing start. One step forward, one step further is let's get some short premium working against those shares. And one of the ways you can do that is with a short call. And so generally speaking, NASDAQ's rallying back now. So don't worry. Enough of you guys are doing the computer restarts and it's working. So we should be green, I'm going to say, before I get to the second question in the YouTube chat. And so about 18 minutes from now. But if we look at the strike selection for Starbucks, I'm thinking, let's sell this 100 strike. We're only going to be able to sell it for about 85 cents. So it's not a ton of premium. But now I have runway from 93 to 100. And this is only 36 days away, right? And so if the stock just sits here or if it goes down, there's a really strong likelihood I'm going to be able to manage this guy for a 40, 50 cent winner in a pretty short amount of time, which would be super nice. And I could just obviously stash that away and use that to help me improve the basis even more. So, all right, let's go ahead. Excuse me. Let's sell this 100 call for 85 cents. They won't give it to me for 85 cents. They're going to make me do 84. All right, that's fine. We'll do 84 cents. Well, how about that? We went in at 84 and got improved to 85. So there you go. So there's Starbucks. And yeah, that's pretty much it for what I wanted to cover in the portfolio today. So let's go ahead and man, let me see where you guys are at. Man, I appreciate you guys. I appreciate you guys so much. Let's see. Scramble Everything. I'm gonna surprise and delight a couple people in the middle, maybe. Scramble Everything says that is a hilarious story. It boosted today's humor grade to B+. Man, that's never been done before. I appreciate you. Thanks so much. Instantly watching the ticker tape at the gym for LLY. Yeah, I remember it, man. I remember being on the treadmill and like watching that ticker, and I was like nervous. I had like butterflies. I'm like, look at that, man. Eli Lilly's up 7 cents. Like, this is it. Like, I found it. And I was like looking around like the other people at the gym. I'm like, they don't know. They don't know. I mean, we've got the answer and they don't even know. I'm like, man, this is crazy. This is so crazy. And then of course I end up selling it out for a loss about 3 months later. But let's see who else. Let's see. Let's see. Oh, here we go. Wait. Hold on. Let me see. Wait a minute. That's so good. I see Miko said, gotcha, the gotcha gang. For every Jimmy, there's a gotcha was right there for you, man. That's some good stuff. That's some really, really good stuff. And, man, I appreciate you guys so much. And then let's see. Oh, Rancher says, Dr. J, do you have any good negative delta trades? Maybe a nice short call spread in something. That would be cool. I don't know, I mean, we can take a look at the list really quick. We can look at Tom's watch list. Do we have any earnings coming up? I don't think we do. I mean, we had John Deere was today. Wow, look at John Deere down $31. You know what's funny? Go back and watch the show. I guess it'd be Tuesday now, right? I briefly thought about doing John Deere, but then I looked at the markets. I'm like, these markets are super wide. I'm not going to mess with this. But I'm pretty sure I was bullish on John Deere, which of course I was bullish on John Deere. Because I think I was just going to go with your classic, if you can't beat them, join them strategy. If memory serves me correctly. And I'm like 9-10 days in a row with the blueberry intake. So I'm pretty sure that's right. But yeah, John Deere down $32. That makes sense. Just given the fact that I even thought to go bullish. I mean, there you go. It is right there for the taking. But let me sort by IV rank. We'll take a look at this, Rancher, for just a brief second. I want to see if there's something that doesn't have earnings associated with it. Salesforce.com, September 3rd. Oracle, September 8th. I don't want to do Oracle again, man. Man, Oracle owes me so much money. It's going to take us years to get it back. Target is August 20th. So that's all next week. And then you've got what? CrowdStrike. You got Florida, FL on August 27th. It's still August, so those earnings are probably not going to be good. Check back in November, though. In Florida, it's going to be amazing, just like everything else in Florida. And so let's see, got M. Is that Macy's? Wow, they're still in business? There is no way. Unless they've moved completely online. Like, is there still a physical Macy's store that you can go in and, like, feel the clothes on the rack and people go there? No, there's no way. But they've got earnings on September 3rd. I'm not touching that. I wouldn't touch it if it didn't have earnings. So it's tough right now, Rancher. I'm just seeing a lot of stocks that have earnings in terms of high volatility for a short call spread. Actually, hold on. Google. So look at Google. Goog with an L. You could go Goog without the L if you wanted to. The IV rank is not too bad at 24.5. What if we went into September? I kind of like the short call spread idea. What if we did, what if I do a 210, 215? $1.15, or I mean $1.60, 205. Okay. So this is not too bad, Rancher. Let me write this down though, just in case it doesn't work. So Rancher is going to be Rancher. Short call spread. Okay. Short call spread. And Google, I got to write down the ticker. Not just a strategy. So I like the strategy there, Rancher, but this is your strategy, so take ownership of it. 205, 210. We're going to do it for, it looks like about 211. Probably get filled. Nice probability of profit. Yeah, we got filled at 211. All right, so that's a pretty good trade, though, Rancher. I like it a lot. And so thank you guys so much. Let's go to the beginning, though. And let's do it. Where are you guys at, man? I see you guys. I appreciate you guys so much. And I'm excited to hopefully I'll get to connect with a number of you guys tomorrow at the event. And so I'm really, really looking forward to it. And so Rancher says, howdy, what's going on there, Rancher? Thank you again for the trade. I appreciate you. Invierte has got some, speaking some Spanish there. They should bring some amazing events to Mexico. Isn't it Tom? I think Tom's going to Mexico City pretty soon. And so, in fact, I think that's in like the next week or so. And so I would look on tastylive.com/events. So two things, Invierte and everybody else. Number one, go to tastylive.com/events and sign up for the Options Crash Course Live, either October, Detroit, or December, Tampa Bay, either one. It's going to be the same B- humor. It's going to be the same tangents. It's all pre-planned. Don't worry about it. You're not missing anything. Detroit, Tampa, you're good to go. I hope I will see you there. But the Mexico City event is also going to be on that list, I think. And so you can sign up there, I am pretty sure. So Samuel, Doc, the earnings restaurant ripper. Yes, for CMT, then Kava. Who's next? Bonefish? No, I'm not taking Bonefish now, man. So you know, Samuel, that me and Bonefish, we go way, way, way back. And so I'm not taking Bonefish down. I don't even know if they're publicly traded. And that's probably a good thing for them in terms of my not being able to get my grubby little mitts on them and taking them down. And so Finwest, aloha, Dr. Jim. Wow, I was able to catch you at the start for a change, man. I appreciate you there, Finwest. Thank you for being here, my friend. Thank you very, very much. Emmett Morrison, Dr. Jim, I'm just wondering if the fire department arrived in time. Yes. To put, you got me on that one. To put out all the stacks of cash that have been set on fire, or if the house burned down. No, we were able to kind of, I did want to like to open the door and like swing it back and forth, Jobs, to kind of get the smoke out of there quickly. And so it wasn't as bad as you might think. And maybe I'm just immune to it. Like it could be like, where do you like, if you like live with a smoker or whatever. I mean, my parents smoked when I was a kid, like growing up and stuff. So and my mom still smokes, like she still smokes a ton. And I mean, she's still going strong. Like right now, it's kind of remarkable, honestly. But you just get used to it, right? You're like, I really can't see, my eyes burn, but this is normal now. Like this is just like day to day. And so that's kind of what it was like there, Emmett, but no fire department. Not this time, at least. Joe's in the house. Yes, Joe. That's Joe who took us down for Kava, just to make sure everybody knows that's the same Joe. So Joe, I appreciate you, my friend. Thank you. I'm usually the one taking us down, so it's nice to be able to share the love from time to time. So Joel James, we got Ranchers now in the house, and so some good stuff. Let's see. Scrabble Everything says it's best to look into a fire extinguisher stock. Yes, that would be some easy money right there. Sergio's in the house. What's up, Sergio? iPod Touch in the house. What's up, iPod Touch? Appreciate you, my friend. Yes, you got the NASDAQ down 42, so your apocalyptic call appears to have been proven right again. So take another victory lap now that we are like 18 basis points off of all-time highs. And so let's see. Sam L. Doc, is the market down on PPI, not CPI? Well, the market's not really down. I mean, the NASDAQ's down 45 now, which is a little bit surprising, honestly. The Russell's down almost 2%, which is, very, very surprising, just given the fact that it's basically a reversal of yesterday. Like yesterday, the NASDAQ was up a little bit, I think, and EMA S&Ps were up a little bit, but or maybe even down a little bit. I'm not even sure, but the Russell was up huge yesterday, like huge. And then today is essentially the reversal of that. So that's kind of interesting to me. I mean, it could be PPI. It could be the Canadian durable goods print. You never know, man. No one knows. And so don't ever let them try to fool you. Let's see. Daniel Perkins, I'm about to turn into a P&L open, bro. I know you are, man. I know you're itching to do it. I know you see that Best Buy position. You're chomping at the bit. Like, I'm coming for him. But the problem is, don't even worry about that, man. It doesn't matter. P&L opens do not matter, right? You're managing winners, right? You're taking your wins off early. You're going to have a lot of negative P&L opens. Now, that may not be as impressive as this one. They may only be like a $400 like we have in Meta, a bit more modest. But from time to time, with enough skill and practice and experience, you too can have P&L opens that are this impressive. And so, Daniel Perkins, I appreciate you. Daniel Rooney's in the house. Couple Daniels, a little superset there. Appreciate you, Daniel Rooney. Thank you for being here, my friend. Scramble everything. Someone give anonymous Josh a high five for me. Thanks in advance. That better not be the Josh that I know behind the scenes. He does not need a high five at all. Brad Glazier in the house. What's up, Brad? Let's see. Emmett Morrison says Tom and Tony will be in Mexico City. Yes, that's correct. and Guadalajara next week. I didn't know they were going to Guadalajara too, but that's good. And then Joe says, and I don't think I can be blamed for the cover trade. I just asked for a cover trade. I didn't ask for an expecting move butterfly. That's right, man, but that's not the way the rules work, right? That's not the way the rules work, right? If you mention a trade, if you give me just the morsel of a fragment of an idea and I latch onto it, it's now your trade. It is your trade. You take the ownership. And not only, you're not taking regular ownership, you're taking Jocko Willink extreme ownership. Like, it's yours now, right? Only if it loses. If it wins, like, thank you very much, but I will take full credit and I'll take it from here. And so thank you, Joe. This was definitely your trade 100%. Finwest, I hope Tom sent the Tasty Jet to get you to Chicago tonight. Nah, man, we're doing Spirit, bro. Nah, man, we're doing Frontier tonight. And so it's like a 30 delta that I get there in time, but that's all we can do, right? That's the Tasty Jet coming my way. Compliments of little old Spirit Airlines. And so, but I appreciate you, Finwest. Samuel, Doc, where are we at on the summer body? Oh, we're still dad bod, man. Don't need to be shredded to be healthy, man. Dad bod at 15 to 20%, man. How about 25, maybe 26, 27? But man, I appreciate you. No, we're fat and happy these days, man. And so, it's gimmies and gotchas, right? We'll get back on stage maybe next year and we'll get back to Shredsville. But for now, it's like, man, Pop-Tarts are an amazing invention. They're an amazing invention, right? Like Chips Ahoy, chocolate chip cookies. And I'm not talking about like the new stuff. I'm talking about like the OG, like that crisp. You know what I'm talking about, right? Like the crispy ones. The soft batch are in a league of their own, but I'm pretty sure they changed the recipe on those about 10 years ago. And it's not like it was in the 80s. And so I don't go back there because it's not the same. But the regular ones, like the crunchy ones with that crisp and like that, like they break, I'm like, oh man, it's just unbelievable. And so that's some good stuff. Miko's in the house. Dr. Jim, I wasn't prepared for PPI. That's your own fault, my friend. I don't want to blame you that I wasn't properly warned, but with ES Red, this feels like the end. I'll tell you what, man. I mean, we've been waiting for a little bit of a down day, right? Whether you're positioned short or you just want some back and forth, you just want some two-sided action. Like we've all essentially been waiting for this, right? ES down 775. NASDAQ is currently down 44 and a quarter, right? I don't know what more you could ask for. Right? Like people talking about corrections and 5% pullbacks. Nah, man. We need 10 basis points. Like just give me 10 basis points. Give me a little something just to get me through to tomorrow. Like just a little tiny little bit of something. And here we go there, Mikos. And there's Rancher. I made it to the first surprise and delight. So there you go. That's good. There's the short delta comment. So thank you, Rancher. Joel James. What's going on there, Joel James? Joel James. That's the same Joel James with the HIMS trade. And so again, you're not in the clear just yet. You're also not out of the woods. Like we got to move kind of not right in our favor just starting out, but so far so good. So far okay, I suppose. And so, but Joel James says, Dr. J, let's start a show. You do it 5 days a week, 5 minutes long, 5 earnings trades you pick. And that way I know all 5 trades to fade. Maybe that's what we'll start doing, right? No commentary, no conviction, no stories, no tangents. Maybe in September, like, forget about the new people. They can fend for themselves, right? It's jungle rules at this point. Let's just come on here for the first 5 to 7 minutes, and I'm just gonna give you like down the list. I'll pick 5 and I'll just go bullish, bearish, bullish, bearish, and that, I mean, every day will trim about a week off of your path to retirement. If you just take all of them, the opposite of all of them, sight unseen, like you're trimming days, weeks, months off of your road to financial independence if you just stay consistent. What's going to be funny though, because I'm ice cold right now. Like I'm so cold right now. I haven't had a winning earnings trade. It's been a while actually. Well, I mean, we had Cisco, I guess, but that was a strangle. It's almost like you're cheating when you sell premium on both sides. I mean, it's not like that, of course, but sometimes it feels like that. But for directional earnings trades, I'm 0 for however many I've done in the last, month, let's say. I'm 0 for my last 18, right? It's going to be hilarious when I catch fire here pretty soon. Because some of you are out there thinking it's got to mean revert. Well, I wouldn't necessarily bank on that. But if it does, it's going to be hilarious when I just get scorching hot and I hit like 11 in a row. Like it's going to be so funny when that actually happens. But it probably won't happen. So let's see. Scrum everything. What do we call the fans of Dr. Jim? The Jimmies. There you go. I like it. I like it a lot. And Ash Finn says, for every gotcha. Yes, that's right. For every Jimmy, there's a gotcha. There you go. We got to come up with a better name for the second part though. Like if you're gonna have a little pun on the first one, you got to go all in on the pun. Like you got to get the pun on the second one too. But you guys will figure it out. Emmett says it depends on if you follow or fade. Yes, it does. It absolutely does. Archer says, isn't ZB forming a bear flag? I don't know there, Archer. Let's take a look. I honestly don't do too many patterns, and I don't do too much technical analysis, so I don't know. I haven't, I mean, back in the day, I mean, I used to do all this stuff like way back in the day, like 07, 08, 09 type stuff. But yeah, I don't know. Is that a bear flag? I mean, you guys tell me. I don't know. I mean, a flag would be, let me see here. A flag would be like, I mean, it's like this, right? I mean, is that, how is that different from a triangle? I guess I'm really out of my element here. And so, I apologize in advance, or maybe even after the fact now at this point, Archer. But you guys tell me, is that a bear flag? I have no idea. You guys help Archer out if you are a bit of a technician. I'm not really a technician myself. And so I don't know, Archer. But I'll tell you what, one thing you could consider if you want to do something in ZB, man, consider, even if you want to be directional, consider selling some premium. Like you could sell premium in ZB, like you could go into the actual futures options and sell, if you want to be bearish, you could sell calls. If you want to be bullish, you could sell puts. Or you could go into the equity option, which is essentially TLT, and you could do the same thing. And TLT might allow you to get a bit smaller than ZB because ZB is a pretty big product. But man, then you'd be able to play the direction and also get probabilities on your side and all the niceties that come along with short premium. And so there is something that maybe I could help with or can help with the premium side of things. And so let's see. Oh, Brian says it looks like your cover trade did not go very well. It certainly did not. I still have not learned my lesson and done the opposite. And Brian, I don't know how many times we have to have this conversation, my friend. This is at least the third time, maybe fourth time now in the last week, right? I'm the gift that keeps on giving, my friend. Now, again, it's probably going to turn and it's going to be violent when it does. I'm going to hit like 4 in a row on the same day. I'm going to take all you guys down, because I will finally have you roped into believing, wow, he really doesn't know what he's doing when it comes to any of this. Like I need to just be on the opposite side of everything, which right now there's 100% where you need to be. But man, when it turns, I'm taking everybody down. It's going to be great. And so Rancher says, the junior Jimmies, I like it. David says, I'm brand new. No, you most certainly are not, my friend. You should probably be doing the show. Like I should be on the other side of the lens, I think sometimes. Scramble Everything says the Schultzes. There you go. I like it. I like it a lot. Stefan says, hey, Dr. Jim, I'm ready for some B- humor. Here you go. I think we've been about C+, with apparently a sprinkle of some B+. So maybe it averaged out to B-. And the Do the Opposite Trade Show, always entertaining and educational. Hope all is well. And thank you, my friend. Thank you so much. It means the world to me, honestly, that you guys get something from the show. It really does. Like, obviously I want to give you guys trading insights and analysis. I mean, we have plenty of time to obviously get serious and go through, the business that needs to be done for that day. But then we like to have some fun. And so it really means a lot to me that you guys get value from the show, and it maybe breaks up your work day and things like that. And so let's see. Ashfin's calling out Joe. There you go. He needs to be called out. Rancher, sometimes I like to add call spreads to my losing puts while they get their act together. Do you mean long call spreads or short call spreads? Because that's a very different thing. So by losing puts, you mean a short put, I'm assuming. So yeah, I mean, if you're adding a short call spread, that's a little tricky because you're selling it above, obviously, where the market is, and so now you're kind of making it sticky if the stock does rebound. If you're adding a long call spread, then you're kind of doubling down and kind of averaging in, or excuse me, adding a tranche is a much more formal way of saying that. But I don't think it's a bad move either necessarily. But yeah, that's interesting. That's definitely interesting. I don't think that's a bad move at all, personally. I know the internet, I mean, they will rake you over the coals for this. They will burn you at the stake for this, right? Averaging down. Just call it adding a tranche. And you sound way more sophisticated than you might actually be. I mean, that's what I do on the show every single day for 43 minutes, right? And so when the market goes against you, like if you're not at full position size yet, then I would 100% consider adding another tranche. Like this is a great time to do it. You're improving your basis. This is essentially how passive investors have made all their money over the last 30 years. They bought and they hold, and what did they bought and they held, and then what did they do when the price went down? They bought more. Right? They bought more. And so, especially on the upside, if it's like an equity, potentially even on the short side, if it's an equity, if it's really short term. But I like that approach. And I understand that the internet's they're going to have a word with you if you make that knowledge public. And so let's see. Joe says, I didn't choose anything, only the underlying. It's your trade, my friend. Again, I don't make the rules, man, but it's your trade. And so let's see. Emma says, not the call out you want. No, Joe's a good sport. No, it's all in good fun. So Miko says, but it's his trade. But Miko says, scramble everything. There we go. Yeah, for every Jimmy's, there's a gotcha. I like it. The gotcha gang. There you go. I like that too. How about the have and have nots? Well, that's going to be a one-sided trade. I know which side of that equation I'm on. And so if you guys are following me over to the latter side of that, then it's going to be, that boat's going to be heavily loaded on one side. And so let's see, Bullets. I'm glad we made it through the most important PPI print of our lives. Have we though? Like, are you sure this is Lost Season 2 and not Lost Season 5? Like, I can do some flashbacks, but can I do a flash sideways? Do you really know what's going on? I'm not so sure, my friend. And so maybe we're here together, but maybe we're not. Emmett Morrison, woohoo! I didn't know there will be a Dr. Jim appearance at the tomorrow event. There will be. But again, I'm wearing street clothes, right? I'm just gonna be there with my people. I'm just gonna be there with my people because I am a man of the people. Like, I'm not doing any part of the show, I don't think, unless Tom wants me to. I mean, that hasn't been discussed beforehand. And so, yeah, I'm excited to be there with you guys. It's going to be great. And so, let's see. Oh, Scramble Everything said, Dr. Jim, maybe time to go back to Old Faithful. Goog with an L. Man, look at that. With a 24-25 IVR, still maybe something different like a 919 put credit spread. Buy the 200 call for a synthetic, cutting down the downside buying power, or the 205. So I'm right there with you, Scramble Everything. So I think it was Rancher who maybe suggested a short call spread. And we found Google with we found it on our own there on the old watch list. So I'm right there with you, my friend. And we did it. And so let's see. iPod Touch. Dr. Jim, bonds are leading the way to the event horizon. Another event horizon? Can you have two? That's like having two alphas, right? Like, there's only one. Like, there's only one alpha. There's only one event horizon. Like, you can't go to tastylive.com/events and see all the dates for all the event horizons, right? Coming up in the next month or 2 months. That's not how it works. You get one event horizon. And iPod Touch, you nailed it, man. A week and a half ago, you caught like a 30-point down move in the NASDAQ. And so take your victory lap, my friend. Like, enjoy the spoils of victory that you have rightfully earned. And so, let's see, Rancher. I've seen Dr. J live in Phoenix. Oh, here we go. I went to a Tasty show like a month into trading. I barely understood a thing they were talking about, but it was great nevertheless. Man, look at you. I appreciate you. And, that's the thing. I mean, if you're just starting out, a lot of it is going to be kind of like maybe over your head, or maybe it's kind of past you at that point because you're so early on the learning curve. But man, hopefully you soak some things up. And you know what's cool about the world of options and the events and all the different things? Now that you've gained so much more experience. I can't remember when we were in Phoenix and you didn't say, was it earlier this year? Maybe it was, or maybe it was last year. But I mean, things will just come back to you. Like, things will just come back to you at random times. And so it's a really cool experience. Maybe it'll be something I said or something Tom said or Tony said or whatever, on the stage, or Jenny, Liz, whoever. And it'll just kind of hit you, at a random time. And then you'll be like, oh yeah, that makes sense. I remember that. And so that can certainly happen. But Rancher says, next time I'll definitely get picks with everyone, Frank and the rest, now that I'm more familiar. Yes, you absolutely should do that. Ash says he'd love to go to an event. They're very, very fun. Very, very fun. And so I hope to see you at a future event there, Ash. Rancher, the donuts are stellar. There you go. Daniel says, hilarious because I was doing the same thing, watching Dylan on CNBC, waiting for my stocks to show up. That's right. We were all watching Dylan on CNBC in a former life, of course. And let's see. Oh, there's the other surprise and delayed. I made it to that one too, and I'm just about done with the show. There you go. Ella, yeah, Dr. Jim pulling up the receipts. That's right. So we're doing things different now, right? So not only are we going to do some things, maybe differently in September to get some more, educational stuff that's a little bit tighter, a little bit more packaged up and whatever, but y'all start coming with these trade ideas. Like, I'm making some notes. Like, y'all keeping notes on your end? I'm keeping notes on my end too, just to make sure we're all on the same page. And so that's right, Ash. I got Joe, I got Joel, I got Rancher, I got all the trades. So bring me your trades, but just be ready that they are your trades now. Extreme Ownership, Jocko Willink. Get it today. It's an amazing, amazing book. So, guys, I got to run. I'm totally out of time. I appreciate you guys, though. I appreciate you guys so much. If I can ever help you guys in any way, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Jamal coming up next with Engineering the Trade. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys tomorrow.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
So why are we all doing all the things that we do inside of the active trading space? Simple. To make money and generate returns. Well, inside of the Tasty universe, there are essentially 5 keys to making those returns. And in this crash course, we're going to break down all the details of each one of those keys. So I'll see you inside.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Tasty Trade has crypto, and you can trade with 0 commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today. Forbes called us best online for options trading. With stockbrokers.com, we're #1 for options and futures trading. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
What's going on, everybody? We had PPI today, and it seems like it was somewhat of a nothing burger. The one thing that we do know is that inflation is still rising, right? And so I tell you, it's the most confusing thing. Once upon a time when you got that kind of report, the market would have absolutely tanked, which it did fall, but now it doesn't seem to be doing a whole lot. So I'm in an interesting spot right now. Like, I'm not trading a ton right now. I'm kind of holding a couple of things. I'm holding some cash on the sidelines, and I'm looking for good trades. If you guys have interesting good trades, let's talk about them, man. This is a Q&A today. I would love to talk about anything you want to talk about. Before we even get started with that, guys, pull up the region of interest. I I kind of need your help. Those who are watching the show, I got to finish this up. I'm halfway through. Okay, I've done a good job so far. I just really started doing it. I just really started playing this game like in the last week. Julia kind of got me onto it, and now I'm like playing every so often. That's right, Andrew Cortado. Dangerous, so dangerous that we do connections. That's even dangerous as well. I don't know about this last set. What do you guys think? Bouquet, hubbub, backpack, cookbook. Bustle and hubbub, right? Got to be. Give me what two more? I mean, bouquet and veil clearly go together. It's weird the way they put some of these things together sometimes. It really is. And then you do it. Think of a wedding. Racket goes. Well, I already got that one. James Bond 4. I'll get to the platform in a second. You guys, I'm not going to the platform until you help me finish. Come on. What are we doing? Oh wait, things of a wedding. Oh, the train, the bouquet, the veil, and what? Really? And bustle? What the hell's a bustle? What the hell is that shit? There you go. Give it to Skydiver first because you did get those four. I saved those for last. And we're in the house. There you go. See, teamwork makes the dream work. That's why I love you guys, man. You guys are the best, man. Let's before we even move, actually, first, I can even show you this. This is part of the reason. Oh, never mind. You moved it in on that one. But yeah, great. We're all done. Look, there's not a whole lot of things on the calendar. I just looked at the calendar, and I tell you, when I look over the next couple of weeks, we can pull up the platform. When I look over the next couple of weeks, things are about to be, at least from the standpoint of big data, fairly quiet, I think. Tomorrow we got retail sales. I mean, I'd be shocked if we move off of that unless it's just really bad and it's just showing that people aren't buying anything. But I don't think that's going to be the case. I think it's going to be a little skewed. Amazon's Prime Day should be within there. Also, the days that Walmart and Target had their sales things going on, whatever they were. I think it was Walmart, I don't know, discount day. I don't remember what it was. And Target is like red circle, whatever. Who knows? But that should be within these retail sales. Who knows? It is a Friday. I feel like sometimes on Fridays we've sold off for like no other reason than it was a Friday. That could happen. When I look across next week, the FOMC meeting minutes on Wednesday, that's about it. That's halfway interesting. What was the category in the last one? It was, the category in the last one on connections was rhyming compound words. So backpack, cookbook, hubbub, nitwit. Yeah, nitwit, cookbook, hubbub, backpack. Yeah, I know, right? The categories are weird. I didn't even see that, but clearly Skydiver saw it. Let's see. I got a couple of questions here already. Oracle, James Bond 4 was asking, hard to find high RVR trades. I know. Trust me. I know. And I just don't really want to force it right now. What are you doing with Oracle earnings next month? Again, I'm not doing anything as of yet. It's way too early. But one thing you could do, if let's see, what does the chart look like? This thing has been bullish trade more recently. I guess I usually don't put earnings trades on this early. You could certainly make a case for, again, I like to do calendar call spreads around earnings. Where's the next level this is going to go? Sometimes I'd rather a stock that's already kind of, say, down and pulled back, and then you could see it reaching new highs again. This thing could get to 265, 270. I don't necessarily know if I want to play it. Let's see if it makes sense. You could get long the earnings, right, if you wanted, and then sell the nearer term 270s, but that's $4 and change. I don't know how much I love that. I mean, it is a fascinating one for earnings, obviously. I wish there was a 275 strike. There's only a 280 strike. This would be one of the ways I would play it, I guess, or I could just wait. But I don't know. I don't know if I love this one as much. Usually when I like to do calendar call spreads, it's a name that has dipped some, and eventually it's going to use the earnings to catapult and bounce back. So as far as, vol, I don't like to sell vol way ahead of earnings, because this is going to do nothing but increase in vol as we get up to the event. So Right now, I'm not doing anything. I would just wait personally. If I would have done a calendar call spread on that if the stock were down some, but not as much. Jamal, what do you think about a directional call play on UNH or Lilly since they're both down so much? Those are I actually had one on UNH more recently. I just took it off. But I had, instead of directional calls, I actually had in October, I had a zebra. As you can see here, I had in October, I had the 220, 230 zebra. I had it on for almost 2 weeks. I took it off just earlier, just 2 days ago. It was a nice little trade for me. But I like that I trade. As a matter of fact, I'll tell you, I have basically a list of different names that I'm interested in doing the zebra trade in. This one was, the reason why I eventually took it off is because I put it on for probably about this type of premium, like 3Gs. And by the time it moved up, it was $5,000. And for a $25,000 book, that's 20% of my book. So I decided to take it off. It worked out, good trade. Lilly is another one. Lilly's a little bit more expensive though to do. I gotta say, it is, it is, this one is it's expensive. But again, it's a high dollar stock, but it is one I was actually annoyed when I was waiting to see if it was going to drop a little more. I also wanted to wait until Lilly had earnings already, right? Yeah, this was one I was really interested in, and it has bounced up the last couple of days, so it's not on its lows. I want something that's on its lows. I'm not going to try and do it now, but those are my ways of doing it. Another cheap way, you could do a diagonal if you're so inclined. But I mean, those aren't necessarily cheap neither. But you could do just 650. Say you did the 650, 700 diagonal. You're paying $3,700. I mean, that's a lot of money, honestly. That's not cheap. And this is a $50 wide diagonal. So the most you can make on this is $1,300. I don't necessarily love that personally. I'd much rather just do again, if you got the cash, I'd much rather just do one of these personally. I know it's a little bit more, but at least I'm just, I'm just long and I'm bullish, and I'd rather play it that way, maybe a little further out. The other thing you could do is say you feel the stock is going, I don't know, I never really priced calendar call spreads in this thing. Let's see. You want to give yourself some time. You don't want to be long upside in the 45-day window. We've done enough studies to show that is a losing trade. You could do one of these two at $700. Again, it's a slow grind. If the stock's going up, that's your other way of doing it. You could sell a put spread, but obviously vol is fairly low compared to where it was a couple weeks ago. So those are the couple of different ways that you could do it. RH. I saw somebody talk about RH. Oh, this is getting whacked today, huh? This one's still a little nerve-wracking to me. I don't know if they've addressed the situation. Obviously, the stock really got beat down because of that talk of tariffs, right? And it suffered a little bit more, especially after Liberation Day, and it really hasn't been able to pick itself up off the mat. They still get a lot of clothes out of Vietnam. I don't know what the tariff situation is there. You gotta keep up with the tariffs. I mean, I don't know, down all the tariffs where things are right now. I don't know what that situation is. I don't know if they're a real candidate for a bounce back, but that again, I for some reason right now, I am really locked in on this idea of these. Matter of fact, this was one of my names, CRM. I'm really locked in on this idea of the zebra trade for whatever reason, and this has been one of my candidates recently. This one's not too bad, 2,900. The only thing that worries me is, do I wait for earnings, or are earnings going to be bad? I don't know. Chris King, my X trade reminded me of No Limit Mia X. Yeah, Mia X. Hey, I know who Mia X is. Did I see my brother on here mention something? My brother Mike. Mike, I'll be there, man. I will be there. I will be at the show tomorrow. For those who know, there's a show tomorrow, right? At Work by 11 is the show. Tom and Tony will be there. I'm going to show up, say hi to the people. I probably won't get there until after the show starts. The show starts at 9, I believe. I will get there probably around 9 or a little after, so I'll take in the show. maybe hang in the back and heckle both of them. But yeah, I will be there. If you, let's see. Yeah, wire scares me, but you can get a lot of premium for a really wide strangle. Yeah, you are a better person than me doing a strangle in RH ahead of earnings too. And that makes me a little bit nervous. So you can get a nice little strangle, but it is not cheap, and as it shouldn't be. I think they could be in trouble, so I haven't touched it. Tim Knight is bearish on Oracle. Tim Knight is bearish on everything. Of course he is. Hey, Jamal. So thank you so much for your ideas. What do you think about GLD and SLV with the dollar getting stronger? Some plays to do. I know. I like to play gold and silver to the upside. That's just kind of my bias, I think. And you're right. The dollar is getting stronger more recently. It's going to be tough sledding for gold. If you really feel like that's the time, look, I'm not one to shy away personally from doing put spreads. I don't love this risk to reward, but it's also not a whole lot of money. I mean, you're basically risking one to make a little more than 1.5, I guess. Not even 1.5, 1.1 or something like that. This is, it depends. Do you think gold is fading? I don't like to sell upside, so I wouldn't necessarily be inclined to sell upside. Plus, that's not necessarily cheap anyway, and there's really not much vol in here. I honestly think if you're feeling the dollar is going to bounce more and you want to play gold and silver to the downside, GLD and SLV are your best bets. And probably, I know it's not, the normal tasty way, but I think buying put spreads is probably your best bet. SLV is so cheap. I mean, you could literally buy an at-the-money put spread and not overextend yourself, really. So I think those are some of the easiest ways. Trade ideas, synthetic long position and on shoes. What expiration strike should I choose? It's on, is that the shoes? You're interested in that, huh? You wanna get synthetically long. So I think this is, again, you could, well, if you want to get synthetically long, when you say synthetically long, I think of long call, short put. That's a synthetic long trade, basically long stock. Now that is a little bit more expensive. And the funny thing too is I think you could probably buy the actual stock. Oh, this one is not margined. So what, again, I would like to do, you can compare and contrast the different ways to do it. You can, go and look at say this stock goes from, say it jumps $10, right? This is from doing a zebra, right? You're long two. Again, the zebra trade is basically you're long two. You're long two long two a little bit downside and short kind of at the money. Now this is not exactly at the money. There's no 44 strike, but that's one way to do it. That's been my mode. This has been my trade more recently on a lot of things, especially stocks that you're trying to get long and they're down on their butt. That's one that I like to do. You could also, again, like a synthetic long is also a sort of getting long call and short put. Again, that carries a little bit more weight. You could see what that looks like too, $10 up. They're about the same in a way. So why wouldn't you just do the zebra in that where you get long two and short one? That's what I would prefer to do personally. Let's see. I answered on. I answered RH. Oh, Mindy still has an is that Monday.com or something, whatever it is? What is that stock anyway? This one is, I've never traded this name. I'm not sure about it. Has the IVR post-earnings rebound play. Could be. Still kind of high IVR in here. What's up with that? What's up with these markets? Don't love them. I don't know this name. I'm not familiar with it. And not a lot of volume. What's the open interest look like? Not a whole lot of open interest in here neither. They must have just opened October today. And I don't know. I don't love this as much. Yes and no trade for me. I don't like this name. I don't know it. Also saw that Paramount paid UFC several $1 billion to display UFC fights. Thoughts on why Netflix did not go for it? Do you think Netflix will start showing live NFL games on Sundays? I think at some point you could see Netflix try and go after NFL games. Right now, I mean, I think the contracts are fairly locked up for a couple of years with ESPN and all those others. But it would be a while. I don't think they could. What's ESPN's ESPN NFL contract? NFL football contract? No, that's not the one. Yeah, I don't really know how long. Of course, they're only talking about. I'm pretty sure they got it locked up for a while. It's cool. We don't have to look at it, but I don't know how long they got that locked up. So I don't think you could play Netflix for NFL stuff. Honestly, it's going to be a while, but it is something to think about. I think we're going to see more and more names that are more and more streaming sports sooner or later. It's the only way they can justify some of these contracts. You know what I mean? SMI, Zero IVR. Good one for a zebra, absolutely. I would say so. And again, I like going out on some of these now, probably out to October, just because you give yourself a little bit more time to win on the trade, I would say. This is definitely a zebra candidate, I would say. You know what? I'm going to put this one on. I like this name, and that's fairly cheap. We'll try to get it on. CRWV, a lot of stock being owned by employees. Wonder if selling the SEP 120 put and buying the 110 put and collecting some premium makes sense. Yeah, CRWV. I like this name a lot, actually. I'm surprised it's been selling off so much. I actually have some calendar call spreads in here, so I'm long it already. I played it for earnings, had some calendar call spreads. I'm playing it for after earnings. Apparently, there is a lockup here that's I don't know what the deal is on that. Again, I'm already pretty long it. There's no need for me to get doubly long it and sell a put, but I think it's not a bad idea at this point. If you want to sell a put spread, why not? So, Jamal, I noticed you like calendar call spreads for earnings, but I've had the experience of losing debit paid when the price shot up well past my calendar call. Why not do diagonals to avoid this? I like doing the diagonals and calendar call spreads are kind of like cousins. I like doing the calendar call spreads. And again, a lot of the times I'll do it in bigger names and, higher dollar names. And the reason why I like them is because you don't have to put up a whole lot of premium. Yes, there is the risk of losing your debit. I try to pay a little less than $2 for most of them. And I usually try to do them with, the near term being the front month. Right, like in the situation of this, when I did it for this name this week, I did it for further upside. I'm pretty sure, and I usually like to use see, all of these are about to expire soon. I usually like to use the near term, like say in this case, I sold. You got to remember, stock was around 140 at the time, but I was selling the 160, 165, 170, and I like to do multiple, right? Because again, if the stock shoots up. Say it shoots up to 160, right, on earnings. Say it was trading 140 and it shot up to 160, or say 165, right? Yeah, my 160 is in the money at that point, but if it's not too far in the money, then this is just basically at parity, right? Let's just say it's 165, so this is $5 worth. But the next expiration up, this 165 is always going to be worth more than a near term, so at least make some money. Sometimes if it goes up too far, like you said, then basically you lose the debit paid for. But that's why I like to do multiple strikes in the event that it does shoot up. Maybe I'll make money on the strike that's further upside, right? And so in the event where it went up to 165, I might not make much on the 160 call spread, but I'll make on the 165 and the 170 because the near-term short upside will be out of the money still, and I'll make money on collecting on that because it'll be out of the money, and the upside on the next expiration, those will have some really good volatility value to them, and I'll be making money on those. So that's why I like to use them. Diagonals are awesome too. They are. They cost a little bit more, and so again, because I like to do it in bigger names, I a lot of times when you're doing a diagonal, if I was doing a diagonal in here, you got the 110s, which are $9, and say I was going to sell the 120s against it, I'm paying $6 for that. I could put on several calendar call spreads for less than $600 total, right? Whereas like this one trade cost me $600. So that's the difference. You get more bang for your buck on the calendar call spreads. The risk is if it shoots up too far, then you probably lose what you paid, right? You will lose what you paid. Diagonals, you can make a lot more. I wouldn't say you can make a lot more money. What you need to pay attention to is the price that you're paying. So in this case, this is a $10 wide diagonal, right? That's the most it can be worth. And so right now, if I'm paying $5.93 for it, the most I can make on this is $4.07. And I just found I've had more success with calendar calls when it shoots up, or even if it fades, I'm fine losing what I pay for, which is usually not a whole lot, and it doesn't hurt me that much. So that's why I like them. Let's see. FedEx. IVR popped a little bit today. I think I'll be unloading starting tomorrow. Takes more BP. Yeah, exactly. Scramble everything and laid it out for you. Let's see. FedEx. IVR is popped today. Above FedEx, let's see. IVR did pop. Again, this is another one that has selling in front of earnings. It's so far out. I don't love doing those. I don't love selling in front of earnings. I really don't. Even things like iron condors, it's just so far out. I'd rather just wait till you get close to earnings. If you were dangerous, you'd be trading platinum futures. Yeah, well, no chance of that. I already got I already had some crazy stuff happen in copper. I definitely don't feel like trading any platinum, that's for sure. Jamal, how about selling the 12 strike and run? Sun Run, right? Solar name. How about selling the 12 strike put and Sun for a weekly long trade as opposed to buying the shares outright? Let's see. You can buy the shares for $523, or you can sell. Personally, I would, especially on a margin account, I would buy the shares in this case because you got a better chance of the stock popping. There's not even though this isn't 34 IVR. I mean, I guess you could the 12 put. Well, let's see. Let's think about this. You did say the in money put. If you want to sell the in the money put, that's actually not a bad idea. Honestly, I would do that. I mean, you could take it's actually a better effective price that you're getting in at. You're getting in at a better price right now. You're getting in at $9.52 essentially. So yeah, that's actually a better trade. That's what you should do. That's what I would do probably. Any plans to trade UPS? Yeah, I actually have a UPS trade on. I've been talking to you guys about trades so much I can show you my trades. I have a Zebra in UPS right now, the 7580 in October. I've had that on. Somebody talked about my Mia X trade. Yeah, this is an exchange. I bought my X shares today. It just opened, just IPO'd, so there's no options yet. So that's what I got going there. This Fiserv, I have a Zebra on in there. Figma, I have a Zebra on in there. Russell 2000 getting rocked today on this PPI report. I have a call spread in here. I've had it for some time. The 2400, 2500. I've been wanting to get long a NASDAQ call spread. I feel like from a technical standpoint, we could be seeing higher prices. It's interesting watching these dojis on the chart when you look at the NASDAQ. And so I have been flirting with this idea of buying this call spread out here. Let's see what I can get for it now. 2800. I don't know. I'm just waiting for... I don't know what I'm waiting for, honestly. This is a pie in the sky kind of idea. I'm giving myself 78 days to do it, but I really think the market might be, look, there's not a whole lot of news over the next week. I will see if the market dips, but I am interested in trying to get long. I feel like we could have a dip, like a pullback dip, nothing crazy. And if so, I'll get this in at a better price than 2,800 that I'd be paying for it now. And I think the next leg will be 2,500 in the Russell and NASDAQ, excuse me. And that's basically the next play that I'm looking to put on. But thank you guys so much for the questions. I appreciate it. Thanks for making the show entertaining today. Devoid of news, devoid of a lot of macro events right now. I think it's about to be a quiet, at least 1 week, maybe even 2, but we'll still try to find ways to get trades on. Thanks for watching, man. And as always, be smart, be patient, trade them small, trade them often. For those who are at the show, I'll see you tomorrow.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Forbes called us best online for options trading. With stockbrokers.com, we're number one for options and futures trading. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Hey everybody, Tim Knight here, and it's PPI day. So if you'll recall, on Tuesday, the CPI was coming out, and I just want to verify this before I shoot my mouth off. I think the anticipated was 0.3%. Yeah, so the anticipated value was 0.3%, and it came in at 0.3%. And by matching expectations, the market blasted higher to lifetime highs. Today, the PPI was coming out, and offhandedly yesterday, just almost like a throwaway remark, I sort of just mused, oh, well, maybe the PPI will be hot because it's higher up on the supply chain or something. And whatever the reason, the PPI did come in above expectations, not just a little above. The expected value was 0.2, and it came in at 0.9, almost 5 times the value. That should, in a natural and sensible world, have the Dow down like 8,000 points now, but no. The ES is up right now. The NQ's been up from time to time. Initially, it pounded the market somewhat lower, but it really sprung back in an annoyingly robust way. I'm griping here, but my own positions, everything's down, which is good. They're shorts, except for one, Caterpillar, which is up 1%. But oh well. So I don't have too much of a right to grumble, but still I'm grumbling because if, put it this way, if the CPI came in like negative 0.5 or something, just shockingly low, I imagine the Dow would be up 10,000 points. This is insane. It's like a one-way market only. So losing our minds here, but be that as it may. At the moment, we are a little red on the NQ, quite red on the RTY, which had been a big beneficiary yesterday. ES almost unchanged, it's up 3.5 points. So PPI, white hot with some modest down effect on equities. Let's look at the charts. I've got them preloaded for you for quick and easy viewing. Here's the spider. Green looks like potentially a lifetime high close. Speechless at this point, if I may say so. The diamonds are off just a tiny bit. Haven't busted their lifetime high again. That still stands. July 23 peak on that one. IWM, as I said, is down a pretty reasonable amount. This level here represents the gap from right here, like so. This was the gap before we blasted higher, and we've slipped a little lower today, but I'll take it. I mean, geez, it's red. I'll take that versus green across the board. The cubes are down just a teeny bit. Lifetime high still stands from yesterday, both on an intraday basis and probably on a closing basis. We'll see. But yeah, kind of a mixed bag. I would also just point out in Kathy D. Woodland, that ARC, the innovation ETF, very popular, very widely followed. This didn't even match its peak from July 21 yesterday. It went up, didn't quite make it, stalled out a bit now because obviously it's very tech oriented. So it's going to suffer a bit if tech stocks are selling off. Overseas, EEM, pretty decent drop here, similar to the small caps. We've got a island reversal gap right here. Not as big a deal as if it was a U.S. instrument because it's overseas, so the timing is going to make things a little odd. But that's EEM. And then FXI China, which I shorted anew yesterday. This one's down nicely. This is down about 2%. I made mention of this trend line being the key resistance level. So we've reversed hard away from yesterday's peak, and that's good. So yeah, it's really disconcerting because I thought finally we're going to get a first down day in a couple of years, but it's still fighting back. Annoyingly robust, I'll say it again. As far as gold goes, gold itself, the front month is off about $21. The key here on this one is this triangle that's been forming. If it breaks this uptrend, if it breaks, say, back here, the low that it set on the end of July, that's going to spell some trouble. Maybe for assets in general, but certainly for gold. So it's quite important to sustain that within the confines of that triangle. More broadly, OUNZ, ounce, the gold and silver ETF, same deal. You've got a triangle, it's got to stay above that ascending trend line to not create catastrophe. Also in metal land, and I shorted this one early today, so far so good. XME, this hit a lifetime high yesterday, it's backing off some. This ascent has been bonkers, sharply elevated. Lifetime highs yesterday, too far, too fast, I would say. So yeah, that's amongst my shorts. There's 21 shorts right now, and that's just one of a couple of ETFs. I've just short XME as well as FXI. I think that's the only ETFs I've got amongst them. What else is cooking? Let's look at crypto for a bit. Crypto was at a lifetime high since I saw you last, but it's reversed quite hard. We beat the 123,000 high that was set back here on the 14th of July. We exploded higher to almost $125,000, almost an eighth of $1 million. $1 million is like the one of the many oft-cited goals for Bitcoin. But having done so, it sold off to, yes, you guessed it, our old friend, the trend line here. So for all this time, it's got a very powerful magnetic pull. So there's that. Ethereum is also quite lofty. It didn't quite muster a new high. It's selling off a little bit now. This has also had this fast move higher, getting faster each time. You can see it consolidated for a while here, blasted higher, took a little less time here, blasted higher, took very little time here and blasted higher, but not quite at lifetime highs yet. And the interesting thing to me is that the equities that have something very close to do with crypto, like MicroStrategy or SBET, etc., they've been weirdly weak, even in the midst of these lifetime highs. So here's Coinbase, for example. This is off today more than 3%, and it's had a really bad time lately. We peaked at 444 on this. It's lost more than a quarter of its value in a very short amount of time. Here's Strategy Inc., off almost 5%. Its own lifetime high was months ago, actually last year, which is very peculiar, but not so strange when you consider the phenomenal premium that was attached to Strategy, the Michael Saylor premium. So this is off today quite hard. Another one, I think right on the heels of earnings, Circle Internet Group. This is one of those stable coin organizations. Might be the biggest, I'm not sure. Maybe the only public one. But, lifetime, sure. I mean, if you got in on the day it opened, you're still doing all right. It's done well. It came out, I don't know what the actual offering price was, but it had a good, strong opening day. And in a couple of weeks, it peaked at almost 300. It's at 140 now. So we've had a 50% plus drop in this since it peaked back on April 23. And like I say, this is all crypto related. It should be just flourishing. This isn't really crypto related. It's kind of obliquely related with CoreWeave. Also has had really rough 3 days down here. Just a couple of days ago, it was around 150. It's lost about a third of its value just from Tuesday to Thursday. Pretty shocking. And then, of course, its own peak was well higher, almost at 200 back in June. So, yeah, not all going up. In terms of shorts, as I said, I've got 21 short positions. 20 of them are red today, which I appreciate. Thanks, guys. One of them, Caterpillar, is green. Here's a few I plucked out that I thought were particularly interesting. Abercrombie & Fitch, ANF. You can see over the long haul here, top, pretty top another. Here's a bottom down here. So it tends to kind of top and drop nicely, kind of a consistent behavior. The most recent top we've seen was the tallest that I've witnessed on this chart. And it had a big plunge and it recovered, pushed back up to this level, now it's starting to slip lower. So that's heading the right way. CrowdStrike, we'll look at this just about every day lately because it's really been performing nicely. This is slipping lower, and I've cranked the stop loss down on that as well. Dollar General, DG. This is the kind of low cost retail store, kind of like Dollar Tree or Family Dollar. And this one is off about 1.6%, pushing below that dash red line, which I try to keep consistent to represent my stop loss. And having said that, let's fix that. What else we got going here? JBHT. This is very clean. JB Hunt Transport. This is off about 1.25%. Very clean topping pattern on this one. Qubit. Quantum computing. I was scared to pieces to short this, but I'm getting less scared as it's kind of inching the right direction. I've also tightened up the stop on this quite a bit. This is off 4.5% today. So that's, quantum computing, QUBT. And a couple of letter A's here. One of them is Archer Daniels Midland, ADM. And this is a nice example of how observing the long-term behavior of a stock kind of expresses its personality. Because patterns are nice, but they're not universal. If you toss a baseball at a human being, they will either catch it masterfully every time or it'll hit them in the head. I mean, just because they're human and just because it's the same ball doesn't mean the reaction will be the same. And likewise with stocks, over the course of time, they have different personalities. They have different reactions. And so if you see something which seems to quite persistently offer a certain pattern and behave a certain way after that pattern for that particular equity, it's probably a pretty good bet that it'll keep doing that. Personalities tend to be kind of immutable. And so with ADM, it seems to act that way. And we've got this top here and this little BWE version right here. And so we've had this big ascent higher. And so this one I'm short with a stop right like so, where that dash red line is. And just to flip those last two letters, AMD is the other one I wanted to mention. This has been rather vexing. It's been very, very strong. It's been just a sensation, really. This bottomed back on April 7 at like $77.75, and it got up to around, it got close to 200. Just jaw-dropping, 120, 130%. I'm hoping it's kind of stalled out finally. We'll see. Even at this great distance of decades, you can see just what a tremendous rally this has been, which is kind of endemic of this creature. You can see many times over history it's done this. But anyway, we will see how that goes. I've got the stop set like so on AMD. And I'm going to close with the same chart I closed with yesterday. And I mentioned this yesterday as a prospectively bullish idea. And there's nothing broken about it yet. It could still be that way. But I would say it's important to keep an eye on this because should this chart just sort of flop Should it roll over? Should it not emerge from that pattern and just sort of wilt away from it? That's kind of a sign in itself, because everybody's counting on this simple narrative of interest rates are going to drop hard. There will be no alternative but stocks, and stocks will go even higher than they are today. And if this flops and interest rates aren't going to do what the market wants them to do, kind of something to pay attention to as well. Incredibly, tomorrow is the last day of the week, so we'll wrap it up then. I will see you, and good luck to you. I'll see you on Friday. Bye-bye.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at tastylive.
If you missed the live show, here's our cherry on top weekly recap. I'm sitting at my desk, so I wear my AirPods in most of the time. And I guess he was bellowing at me, and I didn't hear him.
I wouldn't call it bellowing.
Gus said that you were bellowing at me. So I'm sitting at my desk. I get a text message from Tom, and all it says is, "Where is this chair from?" So he was yelling my name across the office. I didn't hear him. He sends me a text message, and I write back, "Bitch, this ain't Chat GPT." And so Bat, I proceed to use technology to find it for him. And so then he complains to me about what the price is.
Found.
As if I had set the price, and he was like, "Well, how much did I pay for it originally?" As if I would know.
But a helicopter, not my thing. I'll take another means of transportation.
Okay, all right. I mean, I don't want to take a helicopter too, but an electric helicopter with...
That's better?
I think so. I like the four little things as a
four things.
One big...
The four little things. Oh my God, you're so cute, Sosnoff. I'm serious.
Wait, did you get the twirl?
We're going to the opening night now?
We are, 50-yard line.
Oh, you guys are going to another party together. Oh, am I just driving you there?
If you could, that'd be nice.
It'd be nice.
Nice. The best part.
You need to be picked up too.
I hope you're not mad, but I was hoping after work that day you could drop us off.
Of course.
See, because we're gonna. The reason we need to get there early is because we got to start the tailgating on the balcony early, because we're going on the field most likely before the game.
You're going on the field most likely before the game.
Might have an invite.
We might have an invite with somebody special.
I'm working at it.
You guys are special, indeed. You guys are really special.
So annoying.
Oof.
You guys are going to hold hands tomorrow before we start the show.
We're going to take a quick 90-second break and come back. We got more Tasty Live.
We're already out.
No, you're not.
Oh, we're not?
God, you're really good at this. You're really good at this.
Get the full scoop by checking out the archives at tastylive.com.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Tomas, we are back, my friend. You know what that means? Time for a little more Tasty Live. That's right. Clap, clap, clap. Sosnoff. The Bears are right where they want them again. Even the S&P is down 25 cents. Sosnoff.
Down goes Frazier.
NASDAQ down 23. Russell down 31. That's your big mover in the group. That's a little over 1%. That's a decent sized move to the downside.
Yeah.
Down 32. Volatility just turned green for a second here, up 3 cents. And bonds Did they get the memo?
The bonds?
Yeah, 114.22. Your long bonds. What's going on with the bonds?
They didn't get the memo. I've been nibbling on selling some 113 puts today. I'm gonna sell a few more right now if I can get my grubby little paws on them.
I was gonna say the same thing. I was gonna say your grubby little paws, but you said it before me. You are 100% correct.
Yeah.
Is what I was gonna say. Well, they've had about a 1.5 move today. That's a decent sized move, and they're just
a
couple of ticks off of their lows.
Yeah. No, I got my grubby little paws on those things, and I've been buying a couple of them. I haven't done much else today. It's kind of been a weird,
Well, we had a beautiful open house today. Bunch of people came in that are coming to the show tomorrow.
Yeah. Nice.
Clients. It was a lot of fun. It was
A lot of people came in from out of town. One guy I was talking to flew in from Tampa. Another person flew in from Texas. Somebody else came in from California. It was somebody from Boston.
Miami was in the house too.
Yeah. It was nice. It was really nice. And New York, Jersey. So yeah, it's going to be a full house tomorrow. Looking forward to it. tastylive.com/events if you want to sign up. It is sold out right now, but you never know. Something might open up overnight. It's
still free.
Oh, there's my bond sale. 113 puts. Started selling these puts this morning just to show you how much bonds have been moving around. Started selling these puts this morning at 56, 62, 63, 52. So all over the place. My average sale is 57, 58, and they're currently trading for 62, 63. So
right, classic 30-ish delta option, and you can see here the 13 ticks on the day on a 25 tick move in the bonds.
Yeah, that's about right. They took a little premium out of the bonds today, but I like to buy bonds into down moves and sell them into up moves. We sold them.
You know what? I love it when a plan comes together, Sadnov. You should do that on every trade. You should buy them on the down move and then sell them on the up move. I mean,
I wish I was that good. I can only do that in bonds for some unknown reason. What has earnings tonight? Before I forget, I don't think.
AMAT.
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 Is that the only one?
Yeah, Ivy rank of 20. Stock's been higher-ish, end of its range, $188 and plus stock up down $1.40 today with a almost $10 expected move. You really,
I would be a little bit. The markets aren't that bad. That's not the issue in AMAT. The issue in AMAT is that it's a stock that trades 4 million shares only today. And on a stock that trades 4 million shares, there's generally not a lot of back month liquidity. You'll have plenty of liquidity in the 1 day,
front month and the monthly options. Yeah,
plenty of liquidity in the 1 day. Not a lot in the back month. I mean, if I did anything in AMAT at all, which I haven't done yet, it would be a front month play with like 1 day to go, and the expected move is $10. So if you went $20 away, you went to the 200 calls. Oh, wow, there's some premium in there with 1 day to go. What the hell? What's going on here?
There's some premium. I mean, $10 expected. But
there's actually a lot of premium.
Well, $10 expected move. I mean, you can't do your. Well, I guess you could. I mean, yeah.
Yeah, you could go 2 times the expected move and get $1.
Yeah.
See, 87, 66. Yeah, 87, 67.
$1, but yeah.
Yeah, not exactly. 87.
Wishful thinking, Sadnov.
87. Yeah, wishful thinking. 89 cents, maybe.
Yeah.
73 cents. Go 2 times the expected move. Takes you out to. It's not my favorite trade.
Yeah, you ain't looking at this.
Huh?
You ain't gonna look at this. You ain't gonna do this.
Well, a lot of these stocks have been moving way outside. I don't love this one.
Understood. Sadnov, you just mentioned some of the movers from today. One of the stock Always Gesundheit. At the top of our list is Lily up $22, Netflix up $26, Reddit. They got the memo. They have to be up every day, up almost $8. Amazon up almost $7. JP Morgan up 2 and change, and Meta up 2 and change, with a plethora of other stocks up over $1. On the downside, you're looking at Chewy down 17, MSTR.
Chewy
move
down
on
what?
$17. Big move, almost 15% move in Chewy.
Oh, that's not Chewy. Your eyes are.
Oh, CRWV. I'm so
I was going to say,
Oh,
if Chewy's down 17, they're out of business.
my eyes. I wish people were in the office earlier today. I'm sorry.
Hey, this stock, if you remember, they had earnings 2 days ago, right? And it dropped.
Was it like a 130.40 handle?
Yeah. It dropped down to like 150. We did the weeklies, but that's why you cover, because you don't have to deal with the 1 day to go and trading under 100. But now,
Right, CRWV we're talking about, yes.
Yeah, CRWV. Now this is actually a little more interesting. Without earnings, 1 day to go.
Yeah, Ivy Rank's only down a couple of points, like 4 or 5 points after earnings. So volatility still kind of been in there, representing the same close to volatility it had before.
So I'm really confused here. CoreWeave, August 15th. Why are the 85 puts $1 bid?
I don't have this question. How about this? Why are the 122 calls 30 cents bid? I mean, I don't have the answer for
The
you.
expected move for 1 day is $10, but why are the 85 puts? What's going on in here?
240% implied volatility.
This is a better trade than the earnings trade.
Than aim at, you're saying.
100 times better.
Right. Well, I mean, this was a $50 stock. I mean, back in May.
I mean, this is ridiculous. What's going on in here? All right. First of all, I can't get filled on anything, but what's happening in here? There's something going on in here that makes me think that
it's had a $17 range today on a $10 expected move, I guess, for the next day.
I understand. It just seems like a big number for a 1 dayer.
It does.
Can't sell anything though. That's the problem.
You just did right now.
I know. Trying, man. Trying hard to get some. I mean, 2 times the expected move 1 day with no news coming out.
Well, I don't know if there's news coming out or not. But do you know?
They don't have earnings.
No earnings coming. That is true.
I don't think I've ever seen this. Stocks trading for $100. I mean, maybe I guess I have, but with 1 day to go, the 80 puts and the 120 calls, which is 2 times the expected move without a binary event, is trading for 80 cents. Riddle me that, Batman.
Oof, I don't have a good answer for you, Sadna, but if it's trading 80 cents, I can guarantee you one thing. It's worth 80 cents.
I guarantee it is too, but I couldn't resist.
I understand.
I couldn't resist. The only reason I won't do more of any of these trades is because we are not going to be...
For the fact that I just reminded you, and you knew already,
for the
that
fact
it's worth 80 cents, but it's trading 80 cents.
For the fact that we're not going to be available to close the position out tomorrow morning.
CoreWeave IPO lockup period is ending August 14th. That's today.
Well, down 17. And can you imagine? So you're sitting there with CoreWeave, right? You're holding out for your 6 months. You're doing all you can. 2 days ago, the stock's trading $155, and actually it closed at
117.
The high of the day that day. Let's see.
Oh, that day.
Yeah, I'm just looking. 150, let's say. So the stock's trading at 150. You got 2 days to go when your lockup period ends. Right?
Come on, baby.
Hold up. Daddy needs a new pair of shoes. Keep your wings up. There you go. Trading 150. This is what sucks about those lockup periods. It's trading 150, and you're counting your chickens. 2 days later, you're at break even at 100. That's not break even. I don't know what it is, but I'm just saying you lost 33%. And there's nothing you could do.
Your hands were tied.
Your hands are tied. You can't trade options against it. Most firms have a lot of issues with that.
And I got to thank my friend Uncle B2 on Twitter for alerting me to that fact.
No, I know, but I mean, now if you wait till the end of the day, I mean, I don't know. I mean, I'm sure they're probably going to go out of business tomorrow.
What do you think tomorrow in CoreWeave? Higher probably. I know it's
this is kind of a joke. I think this is a weird move to drop this much, 33% with 33% in 3 days when your lockup's coming off. But remember, this was an IPO at what, $40 or something?
Yeah, $50 or something, right?
Yeah, $40-$50. So you're still up some pretty good money, but it sucks that you just lost half your profits in one day.
Yeah.
I still think the premium's kind of rich, Bat. I think it's probably worth a cheap shot. Unfortunately for us, like I'm saying, we're doing our show tomorrow morning, and I can't be distracted.
Can't be loading the Flotola and be distracted going, Bat, why did you even mention? Why did you say Chewy? What is wrong with you, Bat?
Yeah, why did you say Chewy? Because you can't read. So you said Chewy. And I'm like, Chewy can't be down $17. So I have to see what it is. It's CoreWeave. Then I actually have to go look at the prices and see the options are trading for some ridiculous 200% volatility. And then you get me snookered in.
I love it when a plan comes together. I really do.
Yeah.
I love it.
Well, I'll put a closing order in tonight, and I'll just close my eyes.
So, Sadov, we had a little bit of a discussion about, governments getting involved.
Who's
and blah,
we?
blah, blah.
I want to know who we is, because whether or not I answer this question depends on who we is.
On the show, me, you, and Dylan.
Oh, me, you, and Dylan. Okay. All right. What do you want to know?
Intel up $1.57, Sadov. You peg the bottom in here beautifully, I might add.
3 days ago, I said, all you got to do is close your eyes and buy Intel, because as soon as Trump said, I want to fire the Intel CEO or I want him to resign, and the stock went down to just over 19. I'm like, this is the greatest buying opportunity ever. It's such a crappy reason. And
let me add to that. Trump administration said, and I want to know if you're okay with this now, or are you going to give back the profits?
I covered my Intel today.
Don't worry, they'll take a check. Trump administration said to discuss U.S. taking stake in Intel, according to Bloomberg.
Hey,
what do you think about that?
Your taco boy president goes from wanting to fire the Intel CEO to wanting to invest in it.
We're one country.
Okay, I'll repeat, your taco-brained president goes from wanting to sell the CEO short to wanting to invest in the CEO as soon as he spends 3 minutes learning what Intel really does. It's part of his talk first and then figure it out later partially. He's so gullible.
All I want to know is, are you going to give back the profits?
I covered today. Took my profits.
Okay, you're going to give back the profits. Are you going to write a check? You can write a check right now to the U.S. government, to Treasury. You can do it.
Just because I used that as an opportunity is what we do here at Tasty. I did not.
Now you're taking my stance.
I did not.
You're opportunists. We are capitalists.
I am an opportunist. And when I see news, I'm an advocate for noise. Whenever I see noise, I put a trade on. But I like noise. You can't be AOC and then be bat the next moment after that. One thing that bothers me about CoreWeave is I don't see the noise. I see the tape action, but I don't see the noise. And I don't like it when it's silent. That's what scares me a little bit, is the silence of CoreWeave. When a stock's down this much in 3 days, it probably bounced back a little bit tomorrow. But you know what? I wouldn't bet on a higher opening tomorrow. I just wouldn't bet on it.
Understood.
I'd like to see
Which means we're going to zoom to the moon, and even the S&Ps are catching a bid on the assumption that Sadlov was going to say that. They're up $3.75.
I didn't trade a single
for the first time all afternoon.
I didn't trade a single S&P today, and I didn't trade a single NASDAQ future or a single S&P today, or a Russell or a Dow for that matter. I did trade bonds, and that's about it. But none of the S&P products. On the options, the volatility is just too low, and on the futures, when they open that much lower, like down 25 or 30 handles,
and a million on the type of moves we've been having recently, which have been muted moves.
Yeah,
right?
exactly.
I mean,
exactly.
That you either have to buy them at just off of all-time highs for a small little uptick, which you got, which was great if you did, or you can't, you can't trade them.
I mean, they're 64.90. They've been wrapped around this level for 2 days, and let's see what happens tomorrow. I'm just hoping that tomorrow in the morning there's at least some kind of a move, so we have stuff to do. And I nothing worse than an expiration Friday where everything opens unchanged and you're looking at each other like, all right, now what?
You make something happen. No, you make something happen.
Yeah, it's going to be interesting. That core weave strangle we just sold at 80 cents. It's now 70 cents. It lost 10 cents in the last 4 minutes.
That's over 10%, Sadnov's 12%.
12%. Okay, well, I don't look at an 80 cent straddle in percentage terms. But if it trades 50 cents on the close, I'll buy it back.
And will you do a little dance?
For you? For 30 cents? I'll do a little, I'll cut the...
30 cents, I cut them up real good.
For 30 cents? Yeah. I'll cut the rug or whatever they say.
That's what they say.
Cut a rug.
Yes, sir.
For 30 cents.
Uh-huh.
Yeah, I don't think we're going to see that much. But it was another day where, I mean, the VIX futures were unchanged today, which is, I don't know, just more of a statement that they're just kind of cheap to start with, and I don't think they had a lot of downside room. After tomorrow's opening, maybe they'll head a little bit lower. I don't know.
Absence of sellers again, Sadnov. 1 million futures traded all day long. You got 8 minutes to go in a day.
Well, I mean, there was some.
They're buying them on the close. You would typically say they were trading from the short side, and weekends got.
I thought what was more interesting today in the futures markets were that yesterday all they could do was buy Russell and sell, and buy Russell and not really care about anything else. And today, all they could do is sell Russell and not care about anything else. It's almost like everybody that bought Russell yesterday sold it, and over 2 days, it's like unchanged, So, I don't know. I kind of find like that to be a little weird.
Yeah.
But other than that, I mean, this is fairly typical tape churn for a, for a expiration close. I call it tape churn, but that's just like an expiration playing tug of war. Nobody can decide how they want to go home tonight for tomorrow's markup or markdown. Do I want to go home a little bit long, a little bit short? Am I trying to stay flat? And, that'd be my best guess about today. It's just a lot of, this business has a lot of retail customers, and then there's a lot of what they call pro-tail customers. They're not really professional traders, but they like to think of themselves as professional traders. So they have this.
What are they called?
Pro-tail.
Pro-tail.
Pro-tail. There's retail and there's pro-tail. And pro-tail trades.
Did you just make that up?
No. It's a term in the industry. So retail.
Wait, I've been in the industry my entire life. I've never heard this.
Well, you don't get outside of your little box. But like Tony and I are retail traders. But then there is this group that considers themselves pro-tail, and they do a lot of scalping. They do a lot of like little arb and stuff like that. And that group of pro-tail traders, they're usually on the same side of the market. They usually all get long or all get short. They have to all get flat at the end of the day because they all use the same.
I asked AI and I asked Google and I asked everybody else. They never pro-tail. You know what? I'm not going to ask you. I'm not going to ask anybody else. I'm going to ask these gentlemen from Overtime. The question of the day, gentlemen, Let them in, please. The question of the day. Have you ever heard of ProTail? Your job does not depend on your answer being correct.
I've heard of it.
You know what? I knew you were a suck up from day one, Christopher.
It's a new term.
I haven't
that
heard it in
crypto
the
people-
context of finance, I'll tell you that.
It's a term that crypto people use to describe themselves as buy-side traders who are trading as a means of making their primary income. So like the retail trader is going to be someone who has another 9-to-5 job and is trading on the side to boost their own personal wealth. These folks are trading to put food on their table.
Are there semi-pro traders then? Semi-pro-tail traders who aren't necessarily...
This is like This is a crypto thing I've heard. I've only heard it in the crypto context.
You're just trying to pay their electric bill?
It's not a crypto. It's not a crypto term. It's long been a stock trader and option trader term, because the difference between a retail investor and a professional trader is a professional trader can trade unlimited, but they lose status, especially in the option world. A retail trader has status, but they can only trade up to 390 times a day on average. That's the absolute max. Otherwise, they were considered professional. And so they like to stay as a retail trader because they get status. Meaning they get to jump in front of you online in the electronic book. So that's the difference. But
all right, whatever nonsense.
Can I ask an unrelated question?
Of course.
Sure.
First of all, I'm on the phone today, so I'm sorry about that. But you were talking about tape churn earlier.
Yes.
Can you use tape churn to make butter?
Yes, you can. But
only if you're a semi-churn trader.
Yes, you can use tape churn to make butter, but it really only applies.
Trader, you can't do it.
And regarding ProTail, I thought that was a professional class of worker in Amsterdam.
I was going to say I've heard the term, just not in the context of finance.
That was well played, Dylan. Well played.
Thank you. Listen, I do good work on the phone too. I can do it. I like multimedia.
I've heard that about you, son. I've heard that about you. Give good phone. Ilya, what about you? You hear this term?
I have not heard this term. I'm learning along with everybody else here. Live and learn.
Well, Ilya, I'm learning to love you too right now after that answer, so we appreciate it. Good job out of you. Oh, sad enough. Even the S&P's up 575. Sting a little?
No, I don't think it does anything one way or the other. I mean, I would prefer there be down 575 just for my position, but no, I don't think it matters. Yeah. Oh, I should mention one other thing. ProTail, Tony, just so you know, they don't get paid for order flow.
I didn't think they did. The way you explained this old term that's been around forever.
4 decades it's been around. That's okay.
That we call these people. This is what we call them. These people.
Yes. All right, boys. We're getting into August expiration tomorrow morning. Tony and I, not unfortunately, but we're going to be doing a show tomorrow morning, so we won't be able to trade the opening here. But this tends to be one of the more bearish. Historically, one of the more bearish, openings. I don't get that sense from the close today that tomorrow morning is going to be too bearish one way or the other. But if the market were to break here, you think it would just be that bonds break down into 113 handle? What would cause the market here to break a little bit? Would it be the bonds just breaking? Because it hasn't happened so far. What would it be? Some of these stock, like what's going to cause any kind of, turbulence in the market here? We got 1 minute. We'll go quick, Ilya.
It's retail sales tomorrow.
Nobody gives a rat's ass about retail
I think
sales.
that's it's gonna be the jobs report again. I mean, the jobs report gave the market serious indigestion because it was very disappointing across the headline number, the revisions, everything. I think if you get a soft retail sales number here, especially after the PPI numbers today that showed you wholesalers are starting to pass on the tariff inflation, if consumers fold here, it's going to be the jobs report again.
Yeah, but that's going to be bullish for bonds, bearish for stocks if that happens.
Right.
Chris, what do you think?
I mean, bonds are going to have to keep going, but the market, even after today's PPI report, we shifted down expectations of 5 basis points in terms of rate cuts. So whether or not the Fed should cut rates is a different story of whether or not the Fed will cut rates. And if they're going to cut rates with this environment, you've got to hold assets that do well in inflationary regimes like real estate and stocks.
The answer is Fed expectations. Any variance in Fed expectations, Tom, and you're going to have yourself a real bloodbath because everybody's locked in on these rate cuts. So anything that squirrels it out, you're going to have a problem.
All right, boys, we appreciate the insight and the input. Thanks so much, and we will see you guys on Monday. Mikey and Nikki are doing the show tomorrow morning, followed by Liz and Jenny. It'll be a full slate of shows. But Tony and I will be off air tomorrow as we're doing the live show in Chicago. So we'll see everybody Sunday night. Chris, Ilya, and myself will be back Sunday night, 4:55. And everybody else will see Tony and Dylan will see you guys back on Monday. Thanks, boys.
Yes, you will. Overtime
See you Monday.
Gentlemen.
See you Monday.
Overtime next. Peace.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Do you have a sleeper pick for the second half of 2025? Is there any company you're watching that's not being talked about you think could have a good second half?
Well, the one stock I think that's cheap relative to a lot of other stocks right now is probably Apple. Now, not that I love Apple, but relative to its brothers and sisters, it's cheap.
I've been saying this for a while now, but I am not turning my eyes away from gold. I think there's always a lot of interesting opportunity in there, both on the long side and on the short side, particularly in the gold futures options.
I'll say CoreWeave, CRWV. That stock has been on the move. I feel like it kind of reminds me just of, from iPhone standpoint, when it came IPO and the way that's trading, of Snowflake, SNOW. It reminds me similar to that, so I feel like that's one that could be moving higher in the months to come.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Inflation's not so bad, right? It's Thursday, August 14th, 2025. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco, Dylan Radigan on the road on the phone to join us for the next hour as we take us through.
This is called President Trump style, baby. Calling in. Calling in.
Squawk Box. Ilya's our Joe Kernan around here. Please treat him as such. We'll be with you for the next hour till 5 Eastern, 4 Central as we wrap up the trading day. If you're on the platform Tasty Trade on the website tastylive.com, welcome. Come over to YouTube. Tell us what you think of this action. The sell-off that was sparked by price pressures going up. Does that mean inflation is coming down the pipeline for the consumer? Stocks take it on the chin initially, but when we turn to our charts, we see a recovery during the day. And sure enough, the S&P 500 here basically back to break even after a big sell-off this morning, getting down below 64.55. NASDAQ off by 0.25%, Dow off by 0.11%, the Russell, the big loser, off by 1.4%. It's a bad day for the cryptocurrencies as well, which are down 4% or so each. We take a look at gold and silver, which are sliding, but it's good news for the US dollar because higher treasury yields ultimately lead to a stronger currency. So as we break this down, Ilya, we need to talk about this inflation figure because the PPI did spook the market today everywhere. If it was stocks, if it was bonds at the long end of the curve, those never quite recovered. If it was gold prices or silver even, PPI comes in and the market gets weaker.
Yeah.
President Trump said that inflation's hardly here. Direct quote, said today.
Yeah, okay.
What's the real story here?
We've been talking about this for months, right? This idea that CPI is not an accurate reflection of what's actually happening with the tariff impact on inflation, not because the data is fuzzy, which it is. It's fuzzier than it's been in years.
Why
but
do you
that's
say that,
not
Elliot?
what's going.
Not to interject, but why is the data fuzzier now than it was a year ago?
Because we
of
have
the
about
lack of
30% imputed data in CPI. That's the highest in known memory.
Imputed
even
means
during
an inference?
Yes. Even in COVID times, it got to maybe 15, 20% while everything was
And
closed.
why is the imputed data so high at this particular point in time?
The imputed data is so high because they don't have the staff to collect it because a madman with a chainsaw
because
has,
they're not collecting it.
Because they're not collecting it. That's right.
And the imputation fall off starts in, or rise rather, starts in March, which coincides with Doge.
Yeah. Yeah. So yeah, the data is fuzzy, but that's not what's going on here. What's going on here is in the first quarter, we had a massive jump, as we all have seen, in imports and in inventories as everybody was trying to front run the tariffs. In other words, people have built up these inventories to try to get as much as they can before things get expensive. And that's shielded consumers because inventories have these goods at the former costs. And until we wind those down, we have that as a shield. The other major shield that we've been watching has been wholesalers eating into margins to protect consumers because they want the tariff thing to sort of wash over them without destroying demand because nobody knows what's going on with these tariffs in recent months. They're here, they're there. And so wholesalers make the bet that they don't want to kill demand by passing on these tariff costs. They want to eat it on their margins for a little while and see what happens. And that's been the story really going back to when we had a really massive surge, a month-on-month 2.1% surge in these costs, especially early in the supply chain, intermediate demand. So a 2% decline in margins there, going back to shock of shocks, April, when Liberation Day really hit the fan. What we see here now is that the pass-through is occurring. And that's what is so worrying about these numbers, these PPI figures. Month on month, there is a surge in margins for wholesalers. Final demand, a surge of 2%. That's the biggest monthly increase since March 2022. For intermediate demand, biggest surge in 4 months, 1.3%. What does it mean that their margins are increasing? It means they're no longer eating the input costs. They're no longer taking it on the chin. They're passing it down to consumers. We saw it in the CPI numbers a little bit already, and for the past 2 months. And of course, we've also seen it in spades in the second quarter GDP numbers, where imports stopped, essentially. They just hit a wall. And inventories have started to come down. That is to say, businesses are spending down these inventories. They're not restocking them. And so the one-time front run is done. Now consumers have to face these costs. Those same GDP numbers told us the first 6 months of this year were the weakest contribution from consumption since the first 6 months of 2020, the COVID recession. So we're already in a weak spot. And as we've seen with the CPI numbers, the pass-through is only just beginning a little bit. So we still have all of that in front of us. Now,
but the bottom line is, does this really affect Fed rate cut expectations? Really? I don't think it does.
It did a little bit today. The really interesting bit is I don't think this changes anything for September or this year. Those expectations still north of 90% chance that we get the cut. Now it's a slight possibility that we don't, about 6%. Yesterday, there was a slight possibility that we get a jumbo cut, about 6%. But the central idea that there is a cut of 25 basis points that's coming in September, that's unbothered. The biggest issue is what happens next year. And there, things got more dovish today because the markets see where the economic pain here is going to come. It's consumption.
So one thing that sticks out to me in the data, so now that we have CPI and PPI, right, we can basically take a look at PCE. PCE is the Fed's preferred gauge of inflation. If you take a look at the inputs, the head of fixed income over at the chief fixed income strategist, I should say, over at Janney, Guy Labas, apologies for the mispronunciation. He imputes PCE, core PCE at 0.56% month over month, Ilya. That's probably not a level with which the Fed would be comfortable cutting because that gives you an annualized inflation rate north of 6% from how they measure it.
Yeah.
Here's why I can't necessarily take that at face value. One of the translations that Guy points out here is that investment advice, insurance, portfolio management are some of the largest drivers of why PCE is going to be higher. And that's effectively a function of the fact the stock market's up. So PPI being up for
say that again,
chunk of,
why they're saying why is the stock market up? What are they saying?
No, so the way that PPI is measured, rising asset prices filter through into the higher cost of financial advice. So if equity indexes go up, then the cost input for receiving financial advice has increased. And when stock prices go down,
because the cost of financial advice is a ratio of basis points against the value of assets, basically. So as the asset value is higher, the cost of advice is higher because you're paying 50 basis points on the collective value of equity, or some number, an advisory fee on. Okay.
So, like, if the Fed is looking at this PPI impulse and saying, sure, there's a whole chunk of it here that's driven by things that aren't great, like food, for example. We now have a 9% effective tariff rate on bananas. We've really never, ever tariffed bananas before. Do you know why? Can't really grow them here. So there's no reason to tariff them. We're not going to incentivize American production of bananas or coffee for that matter anytime soon. But coffee prices have shot up. Banana prices have shot up. Food prices are going up. But when you think about everything that goes into the Fed's preferred gauge, you're not exactly landing in a place where, okay, portfolio management, that's why this is a big, okay, let's take a step back then. Will the Fed cut in September, Ilya? Probably.
Yes.
Should they? No. But our job as traders is not to make bets on what we think the Fed should do.
Right.
Because what the Fed should do a lot of the time is a day late and a dollar short. They're always fighting the last battle. What they will do is an entirely different equation. And I can't help but think that's one of the reasons why you have an S&P and a NASDAQ that are able to respond and rebound over the course of today's session, even if they're still slightly underwater here going into the close.
Yeah, I mean, I think the bottom line here stands. The markets want the September cut. They think the September cut is coming. They don't think this upsets the apple cart. The larger issue here starts to be, okay, you saw the jobs report was weak. Clearly. You saw the GDP report told you to worry about consumption. Clearly. You saw that same GDP report tell you that wholesalers were going to pass on these costs because they're not refilling inventories. So they find this stuff expensive now. Clearly. The question becomes, is the economy already rolling over and is the Fed already late? That's the biggest threat, really, because the markets have been saying for months that the Fed doesn't need to worry about inflation. And the Fed's concern, let's be clear, wasn't so much that we're not going to get a one-off uptick from these tariffs. Their attacks on imports, of course that was going to happen. Of course that's coming. 1 + 1 is 2. The larger question is, will consumers take that increase, extrapolate that out into inflation expectations, and thereby poison all of the progress that the Fed has made in bringing inflation expectations down and re-anchoring them through pain of significant rate hikes in 2022? And the markets have been saying this is the wrong thing to worry about basically since April, when the whole kerfuffle occurred. And you can see it because inflation expectations in the bond market haven't really gone very far, even as sentiment has recovered. So it's not sentiment about the economy that's recovering. The price impulse is still just as weak, pretty much, as it's been when we were concerned about the tariffs hurting growth February to April. We're still there. The question is the U.S. going to self-immolate and exit its own financial order and crash the whole thing? And the rebound in stocks tells you that we no longer think that that's what this administration is doing. And good.
You know what's really funny to me, Dylan? There's a word that we haven't tossed around here in a long time. It starts with a T. Transitory.
Yes.
We're starting to see the contours of a certain group of people in financial markets make the argument that, yes, inflation's here.
But it's transitory, baby.
But it's not going to stick around, and the Fed needs to be more concerned with the labor market, in which case, that's fine. That can be your view. But you're arguing that the data that we've seen today and this week and in recent weeks of inflation nudging up, it's transitory. So make that argument.
So can I pick up? I'll make that argument right now. Let's take Trump at face value. He said more than once that the tariffs are actually not about. I mean, the tariffs may be ostensibly about sort of bringing production back to the United States, but I would say more substantially, what I hear Trump say is we should pay. We being Americans should pay lower income taxes. There should be a lower general average tax rate on income and on capital, and that we should gather our tax revenue via a different mechanism, which he believes should be done through tariffs. And so the question to the transitory piece is, maybe the hypothesis would be that the Trump tax bill is a move towards a reduction in taxes on capital and income and an increase in taxes on imports. And that you're basically that it's not so much of a reshoring or not reshoring, although there's some marginal aspect of that, although obviously not with bananas or coffee, but that bigger than domestic production versus foreign production, that it is a philosophy on tax revenue collection, full stop, that is to put more money into the pockets of Americans by way of lower income tax and lower tax on capital, and then take more money from Americans effectively when they buy foreign goods by way of higher priced foreign goods. And so the question would be, is the transition to higher taxes on Americans when they buy non-American items, French wine or German cars or, whatever, bananas from South America, what's the net effect of the marginally higher prices on any foreign good relative to the increased accumulation or retention, I should say, of income by virtue of a reduction in income and tax and capital gains tax? One would, if you believe that whole thing was going to shake out, which seems to be a tenuous belief to hold, considering how many moving parts and how much money and how many people and how sort of asymmetrical and selective and targeted and preferential to his friends and all these things. But one could argue that it's transitory because while the cost of foreign goods will be higher, that the amount of money in an American's pocket will go up by virtue of marginally lower income tax. And if Americans buy domestic goods with their increased retained income, and then they pay more for foreign goods, that the tax rolls work themselves out. And in the process, also, you end up with a bias towards buying American and reduced overall tax rate on income and capital.
I see the argument, but to me, it seems like a bad one.
Why?
Because you get a tax reduction once a year. Meanwhile, you're facing the costs of these inputs every day. And it's not just bananas. Let's say you stop eating bananas, whatever. But there's inputs to everyday items.
I will not be stopping eating bananas, for the record.
Neither will I. But the obvious decision not to buy foreign goods is not so obvious, because foreign inputs are in almost everything, including, for example, American cars. So there's the argument that you can, sort of save yourself some money by not doing that, but that's not easy, nor is it clear cut. That's one thing. And secondly, you face these costs every single time you go to the store, every single time you buy something, whereas your lower tax take gives you savings once a year. And so you have to trust Americans then that they are going to retain those savings to paper over their future extra tariff costs. Is that realistic? No. That's ridiculous. And so when you look at the net effect here, the pain from hitting consumption, the biggest contributor to overall economic growth, is every day and all the time. And you're going to countervail that by giving somebody a break on income taxes once a year and hope it evens out. That's, to use a recently used term, bananas.
So if that's one side of it, right? Like the tariffs are inflationary, but it's only temporary, so it's transitory. Fine. But if it's not transitory, inflation's turning up.
Yes.
And we're going to be getting a Fed cut in a bump in inflation cycle. Now, the labor market weakening, not weakening, you can look at the claims. We can adjust it for labor force participation, however you want to slice it. But this is not the comfortable backdrop of the Fed saying, okay, inflation's coming down so we can glide into 2%. And we better start cutting now before we get there. Otherwise, we're going to overshoot. And that's going to be a different problem. This is not that world. So I'm very much for Dylan today. Obviously, stocks pull back in a little bit, but there's a resiliency here. Ilya, you and I were talking before the show went on. This is a nice little rebound here off of the former high that we had back in July in ES, in NQ, in the Russell even, which is holding up here.
I'm most interested in here.
Okay, so I did mention this comment on air today, and I've talked about it recently with you guys, but Zero Hedge made the note that the only rational thing to do in times like these is to swing wildly from one extreme view to one extreme view. Perhaps I'm going to put myself at risk from doing that here. But the regime change that it felt like we were going through the past few days in stocks, small cap over mega cap, value over growth, Russell over NASDAQ, that was out the window today. And I know Tom and Tony were talking about that towards the end of last call before we came on air. So Ilya, why do you see this as a good opportunity if we see that these firms with the smaller moats clearly have price pressures coming through? And these are not the companies with the margins and the moats to absorb those kind of costs.
So, as we were just saying, the markets have been saying for a long time that the problem here isn't cost, that it is in fact going to be a one-time increase, but not for good reasons. That what's going to happen is these extra costs are going to hit demand much harder and what's going to happen is disinflation because of the demand destruction that these tariffs wring out of consumers. Basically, the increase in prices will get consumers to stop buying to the kind of extent that they have been. Again, we already have weak consumption in the first 6 months of the year, and very weak by historical comparison. It doesn't take much as you get the pass through from this inflation in the wholesale to the retail to hit that even harder. What's interesting then is the Fed is on course to cut to fight this. And Russell has been particularly sensitive because it is cyclical more so than the S&P or the NASDAQ, because obviously...
Let me just jump in here real quick. Applied Materials had their earnings come out a little while ago. We missed this at the top of the hour. EPS came in at 248 versus 236 expected. Sales were a little bit better at 7.3 billion versus 7.21 billion. They're missing guidance substantially. They see Q4 net sales at 6.2 to 7.2 billion. The street forecast was for 7.32 billion in guidance. So Applied Materials here now down after hours. This is an 11.5% loss on the chart. Go ahead, Ilya.
Yeah, ugly, to say the least.
But I still go back to what I said to Tom at the end of their show, which is that the only thing that stands between this market and a continuation higher is anything that would prevent, basically, I guess, be a hot CPI in September.
Well, right. So
anything that would jack
this is where
Fed
it gets
expectations back.
Yeah.
Well, and this is where, as we were talking about that at the end of last call, this is where the parallel of the jobs report is interesting. Stocks hated the jobs report, even though it ostensibly paved the runway for rate cuts by being god awful. Because what the markets want is not a recession. And what they don't want to see is that the Fed is already late. Even though they've been screaming at the Fed for months now. You got to go. You got to go. You got to go.
Polls show that the bottom 30% of income earners in this country think that we've been in a recession for the past few months, based on their own personal finances.
There you go.
And consumption, we know in the first half of this year, fell for only the first time since COVID. And prior to COVID, you have to go back to the first half of 2010, which Dylan, I was still a little green behind the ears getting my career started, but that's on the other side of the financial crisis.
Yeah.
And that was the time, Radigan, right? When going into the second half of 2010, people thought we were going into a recession again, back to the depths of the global financial crisis. So first half of the year declining consumption, that's a unique occurrence that is just difficult for me to shake.
No, I get that, but I mean, I'm at a moment right now, and who you can take it or leave it, where my confidence in recession forecasting or consumer expectations, I think, are basically useless. We spent 2023? We spent one of these years in the past couple of years with everybody expecting a recession, or at least including me, and it just never happened. Which is not to say that recessions don't happen or won't happen, but I just don't believe that sentiment. I think the only relevant thing is jobs number, CPI, PPI, and the AI supernova and rates. And I think everything else that's not rates, that's not, cost of goods, that's not employment, and that's not the supernova is useless.
Well, I think this is the key then, because we get this weak consumption. We now get evidence that the costs are being passed through from wholesalers to retail. Yeah. And now we're going to get retail sales numbers. So
and then you're going to get another jobs number and another CPI, PPI.
Right. But the retail is tomorrow. So if this follows the model of the jobs report and is ugly, stocks are going to sell off even though it paves the way for rate cuts, because that's not a level of intensity they want. They don't want rate cuts for recession reasons. They want rate cuts for the Fed is going to be a little bit more of a risk taker and be a little bit more forward looking and try to head this thing off. But everything we've heard from the Fed is that's not what they're doing. So this is where it gets interesting. If you get a mildly cool retail sales number, the markets probably go, oh, goody, rate cuts. If you get a decent retail sales number that isn't a blowout, it's probably the same. So if you're somewhere in the middle of the distribution, the market's probably like that. But any kind of tail risk, anything super hot that really eats into rate cut expectations, probably not good. Anything super bad that gets recession back into the headlines, that's not good. At least that's the story from the jobs report here. What did the markets love so much this week? A nothing CPI report that you could read each way you like. You want to look at core and be afraid of inflation? There you go. You want to not be afraid of it and look at the headline? Enjoy. Choose your own adventure. That kind of middling, vague, smoke and mirrors data, that's what the market's like here.
But can we just go to can we just go to just anecdotal fact? We know for
sure, yeah, and Dylan, I have that up here. I actually have that up on screen right now.
But
Bank of America
goods
sent
are
out the
going to be
same
more
chart.
expensive. There's no guessing. Imported goods are more expensive. That is a fact.
Yes.
Imported goods are part of domestic goods. To Ilya's point, an American car is full of foreign goods. All the things. So basically, the cost of everything, whether it's foreign or domestic, has been increased. Whatever the CPI says, whatever PPI says, mathematically, there has been a 15% plus or minus, depending on the thing, increase in the cost of things. Now, maybe in some cases it's 5% because of the pass-through and it's not all foreign and blah, blah, blah. In other cases, it's whatever. So I think arguing about the price increase is silly. I think the question is what is the tolerance for the price increase?
Right.
And the market is
there
saying
seems to be high tolerance.
That the tolerance is high.
Well, that's one of the charts I have up on the screen here. Bank of America put out this chart showing total credit card and debit card spending growth per household based on their own credit card data. So it's not not the economy, but it's a big sample size. They see 0.
number.
No, and they see 0.6% month over month growth in July, accelerating after the increase in June. And both April and May obviously were bad. But maybe we're still in the revenge spending area in terms of the data set. I know it's the middle of August now, and people's spending habits in August may have evolved. But July looks like it could still be a decent enough number. And so just like you had with CPI, if it's good enough that doesn't scream imminent recession, it's hard for me to get worked up about it for tomorrow. And I also point to this other chart. I mean, we're not even in a place right now where the treasury markets, given the treasury spreads, are thinking that recession is feasible here. 28.947% implied chance given the 3-month 10-year spread right now.
Mm-hmm.
That's well below where we were throughout 23, 24, even earlier this year. Ilya. Now, that's not to say this is a perfect indicator, but we've never had a recession when the indicator has been below 0.4. Ever. So keep powering on. That's the market's bet here right now, that the market will keep powering on. And the people who are playing in the market, the upper income consumers, as Bostic said yesterday, they're holding up.
Which brings us to the Russell and the conversation we were just having. Why the Russell? Because if you are going to have a relatively high tolerance for this inflation, or you're going to look through it, you're not going to have a recession conversation near term. Well, then what you have in a lot of these indexes is a break past their preceding high, and today a pullback to retest it. But whereas in the S&P and the NASDAQ, you have to buy something essentially a hair away from all-time highs, that is not the case in the Russell. In the Russell, you have a little bit more headroom. Risk-reward is a little bit better. So if you are going to be a buyer of stocks here, and I was absolutely circling around this today, just looking for a level that was attractive to buy vol at. It ultimately didn't happen, but maybe I'll get a better shot tomorrow. We'll see. But I was absolutely looking on the long side of the Russell today, because the high there was back November of last year. So we're talking almost 2,500 on the Russell. You're well short of that here, so there's a little bit more room. So do I think that the economy is in good shape? No, obviously not. But in the spirit of trading the price action, this was a nice little discount on Russell today. So I'm going to be watching this carefully tomorrow. The pricing, as I say, didn't really afford me risk reward that I thought was attractive enough. It was maybe like 1-to-1, 1.2-to-1. That seems like a silly bet before critical retail sales and other data is going to give us the next major inflection point in this story. So we'll see tomorrow. Maybe vol will get a little bit cheaper. Maybe the setup will get a little bit better. Maybe we'll get a little bit of a washout.
What's fascinating for me, Ilya, is the market's apparent perception of the consumer's tolerance for higher prices.
Yes. Moreover, the market seems to have forgotten why it wants these rate cuts. We had a big conversation about this on Macro Money yesterday, and of course we mentioned it on Overtime as well. The market is clearly more dovish than the Fed. The market still has 125 basis points between now and the end of next year. That's 50 basis points more than the Fed is forecasting. So the market is very clearly saying there is a bigger downturn in growth than the Fed appreciates that it needs to be acting against, while at the same time saying, but that doesn't matter for earnings, consumers, and the economy, which is incredible cognitive dissonance.
I mean, Ilya, I think we just got to go to the earnings themselves.
As it presents itself.
I mean, who is eating these costs ultimately? If we're to believe the data and believe the earnings numbers.
At this point, it's consumers.
The blend, and this is how you get to that conclusion. According to FactSet, the blended net profit margin for the S&P 500 for Q2 25 is 12.8%, which is above the previous quarter's net profit margin of 12.7%, above the year ago net profit margin of 12.2%, and above the 5-year average of 11.8%. So if profit margins are staying intact and wholesale prices are rising, who is paying the difference?
The problem with that argument for stock markets, and I want to give full credit to Bloomberg, they ran a big story about this today. You look at the spread between CPI and PPI, and right now it's very clear that consumers have not been eating it because the spread is negative. That is, CPI is lower than PPI. As the pass-through happens, that's going to change. And what's going to happen then is the problem that you don't want to see for stock markets.
what I don't understand is that is hardly a secret.
You're right.
And this is the
discounting
cognitive
mechanism.
dissonance in the whole thing.
I mean,
the market
is a
see it.
discounting machine. The market
They see
knows
it.
what you just said
Yes.
is a fact, and they're okay
Yes.
with the current price levels.
Is it possible
I
this
presume
40
because
chess?
of the rate cuts. Sorry?
Isn't that the 40 chess here? Like the tariffs are going to push up inflation. It's going to lead to a negative downturn. Trump's going to have to scale them back in some form or fashion.
And the Fed's going to
So
cut
the
rates.
So the Fed's so the tariffs are going to come off at some point, and then the Fed's going to be cutting rates.
You're
And so they'll be cutting.
you're assuming a lot for which
Well, that's
there
what the
is
market's
no
assuming,
evidence.
right?
But that's,
Of course, there's no evidence.
I don't think you can impute that at all. I don't think
So
there
how
is
do you
any
justify
way
the
to
level
know
of these
that the
price levels and
elephants
this
will
level of
fly outside
optimism?
our window in 5 years. Like, who can
But
know
then
these
how
things?
do you justify
I've seen the movie
market
Dumbo.
level?
And this is where some of us look at this and go, the market's level is not reflective of optimism about the economy, as break-even rates in the bond market would readily show you. The market's level is about a positive sentiment shift around the idea that having threatened to crash 40 years of a U.S. post-war financial system that has given the U.S. virtually everything it's ever wanted financially on a platter, the U.S. is going to stupidly destroy that order.
So
And
then,
then
by that
in
measure, are we
April,
not
the
dollar
US
buyers?
decided,
But
no,
are we
actually,
now
we're not.
that? Does that not then make us hand over fist dollar buyers for the second half of this year?
I'm a hand over fist dollar buyer.
Mm-hmm.
Hand
I'm just saying,
over fist dollar
if I
buyer.
take your logic, that, like if the whole thing is okay, Trump is not going to disengage 40 years of financial infrastructure.
Yes,
which is why the dollar.
I think
was
that's
getting
what the
face
stocks
counted.
rally is all about.
Mm-hmm.
Hey, what's the most hated trade on the board still, according to the Bank of America Fund Manager Survey? The U.S. dollar.
Fantastic. Beautiful.
You're saying long dollar is the least popular trade according to B of A?
Short dollar is the most popular. Long dollar is the least popular. Yeah.
Excellent.
I mean, that's nice. That's almost a confirmation, I suppose.
That's excellent.
To our little
I love it.
Hypothesis.
I love it.
It's a crowded trade. And listen,
Other than the
there
rate
is a.
cuts.
Well, forget the rate cuts for a quick second, right? The story
And the
coming
dollar
into July
has stopped falling, by the way, despite the
story.
fact that the rate cut bets have grown.
So that's the story here. The story is since July, rate cut bets have grown. And I think this is one of those, in hindsight, we talk about positioning being so important and it being a crowded trade.
Yeah.
Even though the rate cut odds have gone up, has the dollar been able to keep falling? Everyone who wanted to sell is sold. It's difficult to keep it going down. And the series right now of higher highs and higher lows remains, Ilya, off the bottom
right.
here. That's not a break yet.
Nope. I'm still.
It's not a break yet.
I mean, do you have a preference? Dollar euro, dollar Canadian, dollar.
I have a
Oz,
basket on. I have a
Yen,
basket
Canadian,
on.
euro.
I'm long the dollar against euro, pound, yen, Canadian dollar, Aussie, Swiss franc, across the board.
I personally like the Canadian dollar. It did not jump
That's
significantly.
been one of the better ones. That and the franc, to Chris's point.
Yeah, but the Canadian dollar didn't rebound substantially when the dollar was coming off again here in August.
Yeah.
It ran into its monthly moving average, its 50-day moving average, swing lows that we had in June and July, and had started to turn lower again.
Mm-hmm.
So it's not exactly a situation where it looked like it was a source of strength. The yen, on the other hand, down by 0.27% today. Look at that beautiful test of that 50-day moving average. Kissed it,
Boy,
turned
do
lower.
we hold it.
This is exactly what you want to see. The volatility is not exactly there if I'm looking at a 16.7 IVR in the end to look to sell calls, but in the euro, you're still north of 46.
Yep.
46 in the biggest, most liquid currency future. That's all you can ask for.
Yeah. Now, in my mind, the most interesting thing on the board here that affords you the luxury of not having to worry about what the stock market is smoking here is to look at the dollar and go, you know what? Either we're going to get these rate cuts or we're not. But the dollar has stopped responding to the near-term speculation. So either the dollar is going to rally because this whole thing is a giant growth risk and you're going to get a dollar back to haven mode because now that you've decided you're not going to crash 40 years of a U.S. financial system, the dollar is back to being the cash of last resort in a risk-off scenario. Or the Fed is going to dither and you get a yield kick. And then the dollar rallies for those reasons. For whatever reason, the dollar is no longer interested in the idea that the Fed is going to cut by 50 basis points this year, which is what the markets are pricing. It's what the Fed has been saying since December of last year. That expectation is baked in firmly at this point.
Dylan, let's switch topics here and talk a little bit of corporate news that came out here after hours. What's Warren Buffett's favorite expression about buying stocks, Ilya?
Which one?
When people are panicking, something in the street?
Oh yeah, when there's blood in the streets, buy property, sure.
UNH is now part
go
of
full
the
Luigi on me now.
I didn't say it. Ilya talked about blood in the streets when I brought up UNH. I did not do that.
We're quoting.
You set him up, sir. You set him up.
I did no such thing.
We're quoting the Oracle here. Let's just be clear.
Warren Buffett
but also,
is now,
if ever there was an assessment of contrarian investing in a phrase,
I mean, is UNH basically binary now? Either it will continue to exist, and this is the greatest entry point in the history of mankind, or it has to go bankrupt.
Well, Buffett made that decision today. UNH is up 8.14% here after hours, after Warren Buffett reveals he purchased 5 million shares of UNH. Incredibly steep discount. This is probably the go signal. If Uncle Warren's in Ilya, Dylan, right? I mean, this is now going to bring in a whole host of people and followers. And
stop thinking. No thinking. This is a no thinker.
No thinker.
The risk reward isn't tempting for me yet. Because we're basically near the top of the recent range. When Uncle Warren does things, let's remember he never ever sells, but for very, 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 very special reasons. And his timeline is measured in decades. So that his decisions and our decisions in a 45 DTE world are very different decisions.
Yeah, but a lot of traders who jump in and don't think for themselves, which we could be those people, Dylan, right? We don't need to think for ourselves here. But there's a lot of people in this world who follow Warren Buffett into whatever he does.
Right.
No matter what.
Sure.
So this
Thinking
probably is going to get a pop here.
Ill-advised at this juncture.
Well, and this is why I think what you want.
Buy him.
That's why you need good risk reward. You're at the underside of the previous range.
Let's call up the screen. Let's figure this one out. What are we doing, Vecchio? Fire up the panels. What are we doing?
Thinking about right now, the stock's trading at $29.25. It closed at $27.61. So if we wanted to think about the close prices, okay, something like a short put spread at $250-260. The short strike about $10 away from the close, the long strike $20 away from the close would have yielded in the neighborhood of about a 2-to-1 risk to reward. Sliding that up another $20 to account for the change in share prices here, you're probably looking at a 270-280 short put spread. Then we have to see where the market goes tomorrow morning when it opens, but anything in the neighborhood of a 60 to 70% probability of profit, 3-to-1 risk to reward or better.
Spread over any other mechanism at this point.
Yeah, that the stock's done falling. The lows for today come in around 266, 267. So effectively, the bet would be that this is the Buffett bottom for United Healthcare.
Well, and if you can get a run from, let's say, 300, which is that little congestion range middle from mid-May until the next leg of the sell-off mid-July, if you could get a run from there up into like 425, 440, the underside of the range that prevailed from 2021 to 2025, that's good enough. I just want to see a little bit of confirmation here because, again, we're at resistance, directly at it. So the risk reward here isn't great. Either you get a little bit of weakness tomorrow to reset, or you get a break higher. Either way, I mean, the market's obviously closed. So whatever you're doing tomorrow. But,
open, yeah.
But if you get a little bit of a reset on risk reward, the architecture is there. It's got to do that thing, though.
UNH to me listen, UNH has so much risk because of all the lawsuits.
Tons.
There's probably better plays out there for longer term trading to the upside. What company am I thinking of here? Is it CI? Yeah. Cigna, for example. Cigna doesn't have all of that baggage that a United Healthcare does. And there's still more lawsuits coming. So if I was thinking about being constructive on the space longer term, I'd probably like a Cigna more than a UNH. But the Buffett bottom to me is a compelling enough point where today's low, the recent swing lows that we've seen, probably will hold in the short term. If you wanted to get out, you've probably been getting out over the past few weeks and months. So I don't know if there's a significant long trade there, but if there's vol on the board, 27.9, if it's persisting tomorrow, we have a level to trade around 260, 270. Mm-hmm. And that's a potential. That's just a potential idea to kick out. Higher volatility than what we're seeing in the equity indexes.
Yes.
I know what I'll be doing. Dylan, I do want to get your opinion here because it's the last show of the week. It's the Thursday here. There's so much going on in the world, but surely we need to be talking about this Alaska meeting between Trump and Putin. I couldn't help but notice today that oil prices rise as some of the headlines about this meeting are coming out, and the corresponding move is for the poly market, betting markets, to reduce odds that there would be any sort of ceasefire arrangement reached when Putin and Trump meet. Do you think that this is how do you think this is going to play out and how do you think it impacts oil?
I believe Russia exists. Forget Russia. I believe Putin, the president of Russia, exists in a psychological state where he is utterly indifferent, where no one, in his mind, no one, not Europe, not Ukraine, not the United States, no one has any leverage on him at all.
Yeah.
And so and this is a very, Ilya can speak to this, but allow me to do my best version of being a Russian interpreter of culture. No culture in the world is more notable for its tolerance for suffering and its indifference to outside leverage. And so I agree with the rise in oil prices. I agree with the poly market discounting. I believe that Putin has zero. If the Ukraine war will end, whatever that means, when Putin wants it to end, on the terms that he wants it to end on. And there's nothing that the United States or Europe or Ukraine will ever be able to do about it. That's what I believe. This is an ice cold situation.
Very, very strong argument in favor of that perspective. I think Dylan's absolutely right on the money as far as the Russian population's willingness to take it on the chin and just expect the czar not to care and to do what the czar does. The
and life is good in Moscow, by all accounts, by the way. No problem. Cafes, the country's doing...
It's good. It's good in Moscow. It's probably decent in St. Petersburg. It's probably awful otherwise,
horrible. The graveyards in the
but is it more awful than people are kind
irrelevant.
Of... Right, awful, yeah, but...
No, I was in Lithuania a couple weeks ago in Lithuania.
The Russian mindset usually is things may be awful, but it's our awful.
Well,
and
not
nobody's gonna tell us that our awful isn't what we want.
And there's no number of tombstones for 20-year-old men that's going to change anything. I mean, I was in Lithuania a few weeks ago, which is, 20 miles off the Russian border of Kaliningrad.
Yeah.
And it is a widely known fact that the number of grave sites of young men has exploded over the last few years. So the point is not that this is a human catastrophe or that Putin is ultimately a mass murderer, in my opinion, of his own people and others. Mass murderer. It's that the political tolerance for it is unique. No country historically, I mean, look at World War II. It's a point of pride. There is no country in the world that is more tolerant of killing its young men than Russia. And that's what makes them indifferent to leverage between nuclear weapons and the history of basically unlimited tolerance for death of their young men. They're going to do whatever they want.
I mean,
another way, and Trump is a sucker for him at the end of the day because Trump wants to be perceived as an equal. And this is going to Putin. This is Putin's dance, and everybody else is just in the room.
I like this breakdown. It's very talk show radio. This is very talk show radio.
Yeah, I mean, another way to look at it is just to say that for him, you ride this thing until the wheels fall off because either your gambit ultimately pays out because the other side is desperate for peace, or, and by the other side, I mean, of course, Europe, the US, Ukraine, everybody. Everybody wants really badly for Russia to stop, which gives Russia the cards and the leverage. And Russia, at least in the president's visage, is of the mind that, look, either I'm going to get eaten internally or I'm going to win this thing. Screw it. Run it up. We've come this far. Let's see how far I can push this thing. Maybe
and
I can still
now I
make
can
it on the other side.
And now I have the American president in the room with me, so the alienation is declining. I'm no longer ostracized. So now I'm doing this iron squeeze in Ukraine, and the ability to isolate me is in decay. I'm getting stronger.
And Trump is out here attacking Europe today for buying Russian oil from India.
Right. The only issue here is every now and again, if you look at Russian history, every now and again, the population says enough is enough. And there is, sometimes out of nowhere, a complete hard reset. Now, the problem with this, of course, is there can never be any evidence of it because everybody is too afraid to say what they think until the whole thing hits the fan.
Well, it's illegal to use the word war in Russia.
Right. So the edge case, and there's no evidence for this being imminent or anything like this, but the edge case here is revolution.
Well, yeah, I mean, it's pretty clear from the public reporting that Putin sees the war as necessary for his regime's survival. If the war, he loses the war, then the regime falls.
And by the way, we don't just mean the Bolshevik revolution. We don't just mean the revolution against the Tsar. I mean, Yeltsin, the early 90s, the collapse of the Soviet Union. I mean, that's also a revolution. That's a recent revolution. It's not followed by civil war as the Bolshevik revolution ultimately was. But we're looking here at the only way this resolves in a way where Putin doesn't get everything he wants is he gets to a pain threshold that is so great that the population finally says, you know what, let's just burn this thing to the ground.
All right, so we get to oil here. You're getting a bounce back. If we have a bounce back to where we were prior to whatever kerfuffle this was at the end of July, probably 64, 65. Is this still a place to continue to trade sideways in oil? I think so. I'm doing it. It works. Not the sexiest trade, but still risking 3 to make 1, 60% plus pop. Dylan, we talked about this earlier this week. Consider it a missed opportunity, perhaps, but Intel up 7.38% today as the U.S. is considering weighing an investment following the CEO's visit to the White House. We talked about this earlier this week. Is this the best strategy that we can put in our pocket as a flyer right now to close the loop on it? Should we just be looking for headlines about what CEOs are going to the White House?
It doesn't. It certainly falls into the no thinking opportunity zone. I've heard worse ideas. I mean, the best idea is to buy UNH on Buffett. You know, I would say it's a distant second to buy the CEO meeting, but buying the CEO meeting is not a terrible idea. But I also think that actually the Putin-Trump summit could be a reason to buy oil.
You have the final word. Tell us before the show ends.
Me or Ilya?
You. Yeah, you.
Go.
The final word is very simple. This Russia thing is a boondoggle. It plays to Putin's benefit, and oil should actually get higher, not lower, because I think what you're going to see coming out of Alaska is a calcification of the fact that no one can do anything to stop Russia, and that all hope for any intervention from Ukraine, Europe, or the United States will be lost after this meeting.
With that, overtime's out of time. We'll be back same time next Monday. Here every Monday through Thursday on Tasty Live, right after last call, 4 p.m. Eastern, 3 Central. So for Ilya Spivak in San Francisco, Dylan Radigan on the run, I've been Chris Vecchio in New York. Good luck trading. After this, more Tasty Live coming at you. See you at Macro Money.
See you there, everybody.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
What's one macro risk that people aren't talking about enough right now?
I think we kind of saw it with the tariff sell-off. There's just huge concentration in Mag 7 stocks, all the big tech names. If something happens with those products, you're going to see a massive move to the downside. So I think if you're in products if you're in ETFs that are highly concentrated around a handful of names, and that could be a number of different ETFs. It's always important to check the actual makeup of the ETF you're trading. If you're looking for that kind of concentration, that's fine. But if you're looking for more balance, I would just double check that you're not in one that's super concentrated.
That's a hard question. My answer to something like that is always the unknown. I don't necessarily think that most of the stuff that we pay attention to is stuff that's going to explode the way that we think it is at the time. A lot of it I feel like is kind of unfounded worries. So I don't know, it's a cop-out answer, but I'm just going to say whatever it is, we're not talking about it right now.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
We're going to go to New Orleans. I got to be in New Orleans. What's up?
Y'all three guys, just the whole organization is just phenomenal, and it's changed my life. And I wish more people would just sit back and listen to y'all and take it seriously, because it will change your life if you enjoy trading. I don't know if I could ever repay any of y'all for this free advice and free teaching y'all do is just remarkable. Tom, I got your hat on, and ever since I got it on, I've been blowing the market up. So make sure you don't give one to Tony or Scott, because I don't want them to benefit from us.
That's okay. Good job out of you.
My dad, who was trading options in retirement, introduced me to options trading. He said, you have to check out this tastylive site. The way they taught options was very accessible and easy to pick up. I think a lot of people think that options trading is gambling, but it's not. It is simply probability and taking an educated guess. It's more like insurance. People should watch tastylive because you can pick up a lot of information in a short amount of time, and it's actually practical. You can use it to make money, most important part.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Tariff inflation is here. That's the message we get that gets the dollar going and, at least temporarily, spooks the stock market today. Will consumers get discouraged? That's what we're going to try to unpack here, because, as ever, that is the biggest question for this U.S. economy and ultimately then the markets. I'm Elias Spivak, head of Global Macro here at Tasty Live. This is Macro Money. And we're going to take a look at what the markets did with today's data offering, potent though it was, and consider what all of this means as we start to look at what consumers might do with this and why that's so important when we get retail sales and consumer confidence numbers here in less than 24 hours. So let's break this down. The market today, a little bit soggy, but only a little. S&P 500 down 0.07%. NASDAQ down a little bit more, 0.28%. Hardly major change here after yesterday's big moves and frankly big moves earlier in the week. That CPI report we got this week still largely intact for its influence to the upside on these markets. Probably the biggest swing, which we don't have on the chart here, was the Russell down 1.28%. That's after a rally of almost 2%, 1.96 yesterday, and a blistering almost 3% rally on that US CPI report the day before. So we have a little bit of a cooling off rather than some sort of a capitulation in stock markets today. Notably, yields go up. 10-year up 1.25%, 2-year up 1.44%. Crude oil is up for its own reasons. Again, it would seem it's really been moving around a familiar range here for its own reasons. We, of course, have that summit between U.S. President Trump and Russian President Vladimir Putin in Alaska coming up. So maybe that's something to do with that. But oil has been really pinned to this central axis around 62 20, 63, 40. That's been a sort of center line for the broader 54, let's say, to 73 range, going all the way back to September of last year. So, yes, we get a little bit of a pop, but do we ultimately get anywhere from that center axis? Not really. In line with the move in yields, in line with the move in stocks. Gold down a little bit here, 0.8% almost. Euro down, yen down. That, of course, speaks to a stronger US dollar. And Bitcoin off 4.09%. Again, not the craziest change in sentiment here for Bitcoin. I mean, certainly it's a notable thing that it has swung as it has, and indeed it's erased 3 days of gains today. It's essentially back to where we were last Friday, but nevertheless, we're still sort of in this broader 123,600 to 113,000, let's say, range that's persisted since mid-July. So notable swing, certainly, but again, not anything that appears game-changing per se. But certainly the tone here was weaker risk, higher yields, stronger dollar. And that sort of comports with what we're seeing in Fed policy odds. Note here, we're still very much on track for a September rate cut, 92.8% probability in Fed funds futures. But whereas yesterday there was about a 6-7% chance that it'd be a 50 basis point cut, not 25, today it's a 7% chance that there is no cut. So we're getting fuzz at the margins here. And whereas yesterday the fuzz was in favor of a more dovish perspective, today the fuzz is in favor of a slightly less dovish perspective. But the central thesis remains September is probably going to be a rate cut. But the markets clearly saw some data today that swung them from erring dovish to erring less dovish. The outlook on the path forward here overall, now firmly 50 basis points for this year. That's exactly in line with the Fed's own forecasting from the June summary of economic projections. That's the last time this was updated. 50 basis points here from 4.4 to 3.9. But then the disparity continues for next year. The Fed sees only 25 basis points here. The markets are discounting clearly a lot more. They're fully priced here, it would seem, for 3 cuts next year, give or take a few basis points. So the architecture of what happened here yesterday into today is broadly holding. But the markets clearly caught a little bit of indigestion, and they caught it because wholesale inflation numbers, incidentally, as we suspected earlier in the week, and as we talked about the CPI report, suggested that that CPI report in its benign visage is smoke and mirrors to a significant extent. And that, of course, came from PPI data. So here we have it. This is the month-on-month increase in wholesale inflation. We can see with the naked eye here that this is a dramatic month-on-month surge in wholesale inflation, 0.9%. By the way, it's the same number for headline and core. So this is exactly the kind of wholesale inflation that you cannot write off by saying, well, food prices, energy prices, the Fed doesn't care about those. That's something that they don't have agency over. This is not going to make or break policy. No, this is core as much as it is headline. This is an eye-catching jump by any stretch. And we can see here that the reference point for this goes back, obviously, significantly to this reflationary surge that we saw through COVID. This is ultimately what the Fed moves to act on with those rate hikes in 2022. So here is the middle of 2021 where the Fed kind of starts to recognize they have to make a move. And of course, this is where the hiking cycle kicks off. So we're back to essentially a 3-year high here for the last time we've seen comparable jumps. Here's the year-on-year reading. At this point, we're back to February for overall wholesale inflation, but the violence of the jump is clearly on display here. If this was something like what looked normal through the markets digesting the onset of tariffs, well, we're not digesting them anymore. They're starting to appear, and they're starting to show up in wholesale inflation. Most importantly, I would argue, if we look at how this has worked up to this point, we've seen that wholesalers have eaten extra tariff costs by basically saying, we're just going to make less money. We're just going to take it in margins. And we're going to accept lower margins on our business because what we're going to do is we're going to eat these tariff costs. And the reason why we're going to eat them is we don't know what's going on with this tariff regime. Things are changing very quickly. We're not going to pass on higher costs to consumers, get those consumers to stop buying stuff, and then the landscape changes and it turns out we've destroyed our own demand for no good reason. So since the beginning of the year here, we can see even at the final demand stage of wholesale inflation, this trade services component, that's wholesalers' margins. And we can see here that in this latest data, those margins shoot up aggressively. Back to January 2022 is where we have to go to see something comparable. And of course, what that means is rather than eating inflation and letting it bring down margins, it is being passed on and those margins are expanding. So wholesalers are passing on tariff inflation. Most importantly, where this holdover, this insulating of consumers was most pronounced was even earlier in the supply chain. We can see here, this is final demand for PPI. This is PPI intermediate demand. So this is the very, very beginning of the supply chain. This is where the tariff cost is initially felt. And we saw back in April when we sort of hit maximum holy moly on concerns about tariffs, they end up taking a hit of over 2% in a given month on margins, which is a huge hit, a recession-like hit, where wholesalers say, we are not going to pass on these costs. Well, they've started to pass them on. We get this jump here in excess of 1%, even at the intermediate level. And this ends up being the biggest jump at this stage of the supply chain since the middle of 2023. So we're talking a 2-year comparative reference point. Now, obviously, there's fuzz here as we get initial kind of fuzz around the tariff implementation. But if we kind of take ourselves outside of 2025 and consider what is a reference point for this historically, this is where we're looking. Now, when you get this kind of a thing, when you get wholesalers eating the inflation at the start of the supply chain, what you end up with is the kind of CPI numbers that we've just seen, where most inflation is still in services. This is where the markets go, oh, well, this is so refreshingly normal, 2.7%. Okay, so we get a little bit of a bump, but this is not anything crazy. And in any case, the goods side of the inflation story is still relatively modest, even though it's perking up. Or so it would seem, because again, most of inflation is still living in services. But what we see from the thrust of the change here, where inflation is dynamically moving higher versus not, in services, it actually comes down in terms of its contribution in July, but in goods, it's clearly going up, so much so that we can see here the thrust in goods for a second consecutive month is almost a tenth of a percentage point, whereas in services, it's actually going the other way. And as we saw earlier in the week when we unpacked this a little bit, core goods inflation went up month on month in July. Core services inflation went down. The rate of core goods inflation is the highest in 2 years at this point. This is our reference point back here, sort of mid 2023. Services inflation is also going up, but much more so within its range. The reference point here, December of last year. So what we're looking at is indeed evidence that suggests that we have tariff inflation now heading in the direction of consumers. And of course, where this becomes particularly worrying is when we look at these GDP numbers for the second quarter, what we see is, on the one hand, the other force keeping inflation at bay for consumers. We can see in the first quarter here a giant front run of imports. And again, this is contribution to GDP, and imports are subtracted from GDP. The component from the external sector in GDP is exports minus imports. And so the surge in imports here looks like a decline because this is a detraction from GDP that imports are surging. We can then see in the second quarter, imports are an addition to GDP because they're cratering. By the same logic, we can see here in the first quarter, inventories, which are a part of the investment component here, they surge because obviously all these imports have to go somewhere, and they're not going to feed current consumption. They're going to stack warehouses full of goods at pre-tariff costs. We can see that in the second quarter, those inventories are falling. That is, those goods are being spent. They're being sold out of inventory. So rather than companies buying goods that are now including of tariff costs, they are being sold out of inventory, but of course imports have cratered, so those inventories are not being refilled. So not only are wholesalers now passing on inflation costs, as the PPI data here suggests, but we are now seeing the other source of defense for consumers, this inventory buildup in the first quarter, that's falling away because those inventories aren't being rebuilt and the stock that's in them at the lower cost is being depleted. All of this, of course, comes together to tell us a story about how consumers are going to start to really feel these tariff costs. And what we already have in this GDP data, as we've said time and again here, is the contribution to GDP from consumption, which is by far its largest component, 68% of GDP. This contribution is already the smallest in the first 6 months of this year since the first 6 months of 2020. That, of course, is the COVID recession quarters. So consumption is already weak, and now we have this pass-through of inflation to consumers, not only because this front run is running out of room, but also because clearly wholesalers have started to make their move. You can see that here. This, of course, makes for very interesting watching as we get retail sales numbers coming out here to finish the week in macro event risk. 0.5% rise expected month on month after a 0.6% rise in the prior month. We're also going to get consumer confidence numbers. The expectation is that we're going to hold relatively steady on the current conditions index. Maybe we'll even get a little bit of a slide up on the sentiment side of things, but expectations expected to dip. And of course, not only are we going to be watching very closely what happens with the interplay between these numbers, but also with the one-year inflation forecast, which we can see here has been a critical driver of consumer sentiment. Indeed, since we saw the peak in inflation concerns going into the Fed's rate hike cycle, this is when they finally say, you know what, it's time for us to get a move on. This peaks as sentiment bottoms because, of course, the Fed starts doing the hikes that they so aggressively delivered in 75 basis point increments. And so inflation expectations start falling, consumer sentiment improves. Then we get to the tariffs. Sentiment craters as consumers start to say, well, the tariffs are going to be very inflationary. So we get this jump in one-year inflation expectations from 2.6 to 6.6 at its worst. But we've now cooled back down to 4.5 as of June's numbers. We'll see if we get further cooling here into the August numbers. But if in fact consumption is already weak as of the end of June, the second quarter GDP numbers, and we can see that in July, costs are already starting to feed from wholesale inflation and into headline, then the expectation would be, perhaps, amongst consumers that inflation is actually going to be higher going forward, not lower. And if this starts to tick back up, well, then that's bad news for sentiment. So the threat here facing markets is that, in fact, what we are on course for is another weak consumption quarter in the third quarter. And this is the ingredients from which recessions are made because, of course, we have an economy that's overwhelmingly consumption. Now, from the perspective of the markets do not want to see recession-flavored data. In fact, we saw that in spades with the jobs report, that's this wiggle lower here, which was, of course, very disappointing. And we see this rebound because what that ultimately gives us is a more dovish outlook on the Fed. But as these numbers go, if we get very strong numbers, well, then the outlook on the Fed can't get very much more dovish. If we get numbers that are relatively close to expectations, then chances are the probability of a September cut remains broadly intact. If we get very weak numbers, like we did with the jobs report, ostensibly the markets become more concerned with growth than they are with rate cuts, as the jobs report pointedly showed us. And then stocks don't like that either. So the middling outcome, the middle of the distribution outcome for both retail sales and sentiment is ostensibly what the markets are after here. But perhaps even more interesting than stocks is the US dollar, which has been carving out a bottom At the very least, it has stopped falling after this precipitous decline in the first 6 months of the year, even as you get this most recent dovish shift in expectations. And so whatever happens tomorrow, perhaps one of the more interesting trades on the board is either you get a safe haven dollar that rallies because the markets don't like retail sales numbers, or the retail sales numbers are strong. Stocks are left scratching their head as to whether they like the earnings part or the less dovish implications for the Fed, but with those less dovish implications, you get a stronger dollar, much as you saw today. So if stocks are perhaps a little bit fuzzy, the US dollar, in its resilience since the beginning of July, seems to be telling a story. We'll see what that story means for stocks, but for the dollar, it might mean an interesting trend change opportunity that is just beginning to ripen. And that is macro money for today. As ever, we are here Monday through Thursday, right after Overtime, a show I co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and where things may go therefrom. I'm back with Chris for Futures Power Hour Mondays and Fridays, writing for the News and Insights portion of tastylive.com, commenting at Ilya Spivak on former Twitter and on Blue Sky. If you're watching this on YouTube, like and subscribe. Macro Money is back next week. Happy trading.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
What's one macro risk that people aren't talking about enough right now?
I think we kind of saw it with the tariff sell-off. There's just huge concentration in Mag 7 stocks, all the big tech names. If something happens with those products, you're going to see a massive move to the downside. So I think if you're in products that are, if you're in ETFs that are highly concentrated around a handful of names, and that could be a number of different ETFs. It's always important to check the actual makeup of the ETF you're trading. If you're looking for that kind of concentration, that's fine. But if you're looking for more balance, I would just double check that you're not in one that's super concentrated.
You know, that's a hard question. My answer to something like that is always the unknown. I don't necessarily think that most of the stuff that we pay attention to is stuff that's going to explode the way that we think it is half the time. A lot of it I feel like is kind of unfounded worries. So I don't know, it's a cop-out answer, but I'm just going to say whatever it is, we're not talking about it right now.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
What is going on, everybody, and welcome back to Risk and Reward with Gus and E. Today is Thursday. We got one more day of the week. We also had the open house today. That was a pretty good time, wasn't it, Gus?
Yeah, it was awesome. Getting to meet everybody and finally put some faces to the names that we're seeing in chat all the time. Yeah, it was excellent. We have our live event in Chicago tomorrow, which I am getting up bright and early for. Let me tell you. And yeah, looking forward to that. It's a fun week, a little bit chaotic week, but you know we like to bring the chaos here. The fun comes with it.
Exactly. You thrive in a little bit of chaos. It makes things a little interesting sometimes, but no, it was a really good time today. Really nice to walk around, meet everybody, and really just game plan for tomorrow. I haven't actually been physically to the live show, so I'm actually really looking.
Yeah, this will be my first one as well. I've done lots of the pre-recorded stuff that we shoot over at Live Bash and all that good stuff. But I've never been to one of these live events before. Man, I've only been here 6 months, so yeah.
Looking forward to it.
It's going to be exciting. Yeah, I'm not looking forward to that alarm tomorrow morning though.
No, you're already thinking about it, right?
Bro, I got to be there at 6:45.
So what? That means you got to be there 6:40. So you got to wake what?
5:45, 6. Something like that. Yeah.
Things are prepped the night before.
Yeah. Yes. Yeah. But it's gonna be a fun time. I'm looking forward to it. I'll tell you what too. I just before we started, I got a notification from DraftKings. They say they have a pick for the Diamondbacks Rockies game tonight. Guys, PSA: if your sportsbook ever tells you should take a bet, run the other direction, please. Okay, that's all I got on that.
I hear you completely. Again, Colorado Rockies. I'm a Colorado guy. I got to put my input.
Boy, are they terrible.
Bro, I could as I'm lining that up, I'm like, they didn't give me much to work with here. I haven't really been watching the Rockies since the Matt Holliday days. I don't know if anybody remembers. Shout out to Matt Holliday. But anyways, as we get into the segment for today, UNH, that's always been the talk of the town the last few weeks, especially with Luigi, the shooting with the CEO. We'll give a quick update and a rundown on all of that. But we had some pretty big moves in the after hours. What happened in UNH, Gus?
Yes, Berkshire Hathaway has announced that they have put their hands on some UNH, $1.6 billion of UNH to be exact. They are essentially just buying a large dip. And let me tell you what, I beat Berkshire Hathaway to this sentiment. I bought before they did. They disclosed that they added this position at the end of June. And Errol, what a luxury it must be to be a Berkshire Hathaway, a Warren Buffett, a Peter Thiel, and just be able to say, hey, by the way, guys, I bought this, and then it is immediately.
It just goes up.
Yeah, you just are right. Yeah. You are right just by telling people that you did it.
And you know what's funny? I mean, Warren Buffett and some of these guys have really solidified their name in headlines and just getting buzz, because I think about Elon Musk, seeing those tweets, seeing what Elon eats for lunch, seeing that move the market was so profound to me. I thought it was insane that an individual could affect the overall market or his specific stock, especially because it's such a massive underlying. But Warren Buffett isn't somebody that tries to stay relevant. He's not right.
And he's left Berkshire Hathaway.
Exactly.
Yes.
If anything, he's trying to really go into the shadows, and we're still seeing these names in these headlines. I don't know. What are we still trying to milk these headlines while he's still around and relevant? Whatever the case might be.
No, I'll tell you what. As somebody who just moments ago wrote Warren Buffett's Berkshire Hathaway on this slide, I am absolutely trying to milk these headlines. Yes, it's what you must do.
Like, at me, bro.
You got to play the game.
Yeah, but the fact that we still think about Warren Buffett and by him making a big purchase, it's still a big deal to us, right? Elon Musk is on Twitter. He owns Twitter. Elon Musk is a little bit of a character, so it's not a surprise he's able to develop and continue to grow his personal brand, because it's Elon at this point. Obviously, he's going to have the confidence to do it, because when you're the wealthiest man in the world, you're going to go out there and probably say whatever you want to whoever you want, however you want. But again, Warren Buffett is in the shadows, and his name's a massive deal, especially for whatever he's putting his money towards.
Yeah.
So
yeah, it's very interesting. I think Berkshire Hathaway and Tesla stand above all others in that you are buying the man,
right,
when you buy the company. And I mean, like, Tesla will move on SpaceX launches and like all these other things that Elon is doing, and it just is very interesting sentiment and vibes. But yeah, let's get into it here. This is hot off the press, guys. They just disclosed this position after market close today, so we'll catch you up a little bit. So yeah, UNH having a bad year, 46% drop in share price year to date. It was more than that. Just a few weeks ago, they've been gradually climbing up a little bit. They issued a dividend recently that gave them a small bump. Lowered profit forecast, billions in expected additional costs, ongoing federal investigations, fallout from a cyber attack, and reputational damage from a high-profile executive murder case, which, yes, their CEO was assassinated. That was the first part of this issue. And then when literally the very worst, most parabolic thing that could possibly happen to your company was going on, all of a sudden the government was like, oh man, there's regulatory concerns here, which sent UNH down even further. But the reality is that, and my sentiment in getting involved with UNH, 2 months ago now, was just that this company isn't going anywhere.
Right.
They're still strong. It's turbulent and it's turnover, and they might have to pay some fines, but eventually it was going to return to those higher highs. I was never expecting a catalyst like this. My sentiment the whole time was I took calls 18 months out, and I was just going to wait and let it slowly creep back. Good gamma. And now, suddenly I've gotten a huge bump.
No,
so.
I mean, especially with a case like this and somebody like Warren Buffett. Warren Buffett is known to be a very investor savvy, very kind of safe, kind of I make smart bets kind of guy. And he's kind of known for that. It's built into his brand. With all the chaos that's happening with UNH, it's like, wow, Warren Buffett's getting involved in this, and this seems so chaotic, and it doesn't seem like Warren Buffett typically sides on the air of chaos. So for him to get involved again, kind of surprising to me, but exciting to see the stock pop off over 20-something points. So, I mean, if you were short, I'd be patient on checking that portfolio in the morning, but I mean, if you're long, definitely go check it out right now.
Well, yeah, and it's very interesting because, I mean, I think Warren Buffett is arguably, if not just certainly, the greatest investor of all time.
He's like the Michael Jordan.
Exactly. And with that must come contrarian sentiment a lot of the time. I mean, you're going to have to be contrarian pretty often to be as good as he is, and this is about the most contrarian thing you could possibly do right now. Nick Batista described it as a deal with the devil on an interview that I did with him for TikTok, and it's true, man. Buying UNH right now, it does feel like making a deal with the devil. Everybody hates this company. If you're talking about in the market, everybody hates this company's performance. Outside of the market, everybody hates this company on morality. It's a bold move.
I mean, I think it's an interesting one, and we can go ahead and jump to the next slide here. But also, I think it's funny by how sometimes our own individual biases can absolutely sway financial decisions and in terms of what we want to get involved with. I think we were talking on that topic, I think earlier the year with the whole fiasco with Elon Musk. Elon Musk kind of started to become more of a controversial character. It's almost like he stepped into that role. There's no way he's not smart enough to think about that's the role he's stepping into.
Elon Musk, he tests the limits of no such thing as bad publicity.
100%. Elon Musk is so calculated with everything. Everything he does, I'm like, he had to have thought about the potential outcomes and scenarios of this. There's no way he just did something off a whim.
You guys, Omaha, and you guys with this HIMS conversation in chat, this is making me laugh, but I can't read any of your things out loud. This is UNH's price action since this news broke. This is all aftermarket today. What is this? 1 minute candles?
1 minute.
Yeah, 1 minute candles into market close today.
I'm sorry. This might be the 5. We'll double check on that, but it's an intraday chart.
Very short time frame.
It's an intraday chart.
Yeah, I mean, you can see the furthest time we can see back is 9:30 a.m. this morning. So this is today's 5 minute chart on UNH. Can you guys look at this chart and tell me where in the chart you think Berkshire Hathaway disclosed their holdings of UNH? I know it's really hard, but I really believe in you guys. We have a very smart audience, and I think you can probably figure it out. Big move up for UNH. It's just continued to climb. I think it's reasonable that this thing opens over 300 tomorrow. It's the title slide says it all. Midas has touched this now. It is gold. So I think everybody's going to be scrambling to get on that train. Fortunately, I booked my ticket 2 months ago. Tell us the timeline.
Just a little bit of a timeline and context. I can't even believe this was in December. It feels like it was just a few months ago. But December 4th, 2024, right? We had the United Healthcare CEO Brian Thompson. He was shot in the back of the head. I think we had a little bit of that video footage that was going around, but that was in December. Feels like that was just a few months ago. I was going to say the opposite.
That feels like forever ago.
Doesn't
I think
feel forever ago?
Oh yeah,
it does.
I mean, it's just, and that's sort of just a personal thing in my life. It's like, if you talk about events that have happened, like in my life, I was in college finishing up finals around this time, and I have graduated, went to South America, moved to Chicago.
You're a local now.
Yeah, so it's a lot can change. A lot can change in 8 months. It feels like a lifetime ago to me.
It's a fast timeline within this timeline right here. So
thank you, Theta Trader. Line go up, Gus. He says, Kirk. That is absolutely right. Ding, ding, ding.
December 9th, just a few days after, Luigi was arrested in Pennsylvania with a ghost gun and a suppressor and a false ID. It always blew my mind when I learned about the black market for the first time, and I heard you could hire like hitmen, you could buy this, you could buy that. I mean, certain organs, pretty much anything you could.
Literally anything you could. People. I mean, anything you can think of.
I mean, quite literally. So he did have a ghost gun. Probably has to do with some type of black market of the sort. Early 2025. He was formally charged with murder, terrorism, prosecutors looking to seek the death penalty. Mid-2025, UNH stock declines amid legal, federal, and operational issues. Buffett quietly accumulates shares, right? He's somebody that does not do things for the attention. If he could backdoor his way out of everything, he would. He's very quiet. But August 14th, he's not able to be quiet with these footsteps because they have such massive position sizes that they're trading with. Berkshire revealed 5 million shares, 1.6 billion stake, sparking a massive run in the underlying after hours. So we clearly see the visual for that, Gus. I mean, I don't know. UNH feels like it was one of those underlyings people were figuring out how the market was going to digest this thing and how it was going to play out. And it feels that with Warren Buffett, kind of being the first one to be like, okay, I'll go ahead and do it. I'll be the one. It gives others the confidence to go ahead and start pulling the trigger and managing their positions however they would want to.
Yeah, obviously a very heavy thing. I don't mean to make light of it, but I, in a purely market context, was actually excited to get involved with UNH after the CEO assassination because fundamentally that doesn't change anything. I mean, you're going to have to find new leadership, which creates a little bit of turbulence, but it's not going to hurt your core business at all. But yes, the regulatory stuff that happened later on and drove them to even lower lows, that was a little bit alarming. And I think that at least for myself, and I'm sure many others, that was what actually put them fully off of this stock. It's just this is too much stuff on fire for me to try to touch. But yeah, eventually I was convinced by the bad influence that sits to my right. That's not you on my other side. And got long some UNH, and I'm happy with it now. It's been a lot of pain. Do not get me wrong. Being long UNH over the last 2 months has been nothing but pain to this point, and I am down massive on the position. But we're finally getting a little vol spike here. Premiums should be juiced. The gamma's going to come into play.
Gamma's going to gamma.
Yeah, so I'm happy with it.
Yeah.
But yeah. Last slide here.
the infamous
Luigi Mangione. Mangione, I don't know. I've actually never heard this man's name said before.
I think Mangione sounds about right.
I've just read it 100 times.
He's Italian.
Yeah.
So anybody else Italian want to list?
Luigi Mangione. I wonder where he might be from. Yeah. But anyway, yeah. 26-year-old Ivy League graduate, valedictorian at his high school. He was apprehended in Pennsylvania. The assassination happened in New York, correct?
I'll double check on that.
I'm reasonably certain happened in New York. He had fled to Pennsylvania. They found him in a McDonald's there, which I always thought was an interesting little part of this. And it was because somebody in the McDonald's called in and said that he looked like the guy. Yeah, New York. But yes, he is alleged murderer of United Healthcare's former CEO, and they are seeking the death penalty due to the severity and potential broader threat to the healthcare industry. Morals aside, I can see why they feel the need to pursue the death threat here, because if you give him anything less, you're going to set the benchmark right here. For
exactly, he's going to be used as
CEO.
Absolutely,
yes.
He's going to be used as the example.
Yeah. So if you go too light, other people might see that as opportunity. So it's very interesting.
Yeah.
But yeah.
No, I mean, it's always funny seeing this picture pop back up, but at the same time too, I know a few months after that, he had released something along the lines of, wasn't there some type of eerie message that was left later on, like you will eventually see, or
he had a manifesto.
That was in the manifesto, I think it was, right?
Yeah, they found him with a manifesto on his person.
Yeah.
I remember that got out. And now he manages to get like a lot of press from prison. I don't know who's doing all this, but like I've seen tons of like the letters he's written back out to people, the letters that he's receiving in there, comments from him from behind bars. I don't really know how they're making that happen, but
one thing that I think is pretty crazy too is like allowing, based off of what he does, like everybody gets to form their perception of this guy, right? But the thing is that like it's such a weird spot to be in, like allowing the public or allowing whatever, and celebrities have dealt with this and done this all the time, but allowing the public to construct how everyone and everything perceives you, you know? So I always think it's an interesting thing when you do something to where you're not gonna be able to really explain yourself. I mean, I guess that's why they have the manifestos and whatnot, but just having no control over his own narrative is just kind of a weird.
Yeah, and even with the manifesto, like, there's no guarantee that you're ever going to be able to, like, get that out. Like,
yeah, absolutely.
Yeah.
If anything, there could have been manifestos covered up that we've never got to see because of whatever other issues that could cause.
Yeah, Theta Trader, to your point, I also, and I know that this slide greatly contradicts that, I also wish that we wouldn't give these guys any airtime. This guy is simply so famous that I decided to just go ahead with this slide. But yeah, holistically, mass shooters, murderers, anybody of the sort, I don't think that we should ever give them a single ounce of airtime or oxygen. I don't think we should say their names. I don't think we should be posting their pictures everywhere. This is an extenuating circumstance, but I agree with the sentiment. What's going on, Luis? Happy to see you.
What is
By the way,
going
happy to see everybody. Big Deal, Lone, Theta Trader, who else?
Emmett.
Who else is here? Emmett. Kamal. Good to see all of you. Happy to have you.
I hope everybody was long UNH, and I hope everybody's been having a great week.
Jackie, I heard he wanted trial by combat. Is that true? Is that? Can we get a fact check on that? Somebody give this guy trial by combat if he's requesting it.
We would have heard about his death if he was gone, so I think he won.
You think he won? Well, I mean, trial by combat would just be like, if he lives, he gets to walk.
Right. I think he could be walking.
I mean, I think he's they still got him though. he's still locked up. 3. Who do you even combat with? Who? I have so many questions. Who?
That's the last question you want to ask, and they bring out the guy that you got to combat.
Yeah, he doesn't get to pick it. What if they roll out like Khabib Nurmagomedov and he's got to fight Khabib right now? Like, that's interesting. Trial by combat. Give it to him. Let's
give it.
Just let the American public vote on who he's going to fight. And give it to him. Let's test the 100 men versus gorilla thing.
Perfect example.
Yeah, we need a gorilla. I think those are pretty easy to source.
Yeah.
And then 100 death row inmates.
Yeah.
And the whole issue with the gorilla thing is always like, oh, are they going to be trying their hardest? Like, do they have to kill the gorilla? Yeah. Let's get a bunch of death row people.
Yeah.
And they will try their hardest.
I mean, I think naturally, right? Let's break it down. Let me just ask you right off the bat. I mean, 100 men or one gorilla.
Oh, the gorilla.
Okay.
Unless I could sit there and like
regular size gorilla.
Yeah.
Average.
Like a male silverback gorilla.
Yes. He's like, I just want to clarify. We're talking about silverback.
Yes.
You know what a silver?
The specifications are important here because it's a lot of nuance. I think that there is a group of 100 men that could be compiled that could beat the gorilla. But if you randomly select 100 men from the Earth or the United States or whatever, the gorilla's going to.
So we're gonna have to use averages in this data set. Average 100 men, one average silverback gorilla. We're choosing the gorilla, even with like a strategic game plan prior to that.
Well, yeah, yes.
Okay.
They get their hands and nothing else. They don't get any weapons.
Right.
So I don't really know how you're going to even damage the gorilla in the first place.
Right.
And your numbers are going to be ever thinning as the fight goes on. I mean, there's maybe an angle of like if you just dogpiled, try to just do like an overwhelm situation. But even then, I don't think you could kill the gorilla.
I mean, if you can get the gorilla down on the ground, on its chest or its back or whatever, thing's got a chance. I mean, someone's going for the eyes, somebody's going for the neck, somebody's going for. Damn, I don't even want. I don't even want to put my hands near the face of the gorilla.
Well, yeah, the gorilla will bite your hand
You're in
off.
fight or flight at that point, and you're probably seeing black in that moment.
Well, yeah. I mean, my thing is like, what's the kill shot? How are we going to put this thing out? I don't think anybody can choke out a gorilla.
How strong is a gorilla's neck? Because it's like if you can get someone to just close off the airflow.
I mean, I think a gorilla's neck's got to be like.
It's got to be. Well, how thick is it?
I mean,
I just haven't done the research on the anatomy of a gorilla. You know, I would assume these are extremely, armored
what
gorillas.
Do we want? Diameter? 36 inches in diameter, like straight across. Like if you were to cross section.
A wide neck.
Yeah, I mean that's like.
Gorilla's neck is like 2.5 feet.
Yeah.
3 feet.
3 feet on the
neck.
Yeah.
Gosh.
This is it's a big gorilla.
Yeah.
Yeah, so I don't know.
Oh.
We've gotten a little off track here, but
we'll catch up.
10 gorillas versus 1 orca. See, now what's the playing surface? Where are they fighting? Because the orca wins in the water. The gorillas are going to win if it's on land. We're talking about like a shallow pool situation. I don't know how we create a level playing field for those. 2 gorillas, 1 orca. Okay, we just went. Oh, you guys just made the same joke at the same time. Nice. Oh, I see what you were saying, Lone Sofa.
Literally at the same time.
Okay.
Yeah, I'm still gonna go with the 100 men, just because I do think it can get overwhelmed. I do think somehow, some way, we can close off the windpipe. But will we be able to do it long enough?
There would need to be coordination in a flood, because if you let like 20 guys get offed first,
very well thought out.
Yeah, because you got one shot. As soon as the gorilla has like 20 of you dead, you're cooked.
Yeah,
you need the full strength of your numbers.
Yeah.
But yeah, I say let's get all the death row inmates, have them fight a gorilla. They get freedom if they beat the gorilla. If not, they are on death row anyway. And like pay-per-view. Let's stream this. Let me bet on this.
You know what's crazy? It sounds so crazy, but this was literally happening 100 years ago, like 150. You know what I'm saying? These things were literally happening.
This is exactly what the Romans did. I mean, the Colosseum was just a bunch of prisoners that they made fight large animals for their freedom.
Yeah.
We used to be a proper world, man. Those were the days.
The days indeed.
Those were the days. You steal something from your boy, and suddenly you're fighting a lion.
Bro, literally. I mean, there was not a lot of stealing going on around that. But no, we are going to be coming to a close here. Really looking forward to the show tomorrow.
Yeah.
Anything else to add before we start to wrap up here? UNH on the move.
Yeah, UNH on the move. I am long. Genuinely, I think UNH, this is the beginning of the move back to like 400 or 500 levels. I think that the fundamentals have been fine this entire time. There's still regulatory uncertainty, which, uncertainty is never great. But I think that this is enough momentum to finally get a little bit of steam back into the stock and see what happens.
I agree. See what happens tomorrow. We'll be managing those positions. We'll be keeping an eye on the overall
excited
market.
to see you all tomorrow. If you're coming to the Chicago event, I will be there bright and early, and for the whole time, come find me, shake my hand, let's take a picture.
Absolutely, it'll be a good time. Everybody rest up. Hope everybody has a good night. Thanks for taking the time to hang out with us today. We will be back tomorrow at the live show. We'll see you guys in the next one. Peace.